Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Tuesday morning, good morning. I think it's going to be one of those days we're going to need to give it 5 minutes until the market opens, beyond the market opening, to get a sort of sense of what is going on. You've got a little to price in on the upside. This is where Europe went out kind of there. The US market rallied a little bit. I think that's probably why you're seeing European stocks higher this morning. But I think there's a number of different factors that you need to throw into the trade this morning. We've already discussed what's happening with AI. We've got Orsted to throw in there as well. The PMIs are going to be coming through in the next hour. So I think there's a few moving parts over the next hour or so, which can be really interesting to watch to see where we go. But I think at the get-go, Lizzie, positive.
Yeah, is that in...
States. We expect that to feed positively into European trade, but will it take the rest of the sector with it to some degree? ASM International then telling us one part of the tech story overnight, and they have warned about the second half of the year. Is this all to do with one of their customers, Intel? We'll certainly dig into that story as we go through the programme. And Heineken, they are buying some assets in Central America. We'll watch that one as well, Guy.
A lot of focus on the Amsterdam market this morning. Let's see how it opens in just a couple of minutes' time. Well, 1 minute's time. It's time for the opening trade now. Let's see how it is in a couple of minutes' time once we've got all these stocks open. It's going to be fascinating to see how we trade through the Amsterdam morning. ASMI, ASML, the tech trade more broadly, what is happening with Heineken this morning. All of those are going to be factors for the Amsterdam market to deal with. The FTSE's out of the gates a little positive this morning, but not by much. Stock 600 will wait for the other main markets to open. The IBEX is up by 0.3%. Focus on the banking sector there, but just broadly, let's look at what is happening with the Spanish economy right now, which is a really interesting trade given what else is going on around Europe. The CAC is open. We're up by around 0.5% this morning, so some positive news coming through for the CAC Iran. But I think it's going to take a couple of minutes to get the AEX going this morning. There's a lot to digest in that trade. The DAX as well had a really difficult day yesterday with the auto story coming out of Porsche into Volkswagen into the wider sector. But you've got ASMI, ASML, Heineken, plus also the banking story, which remember is in focus as well with the ABN AMRO story that we're watching, kind of trying to figure out what's going to be going on there. So there's a lot going on in the Dutch market, so I'm not surprised it's taking a little while to get going. Lizzie, what's in the sector story?
We've got about 3/4 of sectors in positive territory this morning, Guy. Construction leading the gains up 0.6%. Utilities not far behind. Retail as well. Industrial goods and services in the green too. Bottom of the basket, though, we have basic resources down 0.3%. Tech as well, actually down 0.3%. 0.5%, that answering a bit of our debate about which way that was going to go in, and healthcare at the bottom down 0.3% as well. Looking at some of those individual names, though, Anna.
Yeah, and just to make the point, the guy was saying, you know, the AEX taking some time to open and still not open, and we only have part of the answer to the question about where that market goes, because ASML is down. It's down by 1.4%, which is not taking its lead then from the NVIDIA story. We have ASMI that is not yet open, and that's where we've seen the warning overnight, talking about certain parts of their market, certain customers. And interesting, in our Bloomberg News piece, we are highlighting that this is perhaps a business that is servicing, maybe to some degree at least, in the shape of Intel, those who've lost out at the front end of the AI story. And so maybe this is actually an Intel story that we're seeing playing out at ASMI. That seems to be the take there. But technology, one of the worst performing sectors then this morning, and we haven't yet seen all of those stocks just open.
Yeah,
Heineken's up.
Yeah.
Just in the AEX. So you've got beer up, tech down.
Yep.
And cars up again. So Volkswagen roaring back up 1.5%. Renault, Volvo, BMW, Stellantis all in the green this
And we were asking whether the Orsted story, how positive that's going to be. Well, we don't know yet because that one is still closed. But Vestas is up by 2.7%. So it seems as if that ruling by a US judge yesterday having at least at the margin some positive impact on that stock.
And we await the start of trade for Kingfisher and Smiths Group after those earnings. But for the meantime, let's speak to our guest, Giulio Renzi Ricci, Head of Portfolio Construction for Europe at Vanguard, for some analysis now. Good to have you with us around the table, Giulio. Let's go back to the macro story, shall we? How many more cuts are you expecting from the Fed? You've got markets hesitant to fully price 2 more, but lots and lots of Fed speak this week.
Yes, absolutely. So the markets, as you're saying, is probably pricing 2 more cuts. So that's a little bit on the Fed side. We are a little bit more hawkish from that perspective. So we're thinking that it's more likely that the Fed will have 1 more cut and setting at a 4% rate for the rest of the year. The main reason there really is on the inflation side, is the sticky part, right? There have been good indicators so far, but still is not quite where the Fed would like the inflation to be, and we're expecting 3% in terms of inflation for the year over the course of the year. So that, of course, puts us in a position where we could see changes in the yield curve, especially on the short end compared to the long end, but that's where we're positioned right now.
And let you say you don't get a growth recovery and you have stagflation, where does that leave the dollar?
Well, that's an interesting part of the trade to some extent, right? Because if we are compared to market consensus, we're expecting the Fed to hold on a little bit more, not to cut so much. From a fair value perspective, the dollar has been depreciating a lot this year, and from our models, it's probably below fair market value, and because of the rates probably not coming down as much as the market is pricing right now, we think that there is upside for dollar to reappreciate over the next few months.
So are you leaning into things that might do better if rates stay a little bit higher than
Correct.
the market?
I mean, from a dollar.
So financials in particular over in the United States, are you leaning into banks? Is that the thing?
Yes, that I think is one of the sectors that, generally speaking, simply because the curve is a little bit steeper now, and we're not really seeing a change in the long term of the rates, so like the 10-year plus. That being anchored, I mean, we have seen that before, that net interest margins are positive when the yield is so steep. And for that reason, we think that financials and U.S. banks in particular might have an upside.
With the lens that you apply, Giulio, where does the AI story sit for you? How at Vanguard are you thinking about the AI story, either in terms of how fast stocks run or what kind of macro impact this has? What's the inflation story? I mean, it's such an enormous investment build-out, such a huge capex. It's got to influence other asset classes.
Absolutely, yeah. So that is the big story, what we have been calling to a large extent a megatrend story for us. And where we're seeing things going is the following. It's basically saying the AI story is a long-term bet on how AI technology would move away from tech into other sectors. And that part of the story will basically position us from a strategic perspective saying, okay, great. If AI is so successful as investors are expecting to other sectors of the economy, well, that will push all else equal interest rates to be higher for longer, and also investors to move away from this concentration in tech stocks to other sectors and other industries and other regions in the world.
Why the higher for longer? Is that the inflation side?
Just because of the productivity growth. So productivity, higher growth might lead to higher interest rate. Probably not as high if, on the other side of the coin, to some extent, the fiscal deficit and debt sustainability in the US prevails compared to the growth story.
So our star is higher?
Our star is higher from our base case, our star is higher than what the market is pricing right now, around 3.5% for the US.
3.5, wow, okay, that's quite a high number.
Yeah.
Okay, so the Fed's not going to cut as much. Let's kind of put this all together. The Fed's not going to cut as much. Our star's at 3.5. Fed's not going to cut as much. Where does that leave US stocks? Because US stocks feel like they're being driven by two things, one of which is the AI story, the other one is the rate cut story. If you take away the rate cut story, do stocks go down?
That's a great question, in the sense that over a shorter period of time, we are still bullish on a tactical basis for US stocks, mostly because of the Fed hawkish signal that we see. On a longer-term basis, and it goes back to the diversification element, we think that there is margin for diversification there. And again, depending on whether there are two sides. If AI is successful in other sectors, then you might diversify away. At that point, you would have less weight on US stocks because investors are moving money away. If it's not as successful, then valuations are probably too high.
Okay, let me come at this from a different angle. At the moment, if I'm a euro investor, euro-denominated investor, the S&P is down year-to-date by 0.1%. I've made no money in the S&P this year because of the currency hedging factor. If the dollar goes back up, does that outweigh the US markets maybe coming down in the short term? Kind of where does that leave me? Because at the moment, the US market's up, the S&P is up year-to-date 14%. But as a euro investor, I've made none of that. So what am I looking at in terms of my signal whether to put money to work in the United States? Is it the dollar story, or is it what is happening in terms of the stock story?
Over the short term, I think it's both, right? So we see an appreciation of the dollar over the shorter term, and that is good for European investors that are not hedged. And over the shorter term, I think because of the profitability story. So there is a big difference between, for instance, European stocks and US stocks.
Sure.
Most of the short-term trend in European stocks has been because of valuations, because they were cheap, and valuations have been recouping. On the US side, it's very different. It's mostly because of earnings growth and productivity and profits. And that's what has been keeping them and recouping over the past, let's say,
multiples are still pretty high.
Exactly, but multiples are still pretty high. I totally agree. Over the shorter term, I think that earning component story comes back and prevails. But from a valuation perspective and margins perspective, over a longer period of time on a more strategic basis, that's where we're more cautious.
You also, Giulio, like some EM debt. What is it that you're liking specifically? Is it sovereigns? Is it corporates?
Is on the hard currency part. So it goes back, I think, to the USD having margins for reappreciation and taking that exposure from hard currency emerging market debt perspective.
But when it kind of trades EM bonds with equity-like risk, how do you balance that in the portfolio?
Well, absolutely. So that is a consideration of how much risk you want to take into your portfolio, right? So the EM story, the hard currency EM stories for us is for that spectrum of investors that are willing to take additional risk. Considering that all else equal, there is room for being more, let's say, bond-like over the medium to long term, just because of the yield component. And we've been saying this for some time from that perspective. Bonds are back because of the yield component. And if you look at initial yield for total returns over the longer term, that is a good indication of what you might get from bonds.
Just out of curiosity, the debate we're having around the table a lot at the moment is, why stocks up and gold up? Do these two things, why am I buying gold other than the fact that it keeps going up? What is when you get asked that question, what is the answer? Do I buy gold? Do I not buy gold? And if I'm buying gold, why am I buying gold?
I think the gold story is linked to two elements. One is for sure the inflation-related story. So gold, like other commodities, has what we call high inflation beta. So it's a good hedgers against unexpected inflation. And we come from a period post-COVID where we're seeing a lot of that. And so I think that is what has been helping gold being strong for the past months. And I think there is a reason for that. Now, looking forward, I think there is less of a reason for being so cautious about unexpected inflation. I think monetary policy across the regions is a little bit more under control. There is still uncertainty, it's still sticky. But in terms of unexpected inflation, I think there is less uncertainty.
Giulio, nice to see you. Thanks for stopping by to see us. Really appreciate it. Giulio Ricci, Head of Portfolio Construction, Europe at Vanguard. Core 6 looks like this morning. Tech firmly in focus, as it has been, obviously, many mornings. But ASML, as you can see, is down. ASMI is under pressure as well. Some of the defence stocks are also coming off the boil a little bit. It's interesting to see that we do see the French market being driven by LVMH, but Schneider is up this morning. If you want to build all these data centres, you're going to need some power. You're going to need some electrons, and you're going to need a way of making those electrons work, and Schneider does a lot of that. So that stock up by 1.7% this morning. Chloe Melly's got more. Over to you.
Good morning, guys. Let's start with chip stocks that are down this morning after ASM International cut its outlook for the year, for the second half of the year, given softer than expected demand. So it is down 5.4% on the back of that outlook cut, and really dragging down the shares of those other semiconductor companies, ASML and BE Semiconductor in particular. So this maybe plays out as a bit of a warning for that industry going forward. Moving on to Heineken, which is up this morning on the back of the deal that it has made with Florida Ice and Farms Company, their Central American business. So this will really boost the position of Heineken in places like Honduras, Costa Rica, Guatemala, and this is also a market that Heineken says has a lot of growth potential. So the market is reacting quite positively to that deal, and we're up 1.7% for Heineken. Moving on to Commerzbank, which is down this morning, a little bit down this morning, 0.9%, after it was cut to an underperform rating at KBW. It said that the benefits from the German fiscal stimulus were already priced in after a really massive rally in the stock, and therefore it cut it from market perform to an underperform rating. Moving on to Ørsted, which is also on the move this morning and is up 8.5% after news that it won that court ruling and was able to restart work on the Revolution wind farm off the coast of Rhode Island. And that will really spell good news for that offshore wind industry, and is really a major win against the Trump administration's decision to stop construction on that project. So up this morning on the back of that for Ørsted. And finally, Kingfisher, the home improvement company listed in the UK, is up a massive amount this morning, is up 17.4% after boosting its outlook. So we've got one of the most important moves here for Kingfisher today.
Thanks very much, Chloe. Chloe Melly from our equities team coming up on the programme. We'll pick up on the Ørsted story that she was just referencing there. An Ørsted joint venture wins a court ruling to resume wind farm construction in the United States. We'll have more on one of the biggest movers, one of the biggest gainers on the Stock 600 this morning. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting
Good question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sart in Le Mans, and this is Bloomberg.
This is the opening trade, 17 minutes into our European section, and we get data out of France that sends the euro a little bit lower. And you can see why when you look at the misses that we have on manufacturing PMI, services PMI, and the composite number. So the actual number for manufacturing came in at 48. We had been expecting that to stay at 50, so not in expansion, in contraction territory in French manufacturing. And on the services side, that was expected to be nearly 50 and has come in at 48.9. So again, in contraction territory. So both sides of the economy not powering ahead, whether the politics is weighing, whether that's weighing on sentiments for consumers or businesses, we'll see. But that is the slightly negative story that sets up the rest of the day's PMI news.
The quote from the statement this morning: subdued consumer demand was noted as a drag on activity levels in both sectors, manufacturing and services side, with survey data signalling the 16th successive reduction in total new orders. So this, in some ways, this is new. Clearly, there's a turnaround from the kind of the August picture, which looks like it was stabilizing, but there have been sort of 16 consecutive quarters in which we've seen this. So to a certain extent, maybe it is less related to what we're seeing in terms of the kind of the political picture, and maybe just a kind of longer term drag that we're seeing. But clearly there was a kind of stabilization in August, which has now kind of gone back to being quite a negative picture out of France.
Yeah, so perhaps adding to the case for another ECB cut later down the line. Let's see how much the German numbers, the broader Eurozone numbers, balance out this picture.
Yeah, they call it a sobering reality check. That's one of the comments in the statement this morning in terms of the
That
data.
sounds like a Tuesday morning.
Yeah. Sobering, yeah, definitely. Not so much, though, for Orsted, which had a very jubilant Monday. Orsted shares surging this morning after a US judge ruled that Orsted's Revolution wind joint venture, which I think is just off Rhode Island, can resume construction off Rhode Island. The offshore wind farm has been a subject of, obviously, considerable controversy with the Trump administration. The Trump administration stopping the work order, and that had a fairly dramatic effect on Orsted's share price, which is now bouncing a little bit. Will Mathis joins us now for more. So what did the judge say, and what happens next?
So this is a lawsuit that Orsted brought against the U.S. government to allow them to keep working, to overturn the stop work order. And what they asked was that while this case is pending, that they be allowed to resume work, because if they don't, they would incur devastating costs, really. And the judge yesterday ruled with them. He said, you know, while this is ongoing, you can resume work because A, I think you're going to win, and B, the cost will be really devastating for you.
Yeah, tell us a bit more about the costs of not working in this situation then, Will.
Yeah, so we got a little insight last week because, you know, little detail, Orsted is raising 60 billion Danish kroner, over $9 billion US dollars, the biggest such capital raise for a European energy company in over a decade. So they came out with a prospectus where they said that every week that they can't work, it's costing them about $25 million. And not only that, but come end of September, there's going to be sort of a cliff edge in costs where if they aren't allowed to resume working, that those costs are going to ramp up so much that it's possible that they would have to cancel the project outright, which would be...
And is that because they've just already committed to spend the money, or, you know, these are not variable costs that just disappear if they don't work?
It's because they have suppliers, they have contractors, particularly these really specialized ships where there are only a handful of them in the world that can actually install offshore wind turbines, which are huge pieces of equipment, you know, bigger than this building that we're in now. And if you have a contract, there's a certain period where you have that ship available to you. And if they have this delay, then maybe they're going to need to open up that contract, get new ships, get new contracts at today's prices rather than the prices of a few years ago.
So the delay itself costly then, Will, but that green on the screen that we're seeing right now, does that signify that the winds have changed for the sector? Is this the start of a turnaround?
Ørsted would certainly hope so. If we were to zoom out on the chart of Ørsted shares, it would still look pretty bad because, they have come out and said, we need, $9 billion to be able to keep executing on our business plan. But what they have said is that this money will allow us to turn a page. It will allow us to return to growth, deliver these projects, which are going to earn us a lot of money in the coming years. And if they can build, it could be, looking back some years from now, that this will be seen as a turning point, that they are able to start delivering on that promise.
Okay. Will Mathis, Bloomberg's energy reporter, we thank you so much.
Well, in some ways, this connects to the tech story that we've been talking about this morning. What does this produce? Where does the energy come from? Does it come from nuclear power plant? Does it come from fossil fuels? Does it come from renewable energy? I think it's probably going to have to come from all of them if we're going to power the data center story that we've been talking about all morning. This is the picture at the moment that we've got on the screen. ASMI is down by 3.8. ASML is down by 1.1. BE and Comet are actually both positive on the day. It's a really difficult picture to analyze this morning because you've got the NVIDIA story, which is quite positive. You've got the ASMI story, which is a little bit negative. Remember that ASMI has cut its outlook. We were talking earlier about this relationship with OpenAI and what OpenAI is going to do with its chips going forward from here. The relationship is with Broadcom, not Qualcomm, in terms of the chip design. That was that was what we should have been talking about, and whether or not that proceeds. So if we said it was Qualcomm earlier, we meant Broadcom.
Excellent. That's cleared up. But it is a really confusing picture then when it comes to the tech story because US futures, they had yesterday to react to the NVIDIA OpenAI story, didn't they? And we saw NVIDIA shares go higher on that, so that's not proving to be another catalyst. US futures are flat to negative, and the AEX is certainly an underperformer today on the back of that weakness in ASMI.
Well, let's dive into that. ASMI cutting its outlook for second half revenue, citing lower than anticipated demand and a, quote, mixed picture for some clients. Joining us now for more on that is our Amsterdam Bureau Chief Dasha Afasnieva. Dasha, good to have you. What has actually been the problem for this manufacturer of chip-making machines?
The way ASM has put it is that there's been a mixed picture for some of its logic clients, which means that particularly the segments that deal with the most advanced chips that are needed for AI, for the big expansion, have struggled. They've also said that there's been a slowdown in kind of analog and other kinds of chips. So the concern here and the reason why we care, I guess, is the extent to which this is a verdict on the chip-making industry, which is a bellwether, which we care about, all of these hundreds of billions of dollars that are set to be invested in AI, and we're interested in whether the pace of that investment is happening quickly and as anticipated.
So is there a read across into the rest of the kind of the semi-sector? The semi-sector is huge and not everything is connected to each other. So is there a connection to other parts?
So in a sense, you need lots of different kinds of very complex equipment to build a semiconductor fab. And a lot of it you kind of can't do without. But what ASM does is very, very different from ASML, for example, another Dutch company which makes lithography machines that you also can't do without. So on the one hand, there's this read across because you need all this stuff to build super sophisticated chip factories. But on the other hand, there's a degree of competition between some producers because companies, chip producers can decide, do they want to invest more in upgrading in their lithography machines, or do they want to splash out on deposition tools, for example, of the sort that ASM makes that kind of add layers of different materials onto the chips. So there's not a total read across, and I think in the last few months there's been this sense that recently ended that ASML, for example, would suffer a weak 2026, and then we had a string of analyst upgrades that maybe suggested that concern was excessive, and now we're seeing ASMI a bit more on the back foot.
Yes.
So it's both a verdict, I guess, on confidence in the sector, but there is some competition between these semicon equipment makers that make very different things, different parts of the process.
Okay, Dasha, thank you very much. Dasha Afantieva joining us there with the latest on ASMI. And in the piece, in our reporting, the team goes on to make the link between ASM International and Intel, and not with the NVIDIA side of things. So if, to your point about all these chip makers and chip equipment makers making for different requirements in different parts of the tech space, then maybe it's the troubles that Intel has been having before it got lots of interest and investment from other people.
And a pitchman in Donald Trump.
Yeah, exactly.
But the bigger picture is there's a lot of money pouring into all of these spaces at the moment. So yes, they may be different stories, but in some ways, do they all ultimately connect?
Just one squeeze the other as well.
Precisely.
Coming up on the programme, we'll dive into the world of private credit and wider markets. Bruce Richards will be with us, CEO, chairman and founder at Marathon Asset Management. Private credit will be part of the conversation. That sector putting up a lot of money for the AI build-out. We'll talk about that. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session, and this is the picture so far. Green across the screen. It's been a busy day already so far in terms of economic data. We're about to bring you the Riksbank decision as well. We're waiting for Chair Powell to be speaking later on, and we've already had a load of Fed speak, and it's only Tuesday. But look at the picture right now. The CAC outperforming here, up 0.6%. What you're not seeing is the misery here in Amsterdam coming down partly to that ASMI downgrade for its forecast ahead. Misery in Amsterdam seems to be the underperformer across the European continent, Guy.
It was really interesting. Yesterday's session in the United States, yes, positive, yes, driven by tech, yes, the Byron factor was in there as well. But take a look at what happened in volume terms yesterday. It was a really unconvincing session, I thought, at the back end of the day. I looked at it and volume's down kind of circa 20%. The market's not engaged. Yes, we continue to see rallies, but actually, was it a real rally yesterday? But what it has done is bled through, just from an arbitrage point of view this morning, into the European picture. As Lizzie just says, we are seeing highs. In fact, you've got 450 stocks higher, 140 lower. There's some interesting lowers this morning, which is worth paying attention to. Volume's actually quite positive, which is different to what we saw yesterday in the United States. It's not massively positive. We're pretty much on average. In terms of the 52-week high, Smiths is out with numbers. The industrial company out of the UK, up strongly this morning. That stock is flying. We're up by 4% on that one. Asia Brown Boveri, the Swiss-Swedish engineering group, also tracking higher this morning. It's up by 1.31. Prysmian out of Italy is up by 1%. So some of the engineering stocks are looking fairly favourable. But this morning, I don't know, it feels like we're waiting for the next catalyst to come through. We saw what happened yesterday. I'm not sure the US session was that convincing, but we'll see whether or not we gain some traction a little bit later when we hear from Powell, Anna.
Yeah, as we wait for that catalyst then, Guy, there's plenty of political speakers on the horizon. Let's tell you some of the other stories that you need to know about this morning. French President Emmanuel Macron has formally recognised Palestine as an independent state. The move follows similar action by the UK, Canada, Australia and Portugal. In a speech at a UN conference, Macron also called for an immediate end to the war in Gaza. The French Prime Minister added Paris could open a Palestinian embassy once hostages held by Hamas have been released and the war is over. Disney says Jimmy Kimmel Live, that program, will return today, ending a suspension imposed over his remarks related to the murder of the conservative activist Charlie Kirk. The company says it reached the decision after having, quote, thoughtful conversations with the host of the program. Bloomberg is told Kimmel will address the controversy over his Kirk comments when he returns to the stage. And on to tech news. Nvidia says it will invest as much as $100 billion in OpenAI to support building new data centers and AI infrastructure. Bloomberg has learned that Nvidia is making the investment in cash and will receive OpenAI equity as part of the deal. Nvidia assures customers that its investment won't change its focus or impact chip supply. Some of the top news stories there then, Lizzie, and we have breaking news.
We do. From the Riksbank, they have cut the policy rate to 1.75%. The estimate was to keep it on hold at 2%, so a surprise here. It was a finely balanced decision between a cut and a hold. Sweden obviously seeing this ongoing economic weakness, a soft labour market. Our economists actually had seen a quarter-point cut, and you're seeing them actually giving some quite hawkish commentary, actually, so saying that the rate is going to remain at this level for some time to come. So interesting to see the currency reaction. The krona, Swedish krona, weaker now against the dollar by 0.2%. And they're saying actually that the krona is going to be strengthening somewhat in the coming period. So contrast that actually to the SMB. That's expected to hold at 0% for now. But this surprise from Sweden's Riksbank.
Yeah, it seems the thinking evolving then, going from an expectation of either a cut or a hold to setting up the market for staying here for quite some time. Let's talk about some German data which we have hitting the Bloomberg terminal this morning. We've already had a French data this morning in the shape of PMIs. That disappointed. Let's have a look at the German figures. Well, the manufacturing picture certainly disappointing. Once again, there was a chance this number would have gone to 50. That was the estimate, but we have not achieved that. 48.5 on the German manufacturing PMI. The services number, though, does come in much stronger than expected at 52.5. So back into expansion territory in services, which means that the actual composite number isn't a million miles away from where we were, and the euro is confused, perhaps, by that. We dropped on the French data earlier on, Guy, but now pretty flat on euro-dollar.
The commentary with it. Trouble seems to be brewing in manufacturing. Sure, companies have been ramping up production for 7 straight months, but new orders took a nosedive in September. You do wonder whether we're kind of a little bit of a sort of pause, a hiatus period in the German economy before the fiscal kicks in, and we start to see maybe some more positive news coming through. That's the picture coming out of Europe at the moment. It remains a little bit on the confusing side, as it does stateside right now. What are we going to see from the Fed going forward from here? You've got this real debate which is opening up about where our star is, how far the Fed should be cutting at this point. Should the Fed be running the economy hot? Is that what the administration ultimately wants? Let's get a view on all of this. Bruce Richards is the CEO, chair and founder of Marathon Asset Management and joins us around the table this morning. Bruce, great to see you.
Good morning, guys.
On this side of the Atlantic. You think they're going to run the economy hot?
Well, a few things are happening here. So since September last year, 1 year later, the Fed has now reduced rates by 125 basis points.
Yep.
And that brings us to 4 to 4.25. the Fed, no doubt, will go to a neutral rate, which is 3%. So they have 125 basis points to go. So they're only at their halfway mark. So that's the first thing.
Yep.
They've only eased one time this year, but they have a lot more to go because jobs are slowing. And more importantly, the neutral rate is much lower than the rate we have today. And that's actually restrictive for a lot of the cohorts that need lower rates. The housing market, the construction market, a lot of the mid-sized businesses all thrive in lower rates, and this restrictive rate structure that we have here is actually holding back economic growth. So despite a 3.3% GDP growth last quarter and what's expected this quarter, jobs are weakening, and with that weakness in jobs, despite higher inflation, the Fed has now embarked upon an easing cycle that will last for some time.
Okay. Is Powell doing a good job right now? I want to get your take on that. And who's his successor going to be? And the question everybody's asking is, are we going to see QE from the next Fed chair?
Powell did a poor job at the front end because of the transitory inflation stance that he took that allowed inflation to run late, very high.
Is he behind the curve now?
And they raised rates 525 basis points in a very short period of time. And he's a bit behind the curve now because the neutral rate should be 3. He's been a bit stubborn. He's been a bit late. And so jobs have been weak, and he now feels the pressure that he can't let this slip away. Despite the economy running well, it's not running hot. Despite it running well, he sees signs on the horizon that the economy may weaken if he leaves rates restrictive, which they've been. And so the next, as you mentioned, the next Fed chair is coming into place next May, which is less than 8 months from now. And 8 months from now, you'll have a Dove take that office as the next Fed chair. They're going to bring rates almost immediately down to the neutral rate of 3. But I believe it goes more than that because 8 out of the last 14 times, and this is really important, that the Fed has lowered rates by 100 basis points or more, and that's happened over the last 60 years, 14 times. 8 out of those 14 times, longer rates have actually risen. And what we've seen right now, since the Fed cut last week, which is September 17th, we've seen longer rates actually move up, the 10-year rates move up. So I think the next Fed chair is going to do probably QE with a twist, and the twist is buying longer-term treasuries to bring those rates down, which will be stimulative to the economy, because long rates being higher is not productive for the economy. Take a look at the housing market, for instance. The average housing mortgage rate in the United States is 6.4% today. The average housing mortgage that exists today is 4.1%. So that 230 basis points gap is golden handcuffs for a lot of homeowners that don't feel the incentive to be able to move because mortgage rates are too high for whatever they buy, and doesn't provide incentive for those that want to buy. And so housing activity, construction activity is too restricted right now with rates where they are. And so there's a lot of pressure on the Fed.
Bruce, we could come into all of that. There's so much to unpack, whether it's the housing market, whether it's QE. But when we're talking about that next Fed chair and the probable alignment with the president, I'm looking to the midterms next year. And if you're running the economy hot, if you have inflation high, and are you not underestimating the extent to which the president needs to look tough on inflation at that point, and by extension, the Fed chair as well, and therefore we could see hikes?
So this level of inflation of 3% is not ideal. 2% is ideal. But I think the government is quite comfortable running with 3% inflation. They'll never say it, but I think they're quite comfortable running with that as long as you have growth, because the big deficits and the OBBA, the big, beautiful bill that was passed July 3rd, leads to deficits. And so how you get out of the deficits is A, growth, and B, inflating your way out. If you can have both at the same time in a balanced way, that's actually the perfect formula for the U.S. government, because they need to inflate their way out while growing their way out. The preference is just to grow the way out, but a little inflation probably isn't bad from their perspective.
But are we not putting too much emphasis on who the Fed chair is and underestimating the hawkish core? I'm listening to the likes of Bostic and Mussolem, and they're really not comfortable with running the economy hard.
And so Bostic runs the Atlanta Fed, and Atlanta Fed has GDP Now, and right now GDP Now, which has been better than most blue chip economists besides Bloomberg, GDP Now is projecting for the third quarter 3.3% growth rate. But when you look forward to, for the third quarter that is, but when you look forward to 2026, I think most economists and the Fed is probably in their models projecting a 2% growth rate. So I don't think the economy is running too hot, but I think they're concerned with inflation being above what is their 2% objective. And so they're looking the other way in inflation rate now, the Fed, to weak job data, which is the economy, in order to justify lowering rates. And they need to bring rates down because rates are too high. Look at the ECB. Christine Lagarde has already brought rates down to 2%, and here the U.S. Fed is 4 to 4.25.
Okay.
Clearly, the rate should be 3 or lower, not 4 to 4.25.
Okay, so you think rates should be lower, that's clear. I want to ask you about the transmission mechanism through the US economy, because in days gone by, we would have just had banks lending to companies and financial markets, and now we've got private credit lending to companies. And so I wonder, what's the relationship between these rates that people worry about at the longer end and the rates that companies are actually paying right now? Because there's a lot of competition for those clients, which is arguably bringing down some of the borrowing rates for companies as they try to invest in their future.
So I'll answer your question, but look at the most sensitive sector in terms of lending, and that's actually commercial real estate. And what you've seen is when rates went up, commercial real estate got hammered, both the cash flow that you generated from a property that was highly financed, as well as what it meant for cap rates. And so bringing rates down will help commercial real estate in a very big way. As it relates to businesses, what businesses are most highly levered? Look at the LBO community, for instance. It's been a tough stretch for LBOs as of recent, and I think that's behind us because deal flow has been cut in half because financing rates have been too high, number one. Number two, deal flow has been cut in half, and so the DPIs or distributions have also been cut in half from their normal level. Less distributions, less investments. You bring down financing, you'll accelerate the leveraged buyouts and M&A activity and any sectors of the marketplace that are levered in order to do transactions.
Okay.
And so it's very, very positive, I think, for the LBO community, for the private debt community, because when LBOs are more active, then private debt, which provides around 50% of that financing for that acquisition, will also be more active. So I think it's going to be a bonanza looking forward, not looking back, but looking forward for the LBO and buyout community and for private debt lenders. And the businesses will enjoy better cash flow, free cash flow, when they have less debt service with a lower rate structure.
And some of the businesses that are investing right now are investing in a huge build-out of capital expenditure, huge AI investment taking place. And I suppose the cost of doing some of that comes down if rates are lower. Are you at all concerned about any of the sort of canaries in coal mines, worries about too much money going into AI right now? Or are you're all in?
Certainly. I mean, 70% of all venture capital expenditures right now, or the spend, is going into AI-related businesses. And so that's a big bet on AI, and rightfully so. It's the most exciting opportunity, I think, for the venture community in some years. But we're lenders at Marathon, and we want a principal back, and we want to make sure we have guarantee of our interest. And so we're only lending when you talk about like the data centers in this sector to the most stable, most embedded, well-capitalized companies in this sector, and not to sectors that or segments of this sector that we would consider to be the neophytes or the young companies that don't have a clear path to revenue or don't have a $100 billion plus market capitalization in terms of how you value the company.
How much of your lending over the next 5 years is going to be to AI? Just in terms of the business, how much of the business is AI now?
I think of it a little less AI and a little bit more what's around data centers, because we want to be.
Let's include data centers.
So we want to be.
Is that the big focus of the business now?
So, in the United States, we think the expenditure in the data center area is around $3 trillion need in the next 4 years. Yep. Half of that is equity, and about half of that will come from lending and leases and the debt markets. Yep. So let's break that down for a second. The big companies like Meta and Google and Microsoft and AWS, these big companies are IG, and they'll be able to invest or raise capital through the debt markets for some of their spend, in addition to free cash flow. Yep. Now, when it comes to building, buying the land and building the metal, the data center itself, that'll come from the CMBS market. And so the CMBS market is about $1 trillion in size, and we think that's about $100 billion that will come into the CMBS market. Yep. Capital formation, based upon land and the metal or the box itself. Now, what's inside the box, which is everything from wiring to racks to chips being the most expensive part of that, of course. What's inside the box can be financed in the ABF market or the ABS market. And so you also see about $100 billion that comes from,
but this is all debt finance. There's a lot of debt financing.
A lot of debt financing. So we think out of $3 trillion spend that's needed, about $1.5 trillion will be equity, about $1.5 trillion will be debt, and out of that $1.5 trillion, the biggest component will be private credit, 60% we believe.
Will it be
60%
of your business? Do you think this will be 60%?
So we're only going to be financing, again, the biggest, strongest, $100 billion plus type of club that's already established businesses that have escape velocity in terms of their business model, that are the most creditworthiness.
But this is the bulk of what you're doing going forward. Is this
a component,
biggest opportunity?
This is a component of what we're doing and represents a wonderful opportunity, yes. But you stay away from the neophytes as a lender. You let that be funded purely with equity, and you see where that leads to, and we only lend to the strongest creditworthiness partners that we know are going to be repaid.
But there might be some failures.
Yes, right. So, Bruce, are you worried about are you worried about any overheating anywhere, any asset class you look at? I mean, you clearly think that the rates need to come lower, and you're supportive of that move from the Fed. But are you concerned that anything goes too far? Overheating in stocks, in the AI capex story? Where do things look toppy?
Sure. I mean, do I think there's a bubble? Let's start with private equity.
Okay. Yeah.
Definitionally, there can be no bubble in private equity. I'm going to make a blanket statement. Why? Because the average multiple that private equity pays is 11 times for their purchase. Compare that here in Europe with the average multiple being 17 to 18, in the U.S. being 22. It's a nice discount, and it's exactly in the range of 10 to 12, where it's been the last 3 years, 5 years, 10 years. And so paying 11 times to buy a business is not a bubble. And if you don't have a bubble in private equity, definitionally, you do not have a bubble in private credit, because private credit is only putting up 50% of that.
So you don't see any failures in private equity firms?
So there will be bad investments that are made, for sure. Companies, private equity will certainly, Anna, overpay for certain companies, but I'm saying as a blanket statement, I think the toughest times are behind for the LBO private equity space, because rates are going to be coming down. That's a positive tailwind. The economy looks fine, and we believe that with deal flow being 50%, and distributions being 50% of what they had been historically, will start to then trend back towards the mean. And so we see clear skies ahead, but certainly in certain segments of the technology sector and in the venture sector, yes, there will be over-exuberance that occurs, and it occurs because we're in this period, maybe the first or second inning, but we're in the early period.
How many innings are there?
in U.S. baseball, and we're going into the postseason, there are 9 innings.
Okay, just checking.
In for the long haul.
More of a cricket fan. Bruce, great to see you. Lovely to see you. Thank you very much for stopping by to come and see us. Bruce Rich is the CEO, chair and founder of Marathon Asset Management. Coming up, we're going to turn back to geopolitics. Baltic leaders say Russia is testing NATO's readiness to respond. We're going to dive deeper into that story. Tusk was talking about shooting down Russian jets yesterday. It's getting pretty heated out there. We'll talk about it next. This is Bloomberg.
SYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NATO, so-called Japanese agency. And also the NATO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the purging fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. Lithuania's president says that Russia is testing NATO's readiness by repeatedly sending armed fighter jets into the airspace of its member countries. His comments come after 3 Russian fighter jets entered Estonian airspace last week. Estonia's foreign minister says Russian President Vladimir Putin is testing NATO's unity.
Putin is playing is a fire, and next time if we see the immediate threat to our territory or to us, it can be different. So Putin is trying to escalate and also trying to test our unity and capabilities, but he's failing normally.
So as we work our way towards the UN General Assembly, let's bring in our Europe correspondent, Oliver Crook. Give us some context then as we head towards those meetings of just how bold these latest maneuvers by Russia have been.
Yeah, that's right. The Estonian foreign minister came on Bloomberg television just after, testifying before the United Nations, in which he really detailed what the actual flight path was of these 3, what he said, combat-ready, fully armed MiG-31 fighter jets by the Russians that really sort of went 10 kilometers into Estonian airspace, he explained, and then 100 kilometers staying within it for that period of time. And this was done just outside the capital of Tallinn, just a few minutes away, he said, the Russian jets were from the capital. So again, being perceived quite clearly by the Estonians and many within NATO as a sort of deliberate attempt to test the waters to see what the reaction mechanism is of NATO. And we should say that NATO does not at this point have a reaction mechanism to how to deal with these sorts of threats, which is why the North Atlantic Council, these sort of NATO diplomats, are meeting today in Brussels to discuss basically what the next steps are going to be. We're going to be speaking a little bit later to the Estonian Prime Minister after those consultations to basically figure out, does this mean, like the Polish have said, that you're willing and ready to fire upon jets, Russian jets that violate your airspace? That is really the fundamental question that we have to ask ourselves after the last couple of days. And the other question we have to ask is to what degree the United States, in its commitment to these Baltic nations, how firm that is. We've heard from Donald Trump a couple of times over the last few days saying that he didn't like what he saw. He was asked whether or not he would come to the defense of Baltic nations in Poland, and he said that he would. That being said, an invasion of these countries is something quite different from basically taking Russian planes out of the skies with air defense, and that is going to be a real conversation that they need to evaluate over the next coming days. I mean, we will go back to history just very quickly at the sort of the most recent example we have of anything like this. It was outside of Turkey over Turkish airspace in 2015 when the Turks shot down a Russian aircraft. That caused a huge sort of diplomatic issue between Russia and Turkey. It did not create an armed conflict. It ended with President Erdogan writing a sort of letter of regret to Putin. But these are the sort of examples we need to draw from in trying to evaluate how NATO is going to look at this going forward.
Yeah, try and get some answers a little bit later on, Ollie. Looking forward to your conversation with the Estonian Prime Minister later today. Ollie Crook, a fascinating conversation coming up. Stay with us for that.
Also today, we're going to be hearing from the Fed Chair himself, Jay Powell, speaking just after 5:30 p.m. London time this afternoon. We'll have live coverage, of course, on Bloomberg TV. Interesting to get his personal view here when we've already heard from the likes of Myron and we've heard from Hammock, Musselem, Bostic, throwing his hat in the ring.
Yeah, how different is his view of where neutral is, how low rates should be from Myron in particular? That's going to be something we're going to be watching for. And that's going to be the new information, I suppose, given that we've come so recently from a Fed meeting.
Is he thinking about his legacy? Is that the next kind of thing he's thinking about right now? Where does my legacy take me? Where do I fit into the pantheon of Fed chairs? My term is coming to an end. How do I want to leave it?
And lots of speakers from a geopolitical lens, lots of speakers at the UN General Assembly, including President Trump, of course. So those news lines will be crossing a little bit later. Bracing for some data out of the Eurozone on PMIs. That's coming up shortly, and out of the UK. That'll be in the pulse for you. That's coming up in the next hour of programming. That's it for the opening trade. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
French private sector activity disappoints, but German composite PMIs, well, they beat estimates. We'll have euro area numbers in just a moment. NVIDIA will invest as much as $100 billion in OpenAI to help build more data centers. This as a report from Bain warns of an $800 billion revenue shortfall in AI. Plus, Baltic leaders say Russia is testing NATO's readiness to retaliate after a series of air incursions. Let's get to the markets then. European equities are on the front foot after modest losses yesterday, you're seeing a picture of gains around 0.3% across the European benchmark. We'll break it down with the map shortly. In terms of the futures stateside, after a 28th record high for the S&P 500, you're looking at a range-bound picture right now. The next direction, it seems, for investors with exposure to the S&P 500, maybe it will come from Fed speakers. Jay Powell will be speaking later today, but within the context, of course, of a $15 trillion rally since the lows of April when it comes to US stocks. The 10-year at 4.13, just a move of around 1 basis point so far. Euro-dollar closing in on 1.18, 1.17 right now, weighing up, of course, the mixed picture, frankly, when it comes to the PMI data out of Europe, which we will be breaking across the Eurozone in the next couple of minutes, but a mixed picture when it comes to France and Germany on services and manufacturing. Gold still above those fresh record highs, above 3,700 and pushing higher still, up 0.2% so far in the session for the LM Metal. Let's flip the board and have a look at the European map and see how things are breaking down. Retailers as a sector near the top of the list. A little bit of pressure coming through for tech. The CAC current over in France up 0.8%, so a solid session so far in France. A pretty decent picture over in Germany as well. Gains of 0.5% on the DAX. And here in the UK, the FTSE 100 up 0.3%. Let's get the analysis and conversations going. The Pulse starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. I was talking about the data coming through from the Eurozone. We have the redhead right now when it comes to September. Composite PMI rising to 51.2. Yes, 51.2. The forecast had been for 51.1. So it's a modest improvement in terms of composite PMI for the month of September across the Eurozone. When it comes to manufacturing for the Eurozone, that is in contraction, 49.5. That has fallen into contraction for September, below the 50.7 that was registered in August. But it's services that's doing the heavy lifting when you put the two together. Services coming in at 51.4, so in expansionary territory, services, and up from the previous month. So some diversion between the services picture and the manufacturing picture when it comes to the Eurozone. And of course, you can think about trade and tariffs within that mix. Briefly checking the euro for you on the back of this. I was looking at 117 just a minute ago. 117.92 right now. The euro a little softer by 0.1%. Let's get to another major story then, from the macro picture to an individual corporate story, but of course with broader ramifications. NVIDIA's decision to invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. Let's unpack the deal and its implications for global markets with Bloomberg's Peter Elstrom. Peter, why does NVIDIA feel the need to do this deal, which they'll get some equity in OpenAI? Why is it important for NVIDIA?
Yeah, these AI deals, it's almost hard to keep track of the numbers now. You're talking about $10 billion, $100 billion, $500 billion deals, and we have another one that's kind of jaw-dropping in its scale. So NVIDIA is talking about putting as much as $100 billion into OpenAI. That's only going to come in tranches at this point, though. The first tranche is going to be $10 billion. They're going to put that into the company. But there is some circular logic to this deal where NVIDIA is turning over cash. We understand it's actually cash. And in exchange, OpenAI is going to buy chips from NVIDIA to be able to build these data centers. So in that sense, they're kind of swapping money back and forth. We do think that NVIDIA is going to end up buying more, generating more revenue for NVIDIA than it's actually putting in. But there is some circular logic behind these deals. And the goal is NVIDIA wants to stay at the heart of the whole AI conversation. They're the leader in AI chips right now. They want to stay there and make sure that they maintain their relationships with big customers like OpenAI. And OpenAI needs access to capital to be able to build these data centers, to be able to roll out most services like ChatGPT in the future.
Yeah, and as you say, it seems like at least on that metric, it's a good deal from NVIDIA. They get the equity, and maybe the revenue streams from an OpenAI even match, if not surpass the amount that they're investing in OpenAI. When you think about what this says about what these companies are projecting in terms of demand for AI and services that they have in the pipeline, what does that tell us? And how are they explaining the energy piece to all of this?
Right. they've talked about these data centers that are going to be as much as 10 gigawatts of energy used in these data centers. So we're talking about a massive project now, as much as New York City consumes it on its own. And they are rolling out these very big projects. We've heard before that OpenAI is partnering with Oracle and with SoftBank to be able to build data centers too. So this kind of continues that trend. Now, you alluded to the key point earlier. These are companies building the infrastructure for AI right now. What they haven't been able to do is prove that there's demand on the other side to match it. You alluded to this Bain report that came out where they talked about how the industry is going to need as much as $2 trillion in revenue to be able to justify the spending that they're doing at this point. They're not anywhere close to that track right now. So as much as NVIDIA and OpenAI can cut these deals to be able to build the infrastructure, they still have to prove that on the other side, real customers are going to buy these services and they're going to pay real money for that.
Yeah, and clearly they're betting that that will happen, but we watch for the evidence. Peter Elstrom, thank you very much indeed, with another big bet in terms of the AI story, OpenAI and NVIDIA. Peter, thank you for the details. Now, back to the macro. The Federal Reserve's newest governor has argued that interest rates should be much lower to prevent damaging the economy. Stephen Myron was speaking in his first policy speech since being appointed by the US president.
Based on this analysis, I believe the appropriate Fed funds rate is in the mid 2% area, almost 2 percentage points lower than current policy. The Federal Reserve has been entrusted with the important goal of promoting price stability for the good of all American households and businesses, and I am committed to bringing inflation sustainably back to 2%. However, leaving policy restrictive by such a large degree brings significant risks for the Fed's employment mandate.
Let's get more from Bloomberg's Valerie Teitel. Val, to what extent is Myron proving an influence across the FOMC? What did you make of his comments, and what do you expect to hear from other Fed speakers later today?
Look, it was clear, at least in the decision last week, he had yet to convince any of the other members on the FOMC, but he is putting together an argument which might sway some members of the board when it comes to their next decisions towards the end of the year. Their next one not due until later in October. But his essentially speech laid out his reason on why he thinks that the Fed should be cutting around 200 basis points. It all comes down to the fact that Trump's policies, he thinks, are lowering the neutral rate of interest all the way down to around the 2 to 2.5% range. In that speech, there was a table. He showed that the immigration policies of Trump, the lessening of the U.S.'s population, even the tariff policies from Trump are weighing on the neutral interest rate, and that is the reason why he is backing up this view that the Fed should be cutting interest rates rapidly, using this to back up the reason why he not only voted for a 50 basis point cut last week, but wants a series of 50 basis point cuts, getting all the way to neutral in a rapid fashion. He was asked by the moderator, is he panicked that the Fed's policy rate is too restrictive? He said, no, he's not panicked yet, but he'll let us know when he is. He was also asked about whether he's a fan of the Fed's 2% target. This is something the Fed has been missing on since 2021. He said he's not a fan of precise inflation targeting. He would like to drop the precise 2% on the Fed's inflation target, but did mention, Tom, that it's not a part to move the goalposts when you're middle of the game. This is something perhaps that should be considered once the Fed gets back to 2% inflation. And this is all very important, Tom, because we don't know who the next Fed chair is, and perhaps Myron could be in that seat come May next year. So perhaps these policy views will start to gain traction in that fashion. But we do actually hear from the Fed chair himself speaking at just after 5:30 p.m. London time. Remember, we did just hear from him last Thursday, but he was speaking on behalf of the FOMC. Today, he speaks in his own personal opinion.
And we'll see to what extent there is still that divergence between the Fed chair and Stephen Myron. Valerie Teitel, thank you very much indeed. Let's bring in Luke Bars now, Chief Business and Client Officer for Fundamental Equities at Goldman Sachs Asset Management. Luke, good morning. Thank you for joining us around the set. I just want to start broadly with the equity story stateside. 28 records now year to date for the S&P 500, a $15 trillion rally for US stocks since the lows of April. How comfortable are you with the rally that we're seeing in US markets right now?
Well, Tom, I think first and foremost, we just have to accept that there has been a significant amount of positive momentum in the last few months, especially. But actually underpinning that is pretty positive progression on earnings. And so especially in that tech space, I know your last guest just mentioned the spending we're seeing in the AI space. Yes, there is an existential question over the longer term about how that crystallizes into real value and returns for those businesses. But what we've seen thus far is real money earnings. What you're seeing in the hardware side of the technology space is justifying, in many ways, the momentum we've seen. Now, what I would say is we are in the 10th percentile in terms of valuations in the US market. That means, at least empirically, you have an 80% probability of coming back at least 10% at some point in the next 12 months. So investors need to recognize there is some downside risk in the near term, but we remain pretty constructive over the medium and long term. And I think, crucially, let's not forget, we've been in that 10th percentile for the last decade. And so as long as earnings continue to come through, as long as we see progression on the fundamental front, that gives us confidence that the market stays in a healthy space.
Okay, so we have to see those earnings continue to justify that 10th percentile. What is the biggest risk then for a move lower? Is it the earnings story degrading, or is it something else?
Well, I think there's going to be existential threats that are always going to be hard to judge. Yeah. Obviously, we have a fiscal policy in the US, and fiscal deficit is widening. We have just discussed what Fed policy is going to look like, and the scatter plot from last week was a little bit all over the shop. So looking at what the forward path is part of that assessment. But underlying what we've seen in the last year, at least in the last 6 months, is this positive progression in earnings, and that's what's underpinning what are still elevated valuations. So for us, business fundamentals remain crucial. Yep. Returns on equity remain crucial. As long as we're seeing those, we remain comfortable with where the market is trending. If we see some wobble on that front, and there are parts of the market that are starting to look a little bit more challenged, and we are seeing bifurcation in winners and losers to some degree, that gives us a good, healthy environment for active management. But big picture, on aggregate, things are still doing relatively well.
I just want to go back briefly to your comments on tech. Do I read from that you're not concerned about a bubble in AI, or is it more nuanced?
I don't think we're concerned about a bubble. This isn't dot-com crisis of the early 2000s. We're talking about businesses, especially take those top 5 in the index, that are generating 65% ROE. You're talking about businesses that, yes, are on a healthy multiple. When you think about it on a cash flow basis, given how cash generative these companies are, actually we remain fairly constructive. Yes, you have to be selective, and yes, you have to think about, especially in some of the hardware side of things, the progression of competition or the demand and supply cycle in something like semiconductors as you see a normalization in AI CapEx. But again, we've talked about AI CapEx normalization. We've talked about the focus on returns on capital for those big hyperscalers, and we're still seeing 50+% increase in CapEx this cycle. We're going to see $1 trillion of AI CapEx over the next 3 years. We're going to see $350+ billion of AI CapEx this year. And so that story is still very much entrenched and driving the market.
And we're not near, it sounds like you don't think we're near the end of that story. This is maybe 1, 2, maybe 3 years still further to go in terms of that as a catalytic effect for the markets.
I think it's going to evolve. I still think it's underpinning a lot of the positive momentum we see in the US market. I think we have to be very cautious over just saying universally everything will do well in that space. And I think what we are finding is the derivative beneficiaries of that AI trend are starting to look more attractive on a relative value basis. So I know Peter mentioned a second ago the power demand side of things. As you're building data centers, you're training your AI models, you need that increase in power supply. And so where you can find that through grid infrastructure, where you can find that utility space, you're not paying your 30+ times multiple, you're paying a much more muted multiple, but for relatively compelling growth for what has largely been a low-growth industry historically.
You talked about areas of the equity market that are looking vulnerable right now. Where specifically are you concerned?
Well, I think in the US, what we have seen in the last couple of quarters is a bifurcation on the consumer side. We are still seeing positive momentum largely in the luxury space. But in the lower end or middle end consumer, you are seeing a little bit of attrition, and that trade down effect is starting to play through. And so that's a good indicator of where economic health is. Again, we're not overly concerned at this stage. We still think economic health is fairly positive, and the progression of US economic growth is robust. But you are seeing that bifurcation. That is starting to weigh on some of those middle consumer, lower income consumer type categories.
When it comes to Europe, are markets overestimating or underestimating the impacts of fiscal stimulus, defence, infrastructure spending coming through from Europe?
So I think short term, we've seen a very strong rally in Europe. And so I think to a degree that is betting on the fiscal improvements you're seeing, the spending packages you're seeing, and this belief that Europe can harmonise and drive competitive advantage in a way that it hasn't done for many decades. Now, I would say valuations have re-rated and earnings haven't necessarily kept up at that same pace. And so the short-term picture is a little bit more balanced. You have to be a little bit more selective. But I would still argue that medium to long term, the backdrop for Europe remains incredibly healthy. And on that fiscal side of things, I mean, let's just use Germany as the simple case in point. We're talking about 12 months ago, fiscal consolidation in Germany, fiscal deficits reducing to 1.5%. We're now talking about over the next couple of years, German fiscal deficit could increase all the way to 3.5% to 4%. And that is being effectively driven by this need to improve spending on defence and to upgrade infrastructure. Again, not that the AI story is as prevalent in Europe, but that power story is still very relevant. We're talking about 40% of grid in Europe, 40% of power transmission in Europe is on 40-year or 50-year-old grid infrastructure. So you have to upgrade that infrastructure. That's what's driving the fiscal spend. And so if you can find pockets of growth that are going to have that existential or transformational change, that's very positive.
Does that also unlock a CapEx revival?
I think it does, for sure. And I think that animal spirits in Europe that's been a little bit tempered for much of the last decade as US has continued along this very, very positive track of momentum is starting to play through a little bit more evidently. Again, it's not universally across all sectors, and there's still areas where, you know, we are cautious on the nearer term fundamentals and the operating efficiency of some of these businesses. But if we look into areas like industrials, if you look at some of those utility infrastructure businesses, and actually even the story you've seen in financials in the last 12 to 18 months has been progressively positive.
What do you say to those clients who may come to you say, we're concerned about our dollar exposure at this point? Is that concern still justified? How are you thinking about the dollar as a trend, and how much exposure you want your clients to have?
It's actually been one of the biggest topics of discussion this year because probably for the first time in a decade, people have had to really think about it. For a long time, if you were long US assets, you were getting the benefit of translation effect of strong dollar. And so that started to move a little bit. I would say at this stage, we're fairly balanced. We can see some small downside risks to dollar, but it's not significant. What I do think is largely overblown, and one of the conversations we've had a lot internally, is this idea that the US dollar is no longer the global reserve currency. Yes, there has been a change in reserve mix for some of the, let's say, emerging market central banks. You have seen this buying of gold as a hedge against that, but you're still talking about 60% of foreign reserves sitting in central banks being US dollar. You are seeing this emergence of stablecoin and buyers of US dollars that's helping to hold that market up in a pretty meaningful fashion. So for us, at the margin, a little bit cautious, but nothing that's overly concerning our overall equity positioning or portfolio positioning.
Luke, thank you very much indeed. Really smart takes, of course, when it comes to US equity story in Europe as well, and some of the opportunities, maybe thinking about the fiscal spend that's coming through, some of that priced in, but still some way to go on that journey. Luke Byers, Chief Business and Client Officer for Fundamental Equities at Goldman Sachs Asset Management. Coming up, France formally recognising Palestine as an independent state while calling for an immediate end to the war in Gaza. Details ahead. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Lithuania's president says Russia is testing NATO's readiness by repeatedly sending armed fighter jets into the airspace of its member countries. His comments come after 3 Russian fighter jets entered Estonian airspace last week. Estonia's foreign minister says Russian President Vladimir Putin is testing NATO's unity.
Putin is playing is a fire. And next time, if we see the immediate threat to our territory or to us, it can be different. So Putin is trying to escalate and also trying to test our unity and capabilities, but he's failing normally.
Let's bring in our Europe correspondent, Oliver Crook, who's been following this for us. Ollie, give us the context, the framing around how we should think about these incursions into Estonia in light of what we've been seeing more broadly in terms of what seems to be an emboldened Russia.
It certainly seems to be that way, Tom. And before speaking to Bloomberg Television, the Estonian foreign minister was before the UN Security Council, a meeting that Estonia had called ahead of the UNGA in New York City in order to basically detail what happened on Friday. And we got a little bit more detail from him about what this incursion actually looked like. So it was two MiG-31 fighter jets that were fully combat ready. He says that were carrying sort of payloads that entered 10 kilometers into Estonian airspace and stayed within it for 100 kilometers. And he pulled up some maps and some radar pictures in order to show as evidence of this in front of the UN. And when you look at these, you're really struck that basically the direct line along the coast where they went in is right where the capital of Estonia is Tallinn. Again, the Russians have denied that they did this on purpose or that they did this at all. But if you wanted to send a strong political signal and a strong military signal, that is probably exactly where you would fly those kinds of planes. What you're now awaiting is a kind of full sort of appraisal from the United States and what their response is going to be from this. We've heard from Trump say a few fragments on this over the last couple of days. He was asked on Sunday whether or not the United States would come to the defense of Baltic nations and Poland, and he said that he would. However, Tom, it's very different to say if your nation is invaded, the United States will come and be there. Will the United States really want to stick around and really support fully Baltic nations or any other nation in NATO shooting down Russian aircraft that are in their airspace? That is some of the really dangerous ambiguity that exists within the situation, and probably as far as Putin is concerned, you know, a couple pilots and some aircraft are a very sort of low price to pay to find out what Trump and the White House's appetite is to defend NATO.
And that talks to the fine line, doesn't it, that is being thread by NATO in terms of escalation versus deterrence, and to what extent those two become blurred.
Absolutely, and this is going to be the conversation that is happening today in Brussels by the NATO foreign secretaries that sort of attend and represent NATO that are having a meeting today that was called by Estonia. Remember, this event triggered the Article 4 being called by Estonia. This is the article where you have consultations when territory is threatened by any of the NATO states. We should say that has, again, only been called into force 9 times since 1949, and 2 of those times were in the sort of last 2 weeks. We've also heard from the Polish. The Polish has been very clear. Donald Tusk came out last night and said that we will most certainly take decisions to shoot down flying objects when they violate our territory and fly over Poland. And the Polish foreign minister, even more bold, saying that if another missile or aircraft enters into our space without permission, deliberately or by mistake, and gets shot down, and the wreckage falls on NATO territory, don't come here and whine about it. You have been warned. So again, some really sort of aggressive words and speaking exactly to that line, Tom, of this question, this fine line between deterrence and escalation. We got a little lesson in that, you know, about 10 years ago from the Turkey that shot down a Russian bomber plane that went through its airspace near Syria. That plane went down. One of the pilots ultimately died because he was captured by Syrian rebels. That caused a massive diplomatic stir. It did not cause a military escalation, though it did result in President Erdogan writing a sort of letter of apology and regret to Vladimir Putin. So these are the sort of dangerous conversations that we're forced to have as we get closer to these sort of incursions into airspace. We'll be asking, excuse me, the Estonian Prime Minister a little bit later today when I speak to him about what the response is. Are they willing and ready to engage with Russian aircraft if they incur into the airspace once again?
Ollie, thank you. Bloomberg's Oliver Crook with the latest on that front. And Ollie, as he mentioned, will be speaking to the Estonian Prime Minister later, so do stay tuned for that conversation, of course, on Bloomberg. Now, France has formally recognised Palestine as an independent state while calling for an immediate end to the war in Gaza. It follows similar action by other countries, including the UK, Canada, Australia and Portugal.
Le temps de la paix est venu.
The time for peace has come because we are moments away from being unable to grasp it. That is why we are here today. Some will say too late. Others will say too soon. One thing is certain, we cannot wait any longer.
Nous ne pouvons plus attendre.
Let's bring in Bloomberg's Jumana Pasechi in Dubai. Jumana, what stood out to you from this speech from the French president?
Well, it was certainly a historic moment. Remember that this was an event that was spearheaded by both France and Saudi Arabia going back a couple of months. And there has been a coordinated effort from many Western nations, G7 nations, to move to recognize Palestinian statehood. President Macron speaking yesterday, going for that step and recognizing Palestinian statehood, and also suggesting that at some point they could actually open a Palestinian embassy in France once the war is over and once the hostages are released. We also heard from the Saudi foreign minister. He was representing the Crown Prince Mohammed bin Salman, echoing also what President Macron said, calling for global recognition of a Palestinian state and also calling for the end of military aggression in Gaza and also increasingly in the West Bank as well. Now, this takes the total number of UN members to around 80% that do recognize a Palestinian state, the exceptions being about 39 countries, United States, one of them. The Secretary of State, Marco Rubio, saying the decision is reckless. And of course, Israel themselves, with the Israeli Prime Minister saying on Sunday that there will be not a Palestinian state. It will not get established. And many within his own party are saying that actually they should be expanding settlements further in the West Bank and go one step further than that and perhaps talk about the annexation of West Bank for many countries around the world. That may be perceived to be a red line, not least the United Arab Emirates, which is a signatory of the Abraham Accords. But Prime Minister Netanyahu will be delivering a speech to the General Assembly on Friday, followed up by a meeting with President Trump on Monday. Thereafter, he says he will deliver his response to the countries that have recognized Palestine as a state.
Horizons Middle East and Africa anchor, Jumana Pasechi, thank you for that update. We're going to get back to the data on Europe next. Stay with us. This is Bloomberg.
Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as you used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars. And that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency of the
Absolutely.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. The euro area's private sector expands at the quickest pace in 16 months as outperformance in German services compensates for a slump in France. UK data is breaking now. I'll bring that to you shortly. Nvidia to invest as much as $100 billion in OpenAI to help build more data centers. This as a report from Bain warns of an $800 billion revenue shortfall in AI. Plus, Baltic leaders say Russia is testing NATO's readiness to retaliate after a series of air incursions. Let's bring you the breaking lines on UK September services data and the composite number as well. It's a pretty ugly picture here in the UK. September services PMI falling to 51.9. So, okay, still in expansionary territory, but well below the forecast of 53.5. So services PMI 51.9, below the forecasts, still in expansionary territory. The composite PMI number also slipping, well below the forecast, coming in at 51. The forecast had been for 53. So again, still in expansionary territory for composite PMI, but well below the forecast. Checking the pound for you right now on the back of these lines, 134.97, so just shy of 135 on the pound, a little softer, down 0.1%. Meanwhile, French private sector activity fell to the weakest level in 5 months as the country grappled with a fresh bout, of course, of political turmoil. However, German private sector activity rose at the fastest pace in 16 months. The trouble seems to be brewing for manufacturing as new orders took a nosedive. There is a divergence between services and manufacturing. Let's get the context, the analysis, and bring in Josie Anderson, European economist at Nomura. Josie, we'll get to the UK data, but let's start on Europe. What have you learned from the data that's crossed when it comes to PMI, manufacturing services composite across the Eurozone this morning?
Yeah, thanks. So it's definitely a mixed bag that we've seen this morning. Obviously, weakness in France below our forecast, consensus forecast, likely related to that political turmoil causing some uncertainty. And then strength in services over manufacturing. For that, you have to question, has there been an impact of those tariffs, that 15% we saw for the EU that started in August? Obviously, higher tariffs on exports to the US will likely lead to weakness. The bigger picture, though, we think there's some positivity down the line, particularly in Germany, from that fiscal boost that they're likely to see coming through, more spending on defence and infrastructure. So that's longer term, but today's numbers were quite a mixed bag. In the UK as well, we expected some weakness, but yeah, that was disappointing.
Well, it's interesting you talk about, and you flag when it comes to France. We'll move on to the UK. When you talk about France and the politics, arguably there's a sense, or there's evidence now that instability is already feeding into the data, the September data for France. Where do you think we are in the France story? I mean, what are you looking for that would make you think, hang on, we're moving from a fiscal crisis to an economic crisis in France?
Yeah, I mean, there's a lot of uncertainty there, as I mentioned. Obviously, we do have a new prime minister now, and his task is, of course, to grapple with all the differences across parliaments and get through a budget that people will agree to. But obviously, that's where Bayrou failed, and lots of people want different things. His suggestion of 2 fewer bank holidays was very unpopular. But France does have to, consolidate its fiscal situation. Its debt to GDP ratio is very high, and at some point, that threatens bond markets and financial stability in the country.
Well, the bond markets here in the UK are moving. Gilts are bid. You're seeing yields down between 2 and 4 basis points. So down to almost 3 basis points on the 2-year, which is yielding 3.95 right now. And at the long end, 5.5% on the 30-year. So yields down 5 basis points. So money is moving into gilts on the back of weaker than expected data. How bad is this data? Does it change your view in terms of the BOE?
I think month-on-month moves in PMIs don't necessarily read through into overall GDP data. But actually, in terms of the Bank of England, we know that the Bank of England, of course, does watch this data, and it also feeds into its estimates of what survey-based underlying GDP growth. So, of course, headline's still an expansion. We're not looking at recession here, but the Bank of England does keep a close eye on economic activity. And, of course, the big question is if the next cut will come. We're still expecting a November 25 basis point cut. And, of course, that would be related to potential labour market and economic weakness, but, of course, also slower inflation.
So you think the BOE does cut in November, but you don't necessarily think today's data supports the case that it does? I mean, does it reinforce that view? Does it make November more likely, in your view?
Yeah, it certainly supports it. I think the main data sets you've got to look out for are, of course, labour market and inflation. So that will be coming through. That's what we're really keeping an eye on. But it's still a live meeting, we think. And
we got German data. That was also a bit mixed as well. But you were suggesting earlier you think actually the fiscal impulse is going to be significant in Germany. What are the multiplier effects of spending on defence, spending on infrastructure, and when does that become a material story for Germany?
Yeah, so as I said, we're quite positive. Obviously, it will take time to feed through. It takes time to make decisions about where you're going to spend. And so this year, we're less, the story is more tariffs than infrastructure and defence spending in Germany. But we do expect, into 2026, that to start to dominate. And we're excited about German economic prospects.
Okay. I know you're interested as well what's happening in Sweden with the Riksbank. And that decision, I think we can characterise it as a surprise. Most thought they would hold rates at 2%. I think you were included there as well. They cut for 1.75 now. That's the rate from the Riksbank, 1.75%. Are they done, and is there an inflationary risk here?
I would say yes, they're done. That's certainly what they signalled today. Their projection for the policy rate continues to be now at this new rate of 1.75% into next year, but then rise slightly. We're talking by the end of its forecast projection, though, in 2028. So this is a new normal, is what they're saying. It was a close call, though. Yes, we expected the rate to stay unchanged, and an esteemed deputy governor also preferred that option, it was stated today. So it was an interesting decision, certainly.
I wonder, so you got the ECB at 2%, the Riksbank at 1.75, the BOE at 4%. I wonder to what extent the ECB is looking at the Riksbank and whether or not that is something that percolates through the minds, particularly when you have a bit of a mixed picture on the data front out of the Eurozone. Is the ECB firmly on the sidelines, do you think, into 2026?
I think, when separate countries have different economic cycles, they can see different adjustments in their policy rates. Obviously, both in the EU, the euro area, and the Riksbank, their policy rates can be closely linked, and FX movements can affect that too. But we do think the ECB is at 2% for the foreseeable future, and that's because, inflation is comfortably at the 2% level, and we think they'd need to see some kind of change in their 2027 forecast to actually shift the dial on whether or not they move their policy rate.
Josie Anderson, thank you very much indeed. Doing a bit of tour of the central banks and the data, of course, that's come through this morning. Josie Anderson, European economist at Nomura, thank you. Now, the Resolution Foundation, going back to the UK, an influential think tank, of course, says UK Chancellor Rachel Reeves could raise £6 billion of income tax without hurting employees by aiming increases at pensioners, landlords and the self-employed. Ahead of the November 26th budget, it is proposing to cut employee national insurance by 2 percentage points and raising the basic rate of income tax by the same amount. This recommendation is significant because former Resolution Foundation staff now hold senior positions at the Treasury. And Hong Kong is facing potentially the most damaging cyclone since 2018 as Super Typhoon Rugasa tracks toward the financial hub after lashing the Philippines and Taiwan. Hong Kong's international airport is expecting major disruptions, and schools have been closed on Tuesday and Wednesday, with similar measures being put in place across parts of southern China. The United States and China are in the final stages of negotiations for what US officials are calling a, quote, huge order for Boeing aircraft. It comes after a delegation of American lawmakers ended 2 days of meetings with Chinese leaders. Details of the potential order revealed by the US ambassador to China, David Perdue.
This is a huge order, and it's very important to the president. It's very important to Boeing. I think it's very important to China. And I think that we're in the last days of that, or weeks of that negotiation, and we're hopeful that that will turn out to be the case.
Let's bring in Bloomberg's Brendan Murray, who leads our global trade coverage. So the ambassador, Brendan, saying the order is huge. How significant is it really in terms of the totality of trade between the US and China?
Yeah, well, it sounds like it's going to be another step in a direction of bringing the U.S. and China closer economically and diplomatically. Those relationships have been on the diverging in recent months. It was just a couple months ago that President Trump said so much for being Mr. Nice Guy with China, but now it sounds like Beijing and Washington are trying to put some of the pieces of this back together. One of those, of course, being this Boeing deal, which would be huge. It would be hundreds of planes. It would end Boeing's sales drought in China dating back to 2017. So President Trump, this is the pattern that we've seen. He likes to see countries offer things like purchases of Boeing aircraft in the U.S.'s trade relationships with these other countries. We've seen it time and time again. There are also deals in the works that Turkey is going to buy some Boeing planes. Qatar also announced some of these purchases recently. So this is going to be a big deal. It's not anything that's going to be announced other than by the two leaders, depending on when they're going to finally get those arrangements together. It could be at APEC in late October, early November in Korea, when Xi and Trump plan to talk. But definitely this would be a big economic boost, just not only to Boeing, but also to the constituencies in those states across the U.S. where Boeing employs a lot of people, and of course members of Congress as well.
And Brendan, you and the team have been reporting around China in a time, of course, of increased tariffs from the U.S., has actually managed to increase its exports. How has China managed to do that?
Yeah, exactly. Through July this year, Chinese exports to the U.S. of goods are down about 20%. But what we're seeing are those goods that Chinese manufacturers are selling to other markets like India, countries like Brazil, South Africa, and elsewhere. We're seeing a flood of Chinese goods, in low-priced Chinese goods, going to markets like this because of the tariff wall that President Trump has put up. So these exporters in China are really showing their durability. The question is, how long are these? Will these other countries take it? This flood of, some would say, dumping of Chinese goods in those markets that will hurt domestic producers. How long can those domestic producers withstand that influx? And will governments try to respond with things like import barriers themselves? So it's China looks to be on a fairly solid course right now for its exports for the full year.
Okay, Bloomberg's Brendan Murray, thank you very much indeed on the agility of Chinese exporters there and that potential Boeing deal as well as we look ahead to that potential meeting between the two presidents in person, possibly in October. Now, to the domestic story in the US. Disney saying that the US chat show host Jimmy Kimmel will go back on air today, nearly a week after he was suspended, of course, over remarks related to the murder of conservative activist Charlie Kirk. The company says it reached the decision after having what it called thoughtful conversations with the host. For more, let's bring in the editor of Bloomberg's Daybreak, Mark Perrier. Mark, what do we know then that led to the decision to get Jimmy Kimmel back on air? It's only been a week.
Well, obviously, quite the week for Jimmy Kimmel. What we know is that Disney says they had thoughtful discussions with Kimmel to bring him back. Reportedly, Disney CEO Bob Iger was involved as well to persuade him to come back. Kimmel hasn't spoken yet about what his reaction to this whole debacle from the last week. We're going to find out tonight when he addresses the nation in his return.
And this has much broader significance beyond just one late-night host, beyond Jimmy Kimmel. This has raised all sorts of questions about the freedom of speech and about what critics would say is edging towards some form of censorship in the US.
Indeed. The wider discussion obviously involves freedom of speech. Conservative groups were obviously upset by Kimmel's reaction and words regarding the killing of Charlie Kirk. So I think, I think this will develop into, has the potential to continue and develop into an even wider story. But again, we have to see what he says tonight. Will he be controversial? Will he take a step back? We're all waiting to see.
Yeah, there'll be a lot of people tuning in. Mark, thank you very much indeed for the context around that story, the developments, of course, and the broader implications amidst that debate around free speech in the US. Coming up, a win for Ørsted. We're going to switch focus and look at the court rules around Ørsted, a court ruling it can resume work on its nearly completed wind farm in the US. We will bring you the details. The stock is on the move, up 7%. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets? We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Holds 85% stake in De Beers. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in De Beers to a controlling stake that is upwards of 50%.
Would you go higher than that? Would you consider taking it over?
Yes, we'll go higher.
Why?
But because we want to have effective control of the industry. We want our voice to be heard. It's a matter of economic sovereignty for Botswana. Is absolutely imperative for Botswana at this point, particularly, to take a more active role and increase its stake.
That was Botswana's President Duma Boko. Now, to the renewable energy space, and another twist and turn in this saga. Ørsted shares surging after a US judge ruled that construction can continue on its nearly completed wind farm off the coast of Rhode Island. The project had been halted due to a Trump administration stop work order. We're joined by Bloomberg Energy reporter Will Mattis. Will, I've kind of lost count of the number of times that this story and the outcomes for Ørsted have changed as a result of some adjustments from the Trump administration and then the court rulings on this. Where did things stand? What exactly did the court rule in this particular point in this story?
Yeah, well, almost always when there's news coming out of the U.S., it's bad news for Ørsted, and this is the rare exception where something has happened in their favor. And basically, they sued to stop the Trump administration from halting work on their wind farm, which was costing them, they said, about $25 million every week. And the judge last night ruled that they could continue work while this case is ongoing because A, he thinks they're going to win, and B, he thinks that it is really severe harm for them if they are forced to stop work in the meantime.
Remind us how we got to this point and what the cost of these delays are in their totality.
So, I mean, Trump has been an antagonist to wind for a long time. He hated an offshore wind farm that was built off his golf course up in Aberdeen, and as far as I know, that's sort of the origin story of his wind farm ire. He says all kinds of things.
He says he's worried about the birds as well.
He says he's worried about the birds. He says they cause cancer. He says he's worried about whales.
He says they cause cancer?
He says
Goodness.
that.
Okay.
We have a lot of wind in the UK here. I'm not aware of any wind farm-related cancer patients, but that's what he says, and he hates it, and his administration has done everything they can to stop the growth of offshore wind in particular.
It sounds like you've already answered this part of the question, but could this mark a turnaround for the prospects of wind companies operating in the US?
This would mark potentially a floor. So I think that when Trump came in, a lot of people in the industry thought that, maybe new things will not be allowed to go ahead, but things that have already been fully permitted that have those sort of contracts will be allowed to continue because, a contract is going to be honored. But Trump came in and said, issued a halt work order on another offshore wind farm, issued this halt work order on Ørsted, and basically sort of all bets were off in terms of how far he would go to stop wind farms. And even if his actions end up being illegal, what we see in the case of Ørsted, I mean, they have suppliers, they have contracts, and when there is a stop work order, those contracts are at risk of sort of running out of time, and that they would then have to sign new contracts at higher prices, and maybe in a worst case scenario, the project would become just too costly and they'd have to cancel it. So
what do you see? What is the impact on investment into the US? Because the Inflation Reduction Act was seen as a huge catalyst for European investment into renewable energy in the US, and was seen as a long-term story, given that it actually was a bill that was signed by the former president. To what extent has that unwound?
Well, it's a mix because on one side, the U.S. is definitely riskier now. Especially, I mean, offshore wind is the riskiest because there's the biggest exposure to the federal government. They have this power over the seabed that doesn't really matter what the states do. The U.S. government has signed off on that. On land, onshore wind, solar, the subsidies that were available from the Biden administration are going away much faster than people thought. But at the same time, you have explosive demand from data centers, with hotter summers, air conditioning demand going up as well. So you have huge demand, and supply needs to meet that. So that's actually quite good for the renewable energy sector. And what it could mean is that prices for consumers are going to be higher than they otherwise would have been.
Bloomberg Energy reporter Mil Mattis, thank you very much indeed for that update. Now, the Trump administration, meanwhile, has told pregnant women not to take Tylenol or paracetamol, saying it is linked to autism. That is despite a lack of widely accepted scientific evidence to support the risk. Shares of Tylenol's maker, Kenvue, slumped to a record low, but reversed some of those losses after the bell.
So taking Tylenol is not good. All right, I'll say it. It's not good. For this reason, they are strongly recommending that women limit Tylenol use during pregnancy unless medically necessary.
And the White House says doctors may be exempt from a sharp hike in visa fees for skilled workers if it's deemed to be in the national interest. Hospitals have warned that the $100,000 fee for H-1B visas could worsen the shortage of doctors in rural America. Switching to defence now, European defence ETFs have gathered almost €4 billion in assets in just 6 months, making it one of the fastest ETF growth stories ever. It comes after the EU looks to mobilise over €800 billion as part of its commitment to develop its defence industries and recognises private funding needs to be an essential part of that plan. The first European defence ETF was launched in March, with numbers increasing to 8 in just 6 months. Bloomberg Intelligence ETF analyst Henry Jim is in Geneva with some of the details. Henry, why are these ETFs so important then?
Hi, good morning. Yes, European defense ETFs are really important because for the EU, this is a way for them to match investments to the capital expenditure needs of defense companies. For investors, this provides an alternative or a way for them to look for returns outside of the regular broad equity indices, which have, in euro terms, really been flat year to date. Whereas, for example, the Bloomberg Europe Defense Select Index has returned 86% year to date. And lastly, for the ETF industry, this is a really important development because we're seeing a lot more new users coming in the industry, and it really showcases how ETFs can not only match investors with investment needs, but also as a way to provide investors a way to express their investment beliefs.
Henry, is it your assessment, you and the team at Bloomberg Intelligence, that this kind of growth is set to continue?
In terms of assets, definitely. We've seen already $4 billion enter into just the European defense ETFs. That's remarkable, but just to put it in context, we started the year in all defense ETFs in Europe with just above $2 billion. We're now at $14 billion, and $4 billion of that is in European defense ETFs themselves. Now, in terms of the number of ETFs, not so sure. We already have 8 European defense ETFs, so I think we're pretty much saturated. I could see the case that all the major issuers I've already pointed out, but I could see a case for, say, another issuer who wants to complete their product lineup, or who have a keen institutional investor who wants to invest in Europe defense, who may come in with a product too. But right now, the first and biggest European ETF, it's already cornered the market. It's got by WisdomTree, it's got about almost close to $4 billion in assets now. The next 3 among them, they split 4% each, or 12% of the market. So that's Amundi, Han ETF, and BP Paribas. So it's already a pretty saturated market, but definitely more growth in assets, but not so much in number of ETFs.
Really interesting insights, and there's more detail, of course, if you are a Bloomberg subscriber. You can get more details, more analysis, of course, from Henry and the team at Bloomberg Intelligence. ETF analyst Henry Jim with those insights into the flows into defense ETFs here in Europe. Now, Fed Chair Jerome Powell speaks at just after 5:30 p.m. this time, UK time, of course, 5:30 p.m. UK time. Jay Powell, we will have live coverage on Bloomberg Television, and we're going to be speaking to the Latvian president and the Spanish Prime Minister at the United Nations General Assembly. Up next, Bloomberg Brief. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jelana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. World leaders in New York City, the UN General Assembly set to kick off in Midtown Manhattan. President Trump is scheduled to speak. Plain diplomacy. The U.S. ambassador to China says Washington and Beijing are in talks for a huge Boeing aircraft order. And U.S. stocks hit another record high of the year. Investors awaiting Fed Chair Powell's speech later today and the latest PMI data. And that's where we stand futures-wise after that massive AI rally yesterday. Really, NVIDIA-linked stocks did extraordinarily well. Futures were mixed a little moment ago. We did get some upgrades from the OECD, which I'll tell you about in a moment, and that's helping them back to flat. As you can see, nothing much going on. There's some parsing of Stephen Myron's speech at the Economic Club in New York yesterday, and also a big focus on what Powell will say. Let's take a look at yields, because we are seeing the picture relatively stable in yields, I have to say. The 2-year yield inching up ever so slightly, and the 30-year staying where we were. The 10-year inching up ever so slightly as well, 412.73. And I do want to mention, we're not that far off the 3,800 mark for gold. So gold continues to rally as rate cut hopes continue. And also don't forget, we're staring down now fourth quarter earnings season. A couple of stragglers after the close today as well, like Micron and AutoZone, but then we'll be into the next quarter. So let's get to some individual stocks to watch now with Valerie Teitel in London. Valerie.
Good morning, Bonnie. Let's start with a check on NVIDIA, because as you mentioned, it very much powered the equity market rally of yesterday, rising 4% in the session yesterday, giving back some of those gains, but just slightly, down 0.7%. Yesterday's session actually saw NVIDIA's share price close at a record high, and it lifted the S&P 500 to its 28th record so far this year, all in the back of optimism in AI because of that deal they signed with OpenAI, $100 billion deal. Details still to be worked out, but frankly, it's seen as positive to global tech stocks. Let's move on to other deals. This one in the aircraft space. As you mentioned, the U.S. and China are inching closer to a huge deal for Boeing aircraft. Boeing stock is up less than 2% so far in pre-market trade. Now, this huge deal, Bloomberg first reported on it back in August, could total up to 500 Boeing aircraft planes. That would be one of the largest ever aircraft deals signed, and is perhaps just another example of thawing relations between the U.S. and China after that TikTok deal was signed last week. Lastly, let's move over to Kenvue. This is the Tylenol maker. These shares have been absolutely everywhere. Yesterday's session, they closed at an all-time low, down 7%. They're now up 6% in pre-market, so erasing yesterday's decline. And this is on the back of all these worries about what President Trump was going to announce in the Oval Office yesterday. It seems like the market just thinks that the fears yesterday were overdone, but he did call for pregnant women to avoid Tylenol, and it's drawing a sharp criticism from researchers and scientists who say that Trump's remarks misrepresent science and ignore decades of evidence. The president announced the changes to the FDA policy in the White House yesterday.
Effective immediately, the FDA will be notifying physicians that the use of let's see how we say that, acetaminophen. Is that okay? Which is basically commonly known as Tylenol, during pregnancy can be associated with a very increased risk of autism.
All right, Valerie, thank you so much. That is Valerie Teitel there in London. And later in the show, Don't miss our conversation with Kit Tukes, Head of FX Strategy at Societe Generale. But I want to bring you those OECD headlines now. The OECD sees US GDP rising 1.8% this year now and 1.5% in 2026. Globally, the OECD has raised its this year's global GDP forecast to 3.2% from 2.9%. It still sees 2026 global GDP rising 2.9%. And in terms of the euro area, growth of 1.2% this year, 1% next year. China's growth, 4.9% this year, 4.4% next year. The OECD saying it's still to see the full effect of tariffs on the global economy. Global leaders then flowing into New York for the 80th United Nations General Assembly. Among them, President Trump is set to speak later this morning. For more, I'm joined now by Bloomberg's Suzanne Lynch. So, Suzanne, what message will the president want to send out? What's on his agenda?
Well, look, I mean, he is due to address the UN today, and people are really watching to see what is the tenor of his comments. There are obviously a number of international issues top of the agenda. Chief among these are the Middle East and the Israel-Gaza war. What has been significant over the last 24 hours out of New York is that move by a number of countries, including France, to recognize the state of Palestine. That follows similar moves by Canada, Australia, and the United Kingdom. So obviously the United States is not on the same page when it comes to this issue. So it will be very interesting to see Donald Trump's comments on that. Obviously, the other big international issue on the agenda is Ukraine, and we have seen a number of incursions by Russian drones beyond Ukraine, into Europe over the last few weeks, including Estonia and Poland. And there are a number of meetings taking place on the sidelines at the UN. So I think a lot of US allies will be watching this speech carefully to see if Donald Trump reiterates his commitment to NATO and whether he is prepared to keep supporting Ukraine, and any update on this promised meeting with Putin and whether any possibility of a ceasefire is in the offing.
A lot on the agenda, plus the fact that the US owes the United Nations more than $3 billion. Separately, domestically, the Democrats are planning to meet with Trump this week to try and broker a deal and avert that shutdown. Does any agreement look likely?
Yes, I mean, I think it would be significant if this meeting takes place. I mean, we haven't seen much interaction, shall we say, between Democrats and Donald Trump since he came back into office for the second time. So the US president has indicated that he would be prepared to meet Democrats. So that is a sign that maybe something is in the offing here. I mean, the issue at hand is the issue of healthcare, really. These are the healthcare provisions that are in that bill. And Democrats, I think, really eye a political opportunity here. They know that those Obamacare premiums tax cuts are very popular among constituents. They want to extend those, but Republicans are opposed to this. So the Democrats look like they're not backing down. Neither, the Republicans don't need them. Need 7 Democrat votes for this to go through. Democrats put forward their own proposal. Obviously, it does not have some support. So we are at some kind of stalemate on this. But yes, signs that there will be conversations maybe as early as Thursday this week.
All right, Suzanne, thank you so much. Suzanne Lynch there. Washington and Beijing, meanwhile, in the final stages of talks over what officials are calling a huge order for Boeing aircraft. This after a delegation of US lawmakers ended 2 days of meetings with Chinese leaders in Beijing. Take a listen to US Ambassador to China, David Perdue.
This is a huge order, and it's very important to the president. It's very important to Boeing. I think it's very important to China. And I think that we're in the last days of that, or weeks of that negotiation, and we're hopeful that that will turn out to be the case.
For more now, I'm joined by Bloomberg's Brendan Murray, who leads our global trade coverage, and Jill Desis in Hong Kong. So, Brendan, what's the latest on the plane order? Apparently, it's contingent on hostilities ceasing. Is there any prospect of that?
Yeah, exactly. It sounds like it's caught up in the broader trade negotiations between the U.S. and China. And the President Trump, for months, has wanted to do this deal with Beijing, similar to the one that he did in his first term, but it would include this massive purchase of Boeing airplanes, something on the order of 500 planes, and ending Boeing's drought of sales to China that's been going on since 2017. So this is going to be the centerpiece of any sort of trade deal that President Trump and Xi can put together. They're going to speak in little over a month, face-to-face at the APEC meeting in Korea. So we'll see if it comes together by then. But this is something that the president of the U.S. wants many countries to do, is to make big purchases of symbolic American manufacturing goods like Boeing aircraft in the trade deals that he's trying to negotiate with other countries around the world.
And it certainly seems like it'll be roughly the same size as the China order from Airbus as well. Jill, what have this week's talks achieved for Beijing?
Well, as Brendan was sort of suggesting there, what we're really looking at is something that's kind of paving the way for that potential Trump-Xi meeting that could be taking place at the end of October, early November. So, I mean, you've got this, group that's been meeting with a lot of prominent Chinese officials. They did have a meeting the other day with Li Cheng. He's the #2 in China. That was interesting out of that was that Li actually kind of called it an icebreaker meeting, suggesting again that it's that idea of really paving the way for that broader meeting between their two leaders in a few weeks' time. I did think one thing that was really interesting that came out of some of these discussions this week, though, was that the leading Democrat who attended this delegation, Adam Smith, so he's the former chair of the Armed Services Committee, he actually said that there were some unresolved issues that he had spotted just as a result of some of these conversations. One thing that he pulled out in particular was an unresolved issue involving rare earths. So rare earths metals, China really has a massive amount of control over this material used in everything from advanced technologies, EVs, that kind of thing. It's been a really significant point of leverage in the ongoing trade negotiations with the United States, and something that the U.S. and China had reached a framework agreement earlier this summer that we didn't get a ton of details on, and so it does sound like that's still a sticking point. But I think, overall, you're still looking at two countries that are still trying to pave the way for that eventual leaders meeting.
So, Brendan, definitely negotiations have been ongoing, more junior staff and now, officials and plenty of meetings all over the world, not just in China. But what will it mean for actual tariffs at the end of the day? Are we still going to see these individual tariffs put on individual types of goods and then Section 232 investigations come along and we have a whole new problem on our hands?
Yeah, exactly. I mean, all of those are points of leverage that the U.S. Would apply on China and vice versa. So I think the bottom line here is that the talks are trending slowly in the right direction. The two sides are talking, which is sort of the foundation of any sort of agreement that might be reached down the road. But the tenor of the talks is positive. It was only a couple months ago that President Trump said, so much for Mr. Nice Guy when it came to China. So it's the two sides are the mood music is positive, and they seem to be on track towards some kind of deal, either as we've said at APEC in several weeks, or sometime in the not too distant future. Something that President Trump can hang on his record and say, look at all these Boeing jobs I created. Look at the soybean purchase that China agreed to, if it comes to that. So that's really what the end game is.
Jill, China has been sending its exports to the rest of the world as President Trump's tariffs have come into effect, as you might expect any economy to try and do, right? And we're just getting the OECD saying that the Chinese economy will grow 4.9% this year, 4.4% next year. What kind of state is the Chinese economy in?
Yeah, Bonnie, it's been a really interesting year, I think, for the Chinese economy. So on the one hand, you do have those exports certainly surging. I mean, you're looking at record trade surpluses likely to end out the year. Obviously, China has done a pretty good job of averting some of the U.S. tariffs by just exporting to other places. But that doesn't mean that the Chinese economy doesn't continue to have some issues at home. Actually, I'd argue, part of that shipping more goods overseas could be related to this anti-involution drive that Xi Jinping has really been on, that idea of too many low-cost goods really flooding the market in China, trying to export some of those. Obviously, though, that's still hitting at the bottom line for some of these good suppliers and producers, and you still continue to have some pretty significant problems when it comes to deflation within the Chinese economy, some concerns over consumer sentiment. So it really is a mixed bag, but I do think that the better than expected performance, at least at the start of the year, may enable China to still sort of get close to its growth targets for the year. Obviously, some of those external figures suggest maybe it comes in a little bit under, but yeah, it's been a really interesting year for China. And obviously, you know, as we've been discussing here, they continue to seem to have leverage in any kind of trade negotiations with the U.S.
Thanks to both of you. That is Bloomberg's Jill Deeses there, and also Brendan Murray. Now to other top stories trending on the terminal this morning. Hong Kong has issued its third highest storm warning as Super Typhoon Ragasa tracks towards the financial hub. It's equivalent to a Category 4 hurricane. The typhoon has caused major flight disruptions, suspension of classes and business activities. It could potentially be the most damaging storm in Hong Kong since 2018. President Trump's threat of imposing tariffs as high as 250% on pharmaceutical imports is putting cheap supplies from Indian drug makers at risk. At the top of the list, birth control pills. Approximately 2/3 of all birth control pill prescriptions in the U.S. last year were manufactured by just 2 India-based companies. Argentine assets surging after the U.S. pledged financial support for President Javier Milei. In a post on X, Treasury Secretary Scott Bessent vowed to provide, quote, all options for stabilization. Details of the aid could come after Bessent and President Trump speak with Milei today here in New York. Coming up, shares of NVIDIA pulling back slightly after closing at a record, fueled by a $100 billion deal with OpenAI. More next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of NVIDIA pulling back from a record. That's after the announcement it will invest as much as $100 billion in OpenAI to support new data centers and other artificial intelligence infrastructure. Joining us now is Matt Bloxham, tech analyst for Bloomberg Intelligence. So, Matt, we obviously saw that surge once again to the record for NVIDIA. I'm just curious, is NVIDIA getting itself into a loop where it has to continue to support suppliers who then continue to support NVIDIA? And where does that end?
Yeah, it's a good question. I think that's certainly been on the forefront of my mind today. The circularity in this deal, that they're essentially paying over time $100 billion of cash to one of their biggest customers, OpenAI, to spend money on NVIDIA chips. So I think there's a kind of quite a bit to unpick there, and I think it will certainly make investors going forward a little bit more cautious about the quality and the nature of the revenue that NVIDIA is generating. Clearly, there is a lot of real demand out there in the marketplace that's being funded by other sources, but yeah, that is perhaps the biggest question mark about this deal. But it's a huge deal, 10 gigawatts of power, which is the peak capacity of New York City, just kind of underlines the amount of investment going into the AI space. And this is just one company, Microsoft, Google, Meta, other companies, they're all investing huge amounts of money in the same area.
Yeah, and I mean, based on yesterday's action, it does seem to be that any NVIDIA-linked stock goes higher whenever the market, decides that there's full faith and credit in NVIDIA, right? It almost seems like one of those kinds of stories, but yet there are others out there trying to compete, and Huawei is one of them. It has a 3-year campaign now to overtake NVIDIA. Is it possible?
I guess it's possible, but I certainly think it's not going to be happening for quite some years. Yeah, as you mentioned, Huawei yesterday, to great fanfare, talked about this 3-year roadmap to kind of close the gap on NVIDIA, but they're doing it in, I guess, a kind of fairly unsubtle way. They're not really matching NVIDIA on sophistication of the technology, because they don't have access to the kind of really leading edge semiconductor technology that NVIDIA does, so they're having to do it through other means. And I think the reality is that for quite some time, certainly kind of developed Western countries are not going to go for that solution. It may well help to kind of wean Chinese companies off of NVIDIA technology. But yeah, I think there's still a very big gap between the technology NVIDIA is using and the technology that Huawei can get access to.
Fascinating. Matt, thank you so much. That's Matt Bloxham there of Bloomberg Intelligence. Coming up, Jimmy Kimmel is coming back. A look at what else is making headlines in your front page news next. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Willow Bay. We're going to talk about sports and eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azar. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, ABC announcing that Jimmy Kimmel Live will return tonight. In a statement, Disney said that Kimmel's initial comments were, quote, ill-timed and thus insensitive, but that it decided to put the show back after conversations with Kimmel. At least one television group that owns some ABC affiliates said that it would not broadcast the show. Next up on the Washington Post, the Trump administration linking Tylenol to autism is causing alarm in the medical field. Doctors are concerned that the warning could prompt pregnant women to avoid Tylenol even when sick. They warn that drawing broad conclusions from incomplete evidence isn't just premature, but reckless. And on the FT, Argentina President Milei is due for high-stakes talks with President Trump today. Treasury Secretary Scott Bessent said on Monday that all options were on the table to support the struggling economy. The volatility and waning public support is the biggest test for Milei since he won election in 2023. Let's get to those markets now, because the Nasdaq 100 obviously hit a 27th record yesterday, and it was primarily thanks to NVIDIA. The SOX index as well, up 1.6% in yesterday's session. We're pretty flat today, but if anything pointed to slight gains, will those be gains related to an NVIDIA type stock and all of its suppliers? Well, we shall see, but certainly gaining a little bit of steam today. On the other side of the coin, you have gold nearing 3,800. Rate cut bets, of course, but also perhaps a little hedging maybe here. The 10-year yield just down a basis point there. We're at 412.93. Slight move up at the front end of the curve, and the back end of the curve is staying where it is. Coming up, the dollar hedging story not over yet. That is the view from Kid Dukes of Societe Generale. He joins us next. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. World leaders in New York City. The UN General Assembly is set to kick off in Midtown Manhattan. President Trump is scheduled to speak. Plain diplomacy. The U.S. ambassador to China says Washington and Beijing are in talks for a huge Boeing aircraft order. And U.S. stocks hit another record of the year. Investors await Fed Chair Powell's speech and the latest PMI data. So let's take a look at those futures. They were pointed lower yesterday after the 27th and 28th record of the year for the Nasdaq 100 and S&P. Right now we're back to flat, even on the Russell 2000. Pretty much tells you all you need to know. We had that AI trade boosting NVIDIA-linked stocks yesterday, and also rate cut hopes continuing to stimulate demand, particularly for gold. I want to mention that it is very close to 3,800 right now. Let's take a look at yields. Not seeing a whole lot of movement there, a basis point or two, more towards the front end of the curve. Look, that 2-year yield almost back to 360 now, and we have the 10-year yield at 413.12 again. But that 30-year yield staying below 474. Do keep an eye on gold, though. Look, it's up another 1.1% right now, $40. Let's get to some individual stocks to watch now. Here's Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on NVIDIA, because this is really what powered the equity market session yesterday. It closed at a record high, and we're backing off of it this morning, just down 0.7%. But it was really the excitement around the deal they signed with OpenAI that led that S&P 500 to notch its 28th record this year. Let's move on to more deals. This one in the airline space. The U.S. and China are inching closer to a massive deal for Boeing airplanes. The stock of Boeing is up 2.5% in pre-market trade so far. Now, this is based on reporting that Bloomberg broke back late in August that the Chinese were looking at a deal for 500 Boeing airplanes, would be one of the largest airline deals signed in history, and that probably is just telling us that the relations between the U.S. and China are thawing just a bit if this deal is inching closer to fruition. Lastly, let's head over to the pharma space. A check on Kenvue. This is the maker of Tylenol, the maker of acetaminophen. Those shares were down 7% in the session yesterday, closed at a record low, but they're bouncing back this morning, up shy of just 6%. Perhaps the market was thinking that it would hear something maybe a bit worse from this press conference that Trump gave yesterday, and so some of that sentiment is being unwound in the share price. But President Trump's call for pregnant women to avoid Tylenol did draw sharp criticism, from both scientists and researchers. The president announced the changes to the FDA policy in the White House yesterday.
So taking Tylenol is not good. All right, I'll say it. It's not good. For this reason, they are strongly recommending that women limit Tylenol use during pregnancy unless medically necessary.
All right, Valerie, thank you so much. That's Valerie Teitel there in London. Well, we're also closely monitoring the dollar. Obviously, DXY down 10.25% year to date, its worst year on record. Kit Jukes of Societe Generale weighing in, writing this, quote, "I don't think the dollar hedging story is over, if only because overall exposure to the dollar remains very high. but I can certainly hear an echo with last year. There is a willingness to question negative sentiment about the US economic outlook and bearish dollar views. The market remembers what we did last September and October. I'm pleased to say Kit joins us now, Chief FX Strategy at SocGen. That last sentence sounds a little bit ominous, but in fact, last fall or last autumn, Kit, the dollar actually turned up and the yen and the euros suffered. What's different this time around?
I think what's different this time around, partly the dollar's stronger. I guess that gives you sort of a starting point that's slightly different. I do think that there's clearer evidence that the US economy is losing momentum. But the market is questioning it partly because there's a certain amount of distrust around the economic data. Ever since some of the sort of accuracy of the labor market numbers was questioned by the president, amongst others. And so we've got people who used to just look at the non-farm payroll numbers at the beginning of the month, and it kind of set off kind of a chain reaction in terms of sentiment. Now people are asking questions and they're not so sure, and they want more data. What happened last year was that round about now, pretty much exactly now, we started to get clear enough signs from the data that things weren't as bad as they looked, and the market repriced. I think we've had more of an accumulation. I think there's been more of a hit to consumer confidence. There are problems with the labor market that aren't just the shortage of new jobs. There's a shortage of labor to take those jobs, and it's hard to see how you get strong GDP coming from there. But there is still, there's still a debate. There's a transatlantic debate where I think some people in my job in the United States are more optimistic about the dollar than I am, and I sort of pick up there's more optimism about the US economy from the States. And finally, the other piece is I think there's a fairly clear sense that this administration would like a weaker dollar at this point, and that would help the US economy. And certainly listening to Stephen Merrin yesterday, that was kind of a theme that was there in the background. So I think the market's more confident about dollar weakness. Finally, I'll just say one other thing. The price of gold says something about demand for the dollar.
Yeah, I wanted to ask you about that. We're close to 3,800. Is that signaling nervousness, Kit, or optimism? What's it signaling?
It's signaling demand. I think that's the piece. I think there's, Bloomberg ran a story this morning or last night, not quite sure which, but about Chinese authorities trying to facilitate the storage of physical gold in China by countries that don't really want to put it somewhere in the US or the UK, say. I think those kind of stories that suggest a desire to have gold and not have gold, if you like, in Fort Knox or something, those are significant stories in terms of this kind of fracturing of the global financial system, but also kind of people pulling away from the dollar. So we shouldn't ignore them. That all of these things all add up to. There are people out there who don't want to invest a lot in the US, and frankly, the US has got a lot of bonds to sell.
Yeah, it's day after day now with gold's rise. You mentioned Stephen Merrin at the Economic Club of New York yesterday. I'm curious as to what you thought about his thoughts on the neutral rate. Just let's have a listen to one of the little passages.
In my view, insufficiently accounting for the strong downward pressure on the neutral rate resulting from changes in border and fiscal policies is leading some to believe policy today is less restrictive than it actually is.
Which parts of that do not make any sense to you, Kit, if any?
I think that the issue for me with the way I would see the border controls and what's happening with some of those isn't necessarily pushing down. If it pushes down a neutral rate, it pushes down the real neutral rate because it pushes up inflation. But it's giving the United States a more difficult inflation growth trade-off. I don't know that the solution to a difficult growth inflation trade-off is to push for more growth and live with the inflation. I'm not sure that that's what the mandate requires. So, but I think, look, I think a debate about what the right neutral rate is fine. I think if the neutral rate is lower than it is, I still look at the US economy and say, well, it's very close to full employment. So how does that work? It's running substantial current account deficit. How does that work if the neutral rate's actually much lower? So I have some questions, but if the neutral rate is lower and US interest rates are going to be less high relative to the rest of the world going forwards, the dollar's going to be weaker.
Well, let's talk about that because we have yields now. The 30-year yield stuck around 375 and not really going anywhere. You've got a little bit of movement at the front end. What's fair value for the 10-year right now, Kit?
I don't know. I think that's part of the problem because we're trying to get used to a world where, post the QE experiment and post these sort of super monetary policy accommodation after the financial crisis and then after COVID, we're trying to normalize term premia, and those are steepening curves. But I think that I think we should probably see that as short-term rates come down, we can get lower 10-year yields. The only thing that will prevent that happening would be the size of the supply and the concerns about inflation. So from where I sit staring at the foreign exchange market, I look and say, well, if you're trying to, if you're seeing a less attractive 10-year yield in real terms, and you're casting some doubt in investors' minds about how many more dollars they want to own, then the trade-off you'll get is eventually going to be you will get somewhat lower yields, but you might get more dollar weakness.
So what are your targets, rough targets for, euro dollar, for example? Do we go to 120 or beyond? And yen as well, given that the leadership race is now in full steam?
I think we'll get euro dollar to something like 125, which means I don't think we'll get to 130, and I think we'll get through 120. That would be the same kind of level as we reached in 2020 after the Fed cut rates very aggressively, obviously as a result of COVID. The same kind of rate as we saw in that run-up that the euro got when there was optimism about economic growth back in 2017, 2018. I think those levels are eminently reachable. I don't think the European economy, as it's structured now, can cope with the kind of levels we saw, back after the financial crisis. If you like, certainly not 160, definitely not 140, and I can't really imagine 130. So those real peak levels that we saw then, we're just not going to see again.
Kit, thank you so much. Kit Jukes of Societe Generale joining us there. Now on to other top stories trending on the terminal this morning. Hong Kong has issued its third highest storm warning as Super Typhoon Ragasa tracks toward the financial hub. It's equivalent to a Category 4 hurricane. The typhoon has caused major flight disruptions, suspensions of classes and business activities. It could potentially be the most damaging storm in Hong Kong since 2018. President Trump's threat of imposing tariffs as high as 250% on pharmaceutical imports is putting cheap supplies from Indian drug makers at risk. At the top of the list, birth control pills. Approximately 65% of all birth control pill prescriptions in the US last year were manufactured by just 2 India-based companies. JP Morgan CEO Jamie Dimon says he hopes President Trump and Indian Prime Minister Modi can reach an agreement. He spoke with the Times of India. When asked about the H-1B visas, Dimon said he will be engaging with stakeholders and policymakers. Coming up, wars in Ukraine and Gaza and potential plane orders. President Trump speaks today at the United Nations General Assembly. More on all that next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Putin is playing is a fire, and next time if we see the immediate threat to our territory or to us, it can be different. So Putin is trying to escalate and also trying to test our unity and capabilities, but he's failing normally.
Estonia's foreign minister there. Well, the wars in Ukraine and Gaza and much more top of mind at this week's UN General Assembly. Global leaders flying into New York and Washington as the summit kicks off today. For more, I'm joined by Bloomberg's Washington correspondent, Tyler Kendall. So, Tyler, President Trump is one of the UN's loudest critics. He's set to speak today. What is he going to say?
Right, exactly. I'm actually about to head over there ahead of these remarks at 9:50 a.m. Eastern, and we sort of already got a little bit of a preview from the administration. For example, something to put on your radar. The White House says that President Trump will likely push other countries to tighten their restrictions on asylum amid the broader push from the administration to curb migration into the U.S. So that's perhaps going to be playing in the backdrop as well. But of course, there are two conflicts that are really going to take center stage. One, of course, the war in Ukraine. President Trump set to meet with the Ukrainian president later today. And then the war between Israel and Hamas. As we've seen some of these U.S. allies move to recognize a Palestinian state, we are expecting President Trump to defend Israel's right to defend itself. But you alluded to it at the beginning, sort of looming over these remarks today is that President Trump will likely point out that the U.S. has been the United Nations' largest financial backer, but he feels hasn't gotten that much from the organization. In fact, if you look at the numbers, the U.S. has stopped paying its bills to the United Nations since President Trump took office. Combine that with delinquencies from prior administrations, the U.S. currently is on the hook for $3 billion in dues and payments to the organization.
And technically, the UN could kick the U.S. right out of the council. Who is he going to meet this week?
So there's a set of meetings set for today. We know, for example, he's going to meet with the UN Secretary General, European Union leaders. We're going to be watching that very closely, particularly on the trade front. But then there's two leaders that I would highlight. One, he's set to meet with the Argentinian President Javier Milei, and we sort of got a preview yesterday from the Treasury Secretary Scott Bessent. In this post on X, he spoke about this idea that ultimately the U.S. will help keep Argentina from falling back into a crisis, adding that, quote, all options of stabilization are on the table. He went on to explain what this could mean. Options could include, but aren't limited to, currency swap lines as one example. And then the other leader to point out, as I mentioned, he's going to be meeting with the Ukrainian President Zelensky today. And there's a lot, of course, that they could be discussing. But we know that Ukraine is going to be pushing this administration for those stricter security guarantees. They want to see a more robust commitment from the U.S. To match what we've seen from some of our other allies. Of course, as you well know, the administration has been pushing other nations to sort of take the forefront when it comes to security guarantees, but also in particular when it comes to some of those more punitive actions. This administration is calling on our allies to implement so-called secondary tariffs like they've done against India for its imports of Russian energy supplies.
All right, it could be a long day, Tyler. Hope you got some sleep last night. That is Bloomberg's Washington correspondent, Tyler Kendall. Over in Beijing, U.S. and Chinese officials are in the final stages of talks over what they're calling a huge order for Boeing aircraft. This after a delegation of House representatives ended 2 days of meetings with Chinese leaders. Take a listen to U.S. Ambassador to China, David Perdue.
This is a huge order, and it's very important to the president. It's very important to Boeing. I think it's very important to China. And I think that we're in the last days of that, or weeks of that negotiation, and we're hopeful that that will turn out to be the case.
Brendan Murray is back with us now. Brendan, thank you. So obviously this helps Boeing. You know, what does it do for the United States in general and Beijing too?
Yeah, exactly. I mean, this would be a big feather in President Trump's cap to sell that many airplanes, some 500 to China for the first Boeing sale to China since 2017. That would keep Boeing busy for years in terms of on top of the backlog it already has. So that would be a key ask of the United States if a trade deal with China is going to be concluded in the next several weeks. However, you know, there are a lot of other details that need to be hammered out, and you know, it still could be months before we see any sort of comprehensive deal put together. But the hope is, and it's sounding more and more like optimism from both sides, that the meeting that Presidents Trump and Xi plan to have in Korea at the end of October at the APEC meeting could be the basis for some sort of deal that they could put together that would involve these airplanes and other things like purchases of U.S. soybeans, which China hasn't purchased many of lately. So that would be the hope. President Trump really wants to do this deal with China, and the Boeing sale would be a big part of it.
You know, I want to ask you about India because obviously we had, you know, chaos at the weekend with this H-1B $100,000 fee farrago. Secretary Rubio, though, calling India of, quote, critical importance to the U.S. despite the visa policy disproportionately affecting India. Was that a message to India? What is the latest on trade talks and just general relations between the two?
Yeah, things sound to be, it sounded like they were starting to warm a bit. The two leaders exchanged pleasantries last week, and it sounded like the relationship between the U.S. and India was headed back on track. And then these H-1B visa announcements came out and added complexity to an already difficult situation. The U.S. is asking India to stop purchasing Russian energy and wants India to open its agricultural markets to U.S. exporters. So there's a lot of asks, a lot of big asks. The tone seems to be right, but the momentum isn't yet moving in the direction of any sort of deal in the short term. So these are the kinds of things that will be part of the talks at the UN this week.
Brendan, thank you so much. As always, that's Brendan Murray there. Turning to tech now, shares of Nvidia falling in the pre-market, but they closed at a record high. That's after the chipmaker announced it will invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. Let's get more from Matt Bloxham, tech analyst for Bloomberg Intelligence. Matt, is all this getting a little uncomfortable with Nvidia? I don't want to say propping up its suppliers, but certainly, you know, issuing public support, you know, and at the moment everyone believes in the full faith and credit of Nvidia, but is it that strong? Is it that healthy? Can it do this continually?
Yeah, I think there's definitely some question marks there about, you know, the circularity of this deal. Essentially, you know, over time spending or giving $100 billion of cash to OpenAI in exchange for equity, but then essentially OpenAI using that money to buy NVIDIA technology. So I think it will definitely start to kind of challenge people to kind of maybe probe a little bit more the revenue going forward. Obviously, it's not the only deal like this. I mean, we've seen quite a few announcements from NVIDIA recently around investments to kind of kickstart AI projects in a number of countries, including here in the UK recently. But, you know, I think there's clearly a sign there that, you know, there's a huge amount of investment still to come into the AI space. Some estimates suggest that up to $3 trillion of investment in AI data centers over the next 5 or 6 years. So, you know, it's a big area and it's definitely not going to go away anytime soon for sure.
All right, Matt. Well, NVIDIA down this morning, but we'll see if that holds throughout the day. That's Matt Bloxham of Bloomberg Intelligence. Coming up, awaiting Chair Powell and President Trump will get you set up for your trading day. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, the latest round of PMI data. That's out at 9:45 Eastern Time. That's followed by President Trump's remarks at the United Nations General Assembly later this morning. Also, Fed Chair Powell will speak on the central bank's economic outlook. That's at 12:30 Eastern, and a big focus. Let's have a look at some stocks moving pre-market. Micron, earnings coming after the close. Well, it is rising 1.2%. Shares are up almost 96% year to date for that company. Boeing, US and China obviously getting closer to this huge aircraft order, apparently following talks in Beijing, and that stock continues to rise pre-market up 2.5% now. And then Tylenol maker Kenvue is rising, having dropped substantially. We'll check out how that moves throughout the day. It is recouping some of Monday's drop as President Trump's call for pregnant women to avoid the drug draws sharp criticism from researchers. Let's take a look at the macro environment. After the SOX index was up 1.6% and we hit a 27th record for the NASDAQ 100. Futures very slightly higher. We'll see how NVIDIA and those linked stocks move today. Not too much movement on the 10-year, down a couple of basis points to 412.54. Gold bears watching up another 1%, close to 3,800. That is it, though, for Bloomberg Brief. Surveillance is next. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Fed's in a difficult position, but it's certainly taking a risk by lowering interest rates.
They have room to maneuver. They have room to come down some on the policy rate and still put downward pressure on inflation.
The flattening that we've seen is a bit of a buy the rumor, sell the news on the back of the Fed.
The Fed is cutting on risk management grounds into what may be the early stages of a cyclical reacceleration.
You kind of have the benefits of Fed cuts without the penalty.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, adding to all-time highs, the S&P 500 posting its 28th record of the year so far, as NVIDIA is revealing some big plans to invest $100 billion in OpenAI. Investors are shaking off concerns about a very divided Federal Reserve. It's Chair Powell up next.
Yeah, he speaks later today, and the question is, will anyone listen? Does anyone care? Because ultimately what we heard yesterday from a number of Fed presidents was, we're not eager about cutting rates in October. We're not eager about cutting rates aggressively. We're very worried about inflation, whether it was Beth Hammack, whether it was Raphael Bostic, or whether it was Alberto Busalam. And guess what? The market doesn't care, because the market's looking to 2026, and these members have less clout in the market's eyes.
There's a lot of daylight between them and one man, Governor Myron. Governor Myron wants to get back to neutral fast. How much daylight is there between him and Chairman Powell?
There's a lot of daylight. He says he's going to continue to dissent at every single meeting if he has to, as long as his view does not change. So basically, we have what the future will look like in 2026. Whether or not Steve Myron stays on the board after January, that remains to be seen. But his thinking, that will continue, which makes it really difficult for Jay Powell today to talk about, consensus building at the Fed. Because guess what? There's now an active debate at the Fed. There's no longer a consensus think tank Federal Reserve.
It makes it difficult to go against this market as well. This came from Bruce Richards of Marathon Asset Management. I think the next Fed chair is going to do probably QE with a twist, and the twist is buying long-term treasuries to bring those rates down. It's going to be a bonanza looking forward, not looking back.
And that's what a lot of people have been saying, that almost 100% of the time when the Fed cuts rates, we're not in a recession. The market's up and up materially since then. And this raises this question that a lot of people have been asking on the show. When are we in a bubble? And if we're in a bubble, do you keep buying? Because ultimately bubbles tend to go up a lot longer than people think. But at what point are we overinflating asset valuations at a time where no one can see the scenario where anything can go down because everyone's spending money, central banks are cutting? It's nirvana for risk.
Hello, NVIDIA. A $100 billion investment in OpenAI to help them build out and spend money on NVIDIA? Is that how this works? NVIDIA this morning down by 0.6%.
Wonderfully stated. There is a fear that this is incredibly circular. Essentially, NVIDIA giving $100 billion to OpenAI to invest in data centers that are crafted by, guess who? NVIDIA. If they feel like this is a proper partnership, on one hand, you can make an argument this is just supporting an ecosystem that's going to evolve. On the other hand, how circular, how self-referential is this industry becoming if some of these big chip providers are essentially lending money to their clients to buy more chips?
NVIDIA chips are basically on sale for OpenAI. New Street Research says for every $10 million NVIDIA invests in OpenAI, the startup will spend $35 billion on NVIDIA chips. So basically, we're going to give you this money. You have to buy our chips. You're going to get them at a discount.
We've got a lot to talk about. Coming up this hour, Keith Lerner of Truist on another major AI deal. We'll speak to George Pollack of Signum on a divided Federal Reserve, and Ed Hosseini of Columbia Threadneedle as the U.S. pledges support for Milei's Argentina. We begin this hour with stocks reaching fresh all-time highs following NVIDIA's $100 billion investment in OpenAI. Keith Lerner of Truist writing, the bull market continues to earn the benefit of doubt, aided by S&P 500 earnings at record highs. The S&P is in a longer-than-average period without a 5% pullback, thus vulnerable to bad news. Keith joins us now for more. Keith, welcome to the program, buddy. Let's get to it. This deal, NVIDIA, a $100 billion investment in OpenAI. Are we looking at a house of cards or the real deal?
Yeah, well, first, great to be with you. I mean, it does raise a little bit of red flags longer term, but in the short term, I don't think this really is a negative. In fact, it's a positive because it's going to float into earnings. And as you just mentioned in our write-up, I mean, the key driver of this bull market has been AI and tech, and the key driver for the overall market has been those earnings from these companies. And this isn't going to change that, at least in the near term. And then as you think about Jensen Huang and his projections for 2030, he thinks infrastructure spending is going to be, 3 to 4 trillion versus about 600 billion today. So does it raise some, eyebrows a little bit? Sure. But in the near term, I think this means that earnings continue to move up, and that continues to support this tech trade and the overall market.
Well, how sustainable, Keith, are those earnings, if those earnings are just off the back of some big investment from one big company?
Well, it is, to one big company, but it is also, I mean, at this point, we're also thinking that we're going to see this, broaden out. And even though these AI stocks have done really well, the infrastructure spend that I mentioned still has a ways to go. So listen, as we look at the overall market, if we overlay the tech market relative price strength to the overall market, and we overlay that with earnings, there's a very strong relationship. That relationship has shown no signs of slowing down. And ultimately, I think this spend will broaden out as well. So again, it's something that we're sticking with. We think that this, not only does the bull market deserve the benefit of the doubt, tech deserves the benefit of the doubt as well.
What would raise a red flag for you, Keith, given the fact that so many people who we've talked to say that they can't really even come up with a risk scenario that could stymie some of the gains that we've seen in big tech and the broader markets?
Well, it's what you just brought up, Lisa. I mean, expectations are high. If you look at most things, the market has been numb to negative news. So, maybe it's something from left field, but I'm also reminded by, Peter Lynch's old quote that, more money has been lost in anticipation of the correction than the correction itself. This morning you all led with the amount of new highs in the market this year, 28 new highs for the S&P. When we test that out, looking at the fourth quarter, when you've seen 25 new highs heading to that fourth quarter, the fourth quarter averages a gain of about 5%. It's up about 89% of the time. Now, that's not a guarantee, but it does tell you that momentum that we see leading up into the fourth quarter tends to continue. Does that mean we're not going to see a hiccup, something that we're not talking about to kind of, give us all a gut check? We'll probably see one along the way, but I want to stick with that primary trend, especially as the economy, we think, actually moves up a little bit. We've seen the 10-year come down off the highs as well. We have the Fed cutting rates, and we also have the stimulus bill that's actually offsetting somewhat some of the tariffs. So all in all, I think it's a decent environment for risk assets.
And people thought that we'd get that gut check in September, and everyone bought that gut check, so we never had it. There is this question about also the Fed rate cuts and how much that's a supportive element to what we're seeing right now in markets. You point out that when the Fed is cutting rates, when markets are at all-time highs, stocks are higher 6 months, 12 months after that, 93% of the times. How much is this really supportive of any kind of bullish call? And even if you have some skepticism about some of the tech investments, Fed rate cuts can save it all.
Yeah. In our view, the Fed rate cuts are one factor of many. The North Star for this bull market, in our view, is still corporate earnings. If I think about this year, we're up 13-14% with only one Fed rate cut because of technology. And if we put that $100 billion number from NVIDIA and OpenAI into context, I don't think a quarter or 50 basis points changes. I think where that rate change matters the most is for some of these smaller mid-cap companies that have more floating rate debt. And as you saw in July and August, there was some rotation into that as the rate cut. So I think those rate cuts are more important for the small caps and mid caps, but less important for the mega cap tech stocks, which have a lot of cash and cash flow positive.
You've been changing your mind on small caps, especially after this summer. What exactly is it about the small caps you like? Is it just the rate story in the Federal Reserve?
Yeah, well, our big picture theme, as I mentioned, is still AI, tech, and we're still overweight growth and large caps. But where we were, really underweight small caps, we went to more of a neutral position back in August. And there's a couple different factors. One, they have underperformed by the most since 2000. They are relatively cheap. That hasn't mattered. But what has changed over the last few months is the earning trends have started to move up in a meaningful way. At the same time, we have that one big, beautiful bill that has actually some incentives for more leveraged companies and capital depreciation as well. So I think that's a positive. We also have seen huge outflows out of small caps. So I think position is somewhat light. And the technical trends have improved. So we put that all together with a little bit of sprinkling of some M&A. we don't want to be underweight the group. Is it leadership? No, but we also know that, you know, if you have like a 1% move out of NVIDIA, that's about 40 billion. That's 3 times the biggest small cap company. So just, we want to at least participate in that area of the market, especially if we see some bouts of, you know, rotation later this year.
You still like gold as a diversifier. They also continue to hit new record highs every single day. Do you think actually you should be going longer into gold, adding more there?
Yeah, I don't know that I'd be adding more today. We've been in gold all year long. It's up over 40%. It's having an outsized impact on portfolios. The other thing with gold that's interesting is we measure when days where stocks and bonds are down. Gold has been up more than 50% of the time this year. And if we kind of zoom out a bit, even though gold's up a lot now, you have to remember these things tend to cycle in long cycles, and gold didn't do anything for almost the last decade. So we like gold longer term. We're sticking with gold near term. On a short-term basis, is it getting a little bit extended? Probably, but we think that underlying trend, central bank buying, interest rates moving down, a little bit of weakness in the dollar is all supportive of continued strength in gold over the next year.
Hey, Keith. Appreciate catching up. Thanks for the time this morning. Keith Lerner there of Truist Advisory Services on the latest moves we're seeing from NVIDIA in the AI space. Do you want to fight it? This came from Tony Pasquarello of Goldman Sachs just yesterday. Do I love the positioning setup and the tactical risk reward? I don't. He goes on to say, with that said, do I think you should be stepping in front of the US mega cap tech freight train? I don't.
There's no reason to sort of say that it's going to stop anytime soon. There's no red flag. Even some of the profitability, the actual monetization of these programs, you're starting to see it percolate out, albeit at pretty small levels at this point. That said, people point to the fact, and Bespoke Investments did a great job of this, this was a dynamic back in the late 1990s as well. The internet was a real thing. It actually became transformative. But who the winners were? Well, we're not using some of the same at hotmail.com that we were back then.
We're throwing a lot at the wall at the moment, trying to find out who those winners actually are. NVIDIA down in the pre-market by about 0.6%, a string of all-time highs on the S&P 500, just about unchanged so far this morning. With an update on stories worldwide with your Bloomberg brief, let's cross over to Yahara Anand for more. Hey, Yahara.
Hi, John. In a blockbuster AI deal, NVIDIA is set to invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. The agreement will help OpenAI build the data centers using NVIDIA's advanced AI chips. The investment will be provided in stages with an initial $10 billion. NVIDIA shares popped nearly 4% yesterday on the news to close at another record high. Meanwhile, the Trump administration has linked Tylenol to autism, urging pregnant women to avoid it. The moves come despite a lack of widely accepted scientific evidence supporting the risks. Still, the FDA recommended doctors consider minimizing the pain medication for low-grade fevers, while noting a causal relationship between autism and Tylenol has not been established. And after a brief suspension, Jimmy Kimmel Live will return tonight. ABC's parent company, Disney, says it decided to bring back the late-night show after thoughtful conversations with its host. The suspension was a response to remarks Kimmel made regarding the assassination of conservative activist Charlie Kirk. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, a divided Federal Reserve.
The appropriate Fed funds rate is in the mid 2% area, almost 2 percentage points lower than current policy.
It's important that we stay restrictive to bring inflation back down to target.
There's a lot of daylight between those two policymakers. We'll get into that next with George Pollack of Signum Global, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Some data and an important speech for this market later on this afternoon. On the data front, 9:45 Eastern Time. Look out for the PMIs. Better than expected out of Europe, the Eurozone, driven by Germany. Let's see if we get that in the United States. This is important. Are we seeing signs of a re-acceleration stateside coming out of the summer? That's the data. Then later, it's Chairman Powell. 12:35 Eastern Time. His thoughts on monetary policy and maybe, possibly, his personal views on where we are and the division on the FOMC. Into that, the scores look like this. 3-day winning streak on the S&P 500. Can we make it day 4? Just about unchanged on the S&P. Likewise on the NASDAQ. In the bond market, we've had a 4-day run of high yields. At the front end on 2s, at the long end on 10s. That takes a pause this morning, down about a basis point on 2s and down 2 basis points on 10s. Still at the very low end of the range for the year so far, Lisa. But notable, that move. Ever since the Fed made that call on Wednesday, yields have been drifting higher.
Maybe people have actually been reading the commentary and giving it a little bit more credence, because other than one member, and a lot of people have pointed this out, yesterday we were talking about this, the fact that you didn't get any additional members joining that descent for 50 was telling. Chris Waller, Mickey Bowman, they stood behind a 25 basis point rate cut. There's a signal in that.
10-year bond yields this morning down 2 basis points to about 412.73. Under surveillance this morning, a divided Federal Reserve.
We should be very cautious in removing monetary policy restriction.
The appropriate Fed funds rate is in the mid 2% area, almost 2 percentage points lower than current policy.
It's important that we stay restrictive to bring inflation back down to target. If we remove that restriction from the economy, things could start overheating again.
Leaving policy restrictive by such a large degree brings significant risks for the Fed's employment mandate.
So here's the latest this morning. Division at the Federal Reserve making itself known as traders await more Fed speak, with comments from Chair Powell expected later on today. Joining us now to discuss is Bloomberg's Mike McKee. Mike, there's a big difference at either end of the spectrum on the FOMC.
Yeah, we heard from both ends of the spectrum. Beth Hammack, Raphael Bostic, and Alberto Musalem are 3 of the hawkish members of the Fed. And they all spoke yesterday and all said basically the same thing you just heard from the Cleveland Fed Bank president. It's Stephen Myron who stands out, calling for much lower rates much faster, because his argument is that tariffs, taxes, and immigration have all changed the neutral rate for the U.S. economy, and it is, as you heard him say, much, much lower. There's not a lot of support for that. There are some people who think that the neutral rate has come down, but nobody's really putting a number on it like he is at this point. And I would point out, you just had a graphic showing that Mickey Bowman is speaking this morning at 9 o'clock, and she's speaking on her economic outlook. And since she's the closest one to Myron in terms of the distance between the Hawks and the Doves, it will be very interesting to see if she accepts any part of his argument and suggests that anybody on the board might be even close to his view of how much interest rates should come down.
Mike, can you just build on the debate around the neutral rate? Just how wide are the range of estimates currently at the Federal Reserve for precisely where neutral might be?
Well, the long-run neutral rate in the summary of economic projections is 3%. You can't really take that too seriously, because everybody just kind of puts down a number there. But then when you talk to most of them think it's in that area. Of course, you can't really see what the neutral rate is. You can only observe it in hindsight, or as Jay Powell likes to say, we know it by its works. And so I think you've got big majority on the board thinking somewhere around 3, and some people think maybe 3 1/4, some people think maybe 2.75, but nobody is saying 2 to 2.5% at this point.
Mike McKee with the latest. Mike, thank you, sir. Appreciate it. Let's run with the idea that we've got 2 different time horizons here between now and May, and then from May onwards. So that's basically the difference between a Chairman Powell Fed and Chairman Powell no longer being there. Let's deal with the next 6, 7, 8 months or so. This Federal Reserve, the last cut was the easy one. The closer you get to neutral, the more difficult it becomes. And I wonder how persuasive the Governor Myron argument's going to be for the remainder of the year and through early 26.
I thought Mike actually had a wonderful point, the idea of Beth Hammack, but then also Mickey Bowman, and how important it is to listen to how much credence she gives this argument of a neutral rate around 2% or even 2.5%. If she is amenable to that kind of idea, this could point not only to more reductions next year, but also to the Operation Twist that we've heard so much about.
To extend the conversation, George Pollack of Signum Global joins us now for more. George, welcome back to the program. I mentioned those 2 different time horizons there. We've dealt with the first one, the remainder of Chairman Powell's tenure as the chairman of the Federal Reserve. Let's talk about the post-Powell world at the Federal Reserve. Are Governor Myron's thoughts a taste of things to come?
Yeah, I think any notion that a next nominee from President Trump will be someone not like Governor Myron, I think is optimistic thinking. The reality is the president understands, having nominated Powell on his first term, that he needs to get people who agree with his preferred monetary policy on the board, and that should be the expectation by and large.
George, do you think he's purely on loan to fill this vacancy until end of January, or is he auditioning to stay on the Fed longer?
From my perspective, it has to be an audition. There's no way in the world he does not want to be a Fed governor for the 14-year term. He is auditioning, and he understands that while he's auditioning, he has to stay in line with the president. Even if these are his true beliefs, he's going to not deviate from the president and understand that if he doesn't do well, he can either lose his position on the CEA or not be nominated for a full 14-year term.
When it comes to thinking about the next Fed chair, do you get the sense that this administration is not in a rush because the Federal Reserve is moving in the direction that the president has been asking for months?
Yeah, actually, that's been a really interesting observation to see how, 6 months ago, it was all panic about who's the next Fed chair, and the administration seemed to be moving quickly, and there was talk of an early nominee. That seems to have slowed down, and I would imagine that's largely in part because the Fed's moving towards it. Additionally, I think the president's taking some grace in the idea that at least he has Myron on the board being his advocate at the FOMC.
There's also a question about the reaction function on the Federal Reserve, even with any kind of new Fed chair who is more amenable to President Trump's policies. What the response is to inflation that does pick up again or remains fairly high. And I ask this not through an economic lens, but through a political lens.
And I think that's one thing where I feel that the Trump administration is kind of sounding like the Biden administration of 2024, where they were all arguing inflation is transitory, look at the fundamental data, the economy is good, there's no way we lose this election. The Trump administration seems to be making that same exact mistake, saying, no, our policies are actually working great, there's no inflation, immigration is good, the tariffs are good, everything is helping. And it feels like they're sleepwalking into the midterms, just like the Biden administration and the Harris campaign sleepwalked into 2024.
This is what a number of people have argued, that people in the community are feeling inflation much more than the idea of transitory that seems to be resurrected on the Fed, but also beyond. I'm just wondering, from the polls that you see, is there real credence to this? Is there an actual feasible opposition, a collective message on the other side that actually can disrupt some of the Republican presence in the midterms? Or is this just something to watch as we head into the end of this year?
So I think that's 2 separate questions. We're seeing in polling that the president is underwater on the handling of the economy and that American voters really don't like the tariffs. But the separate question is whether Democrats can establish a message saying this is how tariffs are raising prices. And I think that's more difficult because the reality is tariffs are a nuanced issue, and the president has a compelling argument saying bringing back U.S. manufacturing. And I think when the voters hear U.S. manufacturing, or they hear, this is more of a tax, they kind of don't know what to believe, and they kind of just accept it and move on. That doesn't mean, though, that the president's handling of the economy is not going to cause them issues and not going to cause the Republican Party issues coming into the midterms.
George, there was a subtle sign just last week in reporting from the Washington Post that maybe Congress would begin to push back and look to provide exemptions for things like coffee. George, is that a one-off or a sign of things to come? Do you think maybe in the future we'll see a little bit more of that?
Look, I think the reality is, I know that was Don Bacon who introduced the coffee legislation. That bill's not going to pass. Speaker Johnson won't put it on the floor, and even if it gets on the floor through a discharge petition, Majority Leader Thune certainly won't consider it. And let's say on the event that maybe it passes by some miracle, the president's going to veto it, and they're not going to have the supermajority necessary to overturn the veto. So I think for that, that's more just messaging to the administration saying, hey, you need to work with us on this. Please tone down the temperature. But in reality, as long as Republicans are in control, I would not expect pushback. And even if Democrats are to retake the House, for example, in 2026, I would not expect a Republican Senate to take up anything restricting the president's authorities.
George, appreciate your time, your input, insight, and your opinions, sir. Thank you. George Pollack there of Signum Global. That last point there, messaging may be. I think that messaging might get a little bit more stronger in the year to come going into the midterms.
Absolutely. And you mentioned this legislation potentially on a carve-out for coffee. It was not just Don Bacon. It was also Ro Khanna. It was bipartisan. What do you think constituents are saying when they see their lawmakers and they see their representative? It's probably like, why is my latte $5 more than it was years ago? You said you were going to fix it. You didn't.
George alluded to something else, which is even when the Democrats, or if the Democrats do take control, it's not likely that they're going to roll back these tariffs either, just simply because, well, he pointed to the Republican majority. My thinking is it brings in a lot of revenues. And realistically, you would see a bond market tantrum if you just cut those revenues off completely and you didn't adjust to any of the spending plans. You put that together with potentially what could happen. This actually does come down to the Fed and the Fed's response to inflation, because I don't see another way.
Well, two things. Potentially, IEPA is going to strike it down, and then we might actually be left with this shortfall. But also, you mentioned this polling on inflation. Approval on inflation, Real Clear political polling average, 39%. 59% disapprove how they're handling inflation. And the president said himself, he won on the word what? Groceries.
So far, the bond market approves, to your point, so far. Bond yields on 10s, 4.13. Up next on the program, we'll catch up with the OECD chief economist Alvaro Santos Pereira.
When we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability and our independent retailers have the ability to compete directly with the chains, and we are now the second biggest supermarket brand in this country.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Three-day winning streak on the S&P 500. Slight pullback this morning. No drama. Down about 0.05% on the S&P. On the Nasdaq 100, totally unchanged. In the bond market, ever since the Fed met on Wednesday and cut interest rates by 25 basis points, yields drifted higher for 4 consecutive sessions. This morning, pulling back just a basis point. The 2-year, 359.45, just short of 360. But that 4-day run, the longest on the front end, going back to July. Ever since August, we've just had this very powerful rally at the front end of the curve. We just gave a little bit back over the past few sessions.
And maybe it comes with the whole idea of buy the rumor, sell the news. The idea that after Jackson Hole, the speech that we heard from Jay Powell, it was clear they were prioritizing growth and protecting the labor market above curtailing inflation. That run got essentially confirmed to some degree by the Federal Reserve, but maybe not as much as people expected. Maybe we're giving that just a little bit back.
That's the rate story. Stateside, pushing through foreign exchange. Euro-dollar very close to 118. Actually briefly had a stronger euro off the back of some strong data. The PMIs, Eurozone private sector growth, fastest in 16 months. That's the Eurozone PMI. Later on this morning, 945. US PMIs. I think that's an important data point. First real flavour of just how we're doing coming out of summer.
Especially given the fact that everyone's been talking about a manufacturing revival, and there have been signs around that, and yet the PMIs have been still coming in below the expansionary level. Do we see a shift in that, and how much can that support the idea that we're actually entering into a reacceleration, not the opposite? That's what a lot of CEOs have been telling us.
And that's what the stock market's priced for into 26. The euro against the dollar, 117.92. That's the cross-asset price action. Let's get you some single names, some morning movers. Let's cross over to Danny with more. Hey, Danny.
Hey, John. We start with the company that IPO'd just last month to a lot of fanfare. Now it's trading below its IPO price. That's Firefly Aerospace, down a whopping 10% this morning. It had earnings after the bell. Of course, it's the first set of earnings since IPOing, a wider loss than expected. The problem for them, the CEO says there's demand, but they're trying to ramp up their actual supply to deliver out. So again, those shares sinking some 10% this morning. Elsewhere in aerospace, it is a good day for Boeing. Shares are up 3.6% after the U.S. ambassador to China, David Perdue, said that there was a huge order, that was his language, coming from China to Boeing, said that the president would like it and that China would like it. That would be a big deal for the two entities. Bloomberg has been reporting that China has been working on about a 500 aircraft order from Boeing. So maybe it is that order that is sending shares higher. Meanwhile, Kenvue, it is recouping some of the loss yesterday, well on its way to do that, up 5.9% after President Trump said yesterday that pregnant women should avoid Tylenol, or the active ingredient in it, acetaminophen, that of course is made by Kenvue. There's been a reaction from researchers afterwards saying that the evidence isn't quite there. Citi writing that because of that scientific pushback and the limited judicial risk with no new evidence, they expect that Kenvue shares continue to rebound. John.
Danny, appreciate the update. That stock is up by 5.9%. More from Danny in the next hour. On our radar this morning, NVIDIA set to invest up to $100 billion in OpenAI to build new data centers. The investment provided in stages will help power the future of artificial intelligence. NVIDIA jumping nearly 4% in Monday's session. Elsewhere, world leaders in New York City, as President Donald Trump is set to address the UN General Assembly. Trump will also hold key meetings with leaders from Ukraine and the EU, plus a special summit on Gaza. And finally, all eyes will be on Fed Chair Jay Powell later today as he gives his first public speech since cutting interest rates last Wednesday. Investors will be looking for clues on the future of policy when Jay Powell speaks around 12:35 Eastern Time.
The future of policy until May of next year, perhaps. This to me is really the question. How much does anything he you say, really matter? Does he give a sense of what his personal view is? And how much are people going to be looking for a signal of the committee's pushback to Stephen Myron's views? Ultimately, is there going to be a litmus test in how convincing some of his arguments were to members on the board? We're thinking about that with Mickey Bowman. I'm also wondering whether Jay Powell is going to mention that at all today as well.
Well, what he said last week when he was Jay Powell, there are no risk-free paths. So he's likely going to say that again. He also said it's not incredibly obvious what to do. We have to keep our eye on inflation. I thought that was interesting what Myron said yesterday about inflation, indicating in the future, because they want to look like they're moving the goalpost too soon, in the future, he would be open to getting rid of that precise 2% inflation target. We could be looking at a very different Fed in 2026 and 2027.
Chairman Powell did a decent job of finding consensus last week when there probably wasn't any consensus at all. And what they all appeared to agree on was just the phrase risk management. What they all disagree on is how much risk there actually is and how you should manage it. And you're going to see that more and more in the speeches in the days to come.
Yeah, and especially if you have data that comes in better than expected, like so much of it has. How much does that kind of tie their hands to? If you start to get, for example, employment picking up, you get sort of a rebuttal of what we saw in terms of the summer weakness. Can they cut in October right now? The market is pricing in a 93% chance that they will. So a lot of room for disappointment right now priced into Fed funds market.
Chairman Powell, 12:35 Eastern Time. Let's turn to the global economy. The OECD says the world has yet to feel the full impact of President Trump's tariff agenda. A new forecast is marking down global GDP growth to 2.9% for next year, despite a stronger than expected 2025. Joining us now to discuss is Alvaro Santos Pereira, the OECD chief economist and incoming ECB Governing Council member. Alvaro, welcome to the program, sir. Would love to get your thoughts on what's happening with the global economy, but more specifically on what's happening with Europe. The Eurozone GDP number is going to be closer to 1% than 2%. Alvaro, what is happening with the European economy, and why is the stimulus coming out of places like Germany not helping us get a better growth profile?
Well, thanks very much. Thanks for having me. Well, first of all, we expect that GDP growth in Germany will pick up and from 0.3 to about 1.1% next year. And this is because of this fiscal stimulus and the military spending that is expected. Remember, part of this fiscal stimulus has to do with infrastructure needs that Germany really needs, especially in areas of digital. And so I think it makes total sense. On the other hand, we see other parts of the European area, like France and Italy, growing relatively okay, but not spectacular. So Europe continues to grow around 1%, 1.2 this year, 1.1% next year. And so that means I believe there is more needs to be done. What can be done? I think Europe needs to improve its business climate. It needs to reform and reduce barriers to competition and barriers to entry in many sectors. And in particular, I think it's absolutely essential to what the Europeans say to complete the Savings and Investment Union. What this means is that to create the conditions that so that venture markets and more equity markets become stronger and European firms become less reliant on banking financing.
Do you believe, based on the outlook for inflation, that there might be sufficient space for the ECB to provide additional support in the year to come?
Well, I think right now inflation seems to be on target, and I think it's always important to keep a buffer in terms of monetary policy, on fiscal policy as well. But I think the buffer is important because, as we saw in the last 5 or 6 years, we were hit several times with a pandemic, with a huge energy crisis, followed Russia's invasion of Ukraine, and recently the policy uncertainties around the tariffs. And with all these shocks, governments have to have some margin. Debts are very high, and we believe that is on the fiscal side, the fiscal discipline is essential. On the other hand, on monetary policy, if you keep some buffers so that you have the room to maneuver in case of a shock, I think this is absolutely essential.
This goes to the question of whether the ECB wants to be a bit more accommodative or is open to that, or whether they want to keep their firepower. And this is important for you, not only as a chief economist of the OECD, but an incoming governing member on the ECB. And I'm just wondering how open you are to potentially cutting rates as soon as December, something that some of your colleagues have been open to, given the lack of growth and the lack of expectation of growth at a time where inflation doesn't seem to be materially picking up.
I think, as I said, inflation seems to be in a good place right now. it's important to say that the problem of Europe, lack of growth, is more to do with the reforms that have not been done, completing the single market, and working on many other areas of simplifying regulations and being able to bring a more general competitive environment rather than on the monetary policy front.
There's been a question around how some of the European economies have dealt with debt and deficit as well. A question of how much raising taxes is the correct measure for this issue, which has raised questions about the French government debt market, among others. How are you viewing the remedies that economies like the United Kingdom are proposing to raise taxes? How are you viewing that in terms of growth versus becoming more of a problem?
Well, we know that debts are at historically high levels in many European economies, not only. And we know that spending pressures are rising. There's more spending pressures for the military. There's more spending pressures for the green transition and the energy that is needed for AI. And there is more spending pressures with the aging of the population, which means that if you start already with very high debt levels and you have all these spending pressures, something has to give. And so going back to fiscal discipline, whether countries work on the tax side or on the spending side, it's obviously a personal choice for governments and depending on the choices of a particular country. Having said that, we do think that in terms of spending, there's more that can be done in terms of spending reviews, reviewing procurement arrangements, establishing better fiscal frameworks in the medium term, so that there's margin also to do more in terms of spending. In terms of taxes, a lot of taxes do not have enough broad tax bases. There's more that can be done to reduce, to increase the tax base and reduce the rates. So I think there's margin that governments can do before they raise taxes in a significant way.
Your report says that we're going to see the tariff hit from the United States next year, but you're talking a lot when you look at Europe, how they need to think differently and enact reforms. Do you think the President Donald Trump's trade policy is forcing Europe to take major changes that actually will be good for them?
Well, I do think that Europe has to address reforms that have been postponed for a long time. Think about the single market. Europe is fantastic to produce nice reports. We just produced two really good ones on Letta and Draghi. But the problem that Europe has very often is that it doesn't follow through, does not implement those reforms and those reports. In particular, the single market was created in about 92. Big changes, creating a much bigger market for all Europeans. But on the other hand, there's many areas in services and transportation, in energy, in which there's not really a single market. So if concentrating on those reforms would be, for me, the priority. I think Europe needs to get its act together in terms of reforms. Of course, tariffs are a challenge, but I think the most problem in terms of Europe is the lack of reforms, and more needs to be done in that area.
Alvaro, do you see the ECB as an institution? Do you see it as their role to make sure there's sufficient discipline to push them to have an incentive to make those reforms? Do you believe that maybe some of the moves we've seen from the ECB in the last decade plus has perhaps taken some of the heat off those governments in a way that has been maybe undermined the continent and the broader economy?
Well, I think the ECB, with its studies and reports, can highlight some of the big challenges that we have going forward. For example, the aging of the population has a massive impact on our systems, tax systems and other systems. We also know that a big challenge in terms of AI. We just highlighted, in fact, in our report, big increase in digital investment in the United States compared to anywhere else, and there's not enough in Europe. What is the case? Why is this the case? And on the other hand, also in terms of the green transition, what can countries do? And so I think that the ECB and central banks have an important role to play to highlight and to study, first of all, the problems, highlight possible solutions in the future, and I think the central banks need to look also to these long-term trends that are taking place right now in the world economy, so that they are able to guarantee good monetary policy and guarantee financial stability.
Alvaro, just before you go, I wanted to squeeze in an important question. How you would characterize the balance of risk around the inflation story at the moment? Here in America, there is a focus on upside risk to inflation. In Europe, there's been a conversation about the continent potentially eating Chinese overcapacity, and those exports that would traditionally go to America to go to Europe and to other places. And the team here at Bloomberg's done a great job today of just breaking down how much we've seen an increase of exports from China to various regions. Do you see the tariff shock of the last year as potentially a disinflationary shock for the Europeans?
Well, the tariff shock is bringing more inflationary pressures in many countries. And we expect that many of these the tariffs, the effects of these tariffs have not been fully impacted in the economy. We have a graph that shows exactly what's the effective U.S. tariff rate and what is right now the current tariff rate in terms of the customs duties. And there's still a divergence between the two. What this means is that there's still a few inflationary pressures that will have to be embedded into the economy and will be incorporated by firms in the next few months. So we expect that there will be additional price impacts for firms, not only in the United States, but other parts of the world too. So I do think that the overall picture is one in which you have additional inflationary pressures from tariffs. And on the other hand, we have, even though service price inflation has been very sticky around the world, goods price inflation started to tick up a little bit, in particular in countries like Japan and a few others. Food price inflation went up quite significantly, and this is adding additional pressures on goods price inflation. So it's very possible, if this continues, that there'll be additional pressures and additional risks regarding goods price inflation in the foreseeable future.
Alvaro, appreciate your time. Thank you, sir. Thanks for making time for us this morning. Alvaro Santos Pereira there of the OECD. Let's give you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahara Arnott for more. Hey, Yahara.
Hi, John. Hong Kong has issued its third highest storm warning as Super Typhoon Ragasa approaches after lashing the Philippines, which you can see there in that video. It is equivalent to a Category 4 hurricane, according to the local weather agency, and has caused major flight disruptions, closed schools, and businesses. It could potentially be the most damaging storm in the region since 2018. Meanwhile, here, President Trump is set to meet with Democratic leaders this week to discuss a funding bill as a shutdown looms in Washington. House Minority Leader Hakeem Jeffries and Senate Minority Leader Chuck Schumer requested to have the meeting with the president ahead of the September 30th government shutdown deadline. And in an interview with Times of India, JP Morgan CEO Jamie Dimon says he hopes President Trump and Indian Prime Minister Narendra Modi can reach a trade deal. Plus, when asked about the Trump administration's steep hike on H-1B visa fees, Dimon said he will be engaging with stakeholders and policymakers, adding that the move, quote, came out of the blue. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next, backstopping Argentina.
China has a foreign exchange swap with Argentina. Would you consider a credit line directly from the United States?
That's not under consideration.
Ed Hosseini of Columbia Threadneedle joins us next, live from New York City. This is Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing,
you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from New York City, welcome to the program. Under surveillance this morning, backstopping Argentina. Here's the latest. President Donald Trump gearing up for a meeting with Argentina's President Milei today as the U.S. is pledging, quote, large and forceful action to support Argentina's economy. Ed Al-Husseini of Columbia Threadneedle writing, it is difficult to make the case that Argentina is a systemically important economy. All economic interventions in Argentina over the past half-century have failed. Ed joins us now for more. Ed, good morning. Good to see you.
Good morning.
Let's just sit on that point. Why do they keep failing? What is it about Argentina and the way it's set up politically that ends up looking like this all the time?
You know, it's an incredibly difficult mix and an incredibly difficult history, and they haven't really broken loose of some of the policy mistakes made back in the 80s to this day, and it's not clear if there's a path forward to do that.
There was one recent election that pushed back against Milei. Up until then, it felt like the market was very happy and comfortable with the reforms and some of his policies. Are we voting down his policies or voting down the individuals that might be coming through? What's this market actually responding to?
Again, it's incredibly difficult. Almost every election in Argentina, when they have an election, tends to be a change election. People are quite uncomfortable with the pace of change, with the sacrifices necessary for that change. Poverty in Argentina is in the 40s. And what markets are starting to get nervous about at the moment is the return of the previous administration, which was a lot less market-friendly, a lot more focused on state intervention, and quite negative for the currency.
Would you say that Argentina is uninvestable even with any kind of initiative from the U.S. government, just simply because it's already defaulted 9 times on its sovereign debt going back in its history?
I mean, this is super tricky. Argentina is investable at the right price. And the difficult environment that they are in at the moment from an investment perspective is their bonds had priced in, their hard currency, the dollar bonds, had priced in a lot of good news just a month ago and have been going through a shock. Faith in Milei's ability to carry on the reform program is fading. Faith in the currency stability program is fading, which means they're losing dollars to support that program. And that ultimately translates into an inability to repay their debt. And so that's the dynamic we're in right now. At the moment, it's very difficult to invest in that debt. But there will be a time when it will be once again attractive.
Well, let's broaden out this idea of, can the U.S. government pick winners and losers? How much does that really change the investment landscape for you when you're looking for developed markets to invest in at a time where a lot of people are saying a rate-cutting cycle around the world, positive typically for these economies? How much does that distort where you're willing to look?
You know, from a credit perspective, these intervention programs, particularly IMF programs, tend to be very important backstops. One, they provide dollar liquidity, which the U.S. government looks set to do here. And two, most importantly, they provide a straitjacket in terms of policy settings. To the extent that Argentina needs fiscal reform, they need currency reform. The ability of the IMF, in particular, to impose that is very powerful. I think, unfortunately, in Argentina's case, that history is very murky. There's a lot of failures in that history over the course of the past 50 years. And again, they are in an IMF program currently. They've borrowed well in excess of $100 billion from the IMF over the past decade. Will this particular intervention lead to success long term? Probably not. But in the short term, it definitely helps.
In the short term, could it change political concerns around the October 26th election in Argentina?
Probably not. The short-term fix here is the currency is under depreciation pressure. And so they need dollars to defend that currency. Markets have a way of sniffing out that support as being temporary and overcoming it. And so it's very likely that the currency will remain under pressure for the foreseeable future until that election is done, until markets get a view of what policy looks like in the coming years.
So what's in it for the U.S.? If they're not going to get this win potentially for Milei in October, doesn't this put them in a very vulnerable position?
It's an extraordinarily difficult question. I think a lot depends on how this program is designed. The Treasury's Exchange Stabilization Fund usually works through the IMF or in tandem with the IMF. It's rarely used on its own. If this is part of an expanded IMF package, it might provide a little bit of support. It might provide a little bit of fiscal room for the government heading into this election. But the election's in October. There's not enough time to change that dynamic at this stage.
Is this a broader EM problem or just an Argentina problem? Because hopes for EM more broadly have picked up quite recently.
This is, I think, a distinct Argentina problem. One of the fantastic things about EM and these developing economies since the Asian financial crisis really has been a lack of crisis. Crises have become exceedingly rare. Financial crises are exceedingly rare. They run policies that are a lot more sophisticated in terms of monetary and fiscal policy. It's a much more credible group of policymakers in charge of these economies at the moment versus where we were, let's say, in the late 90s.
This story at the epicenter of meetings taking place here in New York City this week. Milei meeting the president, Donald Trump.
I wonder what parameters there are on any kind of support lines that the U.S. gives Argentina in terms of those straitjackets that Ed was talking about on policy. That, I think, is something to watch out for.
Ed, it's good to see you. Thanks for dropping by.
Thank you.
And discussing this topic. Thank you. Ed Al-Husseini there of Columbia Threadneedle. Coming up next, Lisa Shannon of Morgan Stanley, the former U.S. Deputy Treasury Secretary Wally Adeyemo, the EDP CEO Miguel Stilwell Dondrad, and Kristen Bitterly of Citi Global Wealth from New York City. The second hour of Bloomberg Surveillance up next.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Used to be one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this hopefulness in equity markets that we are going to get through all the risks.
We're not back to U.S. exceptionalism, but there is some demand coming back. We're seeing more signs of corporate confidence.
I feel pretty comfortable with where we are now.
If you look past this year into next year, we do see earnings improving. We don't see significant catalysts for destabilizing.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 shaping up as follows. On the S&P, down by not even 0.1% following 3 days of gains on the S&P and a 28th all-time high. In the bond market, 4 days of higher bond yields at the front end and the long end on 2s and 10s. This morning, we're back away. We're down a basis point on a 2-year at 359.24. Shaping the outlook for this particular bond for this particular session is going to be this man right here, Chairman Powell, speaking later on this afternoon, around 12:35 Eastern Time. That's the address to watch on a week full of Fed speak.
Yeah, how much does he really push back against some of what we were hearing in terms of how much the Fed could potentially cut in the next 6 to 12 months? How much does it matter? What does the market actually believe, given the fact that he's going to be out in May? I think there's a bigger question underpinning his speech and underpinning all Fed rhetoric right now, which is how much do Fed rate cuts matter in supporting record high after record high? Is it independent of that expected rate cut path, or is it predicated on that? And that I think we have to answer.
And I also wonder if Chair Powell is going to maybe, at least on the margins, challenge what we heard from Steve Myron when it comes to how deep they need to cut and how fast and how different you basically have. Almost it feels like two different heads of the Fed. Steve Myron probably is not going to be the Fed chair, but he certainly represents the direction of travel of 2025 and 2026.
Everyone seems to be comfortable with where policy's at, and they're looking for a better 26, and they're chasing this market. Alexandra Semenova of Bloomberg putting this piece together today. The record-setting advance has pushed the S&P nearly 3% above the average year-end forecast of those tracked by Bloomberg, which currently stands at 6,486. Only in 24 and 99 have the calls lagged the market's actual return so much around this time of the year.
So if you wanted to know why a number of Wall Street banks, I'm not going to name names, have rejiggered their year-end forecast 4, 5, 6, 7 times, it is because of this. They keep getting left in the dust by how quickly the market is going up, which raises question, is there anything that could torpedo this Teflon market, or is this essentially immune to any shocks based on tech spending and based on rate cuts?
When it comes to tech spending, though, you both mentioned at the top of the last hour, this circular environment we have, it's a self-fulfilling prophecy right now, it feels like, in the AI world, which is bleeding into the financial markets. NVIDIA giving OpenAI an investment to what? Just send it back to them, buy chips. Basically, you're just going to get a little bit of a discount.
So NVIDIA rallies, and that's exactly what we saw in yesterday's session this morning, down by about 0.8%. Coming up this hour, Lisa Shallett of Morgan Stanley. With Wall Street on a record run, we'll catch up with the EDP CEO, Miguel Stilwell-Dondrad, as the U.S. energy costs jump on AI demand. Plus, we'll catch up with Kristen Bidley of Citi as a newly minted Fed governor calls for bigger rate cuts. We begin this hour with stocks near record highs, following NVIDIA's $100 billion investment in OpenAI. Lisa Shallard of Morgan Stanley writing, US equities are increasingly pricing perfection, based largely on assumptions around Gen AI spending. With valuations rich, room for disappointment is very limited. Lisa joins us now for more. Lisa, good morning.
Good morning, Don.
I know you don't typically do single names, but can we just pick out that deal in the last 24 hours? A $100 billion investment from NVIDIA into OpenAI. Some people scratching their heads and saying, is this just a house of cards, or is this just the beginning and you shouldn't fight it? How do you approach this situation?
Yeah, so it won't surprise you or many viewers who know we typically are a little bit more cautious, that we view this with a little bit of skepticism. You know, it's very interesting when NVIDIA did the spinoff of CoreWeave, which is, you know, kind of a data center operator. We felt like this was a little bit of a way of, you know, we don't want people to start asking questions about whether we're selling to ourselves or whether it's arm's length. There's something about this that is starting to smell very 99, 2000. And so, you know, look, the market right now, I think, is running on the sentiment. It's running on the fumes. It's very hard to stand in front of that. And I think that, you know, sometimes the bull case is the lack of a credible bear case. And I think that's where we are at this very minute. But the skepticism, for me at least, is growing. And so our response to that is to try to invest a little bit away from the epicenter, right, and to diversify away from that Mag 7 and say, yeah, we know that they're the epicenter, but they're probably over-owned and a little sizzly.
Well, let's stay on the bull case for now. And I think you understand it well. Cyclical recovery, pick up re-acceleration in 26, driven by this monster CapEx boom. What is it about that, the fundamental pieces of the bull case, that don't sit well with you?
So I think fundamentally, when we look at this CapEx boom thesis, a lot of folks think that somehow this just began and was ignited by, you know, our recently passed tax bill. Our thesis has been, we've been in a CapEx boom, quite frankly, since the government ignited spending after COVID. So we had the infrastructure bill, we had Inflation Reduction Act, and so we've had a CapEx boom in the United States. Our best guess is we're actually in year 4 of this. And so if you look at Mag 7 CapEx spending, it has massively accelerated since 2022, but it began in 2022. And that's one of the reasons that earnings actually tanked in 2022, is those huge negative free cash flow. And we're approaching negative free cash flow amongst growth, negative free cash flow growth, I should say, among that cohort. So our belief is we're a lot closer to the 6th or 7th inning than the 2nd inning on this CapEx spending boom.
You said something that I had to write down because I thought it was so good. Sometimes the bull case is the absence of a bear case. And this raises the question of what the main risk here is. Is it potentially missing out on the upside, as John has laid out for many times before, the career risk of not getting that rally and not capturing it? Or is there actual true downside that you see potentially emerging from what does feel like it's getting into the later stage of the cycle?
Look, I think we do think that the return profile of this market is completely asymmetric, and you could easily see this market pull back into a 20% technical bear market, simply if earnings miss. Right now, so much is hinged on this idea of accelerating earnings, of operating leverage, of expanding margins next year, and that we're going to get this 13 to 14% earnings growth in an economy that may only be doing 4 or 5% nominal top line. That's a lot of operating leverage. And so, you know, we think that this is, as I said, priced to perfection. And so earnings misses, I think, are really the thing that could get people's attention here. We know that the news headlines have not been the source of catalysts of late.
Which points to a potential protection in portfolios. It's been gold more than anything else.
Yes.
It hasn't been necessarily long-term bonds, although increasingly people are starting to nibble on that. How do you see the relationship between monetary policy, the rates backdrop, and any potential pullback in the S&P 500?
Look, you know, whenever you have a real sudden pullback in stocks, bonds do work. They really do work as a diversifier. People do immediately rotate in portfolios. And I think that they will continue to play that role. But not having that obvious catalyst in front of us, we like real assets better as a diversifier. So we are talking about gold in the intermediate term. We are talking about REITs. We are talking about commodities. We are talking about energy infrastructure assets as maybe a better diversifier in the intermediate term than long bonds.
You said news headlines have not been catalysts of late. Do you think the markets have really started to understand the president and the direction of travel, where he's going, as opposed to earlier in the year when every other word out of individuals' mouths was we're concerned about policy uncertainty?
So based on my conversations with investors and clients, I don't think it's a question of investors deeply understanding the direction of the president. I think it's investors deeply, dismissing it and saying, I'm looking through all of this, and I'm looking through all of it because there's a good portion of it that ultimately may not be fully implementable because it will be challenged in court, or I'm looking through all of this because, there's even odds that sometime in the next 3 months it'll be pivoted and reversed. And so there's almost a cynicism, I think, about the headlines. I'm not encountering a lot of deep analytic thought about, oh goodness, I read those headlines and I know exactly what's going on. I'm changing my forecast for this, that, or the other thing.
Is there something, though, in the policy sphere that would give investors pause and not want to just look through the rhetoric out of Washington?
Again, I think it's how policy is playing through to actual results. One of the things that's given the market, I think, confidence to say things like tariffs don't matter, or immigration doesn't matter, or some of these other things don't matter, is it hasn't really shown up in a big way in the numbers. And I think if, in fact, it does, and that's what we're looking for. We're looking for next year where those earnings disappointments come from. They come from the fact that companies actually can't make the margins because they actually are eating the tariffs. I mean, the money that's coming into the Treasury on tariff revenue is coming from somewhere, right? And we're going to have to ultimately attribute it. And I think that thus far it's been absorbed by a good portion of small and mid-cap companies and their margins. And I think ultimately, as we get into 2026 and you fully realize what is a six-fold increase, right, from an effective tariff rate of 3 to a likely effective final tariff rate of somewhere around 18, that's gonna hit margins, at least in a couple of those manufactured goods sectors.
Lisa, can we just finish with how you describe conversations with clients at the moment, and what would be the more dominant sentiment? Is it an anxiety to get out or a fear of missing out? What's the more dominant sense of things at the moment?
Yes, so right now it's about getting out. I think we're having a lot of meetings with clients who now have been extraordinarily pleasantly surprised at where they are. Here they are. It's September. They're up 14%. They thought, oh my goodness, maybe nothing. Certainly back in March, they were underwater. And there's a lot of folks saying, what should we be looking for? How do I know when? Of course, our job is to keep people in the markets and discourage market timing. But I think there's a lot more anxiety building among folks in the market saying, oof, this is feeling a little bubbly to me. Gosh, the market's going up every single day.
Trying to work out if that's bullish or bearish now, after hearing that.
Yeah, exactly.
Honestly, the fact that there's skepticism makes me think this can go on for a lot longer. So I don't know that this is exactly something to say.
Yes, this is not the catalyst.
No.
This is not it.
Lisa, appreciate your thoughts, as always.
Thank
Good to touch base with you. Thank you. Lisa Shallett there of Morgan Stanley. Let's give you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. In a blockbuster AI deal, NVIDIA is set to invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. The agreement will help OpenAI build the data centers using NVIDIA's advanced AI chips. The investment will be provided in stages with an initial $10 billion. NVIDIA shares popped nearly 4% yesterday on the news to close at another record high. Meanwhile, the White House is banning the Iranian delegation in New York here for the UN General Assembly from shopping at wholesale clubs like Costco or buying luxury goods. The State Department saying it will not allow Iranian elites to, quote, have a shopping spree. The delegation's movements are also restricted while they're in town. And Spirit Airlines is cutting flights and placing about 1/3 of its flight attendants on furlough. The budget carrier has filed for bankruptcy twice this year, and the cuts are part of a restructuring and cost reduction plan. And pilots could be the next group to see cuts. Spirit saying it wants to find $100 million in cost savings from pilots. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Up next on the program, President Trump returning to the UN.
At the center of our vision for national renewal is an ambitious campaign to reform international trade. I will never fail to defend America's interests.
A conversation up next with the former U.S. Deputy Treasury Secretary Wally Adeyemo from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Live from New York City, welcome to the program. Equity futures on the S&P shaping up as follows, following 3 days of gains on the benchmark stateside and another all-time high. We're down 0.1% on the S&P. On the Nasdaq, we're down by 0.1% also. Moments ago, Morgan Stanley's Lisa Shallett describing things at the moment as maybe a little too sizzly, getting close to the 99 type kind of stuff that she was thinking about.
She said we're one bad earnings report away from potentially even a 20% pullback just because everyone's loaded on one side. At the same time, you asked her, what did clients say to her? They talk about getting out, which makes me think this probably has more room to run. It doesn't seem like this is exactly a runaway train with no skepticism.
More anxiety to fuel the fire, maybe. I don't know. Nasdaq futures this morning down about 0.1%. At the surveillance this morning, President Trump returning to the UN.
At the center of our vision for national renewal is an ambitious campaign to reform international trade. The American people are absolutely committed to restoring balance to our relationship with China. I have made very clear I will not accept a bad deal for the American people. I will never fail to defend America's interests.
So here's the latest this morning. President Donald Trump speaking to the UN General Assembly at 10:30 a.m. Eastern Time. The president addressing the group of world leaders for the first time of his second term. Bloomberg's Tyler Kendall joins us now for more. Tyler, good morning.
Hey, John, good morning. There's a few different threads that we're following on the policy front when it comes to the speech. Of course, two conflicts expected to take center stage. One, the war with Ukraine, as President Trump is set to meet today on the sidelines with Ukrainian President Zelensky, and our allies are urging this White House to commit to firmer security guarantees. And the second, the war between Hamas and Israel, as several U.S. allies have moved to recognize an independent Palestinian state. In recent days, we are expecting President Trump to use this speech to defend Israel's right to defend itself. I'll also quickly mention that domestic politics will probably make their way into the president's remarks. The White House previewing it to us here at Bloomberg that he will call on other countries to tighten their asylum restrictions, ultimately in a bid to try to curb immigration in the long run to the U.S. But John, for context, hovering over this backdrop, the context that President Trump is speaking against is that the U.S. has been the largest financial backer to the United Nations, and President Trump has made clear he doesn't feel that the organization has been serving the U.S.'s purpose. In fact, the U.S. has actually stopped paying its bills completely to the United Nations since January when President Trump took office. Combine that with prior delinquencies from other administrations, and the U.S. is currently on the hook for $3 billion in dues to the United Nations. Our analysts at Bloomberg Economics do point out, though, John, that either way, with or without the U.S., the UN is in trouble. The Secretary General in January had declared a liquidity crisis, and it's currently trying to cut about a fifth of its staff.
Tyler Kendall with the latest here in New York. Tyler, thank you. Joining us around the table, the former Deputy Treasury Secretary, Wally Adeyemo. Wally, good to see you, sir.
It's great to see you as well.
You co-authored a piece recently in Foreign Affairs, the title of which reads as follows: "The world economy was already broken, but there is a better way to fix it." Can we address the broken piece first? What's broken about it? What was broken already?
At the core of what was broken was China's use of anti-competitive behavior to manipulate the global trading system. And this is exactly what needs to be addressed. And I think President Trump has a choice. He can try and do what former presidents, including himself, have done, which is negotiate a bilateral deal with the Chinese, or he can work together with our allies and partners to put together a set of policies that will hold China accountable and lower tariffs on each other. And I think that's the choice that the president faces at the moment.
John mentioned this earlier, and you mentioned it in your piece about China basically dumping on other markets, especially since the barrier of entry has gone up so high in the United States. Isn't that going to force countries like what Mexico is attempting to do, force countries to take on China themselves and basically do what you're saying, a collective unity against China?
I do think that gives the president an opportunity, because if you're in Southeast Asia today, you're in Europe today, you're seeing Chinese overcapacity wash over your shores, ruining your manufacturing sector. And the question is, what can you do? And alone, it's hard for them to stand up to China. But working together with a large ally like the United States is possible. But ultimately, the thing that I found with all these countries is that they move when there's a leader, and the United States needs to be that leader. So if the president calls on them to work together to hold China accountable, I think it's possible. But left to their own devices, it's really hard to stand up to a big country like China or the United States.
But the Biden administration tried a multilateral approach, and it didn't work.
I think the difference now is that the president has changed the global trading system by putting tariffs in place that have reordered things. And it, while it's created a lot of challenges, including headwinds here for consumers and for the economy, it now creates an opportunity because something new has to happen. And that's what we talk about in the piece, that ultimately now the president has the opportunity to either say that we can all work together to make sure that China's anti-competitive behavior stops, or we can try and negotiate with China unilaterally. The unilateral approach hasn't worked in the past.
At this point, though, how do you work together with other countries when everyone is skeptical of one another, and essentially you're forcing them to take a side? Because ultimately, a lot of countries, as you mentioned, are scared of China just as much as they're scared of the United States.
I think you're right. There's a great deal of skepticism out there. But when you look at the global economy, it's still concentrated in the hands of countries that should be our closest allies, the G7, make up almost 50% of the global economy. If we were to act together, only the G7, it would be a large enough bloc to put real pressure on the Chinese. So we're calling for the president to start with the countries that we're closest with. And ultimately, the goal has to be that we create an economy that not only works better for the United States, which it should, but works better for other economies also, because the more trade that you do, if you're a country, the less aid you're going to need in the future. So the key now for the president is to talk to these countries who ultimately need the United States, frankly, because we are one of their biggest consumers in the world, to try and work with them to put pressure on the Chinese, because the unilateral approach, previously at least, hasn't worked.
I just am wondering how much the world order has already changed and already shifted away from the United States being able to play the role in the way that it could have even a couple of years ago. The idea, for example, of the Ukraine-Russia war and the repatriation potentially of some of the holdings and how much that's shifted foreign currencies, foreign governments to buy gold and diversify away from the dollar. Is it too late?
I think everybody always says that, but in 2022, I was looking at what should we do with regard to Russia when they were thinking about invading Ukraine, and the Russians had moved a bunch of their assets, but more than 88% of Russian bank transactions on one side was still the dollar. It's really hard to get away from the U.S. economy. We're the biggest economy in the world. We're the biggest trading economy. And while that is shifting over time, I think this is the moment for us to try and make sure that we build a system that works better for us going future. If we wait too long, and we say this in the piece, China's use of anti-competitive behavior will fundamentally have changed the global economy in a way that will make it harder for the U.S. to win going forward. And not just the U.S., but for other economies as well. That's why what we do over the next few years is critical.
Wally, you've been in the room. The president truths a lot about how annoyed he is with Europe that they continuously buy Russian fossil fuels. It's been very hard for them to really divest away. How difficult it is to deal with the Europeans?
It is hard, but I think the U.S. has a lot of leverage here, especially over one of the countries that is doing this, Hungary, who is a big purchaser. And I think fundamentally one of the things we've got to do is work with Europe to both end their purchases of Russian energy. We did a lot to do that in terms of providing Europe with LNG to replace Russian energy, but we've also got to take actions, not only against India, but against China, who's a huge purchaser, but also a huge seller of the goods to Russia that they need to build the weapons they want for this war in Ukraine.
These stats on Chinese exports are just phenomenal. This came from the newsroom this morning, on track for a record $1.2 trillion trade surplus coming out of China. And if you look at the exports to India, record high in August. Shipments to Africa on track for an annual record. To Southeast Asia, exceeded their pre-pandemic era peak. Just figure that out. We're talking about massive numbers of Chinese product that's just being now dumped on the rest of the world. And you're going to find out whether they'll come along for the US or not for the ride, because it's really important. You said Mexico. I wonder how many people follow Mexico.
Yeah, and I'm wondering about, for example, European auto manufacturers, considering how many electric vehicles China has been offloading to Europe. On the flip side, it hasn't been supporting the Chinese economy. They've been in a deflationary spiral. There's a lot of questions about how much these are unprofitable goods. There are a lot of questions economically that are underpinning this as well.
Wally, it's good to see you. Always diplomatic. Thank you, sir. Wally Adeyemo there, the former Deputy Treasury Secretary. Up next on the programme, Miguel Stilwell Dondrad, the CEO of EDP, on the race to power artificial intelligence. Plus, Danny has your morning movers. AutoZone shares falling following their latest earnings. That stock is down 2%.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The President speaking later on this morning, a preview of that speech coming from the Press Secretary Caroline Leavitt just moments ago. President Donald Trump will highlight the return of American strength during a speech at the UN General Assembly while delivering blunt and tough talk about the failures of globalism. All of that still to come in the next few hours.
Yeah, the president's set to take the stage at 9:50. We're probably going to hear a little bit of what Trump said back in his first administration when it comes to the United Nations, but also going against the globalists, kind of what he said likely when you and Lisa were at Davos earlier this year, and basically talking about how, at least in America, they've rejected that world order for now.
Back in the day, 2019, in the first term, there would be people in the audience sneering at the president as he made these points about what the Europeans needed to do to change. He'd talk about European energy, the relationship with Russia. I don't sense the same sneering this time around, many years later.
There's a different landscape, and I think that there is a greater rejection of some of the old norms. I think we're in a new normal, and the question is how that's going to get rejiggered and exactly what kind of leadership is going to be provided for that next phase.
That's the policy talk coming up later on this morning. In the market at the moment, equity futures pulling back by just 0.1% on the S&P, following 3 days of gains on the S&P 500. On the Nasdaq, down by just 0.06. In the bond market, 4 consecutive days of high yields following the Federal Reserve decision last Wednesday to reduce interest rates. This morning, we pulled back by just a basis point on 2s, likewise on 10s. We're down to 412.93, going into Chairman Powell later on this afternoon.
How much does this really become the new stasis as people try to understand exactly what the balance of opinions is on the Federal Reserve? I think the big question, not just for Jay Powell, but for some of the other speakers is, particularly Mickey Bowman, who speaks in about an hour and a half, how much do they push back against the view of the world that we heard from Stephen Myron, and how much do they embrace this idea that the neutral rate could be significantly lower?
Chairman Powell at 12:30 Eastern Time. As we count you down to the opening bell, about 2 hours away. Let's get you some morning movers. With more, here's Danny. Hey, Danny.
Hey, John. Boeing shares are moving higher this morning by more than 2%, with the U.S. ambassador to China, David Perdue, saying that there was a huge order in the works from China to Boeing, saying that it would be a big deal for the president and a big deal for China. Bloomberg did report last month that China was working on finalizing an order of about 500 aircrafts from Boeing, so that could be this deal. Again, with shares rising this morning. Elsewhere, Kenvue making the work to snap back some of the losses it had yesterday. Shares are up just under 5%. They fell yesterday after President Trump said that pregnant women should avoid the active ingredient in Kenvue's Tylenol, which is acetaminophen, but there has been a little bit of pushback from the research community. Citi, for example, saying that no new scientific evidence was offered and there is limited judicial risk from the announcement, so they expect shares to come back. Finally, a little bit of earnings this morning. AutoZone reporting they did beat on their comparable sales. Net sales, though, that was a miss. And notably for them, margins were a miss, and maybe even more notably, they had a really, really big inventory buildup. It was 14% higher than at this time last year. That far exceeded analyst estimates. Just shows you for these companies that are having to import parts how difficult it is to grasp the inventory picture and how much they should hold. So those shares down more than 2%, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, NVIDIA investing $100 billion in OpenAI to expand the fleet of data centers that power ChatGPT. The NVIDIA CEO, Jensen Huang, saying it will be the biggest AI infrastructure project in history. Elsewhere, U.S. Treasury Secretary Scott Bessent pledging support to President Javier Milei to keep Argentina from falling back into financial crisis. The announcement calming investors and prompting a rebound in Argentina's assets. And finally, President Donald Trump talking with Democratic leaders as soon as this week about a funding bill. House Minority Leader Hakeem Jeffries and Senate Minority Leader Chuck Schumer requesting the meeting ahead of the September 30th shutdown deadline.
What's interesting about this is that you have these three New Yorkers getting in the Oval Office. Maybe they can hash out a deal, but it remains unclear whether the Speaker, Mike Johnson, and the Senate Majority Leader, John Thune, will be there to represent their case in Congress. We're a week out from the government shutting down. Or will Trump be left almost to his own devices to try to go into this, to negotiate with the Democrats himself from the executive branch?
I'm old enough to remember when people used to care about government shutdowns. Right now, there's almost a 70% chance baked into some of the prediction markets that the government will shut down. It's almost expected that there will be some sort of shutdown. And people are saying, well, unless it goes on for a month, 2 months, 3 months, unless we're 6 months out and we don't have a government, then we'll start to care. I mean, it just highlights how policy insensitive this market has become. And I think that that is a notable takeaway from this.
The shutdown is a political event and not a market event. And we've all been conditioned by experience to believe that. That's what we've lived. Why would that change anytime soon?
Well, if it carries on for long enough, there is actual financial repercussions to this, and potentially they're even greater should there be a rejiggering of some of the power lines. But, you know, I'll go with that. Maybe there's nothing.
There we go. Let's move on and talk about a different kind of power line. Let's turn back to AI. NVIDIA pledging to invest $100 billion in OpenAI to help build new data centers. According to the Energy Information Administration, U.S. electricity prices are up 10% from January to May of this year, due in part to massive spending and high demand. Miguel Stilwell Dondrad is the CEO of EDP, one of Europe's biggest wind energy developers, with projects also in the U.S. Miguel joins us now for more this morning here in New York. Miguel, welcome to New York. It's good to see you.
Thank you. It's a pleasure to be here.
Thank you for being here. Let's talk about the U.S. market. Your outlook now compared to where it was maybe 5 months ago. How have things changed?
Well, I think the situation has become much more stable. I think there was a lot of uncertainty, certainly at the beginning of the year, in terms of the policies. And so I think now we have at least visibility with the big, beautiful bill and also with some of the guidance from the IRS in terms of the growth for the next couple of years in renewables in general. So solar, batteries, wind. As you know, we have 10 gigawatts here, over $20 billion invested in the U.S. So I think things are more stable, and that gives us, some optimism for the future.
Do you need a partnership with the White House for this to work?
I think we need a stable framework, a stable legislative framework to be able to invest, and I think that's what we're looking for.
And so you feel like that it has been sufficient, even with some of the pushback from the White House about wind turbines. We think that President Trump doesn't like them, right? He thinks that they're ugly, and he doesn't like them near his golf courses. I mean, how much does that really affect?
And they're bad for the birds.
How much does that affect your investment plans?
So I think it's important that, we're agnostic in relation to technologies. We invest in wind and solar and batteries. We also have gas turbines, certainly back in Europe. What I think is important is to have competitive energy, cheap, reliable, and that it should be, if possible, not have any emissions. And so that's what we're aiming for. I think wind is a perfectly good technology. It's very mature. It's being rolled out sort of across the U.S. and across big parts of the world, and it provides clean energy at competitive prices. And it helps a lot of the landowners. I mean, some of our biggest advocates are actually the people that we work with on the ground in the local communities, because for a lot of the farmers, this is another source of revenue that they can get from these projects.
We've talked a lot about the energy needed to power artificial intelligence and some of the hopes and dreams of some of the big tech players that have been fueling a lot of the market rally. I just wonder how much of a deficit there is in power generation right now versus the hopes and dreams of the NVIDIAs, the OpenAIs, the Microsofts, the Googles.
I think it's relatively well known that one of the biggest obstacles to rolling out AI is the power, is access to power. And certainly here in the US, although that's also true in other parts of the world. So we're seeing huge demand. And I think going back to, in terms of technologies, what are the technologies that are available to supply that power? I mean, no one is building any new coal power plants. Maybe you can extend them a little bit longer. Nuclear, you might like it, but it's going to take time, quite a lot of time, to be able to actually implement it. Gas turbines take relatively long still to get them implemented. So actually the projects that are most available to actually be implemented in the short, medium term are actually renewable projects. Solar, wind, batteries, all of those. If it's cheap, if it's competitive, if it's secure, use it.
We've heard a lot about deregulation from this administration. Are they actually cutting the red tape to take on projects like this in an accelerated fashion?
So we're still seeing some bottlenecks. It's not particularly true of this administration. I think we've been advocating for quite a while that we should accelerate all the permitting and licensing. Access to the network, for example, is super critical in a lot of the key markets in the US. This is something that affects infrastructure projects, I think, in general, and we have been pushing to try and simplify that as much as possible.
When it comes to the supply chain for a lot of these materials, a lot of that is coming from China. How have the tariffs impacted your company?
So about 2 or 3 years ago, we completely reconfigured our supply chain, and most of our supply chain is actually in the US. So we use domestically made products, whether it's panels that are made in the US. We have a framework agreement, for example, with First Solar, batteries. So we tend to try to use as much as possible domestically made equipment. It is more expensive than if you import it. Although nowadays, with the uncertainty around the tariffs, we prefer to pay that premium, but ensure sort of a stable supply chain.
How feasible is this? Right now, China is dominating the solar, the wind, all renewable energies. Their battery plants have been far exceeding what the U.S. Production capacity has been. How much more expensive is it to source it domestically? How far behind are some of the technologies in the United States?
I think you have to separate what's the cost of the panels versus, let's say, then the additional tariffs or the additional costs on top of them. The underlying costs to produce them here in the U.S., maybe are 2 times what it would cost elsewhere. Then that can be compounded if you have sort of tariffs on top of that. But I think the key issue here is if you can increase the critical mass of the local production, of the national production, then you can hopefully bring those costs down over time. So I think building out that supply chain, I think you need to continue to invest in it to actually bring those costs down.
Is it harder to have a global footprint now?
You need to be more careful about where you are. I mean, energy infrastructure projects are typically very long dated, so we invest over 30 years. So we like to be in places, where rule of law is important, strong institutions where you can have that predictability over the long term. So we are, very focused on a couple of key countries. The US is one of them, where we really invest for the long term.
That's what I wanted to build on. Are you looking to narrow the scope of the countries that you're in?
So we were in about over 20 countries, almost 30 countries. We've been paring that down. We're going to be sort of closer to 15 countries, and we are exiting some of the non-core countries that either had less critical mass or that we didn't feel as comfortable in. So we're going to really focus more.
Where are you most comfortable at the moment making additional long-term investments?
Europe, US, some places in Southeast Asia, for example, Singapore. We like Australia, we like Japan. We have a big investment in Brazil, slightly different risk profile, but we're pretty comfortable there as well.
How much do you expect that to change over time, or this is sort of the new order as you see it? Are there countries that you no longer will participate in?
Well, I think it's been changing now, and I think our strategy has been to really keep a low-risk profile. So I think, we certainly think that this will carry out over the next couple of years. We don't see this changing, if anything, only getting worse. We've been very careful about, or we see, I think, as does everyone, sort of the decoupling and some need for de-risking, and so we're following that strategy as well.
What do you have to say about the CTG and the biggest shareholder, 21% stake? What do you think they want to do with that stake?
I think they're an investor like many others. I mean, 80% of our investors are either U.S. institutions, Canadian pension funds. We have investors from the Middle East. We have investors from Europe. So hopefully they're a happy investor, and like all of our other investors.
Miguel, appreciate your time. Good luck for the rest of the week. Thanks for being here. Thank
Pleasure.
you, sir. Miguel Stillwell-Dondrad, the CEO of EDP. Let's give an update on stories elsewhere this morning with your Bloomberg Brief, the latest worldwide with Yahara. Hey, Yahara.
Hi, John. Argentine assets surged after the U.S. pledged financial support for President Javier Milei. Treasury Secretary Scott Bessent said on X that all options were on the table to help arrest the run on the Argentine peso due to political uncertainty. Full details will likely only emerge after Milei meets President Trump at the UN General Assembly later today. Meanwhile, NATO is promising a robust response to repeated Russian airspace incursions. The military alliance says it will use all options to defend itself after Estonia said Russian jets violated its airspace last week. NATO is already strengthening its eastern flank with continuous air patrols under Operation Eastern Sentry. And week 3 of the NFL season wrapped up with the Detroit Lions defeating the Baltimore Ravens in a high-scoring thriller, 38-30. The Lions' rushing attack led by David Montgomery and Jahmyr Gibbs combined for over 200 yards and 4 touchdowns. The Lions also sacked Lamar Jackson 7 times, tying his career high. That's your Bloomberg Brief. John?
Johanna, thank you. Appreciate it. Up next, Governor Myron making the case to go big.
In my opinion, it's imperative that we get closer to neutral quickly, and so I thought sort of a series of 50s to recalibrate interest rates was the appropriate policy.
That conversation up next with Kristen Bitterly of Citi, live from New York City. You're watching Bloomberg TV.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now. You should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
The opening bell a few hours away. At the moment, equities are doing okay, just slightly negative on the S&P 500, closing at all-time highs in yesterday's session for a 28th time in 2025. The equity benchmark just a little bit lower, down by not even 0.1%, totally unchanged on the Nasdaq so far this morning. Under surveillance this morning, Governor Myron making the case to go big.
In my opinion, it's imperative that we get closer to neutral quickly, and so I thought sort of a series of 50s to recalibrate interest rates was the appropriate policy. My view is that policy is roughly 2 points too restrictive. Even though I am expecting growth to be a little bit better in the future, that could get derailed unnecessarily so and create an output gap where one need not exist if we don't get policy closer to neutral.
So here's the latest this morning. Stephen Myron making the case for aggressively lowering interest rates to avoid damaging the economy. The newly minted Fed governor making the remarks in his first speech since joining the FOMC. Joining us now to discuss, the head of investment solutions at Citi, Kristen Bidley. Kristen, good morning.
Good morning. How are you?
Good to see you. It's been too long. We've got some rate cuts, or at least one so far. The prospect of more to come. What kind of activity is that unlocking for your clients, and what are you advocating for them to do at the moment?
I think for right now, this was largely anticipated and expected. So I think if we would have had any change, then there would have been changes in the portfolio. But for right now, we're sticking to our guns and staying fully invested. We're balanced across fixed income and equities with a quality bias and also leaning towards the U.S. market as well. And so for us, there's no real change unless we see a deterioration in the employment backdrop or unless we see inflation start to accelerate.
For people sitting in cash at the front end of the curve and looking at where Fed funds is, which is still north of the curve all the way out close to 10s at the moment, just below 10s at the moment or around that level, what are they saying to you about the incentive to go out along the curve? And what kind of argument can you make for them to get out of cash and put it elsewhere?
Yeah, it's a great question, because when you look at cash is certainly building up on the sidelines, and I would say there's always that argument around the $7.6 trillion that's sitting on the sidelines, but quite candidly, that's only increasing. It's not decreasing. And so when you look at our portfolios, we're not advocating for long duration at all. I think you have to be weary of some inflationary pressures. So the average duration in our portfolios is around 5 years. I think that catalyst from going from cash into a 5-year duration, we have to be realistic about the investor psychology. So what we see more often is not your traditional 60-40 portfolio, but maybe a 60-30-10, where that cash position, people will hold it so they can be more nimble.
There is this issue of what's the best hedge against inflation? Couldn't it just be stocks? Isn't that almost what people are betting?
Yeah, I think it is. And I think there's actually a defensive play in terms of the largest free cash flow generating companies. And I know you guys have been discussing this all morning in terms of where should you be invested, particularly in equity markets. I think as an inflationary hedge, we have gold in our portfolios. I know many asset managers do as well. But when you look at where you want to be within U.S. equity markets, I think the major debate right now is, do we want to lean into momentum and the winners, or do we want to play this broadening out trade? I think the broadening out trade, while certainly it can deliver returns, I think it's still tricky, because when you look at small caps, their earnings are declining. They're not growing. And then you look at these large companies, they've contributed over 60% of the earnings growth this year. So while it feels weird to be invested there, I think you have to play the momentum.
At the same time, as we were talking about this morning, the NVIDIA OpenAI deal, the idea that NVIDIA is investing $100 billion for OpenAI to buy their products. Exactly. So it creates this feeling that we're all hinging on this circular bet within big tech names that isn't yet getting ratified in the profitability in the rest of the economy. At what point does that feel wrong?
I think the main question is almost, what is the bear case from here? And that's one of the questions. When we see all of this CapEx spending, when we see, like, what is the timeline for that? When you will actually see the returns? And I think investors are patient. I think it's more, I saw a piece recently where it was innocent until proven guilty. And so looking out like 1 to 3 years, I think there's patience in that investment. But I do think we have Q3 earnings coming up, and if there's one miss or if we don't have a beat and a raise, I think you will see a pullback in the market.
When you talk to clients, what are they most concerned about right now? You mentioned in your notes this tug of war between the AI story, but maybe even tariffs at some point hitting them next year. Are clients just dismissive, as Lisa Shallett said, of what's coming out of policy, or is it still in the back of their mind brewing?
I agree with Lisa in her comments. I think there's almost like, there's tariff fatigue. So it's almost, that was the dominating conversation a couple of months ago, and now it's not really even a question that clients are asking. And so I think the major thing on investors' minds right now is really trying to position for the longer term, understanding that short term there could be some volatility, there could be some pressure one way or the other, but where are you positioned longer term, and really the balance between private and public markets.
Is that a cap-weighted U.S. index? Is that how I position for the long term still?
Still. I think when you look at, again, we're not in the camp of this broadening out trade right now. And so you could probably see some strong returns, particularly with interest rates coming down, and you don't want to fight the Fed on that. But I think, like, when you look at the name of the game is really quality and free cash flow generation, and who's going to be able to make those types of, not $100 billion investments, but similar to really kind of fuel the growth.
Let's build on that. Why don't you like small caps? had a great run off the back of the repricing of the Fed. Why is this just another head fake?
Because I don't think it's based on fundamentals. And so when you look at, okay, if there are inflationary pressures, if there's part of the market that is going to be exposed to tariffs ultimately, if there's part of the market that's not going to be able to do that CapEx spending, who's going to get left behind? It's smaller companies. So maybe through M&A, you could see some activity there, but I think this is really a market that's going to be driven by those making the investments and seeing the return on these investments.
The main argument has been the rate cutting cycle could potentially provide a boost to the rest of the economy in a way that some people weren't expecting. Has that all been priced in already? Or do you think that there could be some sort of upside surprise in the rest of the market as a result of potentially an even greater degree of dovishness in the Fed come after May of next year?
I think it's largely at this moment, if we're just looking from here to the end of the year, I think it's largely been priced in, especially for small caps. Again, these rallies that have been driven more not on fundamentals, but almost expecting that Fed momentum, I just see better opportunities in other parts of the market.
You pointed something out in your notes, and I love this, the idea that every single time that the Fed has been cutting rates, at a time when the market's been at a record high, every single time, the 1 year out, the market was up and often up considerably. Why not just overweight risk right now?
So, great question. In our notes, basically what we shared was when the Fed, since 1980, has, with markets at all-time highs, the times that the Fed has started to cut rates, we've seen positive returns. We actually just saw that last year. So in September of 2024, we got a rate cut. We're now up about 17.5% since last September. So I think you still have to strike a balance, though, because what are the risks on the horizon? You don't want to be all in on equities in an environment where you still have, what are the risks? You basically have earnings and someone not delivering on earnings, and given that concentration, you could see some downward pressure. You also have the deficit, which is another major risk, and we have to talk about labor too, that when you look at the labor market, that is something that, well, we could say it's stalled, it is softening, and we're starting to see this emergence of why is the labor market stalling? Is it because of AI and people holding off? Is it because of tariffs? Is it because of immigration? There's really three cases there, but if we see the labor market continue to deteriorate, that's something that will ultimately impact consumer spending.
The labour market for grads is just awful, terrible. We've all seen the numbers. Does not look good at all.
Yeah, I mean, it's a personal issue. It's also something that very much speaks to the economy and the idea of upward mobility at a time when there are all these other pressures, cost of housing and the like. How much are companies truly replacing entry-level talent with AI? How much are they using that as a smokescreen, simply because they don't feel very confident about the trajectory going forward?
Don't know, but I wonder if the much tighter restrictions around H-1B support or complement the effort to try and do something about the lack of employment right now for graduates in this country?
It's a good question, how much that really comes in parallel, and that's the reason why some people have supported more homegrown talent. I also wonder who's going to push back, get that lobbying engine back in Washington, D.C., and what exactly some of the carve-outs are going to look like.
That's all Washington, D.C. is, right?
Lobbying.
Just a big lobbying effort. Isn't that what it is?
And it's also one of those things where you could see a market that continues to grind higher, earnings continuing to go higher, and the unemployment rate going higher, which is something we haven't seen, but that is a reality.
It's something to watch. Kristen, it's good to see you.
Good to see you too.
Thank you. Kristen Bidley there of Citi from New York City. The third hour of Bloomberg Surveillance is up next.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when, it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The Fed's in a difficult position, but it's certainly taking a risk by lowering interest rates.
They have room to maneuver. They have room to come down some on the policy rate and still put downward pressure on inflation.
The flattening that we've seen is a bit of a buy the rumor, sell the news on the back of the Fed.
The Fed is cutting on risk management grounds into what may be the early stages of a cyclical re-acceleration.
You kind of have the benefits of Fed cuts without the penalty.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Following 3 days of gains on the S&P 500 and a 28th record high of the year so far. Equities pulling back by not even 0.1% on the S&P. On the Nasdaq, totally unchanged. In the bond market, 4 consecutive days of higher bond yields, now lower by a single basis point on 2s, down 2 or 3 on 10s to 411.96. Going into this speech later on this afternoon at 12:35 Eastern Time. The chairman of the Federal Reserve, Jay Powell.
The chairman for now, and how much will what he says actually give a guidance as to the Fed policy that will be followed. I'm just struck by right now what markets are saying. They're saying the Fed can cut rates, have a cutting cycle of 125 basis points more cuts by the end of next year without a reignition of inflation while allowing markets to go to record highs. It is essentially the soft landing that everyone was talking about without the landing part. And it raises a question of, is everything priced to perfection predicated on a very narrow path, or have we reached a place of stasis amid policy uncertainty where people don't care and are watching earnings go up and an economy chug along?
People are getting uncomfortable. And by people, I mean Lisa Shallitt of Morgan Stanley, who was on the program about an hour ago. Comparing this to the late 90s and saying perhaps things are getting a little bit too sizzly.
The idea that maybe the biggest bull case right now is the absence of a bear case. People can't see what could disrupt this. The point that she made, and that Kristen Bitterly made as well, is that we're one bad earnings report away from a significant drawdown. And that, I think, is the key. How much are people hinging the entire positive outlook on the idea that these big tech giants can keep generating massive amounts of cash at a time when they are investing increasingly in each other, and companies are not showing the profitability to the degree that many people were hoping.
There's that angst, I get the sense, from these investors, given what it said. One earnings miss is what could ruin it, not the policy uncertainty from Washington, not the Fed rate cut. And she said news headlines haven't been a catalyst. Markets have become almost dismissive of what the president said. He really set the tone in April when he backtracked. Now it feels like everyone's hinging on what the Fed's going to do, but more importantly, what is NVIDIA going to report next quarter? That's the big driver.
November 19th. Got to wait a while. A few months before we get there. We're talking about this for a number of weeks, okay?
It basically is going to be 2026 when we get NVIDIA's report.
I wish they'd move that, but
I
we've
think
made that
they
argument a
should.
few times, you know? Let's bring it in.
Is it all them, or ultimately will it also come down to some smaller companies and how much they're actually using AI, whether they can monetize it or they're just investing it in little bots that talk to each other?
If NVIDIA is investing in them, then it'll be more important to hear from those companies in this new circular AI economy.
We're going to get Ed Ludlow to fix this next time he speaks to Jensen. Coming up on the programme, we'll catch up with Liz Ann Sanders of Charles Schwab as stocks trade near all-time highs. We'll speak to Gil Luria of D.A. Davidson as NVIDIA is betting big on OpenAI, and Stephen Stanley of Santander, with Fed Chair Jay Powell set to speak later on today. We begin this hour with Stock Steady. Liz Ann Sanders of Charles Schwab warning the market may be too top-heavy, writing the following: investors face a risk. The market breadth narrows and performance becomes overly dependent on a few dominant stocks. This dynamic can distort perceptions of market health. Liz Ann joins us now for more. Liz Ann, good morning.
Good morning, John.
Good to see you, and welcome
Good
to New York.
Thank you very much.
Thank you for coming in. Let's talk about that quote right there, and whether you believe we're becoming more or less dependent on just a handful of stocks at the moment.
We're becoming still very dependent on a smaller handful of stocks, though. So if you look at the cohort of the Magnificent Seven, just to pick a cohort as opposed to, say, the top 10, only 4 of those stocks now are outperforming the S&P 500, and the best among them, no surprise, NVIDIA, is only the 47th best performing stock in the S&P 500, meaning 46 stocks within that index have better performance than NVIDIA. NVIDIA is the largest contributor to cap-weighted S&P gains, but it's not the best performer. The Mag 7 are all in the NASDAQ. NVIDIA, as the #1 performer among the Mag 7, is ranked, I think, 630th within the NASDAQ. So I think we're starting to see more dispersion even among these concentrated cohorts. You've also got correlation within the S&P has come down, dispersion widening out. So I actually think it's not a bad backdrop from a stock picker's perspective. It levels the playing field a little bit more for active relative to passive.
Let's build on that just a little bit more. So Kristen Bitterly of Citi was with us about 15 minutes ago, and she said for long-term investors, stick with the cap-weighted index. That's the way to go. What are the risks around that, given what you just said?
Well, you've got the concentration problem embedded in that index with the 10 largest names representing 40% of the index. That's an all-time high. Even the top 5 names represent close to 30% of the index. So you're certainly guaranteeing the cap-weighted return on the upside, but there's a downside to it. Now, memories tend to be short. All you have to do is look back to earlier this year, the mid-February to early April bear market in the case of the NASDAQ, near bear market in the case of the S&P, but many of those stocks were the drags on performance. So it does work in the other way. And we always say to our investors, pretty much all $11.2 trillion of our client assets are individual investors. And leaving aside the take a passive approach and index to the S&P, you don't have to take the same concentration risk. If you're an institution and you're benchmarked against the cap-weighted S&P on a quarterly basis, you are at the mercy of the construction of the indexes. But if you're an individual investor, you're not being benchmarked against the S&P on a quarterly basis. You can take more of a stock-picking approach and not take that risk of having such a concentrated portfolio.
Isn't that concentration a feature, not a bug? And I say this at a time when we're talking about the potential for an outperformance of the S&P 500 and the NASDAQ, even with a labor economy that is questionable right now.
Well, it's a feature in keeping the cap-weighted index returns high. But here's a stat. Just since the April 8th closing low, S&P has not even had a 2% drawdown over that period of time, continual record highs. But the average member within the S&P has had a 14% drawdown since April 8th. The average member within the NASDAQ has had a 32% drawdown just since April 8th. So there's a lot of churn and rotation under the surface. It's a feature in that all you need is a few mega cap stocks to bring those cap-weighted indexes. I just think the fuller story, not the real story, but the fuller story is told under the surface of these cap-weighted indexes.
John was mentioning Kristen Bitterly, who is just here, and she is talking about the cap-weighted and not necessarily the broadening out trade. She doesn't necessarily see that gaining traction. Do you disagree, based on the idea that you have seen this drawdown in the average stock outside of that Magnificent Seven, and that those companies potentially could be the most beneficially affected by a rate-cutting cycle that a lot of people are expecting?
Yeah, that's certainly the macro fundamental reason why small caps caught a bid, particularly given that the real surge was tied to Powell's Jackson Hole speech. I think one way to think about the broadening out, the fact that Russell 2000 finally hit a new all-time high, last time prior to this one had occurred was 2021, is I think staying up in quality still makes a lot of sense. And one piece of advice that we provide to investors, not to buy an index tracking, but if you use index as a source for ideas, Russell 2000 is still on the lower quality end of the spectrum, given that 40% of the stocks are some combination of non-profitable or zombie companies. Whereas the S&P uses a profitability filter in constructing their S&P 600. So it's inherently a higher quality index. And in fact, looking ahead, S&P 600 earnings outlook versus S&P 500 earnings outlook, the former has a much better trajectory, mid to high 20% range in terms of 2026 earnings versus more in the kind of mid-teens for the S&P 500.
How correlated is the Russell, these small caps to do well, with how quickly the Fed continues on a cutting cycle?
That, I think, would be a risk that the outperformance trend does not persist, is if the Fed has to cut short the cutting cycle, not dissimilar to what happened last fall. The one thing that's interesting is we've seen that edging up on the part of the long end, very much in keeping with what happened last year when the Fed cut by 100 bips and the 10-year went up by the same amount. Mortgage rates went up by 80 basis points.
When you mentioned these cap-weighted indexes, they're so sector-focused and concentrated. So isn't it doing the opposite of what investors want? Where are people diversifying?
Again, I think the active approach, I think there's a reason why active ETFs, the growth rate in active ETFs is higher than the growth rate in passive ETFs. Now, part of the reason why it's a higher growth rate is it's coming off a lower base because passive ETFs have been much more popular. But I think that is a bit of a tell that there are investors looking for opportunities outside of just the cap dominance within these cap-weighted indexes.
Does this feel bubbly to you? You've seen it all. Let's finish there.
I have seen it all.
How does it feel?
Almost 40 years doing this. I'd say that the big difference, probably the most important difference between now and the late 1990s, is there's more there in terms of massive cash flow generation. There's actually a denominator in the valuation equation now. There was no denominator in the valuation equation. I mean, we all look now through the benefit of hindsight and say, boy, was that just so silly. And, the attaching of .com to companies that had nothing to do with that. So there is more there. But again, going back to that period just this year, mid-February to early April, when you had the DeepSeek news and concern about whether the massive amount of spend was indeed a protective moat built around these hyperscalers, I think that we can go through valuation adjustments, necessary valuation adjustments, or even just periods where you get about a profit taking that is distinguished from what ultimately happened in 99, 2000. I think it's a right tail risk for the market, maybe with similar probability as what would be the left tail risk, which I think the left tail risk is a recession, which I don't think is priced into the market. But these are much higher quality companies than was the case in the late 90s.
I just sense the discomfort from a lot of people with some of the recent announcements, whether it was Oracle in the last few weeks or this one from NVIDIA to OpenAI. They will look back in a few years and they're worried about feeling foolish, looking back and thinking, well, wasn't it obvious? This company came out, invested this money so this other company could buy their stuff. Like, shouldn't we look at that and say that doesn't make sense? That's a house of cards.
Shouldn't we look at the fact that NVIDIA's customers are almost entirely the hyperscalers, almost entirely the Microsofts and the Alphabets and the Oracles, and this idea that it is a sort of closed cycle, and we're not seeing it in the broader economy. And you add on top of that the sense that almost everyone is saying up, up, and more up, and they're upgrading the forecast. It's making people uncomfortable, but that discomfort can prolong the cycle, and that, I think, is what people keep saying.
And they're the companies making money.
Exactly.
To Lizanne's point, there is some there. Lizanne, it's good to see you here. Thanks for being here. Lizanne Saunders at Charles Schwab, thank you. Thank you very much. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. We start with that massive AI deal. NVIDIA is set to invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. The agreement will help OpenAI build the data centers using NVIDIA's advanced AI chips. The investment will be provided in stages with an initial $10 billion. NVIDIA shares popped nearly 4% yesterday on the news to close at a record high. Meanwhile, the Trump administration has linked Tylenol to autism, urging pregnant women to avoid it. The move comes despite a lack of widely accepted scientific evidence supporting the risks. Still, the FDA recommended doctors consider minimizing the pain medication for low-grade fevers, while noting a causal relationship between autism and Tylenol has not been established. And the U.S. Secret Service says it interrupted a network of devices that could have severely disrupted cellular service in New York. Authorities say the SIM cards and SIM servers were used to threaten senior U.S. government officials, while world leaders gather here for the UN General Assembly. The Secret Service says it bore signs of foreign involvement. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. More from Yahira about 30 minutes from now. Up next on the program, the Morning Calls plus Gil Luria of D.A. Davidson as NVIDIA is betting big on OpenAI. From New York City this morning, good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The key driver of this bull market has been AI and tech, and the key driver for the overall market has been the earnings from these companies. Does it raise some, eyebrows a little bit? Sure, but in the near term, I think this means that earnings continue to move up, and that continues to support this tech trade and the overall market.
That was Keith Lerner of Truist sticking with it in the equity market following 3 days of gains. It's a quiet market so far this morning. Futures going nowhere on the S&P 500. Likewise on the NASDAQ. Things get a little busier in about an hour and 30 minutes when we get some US PMI data for you. A read on the start of September. I think that's important coming out of the summer. Are we actually seeing a pickup in the US economy? It's what the market is priced for. It's what many companies are guiding for.
Yeah, and how much can manufacturing play a part in this? This is sort of underpinning a lot of the hopes and dreams of the resurrection of the U.S. economy, as it's going to be with greater degree of manufacturing, and we have seen that. Do you see the PMIs confirm that after what we saw in Europe? Again, this goes to this question of, is the reacceleration just a U.S. story, or is it international?
And then after the PMIs, you'll hear from Chairman Powell. That's the main event for the Fed speak later on this afternoon at 12:35 Eastern Time. In the bond market at the moment, in anticipation of that, following 4 days of high yields, a little bit lower across the curve this morning. 2s out to 30s. The 2-year down by a basis point. The 10-year down by a little bit more than that. The yield on a 10-year maturity this morning at about 4.13. That's the price action. Let's get you some morning calls. First up, Wells Fargo upgrading CoreWeave to overweight, saying demand signals are too strong to ignore. Their stock is up by 1.6%. Your second call from Morgan Stanley, raising its price target on Oracle to 320, expecting fundamental changes in its revenue growth from massive contracts. That stock is down about 1% this morning. Big rally to start the week for that name. And finally, Evercore raising its price target on NVIDIA to 225, following its deal with OpenAI, seeing NVIDIA as uniquely positioned to help OpenAI with its infrastructure build-out. Let's stick with NVIDIA and their story. Gil Luria of D.A. Davidson maintaining his buy rating, but has some worries following the deal. Gil writes the following: "While the announcement is positive for OpenAI's ability to ramp, we're concerned NVIDIA has become the investor of last resort, bailing out OpenAI's overextended commitments." Gil joins us now for more. Gil, welcome to the program, sir. I'd love your perspective on this. Just how uncomfortable are you following that deal announcement, and why?
We are uncomfortable because if the market really was as good as NVIDIA and OpenAI said yesterday, there would be other capital available to OpenAI as opposed to the vendor that's supplying the AI trade. We really need to start separating what's real, what's healthy, from what's unhealthy. And you had a great discussion so far this morning about this. Let's talk about what's healthy. Microsoft, Amazon, Google are healthy. They have the real customers, and they have the capital to invest in new data centers to provide AI. AI, the models are fantastic. They are doing things we never imagined they could do, and they keep getting better. People are using them for more things. They're bringing them to work. That is very real. On the other hand, we have companies like OpenAI making commitments that there's no way they can live up to. Let's not forget, Microsoft has right of first refusal for all of OpenAI's compute, so they're going to handle most of it. OpenAI just committed $300 billion of compute commitments to Oracle, another $100 billion to Becca, another $25 billion to CoreWeave, and then signed up for projects in the UK and the Gulf. They don't have that capital. They're on a $12 billion revenue run rate, and they're going to lose probably 10 or $20 billion this year. They're building hardware. They're building a consumer product. That is not real. So you have to be careful about the marginal trades here. Interesting talking about CoreWeave and Oracle upgrades. Those are the marginal players. Those companies have neither customers nor capital. Unlike Microsoft, Amazon, Google that have both, they're just dumping over the excess demand onto CoreWeave and Oracle. As soon as they have enough of the capacity they need, they won't need those marginal players. Those marginal players are the bubble.
Gil, this to me is fascinating. I'd love to unpack that, this idea of all of the commitments that OpenAI is promising. What actually are they promising as part of those commitments? I mean, you could make the argument they could be the next Alphabet, right? That they could really compete with Google in a material way, and then that could be worth it in terms of their valuation and some of their software provisions, as well as their algorithms. Where do you see the disconnect in what they're actually offering?
So the operative word in what you just said is could. Unlike Google that ran away with search, OpenAI is in a very competitive market. We don't know that they're going to have the winning solution. They have a lead now, but so did Yahoo and so did MySpace. What we know is that Google has models that are just as good, if not better, than OpenAI's. Anthropic, for certain things, has models that are just as good as better. We know Zuckerberg is investing tens, hundreds of billions of dollars in building a different model. We know there's Chinese models. OpenAI is not going to run away with it. They have a lead. They may participate, but the likelihood that they'll run away with it and need $500 billion of compute over the next 5 years is pretty far-fetched.
Given some of the commitments that you've been talking about, the $300 billion to Oracle, the $100 billion investment announced to overnight, you start adding this all up, it's real money. I just wonder, Gil, at what point, if you see an OpenAI show its vulnerability, how much that disrupts the larger ecosystem in a real material way from a valuation perspective and beyond?
Yeah, it'll cause disruption. Again, I would be weary of the marginal players here, because they're going to be the ones that get hit the worst. NVIDIA will keep selling chips. Microsoft will continue providing services to its customers, so will Amazon Web Services, so will Google Cloud. But I'd be weary of all the incremental marginal trades on AI that are really getting out of control right now. NVIDIA is the most attractive direct bet on AI right now. That's why we moved to buy, because at 28 times earnings, they're trading at a lower multiple than any of those marginal players, in spite of the fact that they're going to win one way or another. Whether they sell chips just to Microsoft, Amazon, or Google, or to more companies beyond that, isn't as important. The demand for data centers is there because AI is potent. Just be aware of where you're investing in that.
Well, last week we saw NVIDIA take an investment in Intel. This week it's OpenAI. Who's going to be next?
Well, so in a different world, NVIDIA would be buying a lot of these companies, but we are in a world where the big techs cannot make acquisitions. So they're going to have to make these types of investments, acqui-hires, et cetera. Now, Intel is a little bit of a different matter. Intel is a strategic investment in the ability to move the supply chain to the United States after the US government stepped in and said that they will ensure that would happen. That facilitated NVIDIA coming in and saying, you know what, we are going to put Intel into our ecosystem, make sure they have a viable customer so they can ramp up their 14A technology. We'll bring them into the data center, which is a little ironic considering NVIDIA is the one that wiped the floor with Intel for so many years in the data center market. Now that they've defeated Intel, they can bring them back in as a marginal player.
Gil, I've got 45 seconds. It sounds like the company you really have an issue with right now is Oracle, and the move we've seen so far this month. Can I just give you 45 seconds just to explain, what is your problem with that move this month?
That $400 billion of Oracle's market cap is tied to one company, OpenAI, that has made commitments that there is no way it can live up to. So if that much of your market cap is tied to one commitment that really is untenable for all the reasons we just discussed, maybe that's a little too much. It's been how they've expended their remaining performance obligations from $80 billion to $455. The vast majority of that is OpenAI. That is the entire move on Oracle's stock. I would revisit that calculation.
Gil, it's your opinion. We appreciate hearing it. Thank you, sir. Gil Lurie there of D.A. Davidson. Thank you, sir. The latest on Oracle and some of the big moves we've seen this month alone.
Larry Ellison, if you want to call in, please go ahead. I'd love your rebuttal to that because I think it's actually a salient point.
NASDAQ futures this morning just about unchanged, very close to all-time highs. Up next, Stephen Stanley of Santander with Fed Chair Jay Powell set to speak later on today.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We are 60 minutes out from the opening bell, and equity futures are only slightly negative on the S&P, just pulling back from all-time highs on the S&P 500. With your morning movers, your single names, here's Danny Berger. Hey, Danny.
Hey, John. One of the best performing stocks in the S&P 500 pre-market is Boeing this morning, up 2.4% after the U.S. ambassador to China, David Perdue, said that there was a huge order in the works of Boeing aircraft by China to Boeing. Bloomberg has reported in the past that China has been working on a 500 aircraft order from Boeing, so that could be what indeed the ambassador is talking about. Elsewhere this morning, a little bit of deal news breaking in the past hour. Sempra, the energy infrastructure company, in one of its energy infrastructure portfolios, it will be selling about 45% of it to affiliates of KKR and the Canadian Pension Plan. That deal will net them about $10 billion. They'll get that in cash equity, 47% of which at the close. The next bit comes through the year 2027. Finally, wrapping things up with some earnings we got this morning. That was from AutoZone, the auto retailer. Shares down 3.3%. It was the fifth consecutive earnings that they missed. Even with that miss, though, the CEO saying that they're doubling down, opening more physical U.S. stores, but margins missed and their inventories were higher. So all in all, a negative report for them, John.
Danny, thank you. A few names to look at going into the opening bell. The opening bell 60 minutes away. 15 minutes after opening bell, some important economic data, the US PMIs at 9:45 Eastern Time. Then later on this afternoon, capping off a busy day of Fed speak, we'll hear from Fed Chair Jay Powell speaking just afternoon at 12:35 Eastern Time. With the preview, let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. Well, I'm not sure we're going to get a whole lot out of Jay Powell today that we don't already know, because he just spoke a week ago after the Fed meeting, and he said the Fed is at this point concerned about the labor market and considering cutting rates again, but check with us as we get closer to the date, which would be October 29th, because we want to see more data and see how the economy develops. What might be more interesting today is Mickey Bowman's speech. You had her up there on that graphic. She speaks at 9 o'clock in the morning, and she was perhaps the person on the board closest to Stephen Myron's views. Does she agree with him that the neutral rate has fallen significantly and the Fed needs to play catch up and cut rates a lot going forward? Does she have an estimate for the neutral rate? And how much does she agree with Myron's outlook going forward? Powell has said over and over again that we shouldn't make policy by using the neutral rate because you can't really observe it. So he's probably going to be talking much more about the data and the data dependency the Fed has been on, which of course is somewhat backward looking. So doesn't look like we're going to have anybody solving the debate this time. It just looks like we're divided, and we're going to continue that for some time.
Michael, have we got any reporting whatsoever on just how well received or not Governor Myron's argument was on the committee last week?
It's about the same that we've been reporting all along, that people give him credit for being a decent economist and for making plausible arguments, but they don't really believe what he's saying. There are people, Bowman, who might be one of them, who would say that, yes, we probably need to do more sooner. But in general, the majority on the Fed is at this point in a watch and wait mode, willing to cut rates, but wanting evidence that they need to do so.
Mike, thank you, sir. Michael McKee, look out for Governor Bowman later on this morning. Let's stick with the Federal Reserve. Stephen Stanley of Santander writing, Chairman Powell seems frightened that the economy could be on the cusp of a surge in layoffs. But while new hiring has slowed dramatically, layoffs are not picking up. Stephen joins us now for more. Stephen, good morning.
Morning.
Do you think rates pricing is too aggressive?
I would say it is. I mean, I think it's not outrageous for the rest of this year, but there's a lot of easing also priced in for 2026.
Why do you think the labor market is more solid than it currently appears, especially given some of the revisions in non-farm payrolls?
Yeah. So I would say a couple of things. The first one is I think that a lot of the slowdown in job growth is a reflection of changes that we've seen on the supply side of the equation, right? Just the slowdown in immigration. We haven't seen a dramatic slackening in things. I mean, the unemployment rate has ticked up a little bit, but it's still pretty close to where it's been for the last year, year and a half. I think the other point I would make, and I think this is the more important point, is that you have to think about why is the labor market slowing down. And when you listen to what companies are saying, they're not saying, oh, you know, we're getting ready for a recession, we're about to lay off a bunch of people. They're saying, we've put ourselves on hold for a few months, we're waiting for policy certainty, and once we have that certainty, we're gonna re-engage. And I thought it was interesting that we heard from a couple of Fed Bank presidents yesterday suggesting that maybe firms are just getting to that point where they're almost ready to re-engage because we have seen a lot of the policy uncertainty resolved at this point.
I think a big question is, what does re-engage mean? Does it mean invest in a bot that can talk to another bot that can then talk to another bot to tell it what to do and then a robot will fulfill the order, or will it be actually hiring people? Could you see a scenario where you get a re-acceleration in the U.S. economy without the labor market getting materially more robust?
Well, it certainly depends on what sectors of the economy are driving you, right? I mean, if you're talking about just purely a manufacturing revival, then that's not going to generate a ton of jobs. Service sector is still very labor intensive, so I think most parts of the service sector, if they're strong, there you'll see a good amount of hiring.
To Lisa's point, though, how much are companies just saying policy uncertainty as an excuse for AI taking entry-level jobs?
I think we are seeing places where AI is having a big impact. I think that, you know, there's been a lot of talk recently, I've written about this, the weakness in the market for recent college grads. And I think that's certainly, at least in some industries, one place where AI may be taking away from what would normally be demand for workers. But, you know, we've seen, you know, you can go back 200 years, right? We were an agricultural economy, and then we moved forward to a manufacturing economy and a service economy. Some would say now we're moving to an information economy. Technology is always eliminating certain types of jobs, but in the process, it has always in the past generated new jobs. So you can't always predict what those new jobs are gonna be. I'm not, on an aggregate level, I'm not worried that we're not gonna have enough jobs for people, but I do think there's going to be definitely some shifting around in the market.
How does the Fed discuss that? Because they don't have a prescription for AI's impact on the labor market.
No, the Fed can't really, that's something the Fed can't really control, right? So the Fed has to stick to its knitting. We have to keep inflation close to 2%, and, you know, and keep the labor market close to full employment. When there are supply side shocks to the real economy that are beyond the Fed's control, that makes the Fed's job harder, for sure.
Bit of a guessing game, but where have you got neutral? Where do you think it is?
Yeah, I have more sympathy for the high neutral camp.
Okay.
So I maybe 3.25 to 3.5, somewhere in that range. And the reason I would make that argument is that the economy has, by and large, performed very well over the last few years. I mean, if you remember, at the beginning of 2022, the funds rate is at 0. Market participants never had the funds rate getting back above 2%. And the idea was if you got to 2% or higher, the economy would fall apart, we'd have a recession, the government couldn't fund itself. You know, there were all these dire things that were gonna happen, and here we are. We had over a year at over 5%. We've had over a year at 4%. The economy's done pretty well. And by the way, financial conditions are tremendously positive at this point. So it just doesn't feel like the Fed is grossly restrictive at the current rate level.
I can tell you, just to echo that, I remember in 21 being on a call with Bill Dudley and Mohammed Al-Arian, and at the time they were talking about the prospect of getting rates back to 5. Maybe we'd have to go back to 5. I remember just being in shock thinking, if we go back to 5, what would happen to markets? What would happen to the bond market? And here we are. Yet here we are. And Governor Myron's saying we're 2 percentage points too tight. Now, for an individual yourself who believes that maybe market pricing is too aggressive for 26, I want to understand how you'd respond if an incoming Fed chair, someone nominated and confirmed, said the same thing that Governor Myron said this week, that monetary policy was roughly 2 percentage points too tight. How would you respond to that? How would you start to think about and recalibrate your expectations for next year?
Yeah, I mean, I think that there's 2 issues there. One is how much sway does one person have, even the chair? And I think the answer to that is, if someone comes in who is grossly out of line with the consensus, I think it will be very hard to drag everybody along. So I think that a super dovish chair would have some influence on the path of policy, but not just going to come in and get their way. And then the second point is, how aggressive would the Fed be in that sort of an environment? Would it be, let's jump first and ask questions later, or are we going to kind of take things as they come? And we're only gonna move as the data dictate, right? And as long as inflation is closer to 3% than to 2%, I think you're going to see a lot of caution on the committee. And we heard that yesterday out of some of the more hawkish members on the committee, Hammack and Bostic and
Muslim as well, right?
Yeah.
But caution, but that isn't preventing them from cutting rates. And that the baseline right now is priced into markets. You started by saying you think it's actually pricing in too many rate cuts, and you think that there actually will be fewer. Let's say they do cut by an additional 125 basis points, and that the baseline of the committee does see neutral at a lower level than you do. How much greater is the risk of true reacceleration in inflation next year? How underpriced is that possibility?
Yeah. I mean, I think it's a risk. I don't think it's a baseline scenario for sure. As we talked about with the labor market, I mean, in my mind, it's not a disaster, but it's certainly less overheated. If it's overheated at all, it's much different than it was, say, 2 years ago. I don't see we've got the tariff impacts that still have to flow through, and you can imagine a scenario in which the tariff-related price hikes kind of kick off something bigger. I don't think that that's a high probability scenario, but it's a possibility. It's something the Fed wants to guard against, and something they've talked about a lot. So, I mean, I don't think that we should be, just pulling our hair out that inflation is about to take off again. But at the same time, inflation has proven to be stubbornly high. And I think the Fed needs to, in my view at least, needs to take that into account and be cautious in moving rates down. The closer you get to the Fed's view of neutral, I think the higher the bar is going to be for cutting again. And you heard that a little bit yesterday. It's like, okay, I was willing to go along with last week's move, but I'm not sure I'm going to go along with another one. And then there'll be others who will say, well, I could go for one more, but I don't know about 2 more. You look at the range of longer run dots that we got last Wednesday. There are 19 people in the FOMC. There were 11 different answers for where neutral is, ranging from 2 5/8 to 3 7/8, right? So as you start to get into that zone, more people are going to get uncomfortable if you keep cutting.
We're getting closer to that zone.
We are.
Every meeting between now and May gets a whole lot harder potentially and not easier. Stephen, appreciate your time. Thanks for being here.
Pleasure.
Thank you. Stephen Stanley there of Santander with an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. U.S. President Donald Trump is in New York to address the UN General Assembly later today at 9:50 a.m. Eastern. Trump is scheduled for high-stakes bilateral talks with leaders from Ukraine and the EU, as well as a multilateral meeting on post-war governance in Gaza with leaders from the Middle East and beyond. In an interview with Times of India, JP Morgan CEO Jamie Dimon says he hopes President Trump and Indian Prime Minister Narendra Modi can reach a trade deal. Plus, when asked about the Trump administration's steep hike on H-1B visa fees, Dimon said he will be engaging with stakeholders and policymakers, adding that the move, quote, came out of the blue. And Hong Kong has issued its third highest storm warning as Super Typhoon Ragasa approaches after lashing the Philippines, as you can see there. It is equivalent to a Category 4 hurricane, according to the local weather agency, and has caused major flight disruptions, closed schools and businesses. It could potentially be the most damaging storm in the region since 2018. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with David Rubenstein of the Carlyle Group, live from New York City this morning. Good morning. You're watching Bloomberg TV.
When we looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The opening bout is about 43 minutes away. Going into that opening bout, equity futures totally unchanged on the S&P. Likewise on the Nasdaq 100, on the Russell, on the small caps, up by 0.2. In the bond market, yields lower by a single basis point on a 2-year bond this morning, 359 on 10s, 413, yields down about a basis point. Around an hour from now, the focus on the economic data. Talked loads about the Fed speak. Can we just talk about the data? I think these PMIs are important to get a flavour of how things started to build coming out of the summer.
Yeah, especially because European PMIs came out stronger than expected, and substantially so. At a certain point, are we seeing the reacceleration? Is it global? Is the U.S. the epicenter of it, or is it not? And I think that that's sort of an interesting question, especially when you look at the currency and then gold, and then you wonder what's going on there.
The gold rocketing.
Yeah, exactly.
40% plus move year to date.
Bonkers.
Amazing.
It is. I mean, and how much does it continue, given the fact that central banks continue their investments?
Let's get you a sneak peek of the next week, including what you can look for today at 9:45 Eastern Time. As I said, PMI data coming out. Then just after that, President Trump speaking at the UN General Assembly. Later on this afternoon, comments from Fed Chair Jay Powell. On Wednesday, Fed President Mary Daly is speaking. On Thursday, another round of jobless claims. Plus, we get some results from Costco. Finally, PCE data to round out the week on Friday. Going into the weekend. Before we get to the weekend, make sure to watch the latest episode of Bloomberg Wealth at 9 p.m. Eastern Time as David Rubenstein sits down with Wellington Management CEO Gene Hines. David Rubenstein, the co-chairman of the Carlyle Group and host of Bloomberg Wealth, joins us now for more. David, welcome to the program, sir. We've got a range of topics to work through. First of all, given the Federal Reserve and Chair Jay Powell is in focus later on this afternoon, a man who, of course, you know well, we'd love your reaction to the latest pressure on the Federal Reserve and the daylight, the division within the committee right now, and the daylight between Governor Myron coming out of the White House and everybody else. David, what's your reaction to that as it builds through the summer and as we enter the fall?
Well, the Fed did what most people thought it was going to do, which is to have a rate cut of 25 basis points. President Trump didn't applaud that. He didn't criticize it either. I presume he wanted a bigger rate cut, but generally he was okay with it based on what I've heard. But I think he would like more rate cuts. Whether the Fed will do more, time will tell. Jay Powell likes to look at the data, and I think he got enough favorable attention for the 25 basis point rate cut, such that he's not under pressure immediately to go do another 25 right away. But I suspect when the Fed meets again, another 25 basis cut would probably be on the table. Whether it will happen or not, I don't know. Depends on who's on the Fed, of course. As you know, there is Supreme Court litigation about who's on the Fed right now, and we just don't know who's actually going to be on the rate-cutting committee when the next Fed meeting occurs.
David, how closely are you tracking the replacement, the process to replace Fed Chair Jay Powell, and how credible do you think that process is?
I think the president has largely made up his mind. I obviously can't speak for the president, and I haven't talked to him about it, but I suspect that there are very few people that he is considering at this point. He knows all the people who are likely to be candidates pretty well, and I think it's down to one or two people, but I think he probably has made up his mind, it'd be my guess. I don't really know for sure, and I think those are people who are likely to do pretty much what he's interested in doing, so I don't think he's looking for any surprises by picking somebody he doesn't really know.
David, you're in a wonderful
and Jay Powell's term is not up until May, and Jay's made it very clear that he wants to stay through the end of that term, which is May of 26, and then he'll be gone, and then you'll have a new chairman. Presumably that person will be confirmed before Jay Powell actually leaves.
One of the questions for the Federal Reserve, as well as economists more broadly, is just whether this economy is truly reaccelerating or whether we are facing something that is more pernicious, particularly led by the labor market. Based on your position, the hat that you wear at the Carlyle Group and the portfolio companies, are you seeing more signs of reacceleration, or are you seeing more signs of something that's more tepid?
The biggest surprise to date is that the impact of the tariffs has not yet been felt in the economy in any meaningful way. When tariffs were imposed, people thought this would produce runaway inflation. It hasn't happened yet. That's in part because the tariffs haven't gone fully into effect, and in part because I think some of the U.S. importers are not passing along the costs. But probably it will take us 6 months or maybe even a year before we know the true impact of the tariffs. One thing I would like to point out, though, is the tariffs, whether you like them or not, are now going to be part of our economic system, and this is what I mean. When the big, beautiful bill passed the Congress, it assumed over the next 10 years or so we'd have roughly additional $2.2 trillion of federal indebtedness, $2.2 trillion over 10 years. But that assumed about $4 trillion of tariff income coming in. So if the tariffs were to go away, as some people would like them to be going away, you're going to have another $4 trillion of additional federal indebtedness. So we're in a difficult position. If you don't like the tariffs, you've got to come up with some other way to get $4 trillion of revenue into the system where you're going to have a gigantic increase in the debt.
David, you were talking about how this is a different system, right, where tariffs are a part of it. We also are talking, we've talked a lot about how the government has taken a stake in Intel, had a more direct influence over a number of different technology companies. When adjust or change the way that you invest around some of these changed policy perspectives?
I don't think it's really changed that much because right now, most things that people like Carlyle or Blackstone or Apollo or KKR are investing in are not directly affected by what the president is doing. There are a couple of very visible deals that the president has taken, or on behalf of the U.S. government, some stakes in or had some modifications on the deal that was on the table. But generally, I don't think it's had a big impact. Right now, the investing world is in reasonably good shape. Inflation is not a gigantic problem at the moment. U.S. growth seems to be in reasonable shape. Clearly, there are always some challenges in the economy. I think most investors would like to have more certainty about where the Fed is going in terms of interest rates. But generally, I don't think people are holding back on doing deals at the moment. In terms of the stakes that the federal government's taking, presumably they will all be put in some kind of sovereign wealth fund or something of that type at some point. The U.S. government doesn't have a sovereign wealth fund. In effect, our sovereign wealth fund over the years has been our printing press because we've, in effect, been able to print all the dollars we really needed and, in effect, substitute that for a sovereign wealth fund. But I think the president seems to be interested in developing a sovereign wealth fund, and the Secretary of Treasury and others have talked about it, and presumably some of the stakes, like the Intel stake and others, will ultimately go into some kind of sovereign wealth fund.
David, if I could just quickly pick up on that comment you made earlier about Jay Powell will be gone. His governorship ends in 2028. This is someone you know really well. Do you think he will leave after he's no longer chair, or do you think he's going to stick around?
I don't want to speak for him, but my guess is that he will follow the pattern of every other chairman of the Federal Reserve, which is when their chairmanship is over, they depart from the Federal Reserve. Yes, he could theoretically stay longer, but once you've been the chairman of an organization for a long time, it's very difficult to stay around as a regular board member. So no, I believe, but I don't want to be making news about it, but I believe, based on everything I know, that he will step down as chair and step down as a board member when his term as chair is over.
David, you've been generous with your time. Thanks for your time this morning. David Rubenstein there of the Carlyle Group on the Federal Reserve and a whole lot more.
You know, his comments on the sovereign wealth fund were very interesting. The idea that the Intel stake and some others could end up in a sovereign wealth fund that we don't yet have, and that so far the sovereign wealth fund has essentially been the dollar and the printing press, and how much that's going to shift to real investments in companies. That's something I want to wrap my head around a little.
We've asked the administration this. I've been in the room, and they say that that's not really the direction of travel right now. But David is right. There's been tons of speculation around this, and potentially this is what they are trying to do. When it comes to Jay Powell, he didn't want to make news, but Powell has yet to tell the administration he's leaving.
I know.
And this is where some of the angst is right now when it comes to Treasury Secretary and the President and how they're thinking about the Fed next year.
They want to put the chess pieces in certain places. Still trying to work out if there is a free place when Chairman Powell finishes his term as Fed chair in May.
Yeah, and I wonder why he isn't going to commit to that. Essentially right now, he's focused on the current ahead. He's not going to mention this later today.
It's going to be a conversation for the new year, I imagine. Going to wait until then. We'll see. Coming up tomorrow, here's the lineup for you. Peter Cheer of Academy Securities, Neil Dutta of Renmac, Barbara Reinhardt of Voya Investment Management, and Nathan Sheets of Citi. The chairman of the Federal Reserve coming up a little bit later, 12:35 Eastern Time. Look out for that. From New York City, you're watching Bloomberg TV.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And So far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I am never doing that again.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
All right, futures are flat, 30 minutes ahead of the open. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, tempering expectations. Bain warns the AI sector faces an $800 billion revenue shortfall just as NVIDIA secures a landmark deal with OpenAI.
And the Fed's road ahead. Chair Jerome Powell speaks today, while President Trump's appointee, Stephen Myron, makes his case for aggressive cuts.
But first, President Trump takes the spotlight at the United Nations as the OECD warns his tariffs will damage the global economy.
So we're expecting that in about an hour or so, Matt. But in the meantime, there are some stocks on the move pre-market, Boeing being one of them. It is up 2.3% this morning. This was a deal announced by the U.S. ambassador to China, calling it huge that China would be buying Boeing aircraft. Bloomberg did report last month that China was looking at buying maybe 500 aircraft from Boeing, so maybe that is that exact deal. So those shares up 2.3%, Matt.
All right, Kenvue shares also rebounding. You can see the gain 5.7%. Of course, Kenvue is the maker of Tylenol, spun off by J&J. It was down more than 7% yesterday as the Trump administration linked Tylenol to autism. Trump urged pregnant women to avoid the pain medication despite a lack of widely accepted scientific evidence supporting the risk. But he said it's not good, Danny. It's not good to take acetaminophen.
And those shares initially fell, and as you're pointing out, recouping those losses. Also, one of our top stories this morning, Matt, NVIDIA moving to the downside, down 0.8% after a rally yesterday, following that $100 billion data center pledge to power OpenAI's models. The deal, though, now, this morning, fueling fears on Wall Street of a bubble as AI companies invest in one another with capital they do not have. Here's D.A. Davidson's Gil Loria.
If the market really was as good as NVIDIA and OpenAI said yesterday, there would be other capital available to OpenAI as opposed to the vendor that's supplying the AI trade. We really need to start separating what's real, what's healthy, from what's unhealthy.
And joining us now is Bloomberg Tech's Caroline Hyde. Caroline, there does seem to be a really cyclical nature to this, that you get NVIDIA invests in OpenAI, which invests in Oracle, which invests in NVIDIA, and around it goes. Is this just recycling capital?
It feels like a money merry-go-round, and everyone's trying to distinguish actually where these GPUs, which could be in the millions, coming from NVIDIA with the $100 billion money going towards OpenAI. OpenAI is saying, yeah, we'll keep on buying your next iteration, your Rubin architecture chips, and put them in our future data centers. Are they separate data centers from the ones that OpenAI is already agreeing to build with Oracle, which of course is a $300 billion money that they're allocating to Oracle for their future revenues as well? Is it separate from what they're already been getting from the likes of Microsoft? NVIDIA is a strategic investor. We know that. They put money into CoreWeave. What's CoreWeave? Well, it's a builder of data centers that then uses NVIDIA chips. It puts money into Nscale, the European equivalent that is building data centers to use NVIDIA chips to build out Europe's own architecture as well. There is a lot of money that is going from seller to buyer, from buyer to seller. Some of it is coming in equity form, some of it's coming in actual future revenue streams. But what we do know is that ultimately, you've got to believe that all of our productivity is going to get a lot better. All of us are going to start paying a lot more to OpenAI for the use of ChatGPT, the 700 million of us that already use it on a monthly or weekly basis. And all of that then suddenly becomes real future money. But this is like one big VC bet on the entire US economy and global, it feels.
It sounds like a house of cards, like a shell game, and I'm not smart enough to follow it, but Bain dug through all the numbers and said that we're going to need $2 trillion in combined annual revenue to fund the computing power needed to meet the projected demand, and that there's going to be an $800 billion shortfall by 2030. That's no small amount of money.
And who's got the shortfall? Because at the moment, NVIDIA is making a ton of money. And its chips are incredibly expensive, and it's trying to secure the fact that its future demand is there. So it's basically lining up people saying, I promise to buy chips from NVIDIA. Who then is losing out on the money? It's interesting that Micron's going to come out with its earnings after the bell today. We are seeing significant increase in revenue, up to more than 40%. It's, of course, really focusing in on the high bandwidth memory that has become incredibly necessary for these AI accelerators. And people do believe that that sort of revenue pace can continue. But does it vindicate the 40% run-up in shares that we've seen in September alone? All of this is basically the promise that we will have jam tomorrow. But that's what markets do. They forecast future revenue. They forecast future profit. At the moment, Bain thinks that there's a big old hole. The question is, whose hole is it?
Right. Micron shares, by the way, have doubled year to date, rising 95.6%, so almost doubled. Caroline, we're going to be watching out for you on Bloomberg Tech. That's the show she co-anchors with Ed Ludlow. One of yesterday's big laggards is rebounding today. I showed it to you at the top. Kenvue is the maker of Tylenol after it was spun off by J&J. It's fighting off attacks from the Trump administration over alleged links to autism.
So taking Tylenol is not good. All right, I'll say it. It's not good. For this reason, they are strongly recommending that women limit Tylenol use during pregnancy unless medically necessary.
For more, we are joined by Bloomberg's Red Brown. He's been reporting on this story, and that, I mean, that wasn't the president's scientific analysis of acetaminophen, which is the medicine in Tylenol, but what links do we know exist between acetaminophen and autism?
Well, in general, it seems like the scientific community is kind of taking the opposite position of the president. It doesn't seem like, you know, there are some studies that have come out that have made some claims, but there's questions around the authors of those studies and things like that. So it is quite a muddled topic still. Causation is very difficult to prove with these things as well. But again, kind of the scientific community, the company as well, naturally so, is saying, you know, science points to it's safe for mothers to take. It's the best thing for a fever for a pregnant mother. So right now that kind of is the prevailing sense, despite what the president and the administration said.
And maybe, Red, that's why you are seeing shares rebound the pre-market. We're about 20, a little bit more than that, 20 cents away from getting back to where it was before yesterday's announcement. But still, surely there is some impact. Surely this will mean some people thinking of reaching for Tylenol on the shelf maybe don't.
Yeah, no, I mean, that probably is the worst case scenario, I guess, at this point, is that there is maybe some hesitancy from the demand side. But right now, analysts are also kind of coming out and saying that there was no real new data that they presented. So, you know, maybe, you know, people will be informed on this issue now that it's out in the news cycle as well, and will kind of make their own decisions. Still, it doesn't seem like doctors are going to stop recommending it. There was no kind of language that would suggest that they're going to have to stop recommending this to pregnant mothers. It still is the best treatment, it seems, for a fever in a pregnant mother. They can't take the other pain medicines to reduce fever.
And fevers are really bad for pregnant women.
Exactly. Yeah, fevers are the thing that they should be worried about, right? Is handling that. So, yeah, it remains to be seen. I think just one kind of point on the company is this is the biggest brand for Kenvue. It makes up kind of a high single-digit percentage of their revenues. It's a global brand as well, though. So this is just one market for them. They do have kind of the cushion in Europe and everywhere else where this product is sold.
All right, Red, thank you so much for joining us on that. That is Bloomberg's Red Brown. Now, another stock we're watching this morning, Boeing. U.S. Ambassador to China David Perdue says the two countries are in the final stage of what he called a huge aircraft order. Joining us now is Sid Phillip, Bloomberg's Global Aviation Chief Correspondent. So it's the return of Boeing as this chip of diplomacy. What might a huge order from China look like?
So Boeing has become this massive sort of part of Trump's diplomacy, and every country that's sort of agreeing trade deals with Trump talks about how they've managed to order some Boeing planes. Sometimes those are recycled deals, but aircraft orders are a big part of that. And we understand that China is in the midst of negotiating as many as 500 aircraft. They're trying to look at the next replacement cycle. So a lot of the Chinese aircraft are getting old now, the fleet's getting old, and so for the Chinese airlines to tap the next phase of growth in terms of replacement of aircraft, they need to order Boeing planes, and they haven't really ordered any since 2017. And so that's basically where the Chinese airlines are looking to replace their planes.
I keep looking at Boeing versus Airbus. And over the past 5 years, Boeing is up 40%, so it's better than, losing money. But Airbus is up 238% in the same time period on a total return basis. Why is the only other major plane maker in the world, and the one that's not American, doing so much better than Boeing?
So Boeing's had a lot of missteps in the past 5 years. I mean, you remember the MAX crisis that occurred just before the pandemic, when we had those two fatal plane crashes that led to the MAX being grounded for over a year. And in the run-up, in the sort of rebound since then, Boeing's had a lot of missteps. I mean, we had the Alaska Air blowout last year, which again led to scrutiny on Boeing. So Boeing's had a lot of issues, and they've sort of had to work their way back through that. And so Airbus has had a much easier ride in the past 5 years while Boeing's been struggling.
All right, Sid, great to get your take on this. Sid covers airlines for us really globally. I'm looking at some headlines here from Mickey Bowman at the Fed saying that the Fed is at serious risk of being behind the curve, and it's going to need faster cuts if the job market continues to worsen. Bowman says it's time to act decisively on rate cuts. So really watch the bond markets. I'd take a look at the 2-year to see if that yield moves at all on those headlines. Of course, the market is already pricing in cuts down to 300 basis points as far as the terminal rate is concerned. If you check out WIRP, you can see that.
Yeah, not huge moves on the 2-year this morning, but maybe it's just because it balances out the other Fed speak that we've heard. We've heard from Bostic, Musalem, and Hammack. All of them were quite hawkish, really tempering their ideas of the ability to get rate cuts down. Of course, Bowman sounding a bit like Myron, but Myron was really aggressive in how much he thought we should be cutting at this moment. 12:35, that's when we'll hear from Fed Chair Jerome Powell, so another voice to add into
Maybe
the mix.
she's jockeying for the job.
Haven't heard that one before.
Well, Waller,
she is, but
Bowman.
But she didn't dissent like Myron does. Waller and Bowman did not dissent with a 50 basis point cut. Does that hurt their standing and their running for being the next Fed chair?
Right. Well, I guess maybe she's trying to make up for it with
Possibly.
Statements like this. Coming up, Firefly is dropping. The rocket maker's first earnings results as a public company fall short of expectations, and the market cap is then decimated. More on that report next. This is Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's get now to high interest. Look at what's making headlines around the world. Secretary of State Marco Rubio says the U.S. will defend every inch of NATO territory after Russian jets violated Estonian airspace and drones crossed into Poland. NATO vowed a, quote, robust response, warning it could use military force if needed. Well, what else would it do? Rubio's remarks come as President Trump addresses the UN and prepares to meet Ukraine's President Zelensky. Sempra is cashing in, selling a 45% stake in its infrastructure arm to KKR and Canada's pension board for $10 billion. The move boosts its regulated utility earnings to about 95% and strengthens its credit profile. The deal, expected to close by the end of next year, by next year, makes the KKR-led group the majority owner, while Sempra keeps a 25% slice. And as world leaders gather for the UN General Assembly here in New York City, the Secret Service says it dismantled a SIM card network in the city that threatened senior U.S. officials. Agents seized over 300 servers and 100,000 SIM cards. A system investigators say could have crippled telecom networks if left unchecked. The threat bore signs of foreign involvement, according to the Secret Service. I don't really get how 100,000 SIM cards would be a threat to officials. Unless you, like, threw them at the officials, or if they slipped on the SIM cards as they were walking down the street. Like, what would you do with SIM
like a
cards?
banana on the street peel that they slip? No, they just would send them threatening messages, maybe try to extort them. I'm not really sure. Hack their phones. Possibilities. Matt, hackers are very creative.
Got it.
Anyway, on to a stock that we're watching this morning. Firefly's first earnings results as a public company fell short of expectations. Shares cratering this morning, down almost 11%. The rocket maker's revenue missed Wall Street expectations. For more, we're joined by Bloomberg's market correspondent, Nora Melinda. And Nora, now it's trading back below its IPO price to a company that had so much fanfare. What went wrong in these first earnings?
So much fanfare that the company has seen, and we've been seeing so many IPOs just ripping as we have so much of Wall Street optimism really buoying them here. Let's look at Firefly Aerospace in particular here. So it is a $7.2 billion company based in Texas. They do a lot of rocket launches, as you mentioned here. This was their first report. So of course, we did know that they IPO'd just early last month here. So when you're thinking about a report here, when it's the first inaugural one here, people really have high expectations leading into it. We had Jefferies pointing out the fact that they spent a lot on R&D. Of course, as you called out earlier, they missed on revenue here. So expectations are high, especially if you think about a company that just debuted here. You really want to see some positive results.
What does Firefly do? I recognize that they're space-related since we continue to show rocket videos. And I know that that's been a popular theme for companies coming to market this year. So what do we know about this company?
Absolutely. There's a lot of different companies that are now bubbling up in the space sector here. And so if you look at Firefly in particular, I mean, they do a lot of those rocket launches, maybe sending satellites into space, doing payloads, just moving different things within space there. So that's what their bread and butter here is. And if you think about some of their major deals, they are kind of branching out into the commercial space. They are branching out into the government. I mean, they made history recently with the partnership that they had with NASA. It landed the Blue Ghost, which is its robotic spacecraft, on the moon. And that was the first privately owned company that was actually able to land upright and intact on the moon. So a major accomplishment for them, and it seems as though they're going to be continuing to have some sort of relationship with NASA moving forward and just really broadening and expanding their presence there.
Very cool. The Blue Ghost. What a sweet
The Blue
name.
Ghost.
Nora Melinda covers, well, defense companies as well as space and real estate.
And all markets.
She covers all the markets
she got it all.
for us here on Bloomberg Television. Nora, great to have you with us. Coming up, Deutsche Bank says AI is likely to keep the U.S. from a recession. I mean, I think it was even more strongly worded than that, right? Like,
yeah.
If it weren't for AI,
we'd be in a if it weren't for NVIDIA, we'd be in a recession.
We're going to ask New York life investments economist Lauren Goodwin for her take. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Deutsche Bank says that AI CapEx is propping up the U.S. economy. Global head of FX research George Saravello says, quote, in the absence of tech-related spending, the U.S. would be close to or in a recession this year. He goes on to say that it may not be an exaggeration to write that NVIDIA, the key supplier of capital goods for the AI investment cycle, is currently carrying the weight of U.S. economic growth. Lauren Goodwin, economist and chief market strategist, joins us now. Lauren, really wonderful to see you this morning. And maybe this is a little bit more concerning considering we just got that OpenAI NVIDIA deal where it seems like they're all just investing in each other. Are we really that close to a recession that is just AI propping us up?
I do think that we're operating in a two-speed economy, and that's not only true with CapEx, where AI is doing the economy isn't. It's also true of the consumer, where the top 10% of spenders are spending half of overall consumer spending in the economy. But this AI activity is real activity. And not only is it real activity, but it is crowding in other elements of the private sector. So you have companies like NVIDIA doing a lot of the heavy lifting, but then you have the energy and the data centers and the application layer building up around them. And so I completely agree that it's a bit of a top-heavy trend, but it's real economic
But you can see the circular logic. So OpenAI wants to build data centers. For that, it's going to buy chips from NVIDIA. And NVIDIA is going to invest $100 billion in OpenAI to buy data centers. That seems like
a Ponzi scheme, a house of cards.
I don't want to say. I'm not going to say Ponzi scheme. You won't hear Ponzi scheme come out of this mouth. No, but it doesn't seem like really legit.
I think it's completely reasonable to be asking the question and to be concerned. And I think it's a very reasonable question to be asking. I think when it comes to the investment case for these companies, the reality, the very uncomfortable reality, is that this absolutely not Ponzi scheme, but the circular economy is going to keep moving until these companies say that it's not, until the demand for these chips from all parts of the globe dissipates or diminishes. We know that that point will come. We know that there will be diminishing returns to compute at some point, whether the application layer can't keep up or we need more power, whatever the case may be. We know that that will come at some point. But the question for investors is that point in the next 3-6 months? I strongly doubt it. We are still so early in the S-curve of this technology that we need to keep asking the question to not get caught, but I think it's too early.
What do you think about the Bain story this morning? So they're saying it's going to take $2 trillion to build up the infrastructure that we need to meet demand by 2030. And that's not a new number. We've heard Bloomberg Intelligence has had a similar number. Moody's has come out with a similar number. But the thing that's interesting about Bain is they say there's an $1 billion revenue shortfall to get there.
So there's a couple things that I think about this research, or this sort of reality, let's call it. The first is that this is an enormous amount of spend, and that type of spend has historically been a limiting factor on new technologies. I mean, even AI itself is not really that new of technology. It took us 50, 75 years to get the compute power to really make it work. It is possible that not only the spend, but the energy capacity to fuel AI could be a limiting factor in its proliferation globally over the next couple of years. But because it has become, and this is the second thing I think is really important, because it has become a matter of economic and national security, I don't think it's only the private sector that's going to be playing a role here. In fact, the public sector has been enormously important in crowding in the private sector on this theme. And it's one of the reasons why I don't think that governments are going to be able to cut back on spending. This is just too important to their vision of the path of the future.
There's no way we can cut back on spending. We've learned that. Lauren Goodwin, just give me flashbacks, though, to 1999. Cisco, laying fiber. It all seems so familiar.
It does. Wait, I want to be clear, that wasn't a Ponzi scheme, and neither is this. But
No.
I don't think that. Just want to be abundantly clear.
We are not alleging any pyramid schemes here. We're going to come back with more from Lauren. Quick check on futures ahead of the opening bell. Looking at a relatively flat trade in equities. Russell futures, though, gaining 0.2%. They were the laggard over the last couple of sessions. This is Bloomberg.
is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
All right, just got about 20 seconds to go until the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Futures not doing a lot, but we did, of course, hit another record high yesterday on the S&P. I think 66.93 or thereabouts was the closing level. And yesterday we saw the S&P, the NASDAQ, and the Dow Jones Industrial Average. That's not the Dow, that's the Russell. Russell futures are up because Russell was really lagging. It didn't hit a new high yesterday, so the small caps, that blip of a comeback maybe is over. Compo Secure ringing the opening bell at the New York Stock Exchange. John Wilk is not only the chief executive officer, but he's also the president of this company, which has more than doubled since it went public. They're up 60% year to date. They offer a range of services and solutions for cryptocurrency and stuff. Down on the NASDAQ, well, there's Jimmy Fallon.
He was looking so hyped.
It was.
Pumping his fists.
It was Jimmy Fallon. Super pumped, I guess, about ringing the bell at the NASDAQ. And he hasn't been suspended or fired yet. So
another reason to be pumped.
Yeah, one of the few left standing. Although tonight...
Kimmel's back.
Kimmel's back tonight. Are you going to watch?
I never watch, so this won't change my opinion. That sometimes I look at clips on YouTube, which is maybe part of the problem.
We'll definitely be looking at a lot of clips on YouTube tomorrow morning. We may even show you them on this program.
We might, if you're lucky. All right, some stocks that we're keeping an eye on this morning. Boeing is one of them. The U.S. and China are in the final stages of a, quote, huge aircraft order. That is according to the U.S. ambassador to China, David Perdue. In August, Bloomberg reported that Boeing could sell as many as 500 aircraft to Beijing, so shares higher by 2%, Matt.
All right, I'm watching Kenview today after the president said taking Tylenol, it's not good. It's not good.
Direct quote.
Recovering from yesterday's losses, you can see up 6.5%. Tylenol, of course, is acetaminophen, and the Trump administration recommended against taking that, especially for pregnant women, because they somehow link it to autism. It's not clear that science supports that, but it's never really been incredibly important to, well, RFK Jr. or President Trump. Really, science, we don't put that much credit in science, right, when it comes to things like pregnant women having a fever and trying to cure it.
You've lost me, I'm going to be honest, but fevers are really bad for pregnant women, and they probably should be taking things to help reduce fevers like Tylenol.
It would be a good idea. But who knows if there are actually any links between acetaminophen and autism. Let's get back to the economy where we have a better idea, although not a much clearer picture. Lauren Goodwin, economist and chief market strategist at New York Life Investments. It strikes me that members of the Federal Reserve Board of Governors are almost as confused about what to do with rates as we are about Tylenol. I mean, we had a number of speakers, including Bostic, come out yesterday and say we should basically be done by now. And then Stephen Myron and Mickey Bowman are saying, like, we risk being behind the curve. We need to cut far more. What is it?
We need to be really careful about the risk of inflation that is not staring us in the eyes right now, but is very much still a part of this economic story. I think here's what all of us, myself, my colleagues on the street, the Fed, got a little bit wrong this year. When tariff policy came into play, and also when changes in immigration policy came into play, we looked at those drivers and said, goods prices are going to go up. Labor costs are going to go up, so services prices are going to go up, and that's concerning. We haven't seen that in the data yet, and I think what we got wrong there was not the substance of that reality, but the timing. We have a really good example of what a pullback in trade and immigration policy looks like, and that is Brexit. 9 years after Brexit, you didn't see a major disruption or single event in the UK economy that really got them to where they are today. You just saw a sticky, sort of pervasive, stagflation-light reality. That's what I'm worried about for the U.S. economy. Now, over the next 6 to 9 months, does that mean we get a major disruption? Maybe we get a couple inflation prints that pull the Fed back, that cause some concern, that cause market jitters. But that real economic impact is probably a multi-year effect. That's what more concerns me about corporate earnings in the long term.
If it's the Brexit comparison, then it's just everything slowly gets a little bit worse. And then it's kind of the boiling frog thing, right? When do you have policymakers actually do something about it? Do you really have Fed officials cut in a way, or not cut in a way, that would be inconsistent with what Trump's picks for the Fed chair would be in? So what are the risks if it is a Brexit environment where you don't have one event, where everything just slowly gets worse?
So there's lots of risks to that. I think for the economy, we are likely to see, because Fed independence and the credibility of the Fed is so important, it's actually probably their most important policy tool. The Fed is going to have to be data dependent, which means we are going to get a meeting by meeting Fed for the foreseeable future. Where you really see a sort of disruption to a Brexit-like scenario is when you have a CapEx catalyst. I think we do have that with AI, or you have a growth-focused government, and we may also have that as well. That is not a disinflationary economy in the near term. You can argue that 3-5 years down the road it is, but that's not the case today. And so you really do need to see that CapEx trend continue to keep the market rolling. For investors, those valuations are already high. I don't necessarily have a problem with that in the near term. I think that these are high, important earning companies that are an important fuel of the economy. But it does mean that diversification looks totally different relative to investors' past experience.
Is Fed independence really that important to the bond market? Because we see Stephen Myron, who claims that President Trump doesn't tell him what to do in terms of rate policy, but he has a dot at 2.25% in 2027 when he has growth at 4%. You know, it seems like to some extent Mickey Bowman is trying to curry favor of the Trump administration. I'm not sure if that's fair to say, but she's definitely more dovish than her non-dissent shows in the decision last week. And is there really no worry that he stacks the Board of Governors, that the president stacks the Board of Governors to deal with the regional presidents next year?
There is worry.
But it's not showing up in yields.
That's right. What the market's telling me right now is that that is not the base case. Not that it doesn't matter, but that it's not the base case. I think if we see an environment where not only, and this is part of the logic, not only does the Fed have to be stacked with political members, but they also have to act specifically politically, which even Fed members, including the chair, who come from the president's party, who were nominated by the president to begin with, don't act necessarily with political motive. They're looking at the data, they're making decisions based on the data. And so what the market is telling me is that that couple of leaps is not where they are right now. If that were to reverse, I think we would see inflation expectations move higher and long yields move higher, even as short yields were moving lower.
Lauren, there have been instances in the past where you have had a Fed and a Treasury that work together, because you could have an issue where, let's say, the Fed wants to cut and long end rates are going higher, and they work in conjunction with the Treasury to try to bring that down. In that scenario, kind of to Matt's point, maybe a little bit of etching away at Fed independence is an okay thing.
I wouldn't even necessarily call that etching away at Fed independence. What a central bank is trying to do in those circumstances is preserve financial stability. And that is, at the end of the day, what plays a meaningful role in companies maintaining their earnings power, keeping people in the labor force. You can see how sort of the Fed's mandate can sort of like grow and shrink over time, right, as a result of what's happening in the real economy. What we do know is there's two experiences of a true double peak of inflation in this economy. One's after World War II, one's in the 80s. A couple of things that were common there: big disruptions to supply and demand for goods, big disruptions in supply and demand for labor, and a Fed that was being, in these cases, behind closed doors.
Right, Fed independence wasn't a thing before the 50s, right?
Wasn't really a part of the story. And so where we see monetary policy really diverge from the real economy, which right now is on good footing, that's where we see that risk come into play.
Lauren, this has been so excellent. Thank you so much for joining this morning. Always appreciate your time. New York Life Investments economist and chief market strategist, Lauren Goodwin. All right, about 9 minutes into your trading day, let's get a check on where stocks stand at the moment. It is a positive day. Are we going to get another record and a fourth consecutive day of gains for this equity market? It is Broadcom leading us this morning, up 1.5%, what Nancy Tangler used to call the poor man's NVIDIA. I don't know if you can call it the poor man's NVIDIA anymore, considering all the gains that it has had. To the downside, though, it is NVIDIA that is weighing on this market after its $100 billion investment in OpenAI, which just invests that money back into NVIDIA, which invests it into OpenAI, which puts it into Oracle, which puts it into NVIDIA. Make of that what you will. Amazon shares also down this morning alongside Oracle. Elsewhere, when it comes to the sectors, it is energy pushing us higher, with the price of oil up 1.3%. Materials also gaining off the back of that. Financials are higher. It is Infotech on the bottom of the list. You can guess that most of that is also coming from NVIDIA and Amazon, but the overall index basically flat this morning, Matt.
All right. Well, if we closed here, it'd be another record high on the S&P. Coming up, Micron is among the best performing stocks in that benchmark index this year. It's up 96% at yesterday's close. Earnings after the bell could drive it even higher or bring it back down to earth. We'll talk about that next on Bloomberg. This is Open Interest.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Nasseri, and Los Angeles royalty Willow Bay. We're going to talk about sports and eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Let's get you some top calls. Some of the analyst action that we are keeping an eye on this morning. First up, Lululemon. That gets a downgrade at Baird. The analyst there citing low confidence in its growth prospects and says the company's recent product innovations have been, quote, uninspiring. Shares, though, are higher by about 0.5%. Next up, J&J. That gets an upgrade to a buy at Guggenheim. Guggenheim says its robust pipeline should drive the next era of growth, though shares up 1.4%. And finally, CoreWeave gets upgraded to a buy at Melius and Wells Fargo. Wells Fargo, for their part, says demand signals are growing too strong to ignore. Melius says that NVIDIA's investment in OpenAI is a positive for CoreWeave. Even so, a lot of the tech and software players are down this morning, so those shares are down 0.8%, Matt.
All right, we're watching that space very closely, and we're going to be watching Micron very closely as well. It's climbing today, right now up another 1.5% on top of the 96% that it's gained year to date. The options market is pricing in a 9% move in either direction after the earnings. Bloomberg Intelligence tech analyst Jake Silverman is here with us on set. He says the company could see a marginal boost from Apple's iPhone memory upgrade, but Jake, it doesn't look like the stock performance signals anything marginal about this company. I mean, it's just been absolutely on fire. And I look at, quarterly revenue, and it's climbing. What's the story with Micron?
Yeah, so the Apple boost is a little bit more incremental, but I think it's more just directionally indicative of what's happening overall in the DRAM industry, which is pricing has continued to grow because supply and demand is in an imbalance. There's supply constraints across the industry, especially as Micron continues to invest in boosting capacity for high bandwidth memory, which is really important for AI.
I'll just point out, I always loved the modal function, MODL, on the Bloomberg terminal. And you can look at multiple periods, and it's almost like every quarter they add another billion to revenue. And back in 23, they do $4 billion a quarter, and then 5, 6, 7, 8. Now we're at $11 billion and change expected for the next quarter.
Yeah, I mean, those are big expectations, and I guess, Jake, it's part of the reason why you've seen shares done what they have. Matt and I yesterday were talking about a really good story from the tech team, basically saying boring tech is doing well, that Micron, Western Digital, Seagate, and I'd love to get your response of what Michael O'Rourke at Jones Trading said to that. He said, this is the type of behavior you'd see in a bubble period when people start looking for those secondary and tertiary trades because the leadership group has gotten so expensive. That to me says you are in a very late stages in the cycle.
Yeah, well, so I think it's a little bit important just to keep in mind that, yes, you could call Micron a secondary trade, but high bandwidth memory, one of their major AI products, you can also look at high capacity solid state drives, high capacity DIMMs, which are also important for AI infrastructure buildouts. The demand for all that is very strong. That's what's really driving the pricing increases that we're seeing across memory because it's constraining supply of traditional memory products. So, I mean, you could call it a secondary trade if you want, but ultimately speaking, it's still very much a part of this AI infrastructure build out.
What do you think about the parallels between this AI build-out and the web build-out that we saw in the late 90s, early 2000s. I mean, one thing, I was talking to Yuri and Timmer from Fidelity yesterday on the close, and I will be anchoring the close again today.
Always be plugging.
3 to 5 with Romaine Bostick. He was saying, like, look at valuations, right? Micron is trading at 20 times expected earnings. If you look at the whole market, it's only 25 trailing. NVIDIA right now is only trading at 40 times expected earnings. And that's the darling of this entire, AI revolution. It's nothing compared to what we saw in 2000. And we'd also be seeing a lot more IPOs. We're not really seeing bubble-ish indicators. Do you agree?
Sure. Well, so I think sometimes I don't always look at earnings power for Micron specifically cycle to cycle. Obviously, in a current upcycle, it's an important indicator of anticipated excitement about the stock. But I look a lot at price to book because as Micron and other memory peers tend to burn cash in down cycles, and so it's better to look at how the balance sheet strength compares cycle to cycle. So I sometimes look at that, and when we look at price to book on a trailing basis, it is actually trading at a reasonable premium to its historical peaks.
All right, Jake, thank you so much for joining us. We'll get those earnings after the bell today. Jake Silverman from Bloomberg Intelligence. Coming up, we are awaiting President Trump's remarks before the UN General Assembly. We're going to head there next to catch up with Tyler Kendall. This is Bloomberg Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are just moments away from President Trump addressing the 80th annual UN General Assembly. You can see Brazilian President Lula is addressing this assembly now. For Trump's part, it will be his first appearance at the UN in his second term as president. Joining us outside the United Nations is Bloomberg Washington correspondent Tyler Kendall. Tyler, what are we expecting from the president in just a few moments' time?
Yeah, hey, Danny. Well, we can confirm that President Trump has arrived here at the UN headquarters just moments ago ahead of this speech, which is really expected to set the tone here at the General Assembly. We got a preview from the White House press secretary, Caroline Leavitt, in a post on X earlier today saying President Trump will speak about the return of American strength, in her words, as well as what she called the failures of globalism. We are expecting President Trump to take aim at the institution of the United Nations itself, continuing a trend from his first administration administration as since January. This White House hasn't paid any of its dues to the UN. Combine that with delinquencies from other administrations. Right now, the U.S. is on the hook for more than $3 billion to the UN. Though worth pointing out that our analysts at Bloomberg Economics say that with or without the U.S., the UN is facing a financial crisis at the moment. The Secretary General did declare in January that they were undergoing a liquidity crisis. So that's sort of some of the backdrop here that we could expect from this speech. But we should also point out that it's not just going to be the speech, Matt and Danny. There are some pretty high stakes meetings happening today between President Trump and world leaders, including the Ukrainian President Zelensky. We are watching that very closely, as we know Ukraine is pushing the U.S. when it comes particularly to those security guarantees, and we're going to wait to see if we get any headlines on that.
What do we expect to hear from President Trump? He has been pretty vocal on his Truth Social account, just recently printing a small essay about keeping the government open and the lack of negotiations or the lack of participation of the Democratic Party. Is he going to focus in on that or look at bigger picture issues?
Well, domestic politics could definitely come into his speech today. Matt, actually, a White House official had confirmed to us at Bloomberg News that he is going to call on countries to tighten their restrictions when it comes to asylum, part of a broader bid to ultimately curb immigration into the U.S. But his post this morning was really about government funding. We'll see if that makes its way into the conversation. The president saying that he doesn't think it's worth his time to meet with Democratic leaders. We had been reporting that there was going to be a meeting on Thursday between President Trump and congressional leaders, including Democratic leader Hakeem Jeffries and Senate Minority Leader Chuck Schumer, as they try to find a way forward here to fund the government. They're up against that October 1st deadline. A measure just failed in the U.S. Senate that would have kept the government open at least for a short time till November 21st. But at this point, Matt and Danny, there seems to be some pretty a wide area for them to overcome here. Democrats are pushing for some changes, particularly when it comes to health care, also Obamacare subsidies that are set to expire. But they want to see a rollback from some of those changes that were made to Medicaid under the One Big Beautiful Bill. It's hard to see that Republicans are going to compromise on anything that has to do with the president's signature legislation.
And Tyler, as you're speaking, so too is Lula from Brazil, saying attacks on sovereignty are becoming the rule, that arbitrary sanctions are becoming the rule. Hard not to see those as a direct comment to the American president. When President Trump was at the UN Assembly last time, when he was last president, he railed against globalism, and it was a lot of members in that assembly that were met with shocked reactions to that. Tyler, will this time be different if he makes those appeals, especially to various countries like Europe, who he had been calling with in the past and still does, for them to fund themselves?
Right, it's a great point, Danny, and actually it does appear that these other countries did come prepared, because ahead of Lula's remarks, a person familiar actually did tell us here at Bloomberg News that he was going to target them against President Trump. I will quickly point out, of course, Brazil, an interesting case in and of itself, considering it is facing that very high 50% tariff rate tied to political concerns.
All right, Tyler, thanks very much. Tyler Kendall there reporting live from the United Nations, and we will bring you, of course, President Trump's remarks as soon as he begins to speak. He will come up to the podium right after Lula steps down. Let's take a look at what's going on in stocks. This morning we saw a pretty flat market, and it remains flat in the live trade. 66.95, the level on the S&P 500. The NASDAQ losing about 0.25%. Danny walked you through some of those AI companies that were down. The Russell 2000, though, powering higher, 0.9% after we got remarks out from Mickey Bowman saying that the Fed risks being behind the curve and needs to cut further, adding to the Stephen Myron remarks that we really need looser fiscal policy.
And a lot of people would be happy with this market. We have hit record high after record high, but it's been driven by tech. I think to see some broader participation would make people happy, considering the S&P is up 14% year to date. An equal weighted version is only up 8%. Coming up, we'll get those remarks from President Trump. We'll also be joined with Catherine Bordomé of Goldman Sachs.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the purging fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
The stars of Bloomberg Intelligence, Scarlett Fu and Paul Sweeney.
All right, Tom, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. We are awaiting President Trump. He has arrived at the United Nations in Midtown Manhattan. He's scheduled to speak after the leader of Brazil, Mr. Lula, and we will bring that to you. Of course, we've got a lot of other things pending here, Scarlett. We're going to check in with maybe Enda Kerr and get his thoughts on the UN speech from President Trump. David Bahnsen, he's the Chief Investment Officer of the Bahnsen Group. He's going to give us a sense of what's happening with the markets. So we'll keep on top of the markets. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst, talk to us about OpenAI, NVIDIA. I mean, the focus is not that it ever left the AI story in the marketplace, but just refocused back on AI and the intense dollars being allocated there, the valuations being created there.
But you know, I feel like NVIDIA is a special case because it has so much cash to throw around, more so than any other player. So it can throw 10 billion here, 100 billion there, and it's like no big deal, and it still has money to spare.
It still has money to spare. So we'll stay on top of that, and of course, we'll bring President Trump's comments at the United Nations. Important they will certainly be. Looking at the markets here, kind of just mixed here, but let's get a reset of these markets. As we begin our Bloomberg Intelligence program over the next 2 hours. We'll go to John Tucker with a Bloomberg Business Flash. John.
And you know, after the record closes yesterday, the major averages kind of mixed to little change right now. This Bloomberg Business Flash being brought to you by IBKR. Will the Fed leave the rate unchanged at the October 29th, 2025 meeting? At IBKR Forecast Trader, the yes was recently at 38%. You can start predicting today at ibkr.com/forecast. Last trading day for this contract is October 29th. Again, market's a little change. This comes after we had data just a few minutes ago, the S&P global PMI data coming in slightly below estimates, both the manufacturing and the services gauge falling just a bit short of expectations. The S&P 500 up 2 points, 66.95. That's, you know, good enough for an intraday record. The Dow Jones Industrial Average, same there, up 287 points. And the NASDAQ 100 right now, that is 62 points lower, and that is down about 0.25%. You have 6 of the 11 major industry groups in the S&P 500. They are higher. Energy is in the lead, and the biggest drag right now, that is coming from consumer discretionary. This kind of popped out at me. Google introducing an artificial intelligence assistant. They can offer live coaching to mobile gamers.
Wow.
Because that's the priority. Gamers can ask the assistant, which uses Google's AI models, to interpret what's happening on screen. Like, you need that? I'm sorry for the commentary.
Is this
Google.
a hack? Is this meant to be a hack or something?
No, it's just, I'm gaming. That's all I do in my mom's basement, and now Google AI will help me. They also announced a centralized gamer profile within the Play Store that displays existing metrics like user achievements and gaming progress.
Everyone needs that. Everyone needs some validation.
Self-affirmation.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Again, we are awaiting comments from President Trump at the United Nations. President of the Republic of Brazil, Mr. Lula da Silva, he is still speaking, so we will bring President Trump's comments when he arrives. But let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
Well, Paul, let's dig into Sempra, which is an energy infrastructure company. So Sempra, ticker SRE, those shares are popping this morning. They're up more than 3% at the moment, and that's because it's benefiting from news that it is agreeing to sell a 45% equity stake in its infrastructure arm to affiliates of KKR and the Canada Pension Plan Investment Board for a hefty $10 billion. So the idea is that the sale will help it achieve its goal of deriving approximately 95% of its earnings from regulated U.S. utilities. That deal is expected to close in the second or third quarter of 2026. And after that, it will be a KKR-led consortium that will become the majority owner of Sempra Infrastructure Partners.
All right. One of my other fun names is Boeing.
Fun names? Boeing.
It's fun because I love aircraft, and I've been waiting for Boeing to turn the corner, and I think they've clearly turned the corner if you look at the stock price. And they're benefiting from, if you want to ingratiate yourself to President Trump, buy a lot of our stuff. And if you want to rack up a big bill, a big deal, a big headline, buy aircraft because they're expensive. So
yeah,
what's happening with Boeing?
Absolutely, Paul. And that's exactly what's happening to Boeing at the moment. So those shares, ticker BA, up nearly 3% at the moment. And, we did get a couple of pieces of good news related to aircraft purchases. So one is the fact that it has secured an order from Uzbekistan Airways. There you go. So they have a deal for as many as 22 787 Dreamliner jets. And then at the same time, it seems like we're getting some traction on a potential U.S.-China deal as well for purchases of Boeing aircraft. We did hear from U.S. Ambassador to China, David Perdue, saying that both countries are weeks away from finalizing negotiations on a, quote, huge Boeing order. So remember, we reported previously that Boeing is working on a deal with China to sell as many as 500 aircraft. So that is a hefty order. That is huge.
Yep. Tashkent is on my bucket list. The capital of Uzbekistan. Great museums there. So
we'll take your word for it. Tom Keene's suggesting he may have some airline miles for Uzbekistan.
Maybe it's on Uzbekistan Airways on a Boeing aircraft.
So you started with an energy company. Let's come full circle and end with a utility.
Yeah, absolutely, Scarlett. So Vistra, which is a utility, as you mentioned, ticker VSD. So that's not doing so well this morning. Shares down more than 4% because it did get downgraded at Jefferies. Analysts there voicing concerns about the lack of an announcement for a data center deal for its Comanche Peak nuclear power plant in Texas. And so that's been cut to hold from buy, and price target lowered to 230 from 241 previously. But you know what? Let's put this into perspective, right? So Vistra shares, one of the shares that have benefited from this energy demand, data center demand because of AI. This year, shares are up 53%. They soared 258% in 2024 and 66% in 2023. So it's a little bit of a pullback, but at the same time, it's a drop in the bucket considering how much it has risen in the last few years.
All right, Christina Aquino, thank you so much with our movers for the morning. And of course, for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts or anywhere you listen. And of course, as we await President Trump to take the stage at the UN General Assembly, he's been pretty busy. His mind's been preoccupied with what's happening domestically because last hour he had tweeted out, or what is it now? Posted on X.
Posted on X, I think.
Posted on X, thank you. There's the language. That Democrats need to drop their demands to renew healthcare subsidies and roll back Medicaid aids before he will meet with them. So he canceled this meeting he was scheduled to have with Schumer and Jeffries.
Yeah, and that's, I don't know if it's just a negotiating tactic or what, but eventually they're going to have to sit down and hammer something out here, or you do run the risk of the government shutdown. We've got, and I like to say we've got a lot of time, but I mean, October 1st is going to roll around before you know it. But so President Trump, as we wait him speaking at the UN General Assembly, he's got some domestic politics to deal with as well.
He has a lot of domestic politics to deal with, and you mentioned the deadline is October 1st. That's when the funding lapses. I feel like we're right on schedule in terms of this is when it starts to heat up, and like maybe the 29th and the 30th is when the actual negotiations take place.
Yeah, we've all been here before, and many times. I love speaking with Henrietta Trey's at Veda Partners. She's just really wired into what's happening down there in Washington, D.C., and that's kind of how she's kind of suggested this may play out here. We've got, two competing agendas out there, and at some point, they're going to have to, come together, because I don't think either party politically, I just can't imagine how it plays well with either party for a shutdown.
Absolutely. Well, speaking of, the president is speaking at the United Nations General Assembly, so let's go to him now.
Making this speech without a teleprompter, because the teleprompter is not working. I feel very happy to be up here with you nevertheless, and that way you speak more from the heart. I can only say that whoever's operating this teleprompter is in big trouble. Hello, Madam First Lady. Thank you very much for being here. And Madam President, Mr. Secretary General, First Lady of the United States, distinguished delegates, ambassadors, and world leaders. 6 years have passed since I last stood in this grand hall and addressed a world that was prosperous and at peace in my first term. Since that day, the guns of war have shattered the peace I forged on 2 continents. An era of calm and stability gave way to one of the great crises of our time. And here in the United States, 4 years of weakness, lawlessness, and radicalism under the last administration delivered our nation into a repeated set of disasters. 1 year ago, our country was in deep trouble, but today, just 8 months into my administration, we are the hottest country anywhere in the world, and there is no other country even close. America is blessed with the strongest economy, the strongest borders, the strongest military, the strongest friendships, and the strongest spirit of any nation on the face of the earth. This is indeed the golden age of America. We are rapidly reversing the economic calamity we inherited from the previous administration, including ruinous price increases and record-setting inflation like we've never had before. Under my leadership, energy costs are down, gasoline prices are down, grocery prices are down, mortgage rates are down, and inflation has been defeated. The only thing that's up is the stock market, which just hit a record high. In fact, it hit a record high 48 times in the last short period of time. Growth is surging, manufacturing is booming. The stock market, as I said, is doing better than it's ever done. And all of you in this room benefit by that, almost everybody. And importantly, workers' wages are rising at the fastest pace in more than 60 years. And that's what it's all about, isn't it? In 4 years of President Biden, we had less than $1 trillion of new investment into the United States. In just 8 months since I took office, we have secured commitments and money already paid for $17 trillion. Think of it, 4 years, less than $1 trillion, 8 months, much more than $17 trillion is being invested in the United States, and it's now pouring in from all parts of the world. We've implemented the largest tax cuts in American history and the largest regulation cuts in American history, making this once and again the best country on earth to do business. And many of the people in this room are investing in America, and it's turned out to be an awfully good investment during this 8-month period. In my first term, I built the greatest economy in the history of the world. We had the best economy ever, history of the world. And I'm doing the same thing again, but this time it's actually much bigger and even better. The numbers far surpass my record-setting first term. On our southern border, we have successfully repelled a colossal invasion. And for the last 4 months, and that's 4 months in a row, the number of illegal aliens admitted and entering our country has been 0. Hard to believe, because if you look back just a year ago, it was millions and millions of people pouring in from all over the world, from prisons, from mental institutions, drug dealers. All over the world they came. They just poured into our country with the ridiculous open border policy of the Biden administration. Our message is very simple. If you come illegally into the United States, you're going to jail, or you're going back to where you came from, or perhaps even further than that. You know what that means. I want to thank the country of El Salvador for the successful and professional job they've done in receiving and jailing so many criminals that entered our country. And it was under the previous administration that the number became record-setting, and they're all being taken out. We have no choice. And other countries have no choice, because other countries are in the exact same situation with immigration. It's destroying your country, and you have to do something about it. On the world stage, America is respected again like it has never been respected before. You think about 2 years ago, 3 years ago, 4 years ago, or 1 year ago, we were a laughingstock all over the world. At the NATO summit in June, virtually all NATO members formally committed to increase defense spending at my request from 2% to 5% of GDP, making our alliance far stronger and more powerful than it was ever before. In May, I traveled to the Middle East to visit my friends and rebuild our partnerships in the Gulf, and those valued relationships with Saudi Arabia, Qatar, and the UAE and other countries are now, I believe, closer than ever before. My administration has negotiated one historic trade deal after another, including with the United Kingdom, the European Union, Japan, South Korea, Vietnam, Indonesia, the Philippines, Malaysia, and many, many others. Likewise, in a period of just 7 months, I have ended 7 unendable wars. They said they were unendable. You're never going to get them solved. Some were going for 31 years, 2 of them, 31, think of it, 31 years. One was 36 years. One was 28 years. I ended 7 wars. And in all cases, they were raging with countless thousands of people being killed. This includes Cambodia and Thailand, Kosovo and Serbia, the Congo and Rwanda, a vicious, violent war that was, Pakistan and India, Israel and Iran, Egypt and Ethiopia, and Armenia and Azerbaijan. It included all of them. No president or prime minister And for that matter, no other country has ever done anything close to that. And I did it in just 7 months. It's never happened before. There's never been anything like that. I'm very honored to have done it. It's too bad that I had to do these things instead of the United Nations doing them. And sadly, in all cases, the United Nations did not even try to help in any of them. I ended 7 wars, dealt with the leaders of each and every one of these countries, and never even received a phone call from the United Nations offering to help in finalizing the deal. All I got from the United Nations was an escalator that on the way... everything. It would be beautiful. I used to talk about, I'm going to give you marble floors. They're going to give you terrazzo. I'm going to give you the best of everything. You're going to have mahogany walls. They're going to give you plastic. But they decided to go in another direction, which was much more expensive at the time, and which actually produced a far inferior product. And I realized that they did not know what they were doing when it came to construction, and that their building concepts were so wrong, and the product that they were proposing to build was so bad and so costly. It was going to cost them a fortune. And I said, and wait till you see the overruns. Well, I turned out to be right. They had massive cost overruns and spent between $2 and $4 billion on the building and did not even get the marble floors that I promised them. You walk on terrazzo. Do you notice that? As far as I'm concerned, frankly, looking at the building and getting stuck on the escalator, they still haven't finished the job. They still haven't finished. That was years ago. The project was so corrupt that Congress actually asked me to testify before them on the tremendous waste of money, because it turned out that they had no idea what it was, but they knew it was anywhere between $2 and $4 billion as opposed to $500 million with a guarantee. But they had no idea, and I said it cost much more than $5 billion. Unfortunately, many things in the United Nations are happening just like that, but on an even much bigger scale, much bigger. Very sad to see. Whether the UN can manage to play a productive role, I've come here today to offer the hand of American leadership and friendship to any nation in this assembly that is willing to join us in forging a safer, more prosperous world. And it's a world that we'll be much happier with. A dramatically better future is within our reach. But to get there, we must reject the failed approaches of the past and work together to confront some of the greatest threats in history. There is no more serious danger to our planet today than the most powerful and destructive weapons ever devised by man, of which the United States, as you know, has many. Just as I did in my first term, I've made containing these threats a top priority, starting with the nation of Iran. My position is very simple. The world's #1 sponsor of terror can never be allowed to possess the most dangerous weapon. That's why, shortly after taking office, I sent the so-called Supreme Leader a letter making a generous offer. I extended a pledge of full cooperation in exchange for a suspension of Iran's nuclear program. The regime's answer was to continue their constant threats to their neighbors and U.S. interests throughout the region and some great countries that are right nearby. Today, many of Iran's former military commanders, in fact, I can say almost all of them, are no longer with us. They're dead. And 3 months ago, in Operation Midnight Hammer, 7 American B-2 bombers dropped the 14 30,000-pound each bombs on Iran's key nuclear facilities, totally obliterating everything. No other country on earth could have done what we did. No other country has the equipment to do what we did. We have the greatest weapons on earth. We hate to use them. But we did something that for 22 years people wanted to do. With Iran's nuclear enrichment capacity demolished, I immediately brokered an end to the 12-day war, as it's called, between Israel and Iran, with both sides agreeing to fight no longer. As everyone knows, I have also been deeply engaged in seeking a ceasefire in Gaza. Have to get that done. Have to get it done. Unfortunately, Hamas has repeatedly rejected reasonable offers to make peace. We can't forget October 7th, can we? Now, as if to encourage continued conflict, some of this body is seeking to unilaterally recognize a Palestinian state. The rewards would be too great for Hamas terrorists for their atrocities. This would be a reward for these horrible atrocities, including October 7th, even while they refuse to release the hostages or accept a ceasefire. Instead of giving to Hamas and giving so much, because they've taken so much, this could have been solved so long ago. But instead of giving in to Hamas's ransom demands, those who want peace should be united with one message: release the hostages now. Just release the hostages now. Thank you. As we have got to come together, and we will come together, got to get it done. We have to stop the war in Gaza immediately. We have to stop it. We have to get it done. We have to negotiate, immediately have to negotiate peace. We got to get the hostages back. We want all 20 back. We don't want 2 and 4. As you know, I got, along with Steve Witkoff and others that helped us, Marco Rubio, we got most of them back. We were involved in all of them. But I always said the last 20 are going to be the hardest, and that's exactly what happened. We have to get them back now. We don't want to get back 2, and then another 2, and then 1, and then 3. Have this process. No, we want them all back, and we want the actually 38 dead bodies back, too. Those parents came to me, and they want them back, and they want them back very quickly and very badly. as though they were alive. They want them. They want them every bit as much as if their son or daughter were alive. I've also been working relentlessly, stopping the killing in Ukraine. I thought that would be, of the 7 wars that I stopped, I thought that would be the easiest because of my relationship with President Putin, which had always been a good one. I thought that was going to be the easiest one. But, you know, in war, you never know what's going to happen. There are always lots of surprises, both good and bad. Everyone thought Russia would win this war in 3 days, but it didn't work out that way. It was supposed to be just a quick little skirmish. It's not making Russia look good. It's making them look bad. No matter what happens from here on out, this was something that should have taken a matter of days, certainly less than a week. And they've been fighting for 3.5 years and killing anywhere from 5,000 to 7,000 young soldiers, mostly soldiers, on both sides every single week. From 5,000 to 7,000 dead young people, and some in cities, much smaller numbers, where rockets are shot, where drones are dropped. This war would never have started if I were president. This was a war that should have never happened. It shows you what leadership is, what bad leadership can do to a country. Look what happened to the United States, and look where we are right now in just a short period of time. The only question now is how many more lives will be needlessly lost on both sides. China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy and Russian energy products, which, as you know, I found out about 2 weeks ago, and I wasn't happy. Think of it. They're funding the war against themselves. Who the hell ever heard of that one? In the event that Russia is not ready to make a deal to end the war, then the United States is fully prepared to impose a very strong round of powerful tariffs, which would stop the bloodshed, I believe, very quickly. But for those tariffs to be effective, European nations, all of you are gathered here right now, would have to join us in adopting the exact same measures. I mean, you're much closer to this. We have an ocean in between. You're right there. And Europe has to step it up. They can't be doing what they're doing. They're buying oil and gas from Russia while they're fighting Russia. It's embarrassing to them. And it was very embarrassing to them when I found out about it, I can tell you that. They have to immediately cease all energy purchases from Russia. Otherwise, we're all wasting a lot of time. So I'm ready to discuss this. We're going to discuss it today with the European nations, all gathered here. I'm sure they're thrilled to hear me speak about it, but that's the way it is. I like to speak my mind and speak the truth. As we seek to reduce the threat of dangerous weapons today, I'm also calling on every nation to join us in ending the development of biological weapons once and for all. And biological is terrible, and nuclear is even beyond, and we include nuclear in that. We want to have a cessation of the development of nuclear weapons. We know, and I get to view it all the time. Sir, would you like to see? And I look at weapons that are so powerful that we just can't ever use them. If we ever use them, the world literally might come to an end. There would be no United Nations to be talking about. There would be no nothing. Just a few years ago, reckless experiments overseas gave us a devastating global pandemic. Yet despite that worldwide catastrophe, many countries are continuing extremely risky research into bioweapons and man-made pathogens. This is unbelievably dangerous. To prevent potential disasters, I'm announcing today that my administration will lead an international effort to enforce biological weapons convention, which is going to be meeting with the top leaders of the world by pioneering an AI verification system that everyone can trust. Hopefully the UN can play a constructive role, and it will also be one of the early projects under AI. Let's see how good it is, because a lot of people are saying it could be one of the great things ever, but it also can be dangerous, but it can be put to tremendous use and tremendous good, and this would be an example of that. Not only is the UN not solving the problems it should, too often, it's actually creating new problems for us to solve. The best example is the #1 political issue of our time, the crisis of uncontrolled migration. It's uncontrolled. Your countries are being ruined. The United Nations is funding an assault on Western countries and their borders. In 2024, the UN budgeted $372 million in cash assistance to support an estimated 624,000 migrants journeying into the United States. Think of that. The UN is supporting people that are illegally coming into the United States, and then we have to get them out. The UN also provided food, shelter, transportation, and debit cards to illegal aliens. Can you believe that? On the way to infiltrate our southern border. Millions of people came through that southern border. Just a year ago, millions and millions of people were pouring in, 25 million altogether over the 4 years of the incompetent Biden administration. And now we have it stopped, totally stopped. In fact, they're not even coming anymore because they know they can't get through. But what took place is totally unacceptable. The UN is supposed to stop invasions, not create them and not finance them. In the United States, we reject the idea that mass numbers of people from foreign lands can be permitted to travel halfway around the world, trample our borders, violate our sovereignty, cause unmitigated crime, and deplete our social safety net. We have reasserted that America belongs to the American people, and I encourage all countries to take their own stand in defense of their citizens as well. You have to do that because I see it. I'm not mentioning names. I see it, and I can call every single one of them out. You're destroying your countries. They're being destroyed. Europe is in serious trouble. They've been invaded by a force of illegal aliens like nobody's ever seen before. Illegal aliens are pouring into Europe. Nobody is ever, and nobody's doing anything to change it, to get them out. It's not sustainable. And because they choose to be politically correct, they're doing just absolutely nothing about it. And I have to say, I look at London, where you have a terrible mayor, terrible, terrible mayor. And it's been so changed, so changed. Now they want to go to Sharia law. But you're in a different country. You can't do that. Both the immigration and their suicidal energy ideas will be the death of Western Europe if something is not done immediately. This cannot be sustained. What makes the world so beautiful is that each country is unique. But to stay this way, every sovereign nation must have the right to control their own borders. You have the right to control your borders, as we do now, and to limit the sheer numbers of migrants entering their countries and paid for by the people of that nation that were there and that built that particular nation at the time. They put their blood, sweat, tears, money into that country, and now they're being ruined. Proud nations must be allowed to protect their communities and prevent their societies from being overwhelmed by people they have never seen before, with different customs, religions, with different everything. Where migrants have violated laws, lodged false asylum claims, or claimed refugee status for illegitimate reasons, they should, in many cases, be immediately sent home. And while we will always have a big heart for places and people that are struggling and truly compassionate, answers will be given. We have to solve the problem, and we have to solve it in their countries, not create new problems in our countries. And we are very helpful to a lot of countries that are just not able to send their people anymore. They used to send them to us in caravans of 25, 30,000 people each. These massive caravans of people pouring into our country, totally unchecked and unvetted. But not anymore. According to the Council of Europe in 2024, almost 50% of inmates in German prisons were foreign nationals or migrants. In Austria, the number was 53% of the people in prisons were from places that weren't from where they are now. In Greece, the number was 54%, and in Switzerland, beautiful Switzerland, 72% of the people in prisons are from outside of Switzerland. When your prisons are filled with so-called asylum seekers who repaid kindness, and that's what they did, they repaid kindness with crime. It's time to end the failed experiment of open borders. You have to end it now. Let's see, I can tell you. I'm really good at this stuff. Your countries are going to hell. In America, we've taken bold action to swiftly shut down uncontrolled migration. Once we started detaining and deporting everyone who crossed the border and removing illegal aliens from the United States, they simply stopped coming. They're not coming anymore. We're getting a lot of credit, but they're not coming anymore. This was a humanitarian act for all involved because on the trips up, thousands of people a week were dying. Women were being raped. Nobody's ever seen anything like it. Raped, horribly beaten, raped. On the trip up, the journey up, it was a long walk. It was a long, arduous journey, indeed. And it was also a historic victory against human trafficking throughout the region. What we did was a victory, and we saved so many lives of people that wouldn't make the journey. That journey was loaded up with death. Loaded up with death. Dead bodies all along the roads of jungles to get up. They go through jungles, they go through areas so hot you couldn't breathe. They were dying of suffocation, areas so hot that you couldn't breathe. Dead bodies all over. By them not coming, we're saving tremendous numbers of lives. My people have done a fantastic job in doing what they did, and the American public agrees with it. I mean, I was very proud to see this morning I have the highest poll numbers I've ever had. Part of it is because of what we've done on the border. I guess the other part is what we've done on the economy. Joe Biden's policies empowered murderous gangs, human smugglers, child traffickers, drug cartels, and prisoners from all over the world. The previous administration also lost nearly 300,000 children. Think of that. They lost more than 300,000 children, little children, who were trafficked into the United States on the Biden watch, many of whom have been raped, exploited, and abused, and sold. Sold. Nobody talks about that. The fake news doesn't write about it. With many others, young children who are missing or dead. And we found a lot of these children, and we're sending them back, and we've been sending them back to their parents. They said, nobody knows who they are. They said, where do you come from? And they'll give us a country, and we'll find out, and we'll figure it out, and we'll bring them back to their homes. And the mother and father rush to the door, and their tears in their eyes. They can't believe that they're seeing their son or daughter, their little son or daughter again. We've done almost 30,000 of them so far. Any system that results in the mass trafficking of children is inherently evil. Yet that is exactly what the globalist migration agenda has done, and it's what it's all about. In America, those days, as you know, are over. The Trump administration is working, and we are continuing to work to track down the villains that are causing this problem, and also, as I said, to get back the 30,000 we've already returned. Now I think we're going to have another. We're going to find a lot. You're not going to find all of them. 300, more than 300,000. They're lost or they're dead. They're lost or they're dead because of the animals that did this. To protect our citizens, I've also designated multiple savage drug cartels as far as and you see this, and you see it happening right before your eyes. Let's put it this way. People don't like taking big loads of drugs in boats anymore. There aren't too many boats that are traveling on the seas by Venezuela. They tend not to want to travel very quickly anymore. And we've virtually stopped drugs coming into our country by sea. We call them the water drugs. They kill hundreds of thousands of people. I've also designated multiple savage drug cartels as far as foreign terrorist organizations, along with two bloodthirsty transnational gangs, probably the worst gangs anywhere in the world, MS-13 and Tren de Aragua. Tren de Aragua is from Venezuela, by the way. Such organizations torture, maim, mutilate, and murder with impunity. They're the enemies of all humanity. And for this reason, we've recently begun using the supreme power of the United States military to destroy Venezuelan terrorists and trafficking networks led by Nicolas Maduro. To every terrorist thug smuggling poisonous drugs into the United States of America, please be warned that we will blow you out of existence. That's what we're doing. We have no choice. Can't let it happen. They're destroying. I believe we lost 300,000 people last year to drugs, 300,000. Fentanyl and other drugs. Each boat that we sink carries drugs that would kill more than 25,000 Americans. We will not let that happen. Energy is another area where the United States is now thriving like never before. We're getting rid of the falsely named renewables. By the way, they're a joke. They don't work. They're too expensive. They're not strong enough to fire up the plants that you need to make your country great. The wind doesn't blow. Those big windmills are so pathetic and so bad, so expensive to operate. And they have to be rebuilt all the time, and they start to rust and rot. Most expensive energy ever conceived, and it's actually energy. You're supposed to make money with energy, not lose money. You lose money, the governments have to subsidize. You can't put them out without massive subsidies. And most of them are built in China, and I give China a lot of credit. They build them, but they very few wind farms. So why is it that they build them and they send them all over the world, but they barely use them? You know what they use? Coal. They use gas. They use almost anything, but they don't like wind. But they sure as hell like selling the windmills. Europe, on the other hand, has a long way to go, with many countries being on the brink of destruction because of the green energy agenda. And I give a lot of credit to Germany. Germany was being led down a very sick path, both on immigration, by the way, and on energy. They were going green, and they were going bankrupt. And the new leadership came in, and they went back to where they were, with fossil fuel and with nuclear, which is good. It's now safe, and you can do it properly. But they went back to where they were, and they opened up a lot of different plants, energy producing plants, and they're doing well. I give Germany a lot of credit for that. They've said this is a disaster, what's happening. They were going all green. All green is all bankrupt. That's what it represents. And it's not politically correct. I'll be very badly criticized for saying it, but I'm here to tell the truth. I don't care. It doesn't matter to me. I'm in New York City. I'm feeling a lot safer. Crime, we're getting crime down. And by the way, speaking of crime, Washington, D.C. Washington, D.C. was the crime capital of America. Now it's after 12 days, it's a totally safe city. Everyone's going out to dinner. They're going out to restaurants. Your wife can walk down the middle of the street with or without you. Nothing's going to happen. My people have done a fantastic job. And yes, I called in the National Guard, and the National Guard took care of business. And they weren't politically correct, but they took care of business. We got 1,700 career criminals out, brought them back to where they came from, the countries where they came from, or put them in jails. Washington, D.C. is now a totally safe city again, and I welcome you to come. In fact, we'll have dinner together at a local restaurant, and we'll be able to walk. We don't have to go by an armor-plated vehicle. We'll walk right over there from the White House. They've given up their powerful edge, a lot of the countries that we're talking about, in oil and gas, such as essentially closing the great North Sea oil. Oh, the North Sea, I know it so well. Aberdeen was the oil capital of Europe, and there's tremendous oil that hasn't been found in the North Sea. Tremendous oil. And I was with the Prime Minister I respect and like a lot, and I said, you're sitting with the greatest asset. They essentially closed it by making it so highly taxed that no developer, no oil company can go there. They have tremendous oil left, and more importantly, they have tremendous oil that hasn't even been found yet. And what a tremendous asset for the United Kingdom. And I hope the Prime Minister is listening, because I told it to him 3 days in a row. That's all he heard. North Sea oil, North Sea, because I want to see them do well. I want to stop seeing them ruining that beautiful Scottish and English countryside with windmills and massive solar panels that go 7 miles by 7 miles, taking away farmland. But we're not letting this happen in America. In 1982, the executive director of the United Nations Environmental Program predicted that by the year 2000, climate change would cause a global catastrophe. He said that it will be irreversible, as any nuclear holocaust would be. This is what they said at the United Nations. What happened? Here we are. Another UN official stated in 1989 that within a decade, entire nations could be wiped off the map by global warming. Not happening. You know, it used to be global cooling. If you look back years ago in the 1920s and the 1930s, they said, global cooling will kill the world. We have to do something. Then they said global warming will kill the world, but then it started getting cooler, so now they could just call it climate change, because that way they can't miss. It's climate change, because if it goes higher or lower, whatever the hell happens, there's climate change. It's the greatest con job ever perpetrated on the world, in my opinion. Climate change, no matter what happens, you're involved in that. No more global warming, no more global cooling. All of these predictions made by the United Nations and many others, often for bad reasons, were wrong. They were made by stupid people that have cost their countries fortunes and given those same countries no chance for success. If you don't get away from this green scam, your country is going to fail. And I'm really good at predicting things, you know. They actually said during the campaign, they had a hat, the best-selling hat. Trump was right about everything. And I don't say that in a braggadocious way, but it's true. I've been right about everything. And I'm telling you that if you don't get away from the green energy scam, your country is going to fail. And if you don't stop people that you've never seen before, that you have nothing in common with, your country is going to fail. I'm the president of the United States, but I worry about Europe. I love Europe. I love the people of Europe. And I hate to see it being devastated by energy and immigration. This double-tailed monster destroys everything in its wake, and they cannot let that happen any longer. You're doing it because you want to be nice. You want to be politically correct, and you're destroying your heritage. They must take control strongly and immediately of the unmitigated immigration disaster and the fake energy catastrophe before it's too late. The carbon footprint is a hoax made up by people with evil intentions, and they're heading down a path of total destruction. You know, the carbon footprint was a big, big thing a few years ago. I remember hearing about the carbon footprint, and then President Obama would get into Air Force One, a massive Boeing 747, and not a new one, an old one with old engines that spew everything into the atmosphere. He'd talk about the carbon footprint, we must do so. Then he'd get in and he'd fly from Washington to Hawaii to play a round of golf. And then he'd get back onto that big, beautiful plane and he'd fly back and he'd talk about, again, global warming and the carbon footprint. It's a con job. At extreme cost and expense, Europe reduced its own carbon footprint by 37%. Think of that. Congratulations, Europe. Great job. You cost yourself a lot of jobs, a lot of factories closed, but you reduced the carbon footprint by 37%. However, for all of that sacrifice and much more, it's been totally wiped out and then some by a global increase of 54%. Much of it coming from China and other countries that are thriving around China. which now produces more CO2 than all the other developed nations in the world. So all of these countries are working so hard on the carbon footprint, which is nonsense, by the way. It's nonsense. You know, it's interesting. In the United States, we have still radicalized environmentalists, and they want the factories to stop. Everything should stop. No more cows. We don't want cows anymore. I guess they want to kill all the cows. They want to do things that are just unbelievable, and you have it too. But you know, we have a border, strong, and we have a shape, and that shape doesn't just go straight up. That shape is amorphous when it comes to the atmosphere. And if we had the most clean air, and I think we do, we have very clean air. We have the cleanest air we've had in many, many years. But the problem is that other countries, like China, which has air that's a little bit rough, it blows. And no matter what you're doing down here, the air up here tends to get very dirty because it comes in from other countries where their air isn't so clean. And the environmentalists refuse to acknowledge that. Same thing with garbage. In Asia, they dump much of their garbage right into the ocean. And over about a 1 week and 2 week journey, it flows right past Los Angeles. You've seen it. Massive amounts of garbage, almost too much to do anything about, flowing past Los Angeles, past San Francisco. And then somebody will get in trouble because he dropped a cigarette on the beach. The whole thing is crazy. The primary effect of these brutal green energy policies has not been to help the environment, but to redistribute manufacturing and industrial activity from developed countries that follow the insane rules that are put down to polluting countries that break the rules and are making a fortune. They're making a fortune. European electricity bills are now 4 to 5 times more expensive than those in China, and 2 to 3 times higher than the United States. And our bills are coming way down. You probably see that our gasoline prices are way down. You know, we have an expression, drill, baby, drill, and that's what we're doing. We're going to be much lower in a year from now. But they've come way down over the last year. As a result, every air conditioner is like very uncommon to see one in some of these countries because the electric costs are so high. So while the U.S. has approximately 1,300 heat-related deaths annually, that's a lot, Europe loses more than 175,000 people to heat deaths each year because the costs are so expensive you can't turn on an air conditioner. What is that all about? That's not Europe. That's not the Europe that I love and know. All in the name of pretending to stop the global warming hoax. The entire globalist concept of asking successful industrialized nations to inflict pain on themselves and radically disrupt their entire societies must be rejected completely and totally, and it must be immediate. That's why in America I withdrew from the fake Paris Climate Accord, where, by the way, America was paying so much more than every country. Others weren't paying. China didn't have to pay until 2030. Russia was given an old standard that was easy to meet, a 1990 standard. But for the United States, we're supposed to pay like $1 trillion. And I said, this is another scam. The fact is, the United States has been taken advantage of by the world for many, many years, but not any longer, as you probably noticed. I unleashed massive energy production and signed historic executive orders to hunt for oil, but we don't have to do much hunting because we have the most oil of any nation anywhere, oil and gas in the world. And if you add coal, we have the most of any nation in the world. Clean, I call it clean, beautiful coal. You can do things today with coal that you couldn't have done 10 years ago, 15 years. So I have a little standing order in the White House. Never use the word coal, only use the words clean, beautiful coal. Sounds much better, doesn't it? But we stand ready to provide any country with abundant, affordable energy supplies if you need them, when most of you do. We're proudly exporting energy all over the world. We're now the largest exporter. In the United States, we want trade and robust commerce with all nations, everybody. We want to help nations. We're going to help nations. but it must also be fair and reciprocal. The challenge with trade is much the same with climate. The countries that followed the rules, and all their factories have been plundered. It's really sad to watch. They've been broken. They've been broken by countries that broke the rules. That's why the United States is now applying tariffs to other countries, and much as these tariffs were for many years applied to us, uncontrollably applied to us. We've used tariffs as a defense mechanism under the Trump administration, including my first term, where hundreds of billions of dollars in tariffs were taken in. And by the way, we had the lowest inflation, and now we have very low inflation. The only thing different is that we have hundreds of billions of dollars flowing into our country. But this is how we will ensure that the system works for everyone and is sustainable into the future. We're also using tariffs to defend our sovereignty and security throughout the world, including against nations that have taken advantage of former U.S. administrations for decades, including the most corrupt, incompetent administration in history, the sleepy Joe Biden administration. Brazil now faces major tariffs in response to its unprecedented efforts to interfere in the rights and freedoms of our American citizens and others, with censorship, repression, weaponization, judicial corruption, and targeting of political critics in the United States. I have a little problem saying this because I must tell you, I was walking in and the leader of Brazil was walking out. We saw him and I saw him, he saw me, and we embraced. And then I'm saying, can you believe I'm going to be saying this in just 2 minutes? But we actually agreed that we would meet next week. We didn't have much time to talk, like about 20 seconds. They were in retrospect, I'm glad I waited because this thing didn't work out too well. But we did talk. We had a good talk, and we agreed to meet next week, if that's of interest. But he seemed like a very nice man, actually. He liked me, I liked him. But if you, and I only do business with people I like. When I don't like them, I don't like them. But we had, at least for about 39 seconds, we had excellent chemistry. It's a good sign. But also in the past, Brazil, can you believe this, unfairly tariffed our nation, but now because of our tariffs, we are hitting them back, and we're hitting them back very hard. As president, I will always defend our national sovereignty and the rights of American citizens. So I'm very sorry to say this, that Brazil is doing poorly and will continue to do poorly. They can only do well when they're working with us. Without us, they will fail, just as others have failed. It's true. Next year, the United States will celebrate the 250th anniversary of our glorious independence, a testament to enduring power and American freedom and spirit. We will also be proudly hosting the 2026 FIFA World Cup, and shortly thereafter, the 2028 Olympics, which is going to be very exciting. I hope you all come. I hope that countless people from all over the globe will take part of these will be great celebrations of liberty and human achievement, and that together we all can rejoice in the miracles of history that began in July 4th, 1776, when we founded the light to all nations. And it's something really that an amazing thing came out of that date. It's called the United States of America. In honor of this momentous anniversary, I hope that all countries who find inspiration in our example will join us in renewing our commitment, values, and those values, really, that we hold so dear. Together, let us defend free speech and free expression. Let us protect religious liberty, including for the most persecuted religion on the planet today. It's called Christianity. And let us safeguard our sovereignty and cherish qualities that have made each of our nations so special, incredible, and extraordinary. In closing, I just want to repeat that immigration and the high cost of so-called green renewable energy is destroying a large part of the free world and a large part of our planet. Countries that cherish freedom are fading fast because of their policies on these two subjects. You need strong borders and traditional energy sources if you are going to be great again. Whether you have come from north or south, east or west, near or far, every leader in this beautiful hall today represents a rich culture, a noble history, and a proud heritage that makes each nation majestic and unique, unlike anything else in human history or any other place on the face of the earth. From London to Lima, from Rome to Athens, from Paris to Seoul, from Cairo to Tokyo and Amsterdam to right here in New York City, we stand on the shoulders of the leaders and legends, generals and giants, heroes and titans who won and built our beloved nations, all of our nations, with their own courage, strength, spirit, and skill. Our ancestors climbed mountains, conquered oceans, crossed deserts, and trekked over wide open plains. They charged into thunderous battles, plunged into grave dangers, and they were soldiers and farmers and workers and warriors and explorers and patriots. They built towns into cities, tribes into kingdoms, ideas into industries, and small islands into mighty empires. You're a part of all of that. They were champions for their people who never gave up and who never, ever gave in. Their values defined our national identities. Their visions forged our magnificent destiny. Everybody in this room is a part of it in your own way. Each of us inherits the deeds and the myths, the triumphs, the legacies of our own heroes and founders who so bravely showed us the way. Our ancestors gave everything for homelands that they defended with pride, with sweat, with blood, with life, and with death. Now the righteous task of protecting the nations that they built belongs to each and every one of us. So together let us uphold our sacred duty to our people and to our citizens. Let us protect their borders, ensure their safety, preserve their cultures, treasure, and traditions, and fight, fight, fight for their precious dreams and their cherished freedoms. And in friendship and really a beautiful vision, let us all work together to build a bright, beautiful planet, a planet that we all share, a planet of peace and a world that is richer, better, and more beautiful than ever before. That can happen. It will happen. It will happen, and I hope it can happen and start right now, right at this moment. We'll turn it around. We're going to make our countries better, safer, more beautiful. We're going to take care of our people. Thank you very much. It's been an honor. God bless the nations of the world. Thank you very much. Bye.
President Trump speaking in front of the United Nations in Midtown Manhattan today, about a 55-minute speech.
Yeah.
Selling the United States or United Nations for offering nothing but, quote, empty words in a grievance-laden speech.
And also for a bad escalator and a broken teleprompter, which prompted some chuckles at the beginning of his address.
Exactly right. All right, let's bring in Miles Miller. He is Bloomberg News senior reporter. Miles, kind of when President Trump goes off script, he tends to be kind of litany of grievances that he has against the United Nations and other members of the United Nations. What was your takeaway from the speech?
Yeah, I mean, going back to a 20-year-old grievance about his bid to renovate the United Nations is just one of the many things he obviously talked about in this speech. But it's a lot of what we spoke about yesterday, right? Accusing the UN of funding illegal migration and assaulting Western borders, and then dismissing the body's role in global diplomacy, saying that it really only issues strongly worded letters without follow-through. This is very much what we expected, which was to be setting the scene for this to be the U.S.'s sort of isolationist approach to how they sort of tackle the issues at the United Nations. And then in addition to that, questioning the institution's very purpose. I mean, he said, what is the purpose of the United Nations, right? He went into this UN speech knowing that the U.S. owes significant bills. And the reason those bills aren't paid is what he laid out here, saying that immigration is a threat and claiming that the UN has financed invasions of sovereign nations. It's very different from what the UN Secretary General told us in interviews on Friday, right? That, he wants the support and, for the United States to really get involved, to take an active role. But you heard a speech from the president here in which he's casting, real issues that he finds with this agency and this organization that has for the most part tried to figure out how to keep peace in nations that in the last, at least in the last 2 to 5 years, we've seen conflicts both in Ukraine and conflicts in the Middle East with Israel and Gaza.
So Miles, the president spoke after the Brazilian president, which by tradition the Brazilian president always opens up the UNGA. There was clearly a contrast between what Lula said and what Trump said, but he did make some news, President Trump, talking about a meeting with President Lula sometime next week.
Right. He said he's going to meet with Lula next week. Likely will happen at the White House. He said we had a good talk, and it'll be interesting to see what comes out of that. Obviously, Brazil, major power as it relates to South America, with issues surrounding many things happening in Brazil. But Brazil is also going to be the host of COP30, a big UN conference that's going to be happening there. And so, will you see U.S. officials going there? You've seen the U.S. pulling out of substantial agreements when it relates to climate. You've also seen the U.S. pulling out of significant conferences around the world as it relates to sort of coming together as a whole to solve these issues, whether it be climate, whether it be trying to solve, and end wars. I mean, the president said today he's ended 7 wars, but received no UN support in finalizing peace deals. He touted lower inflation and higher wages and claimed that the U.S. is the hottest country in the world. Not a reference to what the UN is focused on, which is climate change, but talking about deals and trade and all of that. So very interesting words coming out of the president from the UN.
Miles, do we have any sense of how the U.S. and the United Nations actually interact and function together, if at all, under this administration? Because just taking the rhetoric here, it seems like President Trump really does not want anything to do with the United Nations and some of its mandates and goals.
Right. We have to see what the engagement will be of Mike Waltz now, as the UN ambassador. How will he engage with his partners on the world stage? Marco Rubio speaking, today, had his emissaries out in New York, of course, speaking about meetings that he's having. What my thought is going to be is that they'll have a cautious approach, right? The president has continued to distance the U.S. from multilateral institutions, whether it be UNESCO, whether it be the Human Rights Council, whether it be the WHO. And he's really rejected core UN priorities like climate change and asylum protection. So how do you square the need to work together to come to peace talks in the Middle East, perhaps, with, the idea that the UN, or the president's idea that the UN is just not doing enough? And how do you do that when the US's arrears remain unpaid and that funding has largely stopped since the president's taken office? He's going to have to, sort of rebuild the relationships, and you haven't had a UN ambassador, a permanent one in that role since the start of the administration, really. So how do you sort of square that? It's going to be quite a task for Marco Rubio. It's going to be quite a task for Mike Waltz. And then all of these conversations that happen on the sidelines of the UN General Assembly be very important. Because, maybe they just make these deals without any UN involvement. And that's really what's been happening in the past couple of months.
So I'm glad you mentioned the sidelines because, of course, that's where a lot of the business does get done at this kind of gathering. What do we know, Miles, about who the president is likely to meet during his time here at the UN General Assembly and what kinds of conversations he might likely have?
Right. We know that the president's meeting with Arab leaders while he is in New York. We know that the president is expected to meet with folks, on the sidelines, in the General Assembly Hall as well. The meeting with Arab leaders is going to be very crucial, right? When you see, a strike, happening in Qatar, how do you, and Israel saying that they had no responsibility, how do you square that with the deals that are being made in the Middle East, right? So the president's going to have to sort of walk that tight line with having a great relationship with some of these Middle East partners, but then, the big U.S. partner being Israel, how do you walk that fine line? One thing that happened yesterday was that we learned from the State Department that the Iranian diplomats that are here in New York will be confined to basically the UN. And that's it. So they'll go to the UN meetings. They'll have their sideline meetings at the hotels. They can't shop here, right? So there are sort of very specific restrictions that are being put on countries that are being announced by the State Department. All of that is in an effort to show, or from the White House and from the State Department, to show the U.S. is in charge when you come to the UN General Assembly. They're going to be controlling the message, and it'll be interesting to see what the readouts are from any of those meetings that the president's having.
All right, Miles, thank you so much. We appreciate that. Miles Miller, he is giving us the reporting there. He's a Bloomberg News senior reporter on the United Nations. President Trump just moments ago concluded his remarks to the United Nations. Let's get back to these markets here. It is a time of the quarter when you get a lot of the Fed officials out there on the conference trail and making speeches. And
I count 4 different speakers today, and that's including Jay Powell. 5 different speeches, but 4 different speakers. Jay Powell, of course, in a couple of hours.
Yep, absolutely. He's going to be speaking at the Economic Outlook at the Greater Providence Chamber of Commerce at the Crown Plaza Hotel up there in Providence, Rhode Island. Ira Jersey joins us here. He'll be paying attention. He's the chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, we get bombarded with communications coming out of this Federal Reserve, but when the Fed chairman speaks, we all tend to pay attention. What are some of his issues or comments or points you think he wants to get across today?
Well, I think he's going to hound a little bit on independence because he kind of has to, but ultimately he'll talk about the economic outlook, maybe give a little bit more of his views versus the committee's views. Remember, when he talked last week after the Fed meeting, he's talking for the whole committee there. So this today is an opportunity for him maybe to say, here's what I believe versus the rest of the committee. And, I suspect that he's one of the people who thinks that they should cut another 50 basis points this year, so he'll make the case for why they should slowly be cutting, and he'll also mention that inflation is still a worry, but if the economy slows overall, he would expect inflation to come down, and that's why they think that, or he thinks that they should be cutting interest rates a little bit further.
Ira, how much do you think Jay Powell will be responding to comments that Stephen Myron made yesterday? He said specifically rates are too high. He made a case for lowering them aggressively. He talked about how he wants to cut rates by another 1.25 percentage points at the 2 remaining FOMC meetings. He is the lowest dot on the dot plot by far.
Yeah, I don't think he's going to mention that at all, at least not in the prepared remarks. So, at the end of the day, Jay Powell either talks for the whole committee as a whole or himself. He's not, I don't think he's going to reply to any individual member. Because remember, even though Stephen is way low in terms of his dot, there's other members who think that the Fed should be done and not cut the rest of the year, assuming that their forecasts pan out, right? So you do have, almost half the committee who thinks that it's one more cut or no more cuts this year. So even though the median dot is below that, and I think that Powell is part of that median group, the fact is that he would have to comment on both sides of that, right? To say, look, the economy's okay. I see, neutral at 3.25%. So therefore, another, 75 basis points of cuts over the next 6 months would get us there, and that's why I think we need to get, work to get to neutral. Now, the argument is, where is neutral? We actually put out a note yesterday looking at the different flavors of neutral and how the Fed looks at where the neutral rate is. And if you take the Federal Reserve's neutral rate as 1-ish% over the inflation rate, inflation PC deflator is 2.6%, 3.6% would be where a lot of members of the Fed would say the neutral rate is. And that's what Steve Myron pointed out yesterday. Was his view is that the neutral rate's far below that for a variety of reasons. Getting to neutral is certainly their goal now, which is why I think another 50 to 75 basis points is baked in the cards. The question is, during that period of time, as they cut slowly, does the economy fall out of bed? Does the employment situation deteriorate? Which means that they want to get easy, and they wind up cutting a little bit more than that 75 basis points. That's basically almost a done deal in my view.
All right, Ira, thank you so much. We appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence, safely ensconced down in the Princeton, New Jersey, getting ready for that outstanding lunch that they served down there in Princeton.
Oh, yeah?
Fantastic food.
You miss it, don't you?
I do.
Well, we're not having any of that. We're not even going to leave the office today because Midtown Manhattan is just on lockdown.
Yes, it is. So, but the subway still works, and that's the way I go. So that subway works just fine. So we'll keep an eye on that.
Either that or walking around many, many roadblocks.
Yes. Yeah, and then even on the west side, when you get near President Trump's building, that's got a lot of security.
6th Avenue, 5th Avenue, all closed off to traffic, to pedestrians. Good luck, everyone.
That's how we roll here in the United Nations. We're used to it. S&P 500 pretty much unchanged on the day. The Dow's up a couple hundred points. That's 0.4%. The Nasdaq down 60 points. That's about 0.25%. So red and green, not a ton of direction here out there in the marketplace. On the yield space, kind of steady. 10-year Treasury yielding 4.13%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ, both lower. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. S&P 500 index lower, little change right now ahead of Jay Powell's speech coming up in just over an hour. Right now we got the S&P down 466.89. That is a drop there of under 0.1%. The Dow up 167, up by 0.4%, while the NASDAQ Composite Index down 53, drop there of 0.2%. Bottom line here, stocks, yes, lower, but hovering near records. The 10-year, 4.14%, with the 2-year currently yielding 3.60%. Gold surging another $32 the ounce at a record, $37.79. The precious metal up by 0.9%. West Texas Intermediate crude oil up 2.5%. WTI 63.83 a barrel. And Bitcoin higher, little changed, up 0.1%. Bitcoin at 112,965. Kenvue shares are higher now by 3.2%, making up some of yesterday's 7.5% drop, as President Trump's call for pregnant women to avoid Tylenol draws sharp criticism from researchers who say the advice ignores decades of evidence and could endanger mothers and babies. Again, we've got shares of Kenvue up by 3.2%. Recapping, S&P lower by under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to that internet thing and check us out there. Charlie was just reporting on that Tylenol situation. I don't know, Scarlett, I've said this before on air. Tylenol for my entire life has been the magic drug that fixes everything for me.
I know. I have a mother who suffers from migraines, and she would reach for the Tylenol all the time. So what President Trump is saying is certainly eye-popping, I think, for a lot of people.
Yeah, exactly. It's moving the stock, as Charlie was just reporting. We want to get the latest from Bloomberg Intelligence. And Hunter Van Kirk joins us. She covers the healthcare stuff for Bloomberg Intelligence. And what's the science behind all of this? Is there science behind all of this, or is this just President Trump and Mr. Secretary Kennedy kind of going off the range a little bit?
That's a loaded question. There are a lot of studies on it. It's certainly driven by an increase in finding a solution for the increased rates of ADHD and autism. I think it's really important here to qualify or quantify what we're talking about with frequent Tylenol use. And most of the studies are looking at measured as more than 28 days over the course of your pregnancy. So that is a lot of Tylenol use. We're not talking about you have a high fever and you take it for a day or two. This is kind of more long-term use. There is a correlation between Tylenol use and these disorders in children. And I'll probably lose listeners if I go too deeply, but correlation is not causation. Those are two separate things. And while there's a lot of literature out there, a lot of clinical studies, I would argue that the best ones look at sibling analysis. So they compare a mother who had frequent use during one pregnancy and not the next, and that's the best way to kind of look at this. And in those studies, there was no findings of increased risks, and there have been several. There was a $2.5 million children study in Sweden, as well as a more recent one out of Japan. Unfortunately, randomized trials are difficult to do. There's just too many variables, but the sibling analysis is probably the best we have.
So, Anne, when I think about the companies that are affected, certainly Kenvue, which owns the Tylenol brand, is directly affected. And we saw the stock plunge yesterday. It's recovered a bit today, up about 3.2%. But Tylenol's generic name is acetaminophen, and there are many other companies that make acetaminophen as well. Are we seeing them impacted in any way?
This is, even for Kenvue, this is maybe a high single-digit portion of sales, and that's Tylenol overall. So you assume that the
pregnant population is a much smaller percentage of those sales. And I'd argue even, before all of this, a lot of physicians, certainly mine, when I was pregnant, recommended only taking Tylenol when you have one of those, high fevers. So I wouldn't expect it to truly be a material impact to any of these companies.
Is there anything else out there that is at risk here? I mean, from just the FDA, your coverage here, because I know there's a lot of uncertainty about which drugs are, kind of favored by this administration and which ones aren't. Are you seeing that in your coverage of your companies?
Well, for pregnancy in particular, I'd say there are no favored drugs. You certainly were never suggested to take aspirin, and Tylenol was one of the few things that was considered okay. But overall, anytime you get a lot of media attention on any drug, from politics or anything else, it's typically not a great thing for the companies, but I think it does tend to even out as it passes.
You are our senior equity analyst for biopharmaceuticals. When the Secretary of Health, Robert F. Kennedy Jr., speaks, does he tend to move companies in your universe?
I would argue yes. For better or for worse, I'd say they definitely move, but I would say that they go back to a steady state.
Okay, so it's like an immediate knee-jerk reaction, and then things calm down.
Exactly.
All right, well, Kenvue may be calming down a little bit here. Kenvue stock is up 3% here today, retracing some of the losses yesterday. Ann Hunter, thanks so much for joining us. Ann Hunter is Bloomberg Intelligence Senior Equity Analyst covering the biopharmaceuticals, part of the global healthcare team at Bloomberg Intelligence. Let's get back to these markets here. Again, kind of red and green on the screen here. I want to welcome in Carol Schleif. She's the Chief Investment Officer for BMO Family Office. Carol, what's the message to your clients these days, given all the crosswinds out there?
I think part of the message is just to think calm and keep calm and carry on. And we've seen a lot of volatility this year, obviously, and similar to what the conversation you just had about healthcare stocks knee-jerking right away and then settling in. It's been really important all year, and we've been keeping clients' attention focused on pulling the fundamentals through, and we've seen really solid resilience in the United States in particular, but globally from a lot of countries that people have been able to dodge and weave. And so both U.S. stocks have done quite well, and our moderate overweight there continues.
They've done quite well, but they're also quite expensive, and by many measures, the most expensive in the world. And the leading companies, the big tech companies, just get more and more expensive as well. So when you focus on the fundamentals, what is the argument to continue going long in these names as opposed to maybe positioning for some kind of pullback?
Well, and I think the pieces it's interesting. I write a weekly piece, and this week's piece is probably going to be called bear hunting in terms of looking through that. But a piece of it relates to the fact that valuation alone doesn't kill a bull market. And so in terms of looking at that, and you're right, the valuation gap has opened up quite a bit. And at some point, we have to expect some sort of volatility or pullback or things like that. The interesting thing in looking at this exuberant market, if you will, is we started very narrow, and we're actually broadening out, which is the inverse of a lot of bull markets where you start very broad and then you end up narrow. And so the broadening that we've seen in the last couple of weeks, particularly, it was notable that I think it was last Friday that all of the broader indexes in the U.S. all closed at all-time highs together. And so that broadening is helpful. Small caps have started to move on the hope that the Fed is going to cut more than once. And so you've seen some of that. But yeah, valuations are there. We do need the earnings to kick in. We're still a couple weeks away from having earnings season kick in, and to be able to hear how these companies are dealing with trade policy, immigration, and all the other things. But you've also got the more favorable aspects of immediate depreciation for R&D and some of the expenditures, particularly in the tech industry. So this bubble is financed out of cash flow, the exuberance, if you will. It's probably not quite a bubble yet, but there's a lot of things we're looking at on both the plus and the potentially negative side.
We're going to hear from some Federal Reserve speakers over the next couple of days as they make the conference route. What do you expect from your Federal Reserve? How important is it for the Fed to really be easing here for your kind of support for the market?
I think it's really important if the Fed is going to ease, we have to see the numbers come through to support it. They have to ease for the right reasons, or that long end of the bond curve is the yields will back up if they're not cutting for the right reasons. So we need to hear the commentary around that and see who's choosing. We don't even know who's going to be voting at the next meeting, and so that'll be important. And it'll be important to hear how they treat each of the economic statistics that come through.
How big a factor is the administration, the Trump administration, wanting to make sure that economic growth remains strong until the midterms, maybe even through the midterms? I mean, how do you think about that in terms of incorporating where you want to be, whether it's in fixed income, where you want to be in terms of equities? If this is an administration that is cheering the Fed on to continue keeping rates, cutting rates, and creating this very favorable environment for taking risk.
Right. We remind investors continually that it's important. We call it portfolio hygiene. It's important to rebalance. It's important to take some off the table. Reminding investors even to look at where they started the year and maybe pulling some of that off, and not feeling like you have to necessarily do symmetrical rebalancing. You can pull some off and sit in cash, and you still get paid to sit in a little more cash, waiting for that downturn to come. So getting people to get their heads wrapped around that and thinking strategically from a planning standpoint too about what's coming in the next couple of years. Might you want to like pre-save for some of that just in case we get volatility? The administration being focused on the midterms is multifaceted in the way they're doing it. It's not just pressure on the Fed, it's also making sure the voter turnout is there, and business in general, we've seen a lot of different moves that haven't necessarily gotten the headlines, but a lot of different moves aimed at fast-tracking permitting and getting construction going and trying to support legit economic activity in the country, and that should be beneficial. The critical variables we're watching is employment. We need to keep people employed, and we especially need to keep that top 10% employed.
30 seconds. U.S. versus rest of the world. How do you kind of parse that out these days?
We have always liked globally diversified portfolios, and there's a lot of reason and rationale to own non-U.S. stocks as well to help that diversification.
Which markets in particular do you like the best?
We like a lot of Southeast Asia. We actually have had a China position on for quite some period of time. We had a Japan one-off that we pulled off recently, just given some of the dynamics and the politics over there. But a lot of the rest of the world and having pieces here and there, and actually the TSX is at all-time highs too.
Yeah, it's a good reminder of it's not just the U.S., it's certainly something we're seeing around the world. All right, Carol, thank you so much.
Thank you.
Carol Schleif is Chief Investment Officer at BMO Family Office, joining us here in studio at the Bloomberg Interactive Brokers Studio. Typically, you're based in Minneapolis, right?
Yep.
Oh, well, thank you for coming in.
Yep.
We really
Thanks for having me.
like seeing you here in person.
Good stuff. All right, looking at these markets here. Again, not a ton of direction. Here we've got the S&P pretty much unchanged on the day. The Dow's up 120 points. We have some financial stocks trading pretty well here today. The NASDAQ down 63 points. That's 0.3%.
And yields are basically unchanged. Of course, we've got a big speech coming from Jay Powell at 12:30, so in an hour's time. I don't know that he's going to clarify all that much. He's probably going to just, put some context around the committee's words last week.
Yeah, steady as she goes. There's nothing wrong with that. And data dependence, another term that we continue to hear from this Federal Reserve. So we will pay attention to the economic data. ECO Go. ECO Go. That's where we get our data. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. This update brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The Dow higher, S&P, NASDAQ, both retreating from records. Traders leaving stocks hovering near all-time highs. Bonds have halted a 4-day slide ahead of Fed Chair Jay Powell's first public remarks since officials cut rates last week. He's scheduled to speak 1 hour from now. Yes, we got you covered. We got it live right here on Bloomberg Radio. Equity markets lower with the S&P down 966.84 where we stand now, down 0.1%. Dow Industrials up 112. The Dow advancing 0.2%. NASDAQ right now we've got NASDAQ down 0.3%, and to be clear, S&P lower by 0.1%. 10-year 4.13%. Spot gold up $33 the ounce, now surging 0.9%, $37.80 for the precious metal. West Texas Intermediate crude up 2.3%, $63.71 right now for a barrel of WTI. Bottom line here, action muted across markets. Traders parsing a host of comments from other Fed speakers. And moments ago here on Bloomberg Intelligence, Carol Schleif, Chief Investment Officer at BMO Private Wealth, told us high valuations do not kill a bull market.
The valuation gap has opened up quite a bit, and at some point we have to expect some sort of volatility or pullback or things like that. The interesting thing in looking at this exuberant market, if you will, is we started very narrow and we're actually broadening out, which is the inverse of a lot of bull markets where you start very broad and then you end up narrow.
Carol Schleif of BMO Private Wealth, interviewed right here on Bloomberg Intelligence. Again, recapping here, S&P lower by 10, drop there of 0.1% for on-demand news, 24 hours a day. Subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Speaking of YouTube, this social media thing, I think it's a thing.
It's a big, right?
And you know what's one of the big pieces of this whole social media? It's the whole TikTok thing. That's a thing.
Well, you know, President Trump has changed his mind on this. He wasn't a fan before, now he is.
I don't know where we're going on this. I mean, this is something that active Congress says, hey, you got to sell it or
you got to shut down.
Shut down. I don't know what's going on. Seema Shah, she joined us. She knows what's going on. She's a vice president of insights for Sensor Tower, joining us live here in our Bloomberg Interactive Brokers studio. TikTok, huge platform. Yes. You guys track everything on the data, the advertising, the in-app spend. You know, you guys know what's going on there. Yes. Talk to us about TikTok, and if I'm going to buy this thing, what am I buying actually?
What you're really buying is the, as we said, $1.6 billion in in-app revenue that they earned just this year so far. I think since launch, they've earned about $6 billion in in-app revenue. So for those who aren't clear, it's when you're on the app and you make a purchase within it that goes through the App Store, and that is an in-app revenue purchase. So that's one part of it. That's probably the most lucrative. It is the most lucrative market for TikTok for in-app revenue. The other thing is the value of its advertising, right? TikTok users in the US spend 80 minutes per day on the app, and this is followed by 53 minutes per day at Instagram. So it's very valuable of highly engaged users. So it's a strong place, it's an attractive market or place to put your ads.
I'm a parent, and what you just said is like, I'm filled with fear now after listening to what you just said. What I didn't hear you say, though, in terms of what you're buying is the algorithm, because TikTok apparently serves up content better than any of the other social media networks, right? Instagram will serve you up a lot of things that you're not interested in, but TikTok seems to know and zero in on what gets your attention. So a U.S. buyer of U.S. TikTok doesn't get that, does it?
My understanding is that the ByteDance would license that algorithm, technology to the U.S. owners. And then there's been talk maybe you'd have to have a separate app, and that has gone away. But the question would be like, will you still get that same content, even if the algorithm is adjusted even slightly? And then what would the value of TikTok actually be? And I think the other thing, it's probably one of the more young or youthful oriented platforms. So If the buyers that come in are, might kind of shift it towards more like a Facebook or change the algorithm, it may be less attractive to these younger users and therefore as an advertising platform.
What are the advertisers saying? I mean, they've got a vested interest in this thing because they,
Yes.
a lot of money. They spend a lot of money on this platform.
Yes, from year to date this year versus last year, 8 of the 10 top advertisers on TikTok have increased their spend. Like Uber, Comcast. So they are spending. There's been more fluctuations in Uber just because I think people were unsure about what was going to happen to the app, if it was going to be removed. But as of yet, it makes up about 5% of social media ad revenue in the U.S.
Who comes second? I mean, if this thing is not handled well, or if this takes longer than expected and people start migrating to other platforms, who stands to benefit the most?
I would say Instagram with its Reels. The time spent on Instagram as an app has gone up 14% year over year versus just 1% for TikTok. And the thing is, people are spending about 46% of their time within Instagram on Reels, and that's up from 34% last year. So there's a huge amount of time spent on Reels, which is another short form video media, and it's similar to YouTube Shorts. And that's where I think you'd see people migrate to. If this sort of
Who advertises on the TikToks of the world?
The largest advertisers in shopping, in pretty much all industries, media, entertainment. Amazon is a huge advertiser on all of these networks, as was Temu prior a couple of years ago, Shein, Walmart, they all are advertising.
These are advertisers that used to advertise on broadcast television.
Yes,
cable television.
No more.
They've all migrated over to digital advertising.
And it's a lot cheaper to advertise on these
platforms. It's also more targeted, theoretically,
Yes.
right? Because they know what you buy, what you like, so they can target the ad towards
Absolutely.
you.
That's a little better than 18 to 49 men.
I know, exactly. Homer Simpson,
Yes.
or, Homer Simpson's son. Bed rotting. Have you heard of that term?
Yes, I have, unfortunately.
What is that?
Bed rotting.
Bed rotting?
It's a Gen Z term where individuals, usually teenagers, spend extended time in bed, not for sleep or illness, but for passive activities like scrolling and watching
I've
TikTok.
unfortunately seen that in my own house. Yes, I have seen that, and what they are. And I think I can see from my own sort of anecdotal experience that algorithm works. I can hear them laughing. They keep wanting. I don't find them funny, but anyway, they keep showing these videos, and they can literally sit there and scroll for hours and hours and hours.
And it's very meta because bed rotting became popular through TikTok. TikTok kind of encouraged this
it's
and
almost,
talks about it.
Yes, it's like something to do. It is glamorized, I would say, by having this sort. So all that to say is, if this algorithm shifts, there will be other winners, probably Instagram or Meta platforms, but I don't know what it would mean to TikTok itself if there was any change in the algorithm or any change in the way the content is delivered.
Right, and this is obviously this is a global business.
Yes.
I mean, I'm looking at. I just thought the U.S. would lead in use, but it doesn't.
Indonesia, Brazil, and Mexico are larger than the U.S. The U.S. only makes up 6% of daily active users for TikTok, but 30% of in-app revenue.
So what would happen if, TikTok US is siphoned off from regular TikTok? We're the only market that gets US TikTok and everyone else stays on TikTok proper?
If there was a separate app, I suppose that could happen, but a lot of the content that people consume is internet. It's global.
It's global.
So if you cut that off, then I don't really know. And you can get the same global content from competitors like Instagram. I think that would be a huge risk to TikTok's engagement levels, daily active users, and then subsequently down the pipe, advertising, because obviously the platform will be less attractive if there's fewer people on it.
Do we have any sense of when we're going to get clarity on this whole thing?
Supposedly December 16th, but that's sort of a rolling deadline. So you see, I think people are still unsure of what is going to happen, but the news as of late seems a little bit more solid, that there is a group potentially a group of people. Oracle is going to manage the servers.
That's been the consistent name throughout this, right?
And a couple of private equity.
But I mean, great private equity. Andreessen Horowitz, Silver Lake, who I think is the best private equity player in technology. Andreessen's a little bit more VC, earlier stage.
Yeah.
Silver Lake. So they're real names.
They're definitely real names,
so
but it's just a matter of how they manage the business, though, after and how that changes. It's a cultural phenomenon in some senses, right? So you have to be careful what you do with it.
All right, Seema, thanks so much for joining us.
you.
Seema Shah, she's the Vice President Insights for Sensor Towers. We used to work together at Bloomberg Intelligence.
Yes, that's right.
So,
I know.
so
I
we
love
know.
that we
So
bring
we
back
know.
BI veterans
Exactly.
onto
So
BI.
they're all over the place. So I appreciate getting a few minutes. Seema's time here. Looking at the markets, S&P down 9 points. Yes, the Dow up 75 points, and the Nasdaq off 66 points. So no real direction out there. 10-year Treasury yields. Government's going to pay you 4.13% for 10 years.
Not bad.
Yeah, not bad. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, folks, here we go. I'm Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. All right, I've been on Wall Street since June 16th, 1986. The best business has been private equity. Now you could say there's other stuff out there, but private equity, by and large, just crushed it. And you're seeing endowments at some of these universities. They don't have 5% or 10% allocations to alternatives. They have 30, 40% allocations to alternatives, including big allocations to private equity. But the problem now is it's tough to get returns on some of those investments. The IPO market's not been great for several years. Getting M&A hasn't been great for several years. So tough to monetize some of those investments, and it's getting a little testy out there. Allison McNeely's got a great big take story along with her team on this story. Allison McNeely, she's a private equity reporter for Bloomberg News, joining us here in our studio. Allison, talk to us about your big take story here. Some PE firms, they're not monetizing their assets, their investments, and returning cash to the limited partners like they used to. Why is that, and how big of a problem is it?
It's a big problem. So as to why we have to go back to 2022, that's when the Federal Reserve, of course, started hiking interest rates. And when you raise interest rates, you raise the cost of borrowing. When you raise the cost of borrowing, it's less attractive to do private equity deals because, of course, they are underpinned by debt. The company's borrowing money to facilitate transactions. And when you're not doing deals, that sort of flywheel of private equity really starts to slow down. You're not selling assets, returning to capital to investors who then have capital to essentially give back to you for your next fund. We've seen distributions decline dramatically, deal volume decline dramatically. Fundraising has gotten tougher for many of these firms.
So it's the flywheel. I love that kind of analogy there, because that's really what happens. You kind of have to have liquidations to create the returns to say, hey, I'm going to come back to you and raise some more money from you. What fixes this? Is it just a better capital markets environment where maybe more M&A can happen, more distribution, and more IPOs can happen? Is that what has to happen first, do you think?
That's the ideal situation. I think the Fed cut last week. That doesn't change anything dramatically right away, but it's sort of a step in the right direction of perhaps lowering borrowing costs, which will facilitate deals. Really, in order to sort of clear out this logjam, which, by the way, according to some data providers, they say that there's about 9 years worth of private equity-backed companies waiting to be sold. So there's a massive logjam, and maybe that helps that.
All right. We're going to get some breaking news here with President Trump, so we're going to say goodbye to you. Allison McNeely, check out this Big Take story on the Bloomberg Terminal and on Bloomberg.com/Big Tape. Allison McNeely, private equity reporter, right now. Bloomberg is now, so let's go to President Trump right now. We have a tape playback here from the United Nations. Let's listen in right now.
And one thing is, for me, extremely important, is that the
He's speaking with the United Nations, Antonio Guterres from the United Nations.
I fully appreciate your engagement in that regard.
Well, thank you very much. It's always an honor to be here. We've done this before, and this was a little more exciting because of the escalator and the teleprompter, but these things happen. But I will tell you that your people have treated us with great respect. Our country is behind the United Nations 100%. I think the potential of the United Nations is incredible, really incredible. It can do so much. So I'm behind it. I may disagree with it sometimes, but I am so behind it because I think the potential for peace with this institution is so great. So I just want to thank you for treating us so warmly. We very much appreciate being with you.
Great pleasure.
Thank you very much.
Thank you very much.
Thank you.
All right, that was President Trump at the United Nations, just giving some kind words with United Nations. Antonio Guterres there in New York. And again, President Trump earlier this morning made his speech in front of the UN General Assembly. A list of grievances. President Trump, he assailed the United Nations and other countries in a grievance-laden speech. This is according to Bloomberg News that accused the world body of offering nothing but, quote, empty words, labeled climate change, quote, a con job, and warned open borders risk destroying nations. So setting aside their calls for unity, so we'll have to see how that plays out. But then in these just brief remarks here to Mr. Gutierrez, kind of suggesting that there is still room to work together with the U.S. and the United Nations going forward. So we'll stay on top of that kind of messaging here. But again, the United Nations in session in New York City all week. And if you've ever been in New York City when the United Nations is here, it makes it kind of tough to get around because there's lots of traffic restrictions, traffic blockage, and you just got to have to roll with it. And my solution has always been go underground because you're not going to see too many world leaders on the New York City subway, but that's the most efficient way to get around. But we welcome them every time that they come here because this is New York City, and that's kind of what we do. We do the United Nations thing here. So we'll keep an eye on that. We'll have lots of speakers. Tomorrow we'll be broadcasting from the Plaza Hotel in a United Nations related event there with Bloomberg. So we'll have some really good speakers. I'll be there starting at 7 a.m. with Tom Keene, Bloomberg Surveillance, and going on out through the day. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. The top stories Global business headlines are coming up in just moments. Looking at the markets here, quick data check. S&P down 10 points. It's only about 0.1%. The Dow's up 48 points. And the Nasdaq's down 70 points, about 0.3%. So no real direction there on the equity markets. That's okay. Yield space also pretty steady here. 10-year Treasury's off about 1.5 basis points, 4.13%. Oil's a little bit higher here today, up a couple percent here, just under $64 per barrel for WTI crude oil. Gold, once again, moving higher, up another 0.9%, $3,880. That's it for Bloomberg Intelligence radio program. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. On the world stage at the United Nations General Assembly, President Trump praised his presidency, blasted the UN, and turned up the heat on global warming.
It's climate change. Because if it goes higher or lower, whatever the hell happens, this climate change, it's the greatest con job ever perpetrated on the world, in my opinion.
CBS's Nancy Cordes.
I think what this speech is going to be remembered for will be the president's harsh warning to European allies. He basically said that their countries are going to hell and that they are destroying their own heritage with their permissive immigration policies and their efforts to reduce their carbon footprint and combat climate change.
Well, CBS's Nicole Skanga reports the Secret Service says it broke up a plot that could have impacted the General Assembly.
Federal law enforcement says this telecommunications network was so powerful. Get this, it was capable of sending 30 million text messages per minute, potentially overwhelming and shutting down New York City's cellular network.
Officials blamed nation-state actors and individuals known to federal law enforcement. Nexstar Media Group says it will preempt Jimmy Kimmel's return to late night on its ABC affiliates tonight, joining Sinclair stations that are doing the same. Disney lifted Kimmel's suspension yesterday. He is back on the air tonight. Now to Washington, where the possibility of a government shutdown draws closer.
President Trump says on social media he will not meet with top Democrats to avert a government shutdown, saying no meeting could possibly be productive. He cites what he calls the details of the unserious and ridiculous demands being made by the minority radical left Democrats. The top Democrats in the Senate and House said in an earlier statement they wanted to work to avoid a Republican-caused shutdown. Allison Keyes, CBS News, Washington.
A funny thing happened on the way to the UN for French President Emmanuel Macron.
Macron was trying to walk to the French embassy last night when he came upon a street that was blocked off for President Trump's motorcade. An NYPD officer gave him the bad news.
I'm sorry, President, I'm really sorry. It's just that everything's in closed right now.
Macron called Trump for help.
Guess what? I'm waiting the street because everything is frozen for you.
Macron was eventually allowed to cross, but had to walk for 30 minutes. Along the way, he took selfies with tourists. Michael Wallace, CBS News.
And checking Wall Street, right now the Dow is up 26 points. The S&P is down 11, NASDAQ down 67. This is CBS News. light beer is now a heavyweight when it comes to overall sales.
The U.S. best-selling beer has been dethroned.
What is your Michelob Ultras?
Michelob's light lager has officially taken the crown from Modelo Especial, which ruled the brew world since 2023, when Anheuser-Busch's Bud Light fell from grace after its collaboration with trans influencer Dylan Mulvaney. Anheuser's parent company InBev cites data from Circana showing Michelob Ultra was the best-selling beer during the 52 weeks ending September 14th. Constellation, which owns Corona, is still suffering from a sales slump. Deborah Rodriguez, CBS News.
Spirit Airlines says it plans to furlough 1,800 flight attendants before year's end. That's about a third of the staff. Spirit filed for Chapter 11 bankruptcy protection last month for the second time in a year. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump thumbs his nose at the globalists. Welcome to the Tuesday edition as the president speaks to the United Nations General Assembly, saying your countries are going to hell when looking at European allies. We're going to bring you to Turtle Bay in just a moment for a live update from Bloomberg's Tyler Kendall, who is there. We'll get insights on what we heard today from Adam Ferrer at Bloomberg Economics. Nathan Dean from Bloomberg Intelligence will join us to talk shutdown politics. He's, of course, running the odds. And later, we're going to bring you to Providence, Rhode Island to hear live remarks from the Fed Chair, Jay Powell. He'll be on Bloomberg before the hour is out. And we start, as always, by setting the baseline on Wall Street. Charlie Pellet has the markets covered for us. Live from World Headquarters in New York. Charlie?
Thank you very much. Lots of moving parts, Joe Matthew, both in D.C., also here in New York, General Assembly. And we have got remarks coming up, as you mentioned, from Fed Chair Jay Powell. Right now, we have got a little change on the S&P 500 index, lower by 12. The Dow higher by 37 on the Dow Jones Industrial Average. That is a gain of 0.1%. Keeping it all in context, S&P lower now by 0.2%, while NASDAQ down 72 for the NASDAQ Composite Index, a drop right now of 0.3%. The Mag 7 Index slumping 0.6%. 10 years currently yielding 4.13% with the 2-year 3.59%. Spot gold up $32 the ounce. The precious metal up 0.9%, $37.79 on gold, a record there. West Texas Intermediate crude up 2.2%, $63.63 a barrel, and Bitcoin flat on the day right now at 112,826. As for the U.S. economic outlook, Lauren Goodwin is economist and chief market strategist at New York Life Investment Management. She told us early this morning she's looking to the United Kingdom.
We have a really good example of what a pullback in trade and immigration policy looks like, and that is Brexit. 9 years after Brexit, you didn't see a major disruption or single event in the UK economy that really got them to where they are today. You just saw a sticky, sort of pervasive stagflation-light reality. That's what I'm worried about for the U.S. economy.
Lauren Goodwin of New York Life, interviewed on Bloomberg Open Interest. Jimmy Kimmel Live returns to the air tonight, ending a suspension that Disney imposed following controversial remarks that the ABC late-night host made about the assassination of Republican activist Charlie Kirk. Now, not all ABC stations will be carrying the show. We just learned that Nexstar Media Group will be joining Sinclair, another large owner of ABC TV affiliates, in not airing Jimmy Kimmel Live tonight. Shares of the Walt Disney Company, they're down 0.2%. Sinclair up 4.2%. Nexstar right now up by 0.8%. Recapping, S&P lower by 14, down 0.2%. Balance of Power continues now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, many thanks. I'm going to have to do some clicking around the dial tonight to find, I guess, Jimmy Kimmel. Not that I've been up that late in the last 20 years, but, you know, we could record it and watch it back. The president would, I'm guessing, be one to watch this, right? You can't see it in Washington, D.C. That local station is owned by Sinclair, I guess, so we're not going to be doing any Channel 7 Jimmy Kimmel here. It makes life interesting. And, you know, was this part of the idea to make it even more taboo? We'll find out together a little after 11:30 tonight. Thanks for being with us here at high noon on the East Coast on Balance of Power on Bloomberg Radio, satellite radio, channel 121, On YouTube, search Bloomberg Business News Live to watch the radio show on TV, or maybe you're already on Bloomberg Originals, where you can find us every day. These are the two things I got from the United Nations: a bad escalator and a bad teleprompter. The words of Donald Trump as he spoke before the UN General Assembly, almost an hour long, 56 minutes. And joining me in Washington once again today is Bloomberg's Mario Parker, who's covered a couple of Trump speeches in his tenure. I don't know where to start here. We're going to talk to Tyler, who's actually at the UN. Mario, but that was a new level, I feel like, for the president. How about you?
It was a new level on a global stage, Joe, but indistinguishable from some of his campaign stump speeches, right?
Fair enough.
Casting migration as an existential crisis to civilization, speaking about America first in some terms as well, defending America and its right to kind of go rogue and go it alone. I mean, but to the extent that he broke some of the norms at the UN, name-checking some of the countries as opposed to his political enemies as well, that's some new territory.
Some new territory, and we'll give you a taste of what the president said just a short time ago in front of the Green Marble in Turtle Bay. Let's watch and listen.
We have reasserted that America belongs to the American people, and I encourage all countries to take their own stand in defense of their citizens as well. You have to do that because I see it. I'm not mentioning names. I see it, and I can call every single one of them out. You're destroying your countries. They're being destroyed. It's time to end the failed experiment of open borders. You have to end it now. Let's see, I can tell you. I'm really good at this stuff. Your countries are going to hell.
That is the takeaway from a 56-minute speech. Your countries are going to hell. Bloomberg's Tyler Kendall is spending the week at the United Nations General Assembly and joins us from outside the UN in Turtle Bay right now. Tyler, how did this speech go over?
Well, Joe, it was really met with silence in the room for many of these countries that were watching. Some moments of laughter, perhaps. You had mentioned the issue with the prompter at the beginning. But as you said to start this segment, it's really hard to know where to start here because President Trump did hit on some moments of real tangible policy that we can get into. But perhaps we should start by talking about the broader backdrop, this harsh criticism that he levied against the United Nations as an institution. Widely expected that this was going to go this way because we know leading up to this, the U.S. Has actually suspended all of its payments to the United Nations. Combine that with past delinquencies from other administrations. Right now, the U.S. is on the hook for more than $3 billion in dues and bills to the United Nations. So this has been something that the administration is actually repeating when it comes to a trend in its rhetoric from the first Trump administration. I know you're going to catch up with Adam, but I will quickly cite our analysts at Bloomberg Economics, which say that the UN, with or without the U.S., was already in trouble. Back in January, we knew that the Secretary General had declared a liquidity crisis. Now, even amid this really staunch criticism for the United Nations, President Trump saying that the UN is only empty words. Actually, it appears that reporters were able to catch up with the president after his speech, and he was with the Secretary General of the UN, and he said, quote, "I think the potential of the United Nations is incredible, truly incredible. It can do so much, so I'm behind it. I may disagree with it sometimes, but I am so behind it." So perhaps a little bit different, a lesser take there than what we heard from President Trump during his remarks in the room.
Fascinating stuff, Tyler. Thank you so much for being there for us, joining us from New York at the UN. Tyler Kendall, as we add the voice of Adam Ferrer, as promised, Bloomberg Economics senior geoeconomics analyst. It's great to have you, Adam. I know you were watching and listening along with us. Just stylistically speaking, the impact that this made in a room full of pretty straight faces. What did we just see?
So I think to start with, in many ways, what we saw was a highlight reel for President Trump. I think, Mario, you already highlighted a little bit at the beginning that this felt very familiar for those of us who've watched President Trump give speeches, particularly given, for better or worse, this teleprompter issue that he suffered, despite the UN insisting afterwards that the teleprompter was working. But you know, looking back to his previous speeches, and particularly from his first term, it had a feeling that the room took him more seriously this time. That despite, I think, there being lots of reticence about the approach that he and the United States are taking on international politics, trade, and engagement in military affairs, that they're unsure of how to approach him and aren't willing to laugh at what they see as big changes in policy or things that even seem laughable in general. Now, in terms of topic areas, what was most interesting to me was that we didn't actually break a lot of new ground, right? One of the things we were looking for, and as Tyler was just mentioning, was some change potentially in how the United States was going to approach the United Nations itself. There's been an ongoing review at the State Department and across the U.S. government about how the United States will engage with different multinational organizations, including all of the different parts and bodies at the UN. And here we just didn't get anything, really. Certainly we had broad-ranging attacks in the United Nations, efforts by the president to kind of put himself as the alternative to the United Nations, right, laying out the 7 conflicts that he has addressed, he has solved, and that the United Nations has not. But at the same time, no decision, particularly on funding or specific organizations that the U.S. might withdraw from.
Adam, do we have a sense, and you kind of hinted at it as well, do we have a sense, one of the notes in the speech was the attacks on coal and climate change, defending coal and attacking climate change. Essentially, the way I read it was that he was also signaling that the U.S. is open for business as well. How much do you think that the trade deals will come up on the sidelines of, or economic statecraft will come up on the sidelines of some of these bilads?
I think it's at the center of almost everything he's doing in the engagement, and to the point of what we were talking about before, maybe that was also surprising, is that trade in and of itself was a very small portion of this speech, with his own avowed focus when he issued his tweet, or his truth afterwards, that this speech was about energy and migration, not about trade. But when he gets in the room with these leaders, it's going to be all about trade and all about trying to both move forward on the deals that are already on the table, many of which still haven't been signed, and to get new carve-outs, new efforts to improve the relationship with the United States. And I think you're right. He tried to make clear that the United States has a model that others should follow, and that is strong borders and traditional energy sources, but also on trade. It's about rectifying the balance and the scale. So I think he'll certainly be focused on those issues.
Looking at some of the folks he is meeting with, it's Milei from Argentina. He's got a Middle East peace conference, as the administration is calling it. The leaders of 8 Muslim-majority countries, including Saudi Arabia, Turkey, Qatar, but also Volodymyr Zelensky. And I wonder, after what we heard the president say about Vladimir Putin today, if that meeting could bring some progress to ending the war in Ukraine.
So Zelensky was in the room. Cameras panned to him during that portion of the speech. I think certainly he had nothing to. Trump didn't give Zelensky new worries in the speech. We didn't hear anything new there. He did express his deep frustration with President Putin, which, again, is a good sign coming off of what was a whirlwind in August with President Trump meeting Putin in Alaska, having such positive things to say despite any real progress, and then his quick meetings the following week with Zelensky and European leaders where they set out a plan to implement a peace agreement and bring Zelensky and Putin to the table, which so far hasn't happened. But then what Trump pivoted to was this, decision that he would put real tariffs, as he said, real punishment on countries to force Putin back to the table, but only if Europe takes drastic actions to decrease its reliance on oil, which it has already done so far.
Interesting that he suggested he just found out about European nations buying oil from Russia, which was curious. Mario, great conversation as always with Adam Farrer. Thank you, Adam. Bloomberg Economics. We're going to turn back to domestic politics. Mario knows a thing or two about shutdowns. We'll get into this next with our friend Nathan Dean from Bloomberg Intelligence right here on the fastest show in politics on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading very close to session highs right now. Session lows, I should say, not far from a record, but still red on the screen, at least for the S&P. Down 10 now, down 0.2%. Nasdaq Composite Index down 67, drop there of 0.3%. And the Dow higher by 37, up by about 0.1%. Bottom line for a lot of equity traders, on hold ahead of comments coming up in just about 18 minutes from now from Fed Chair Jay Powell. 10-year at 4.12% with a 2-year 3.58%. Gold is trading higher by $32 the ounce, $37.79. That is a gain of just about 0.9%. Are looking at a record there on the precious metal. West Texas Intermediate crude up 1.9%, 63.45 for a barrel of WTI. Coming up after the close of trading, we'll be hearing from Micron Technology ahead of earnings. Right now, we got Micron up 2.2%. Kenvue shares, they're higher now by 3.6%, making up some of yesterday's 7.5% drop, as President Trump's call for pregnant women to avoid Tylenol draws sharp criticism from researchers who say that advice ignores decades of evidence and could endanger mothers and babies. Again, Tylenol maker Kenvue, it is up now by 3.6%. Recapping, S&P down 0.2, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, many thanks. Joe Matthew alongside Mario Parker here in Washington, D.C. for hour one of Balance of Power. And as Charlie mentioned, about 10 minutes or so from now, we're going to be hearing from Jay Powell, the Fed chair, speaking in beautiful Providence, Rhode Island. I hope he gets a chance to go by Federal Hill after the speech. As we keep our eyes on the calendar here, now you know what's going to happen on the 1st of October, Mario, if we don't get a deal here to keep the government funded. There is a continuing resolution that's passed, but that apparently doesn't matter. The Democrats want a meeting. Leadership wants a meeting with President Trump, and it looks like they're not going to get it.
That's what it looks like. It looks like President Trump, well, we had reported that there was a meeting scheduled for Thursday or planned for Thursday.
Yeah, what happened?
President Trump says he reviewed the details, and after reviewing the details, he's not going to meet with the Democrats unless they drop their demands. Of course, that stems largely around the Medicaid cuts and then also extension of the Obamacare subsidies as well.
Exactly.
Whether or not Schumer and Jeffries fold, we'll see, but it doesn't look likely.
I don't know if you want to share, we can each read different portions of this is one of the longest missives we've seen on Truth Social, and Mario almost quoted the president directly after reviewing the details of the unserious and ridiculous demands being made by the minority radical left Democrats in return for their votes to keep our thriving country open. There you see it on YouTube if you want to read along. I have decided that no meeting with their congressional leaders could possibly be productive. What is this, 150 words? This thing goes on. But that's the meat of the message here. And without a meeting, how do we get a deal?
Without a meeting, I mean, Democrats are in a tough situation here, right? Earlier this year, we saw the conundrum that Chuck Schumer faced. Yep. He faced blowback from his party as well. The pressure has ratcheted up after the passage of the One Big Beautiful Bill, and also with midterms coming into view as well.
Yes.
The other side is you're negotiating, at least from the Democrats, at least as of right now, you're negotiating with someone, a president that's not afraid of a government shutdown, may very well welcome it, and think that they have the high ground in terms of messaging to pin the blame on the Democrats.
Well, you put that perfectly, because I'll never forget Mick Mulvaney sitting here a couple of weeks ago saying he was jealous of Russ Vought, because he's got a binder with a plan to put things in action when the government closes, and they're going to hope that it stays that way, potentially altering who's considered essential, which agencies are funded, and so forth. So it's an interesting environment there where it's a little bit different than the most recent so-called countdown to shutdown.
No, absolutely. And to your point, some of that minutia that you mentioned with Russ Vought, et cetera, the White House is betting that the average voter, Joe Blow, in places like Ohio, Indiana, swing states, right, as well, aren't going to be consumed with some of the arcane ways that the government functions. They're going to look at it. The White House's deliberation is Democrats are being obstructionists once again.
Yeah, that's right. I've been called way worse than that on this program, by the way. Once they start calling me sir that's when it goes down the wrong road. Nathan Dean knows that. America's dad joins us right now. in Washington from Bloomberg Intelligence, our senior U.S. policy analyst. Nathan, you've been running odds, and I think you were, last time we talked, 40% odds on a shutdown. What did this Truth Social post do, if anything, to your numbers?
So I'm still at 40%, and we're out of consensus, because if you look at the prediction markets, the prediction markets are saying about a 70% chance of a shutdown. But President Trump's Truth Social post really didn't do anything for me, because I didn't see any real reason why President Trump had to meet with the Democrat leadership, because like Mario just mentioned, the Republicans feel like they have the high ground. They've already passed a continuing resolution, a cleanish CR that goes into November. So if the Republicans are essentially just saying, look, Democrats take it or leave it. You hear Speaker Mike Johnson say that he's not going to come back until after this is resolved. And at the end of the day, we have a morning huddle at Bloomberg Intelligence. We have a morning huddle saying, should we change these odds? And from this morning, our huddle, we essentially said no, because we just do not see the leverage that the Democrats can have going into this. And, it's one of those things where, look, we recognize that the Democrats want to fight. We were talking to a Democratic aide just the other day, and he said, look, our approval ratings aren't that great, and the shutdown, if we do it, it's not really going to harm us come November 2026. That's a long time away. But at the end of the day, the party that refuses a clean CR is usually the one that pays the political price.
That's great, Nathan. Nice analysis, as per usual. Markets seem to be shrugging this off as well, right?
Absolutely.
Once the headlines moved this morning.
Yeah, markets aren't really impacted by the shutdowns all that much. Go back to the 30-day shutdown. The S&P dropped a little bit because of headline risk, but by the end of the shutdown, the S&P was actually up 5 or 10%. But there's a bigger issue here, and this is the one that our clients have been calling us on, is what about data? Because come October 1st, like Joe was mentioning, Russ Vought will come in and say, here's what's essential and here's what's not essential. And a lot of the data that traders use, think Bureau of Labor Statistics, for example, there's a report coming out on October 3rd. The data is collected by September 30th. So one of our clients was like, look, is that going to be able to come out? So if you're trading, be prepared that if we get into a shutdown, that potentially we could have a couple of days, if not weeks, of not data coming in from the government. And so you may have to trade a little bit differently depending on what happens.
Are you planning for at least a temporary shutdown here, Nathan? The House doesn't even get back until after the government would presumably be closed, right? Or are we assuming the Senate takes care of this on its own?
I will never assume that the Senate takes care of it on its own, because if the Senate makes a deal, then it goes back onto the House, and they're the ones that have the pressure here. This is kind of interesting, though, because September 30th falls on a Wednesday. We usually don't have shutdowns that happen during the middle of the week. They're usually on Fridays, and so if something happens and they have to take the weekend, people don't really react to it. So I wouldn't be surprised if the Senate were to come up with a deal, and I think our main scenario is that the Democrats ultimately take the House deal, but if we do get a deal amongst the Senate, I wouldn't be surprised if you see a 1, 3, 4 day continuing resolution just to keep the sides talking.
And Nathan, what's the calculation as to why Schumer and Jeffries would end up ultimately taking the deal? Do you see some type of middle ground being forged on the Obamacare subsidy extension, for example, or something on the Medicaid cuts? What would be the calculus there, do you see?
I actually don't think it's going to be that side. I think it's just going to be a handful of Dems. Remember, we only need 7 Democrats to go along with this. And so I could see a scenario where Senator Schumer essentially says, look, I made a deal before. I paid the political price. I'm not going to do a deal here. But for the rest of the Democrats, vote your conscience. Because, Senator Fetterman has already said that, he would support something like this. I could see a couple of other Democrats saying, look, I don't like this, but the idea of having Russ Vought going around and deeming what's essential and what's not essential could play directly into President Trump's hands. And even though we are far away from November 2026, it's all about momentum. And the last thing the Democrats want is to have their approval rating go even further, because, like you said, Mario, before, it's a big deal for those of us here on the East Coast in Washington, but for Indiana, Ohio, and the folks in the Midwest and out in the rest of the part of the United States, shutdowns are usually very bad for the party that causes it. And I think the Democrats could get some blame here. So ultimately, that's why I think a handful of Dems may say, maybe we should vote for this.
Really interesting. Nathan Dean, against the odds, not unlike Stumpy on the wall just behind him. See, you needed to be on YouTube to know what I'm talking about there. Nathan, we're going to be hearing from Jay Powell in a couple of moments. Is there anything that we expect he's going to say that he didn't already drop in the news conference just days ago? This is a pretty quick turnaround for the Fed chair.
I don't think so. I mean, the one thing that we're trying to figure out from the investor's point of view for these banks is the idea of when are these proposals that Vice Chairwoman Michelle Bowman has been talking about. We already have a proposal out there on stress testing, and I'm talking about the regulatory side as opposed to the monetary policy side. But for the investors that are in the bank space, this is a fairly big deal because, you know, Vice Chair Bowman has said that there are other proposals coming on the Basel III Endgame, the stress capital buffer, the GSIB surcharge, potentially another one on stress testing. So I'm not sure Jerome Powell's going to get into that into his speech as much as I wish he would, because I'd love, you know, I always love the more regulatory side than the monetary policy side. But, you know, that is what the bank investors really are looking for right now, because there's a lot of sentiment in the markets that there's going to be deregulation for banks coming. We need to see those proposals come out if they're going to be able to be finalized next year.
And Nathan, is there any tea leaf reading to be done on just the risk management comments that Chair Powell mentioned the other day? Just the balance between the inflation mandate, but also this labor market as well. What are folks, some of the clients that are reaching out to you, what are they kind of mentioning along those lines?
Well, I think a lot of the clients right now are struggling to figure out who should we be listening to. Should it be Jerome Powell or should it be Dr. Myron? I mean, because obviously Jerome Powell has signaled what his thoughts are, and, you know, but he's only going to be around for a few more months and a few more meetings. And so, you know, what our clients are thinking of right now is essentially trying to game plan that scenario of the first half of next year. And that also takes into account the court cases that are going on with Governor Cook and whether or not President Trump can fire her for cause. Because at the end of the day, when you talk to our clients, the biggest concern they have is not so much what the monetary policy strategy is. And obviously, our chief rate strategist, Ira Jersey, has been doing a lot of work on that. But it's also, will President Trump be able to influence the Fed governor board? And also, will the Fed governors be able to reauthorize the regional bank presidents of the FOMC? Because that happens in February. And that would be our scenario where if the markets were to get a little concerned with the Fed, it'd be in February if the board decides to not reauthorize those regional bank presidents.
Just so we understand, Nathan, is the concern that you're getting from clients, and they call Nathan all day about this stuff. It's one of the more effective anecdotal polls we have. Are they concerned the president will or will not be able to influence the Fed?
The concern is the regional bank presidents would then be no longer valid, or, you know, would not be reauthorized, and then President Trump would be able to put additional individuals on, right, you know, over, you know, amongst those. It gets a little complicated.
Some folks in the market might like that, though, right? If it means lower interest rates, but you're clearly talking to people concerned about independence.
Well, you know, it's really two sides of the coin. You know, we have some clients that are concerned about independence, and we have other clients who are saying, look, I just want clarity and I want to know what's going to happen. Because whether we have cutting interest rates or higher interest rates or anything like that, you know, I can at least work with it. So it's all about clarity at this point. And, you know, we'll find out a little bit more as that court case goes through, eventually probably to the Supreme Court.
And Nathan, how surprised are you that the markets just haven't reacted to a lot of this? Is it that it's been desensitized, given what we saw with Liberation Day and some of the other maneuvers that have come out of the Trump administration so far this year? But the market reaction, to the point that you and Joe just made, I mean, investors don't seem to be panicking at all about this notion of the Fed maybe losing some modicum of independence.
Well, you know, I think there's a lot here about, like, you know, let's talk about noise versus the actual real impacts. And I always go back to, how does President Trump implement policy? It's executive orders, it's legislation and regulation. And regulation and legislation don't happen all that often, or they take a lot of time. So now we go back to the executive orders. And a lot of that's being tested in the courts. So as these executive orders get placed, and the H-1B visa program is a perfect example. My colleague Matt Shenhelm just put out a note this morning saying that he thinks that executive order is going to be, quote, pounded by the courts. And so the investors have to essentially watch this court case process play out. And so as that takes quarters and as that takes years, they go back to the fundamentals and they go back to the economic data and they go back to inflation, and they look at so much more of the, what I call the monetary, the macroeconomic impact towards the markets than specifically President Trump's policies.
If you're just joining us on Bloomberg, we are standing by to hear from the Fed Chair, Jay Powell, standing by with Nathan Deans A great analysis at Bloomberg Intelligence. I'm Joe Matthew alongside Mario Parker in Washington, Jay Powell in Providence, Rhode Island, where he's going to be speaking shortly before the Greater Providence Chamber of Commerce, presumably before he goes to Caserta Pizza after, at least that's where I would be. We just got a look at some of the remarks we're going to be hearing. Headlines are crossing the terminal, Mario, right now. Jay Powell will say, we will make sure tariffs do not drive ongoing inflation. Recent price increases largely reflect, yes, tariffs. Tariffs impact likely to drive one-time shift in prices. Hiring is below break even. Downside risks to employment have risen. Pretty remarkable to see the word tariff show up this many times, Nathan. I think maybe more than we even heard in Jay Powell's news conference last week.
Yeah, absolutely. I mean, this is not something that the Fed usually talks about all that much because you're inviting a response from the president who often says, you know, tariffs is great policy and this is something that he's doing to make America great again. So, you know, this is somewhat surprising, I think, from the Fed. But I would also just note is that, you know, tariffs is always going to be a muddled policy implementation, if you will, because you have various different types of tariffs. You have IEEPA tariffs, Section 301, Section 232. You have tariffs that are placed on countries. You have tariffs that are placed on individual, you know, entities and exemptions and so forth like that. So, you know, this is where I think the Fed is going to have a little bit of problem or a little bit to struggle, and maybe this is why they're actively talking about it, is because I don't think many people have been able to predict what the tariff outcome is, at least from the Washington perspective, because, you know, I just go back to this idea of the IEEPA tariffs, you know, the reciprocal tariffs from President Trump holding up those, you know, up those placards on the White House lawn. You know, those tariffs are being challenged in the courts right now. In Bloomberg Intelligence, we're giving it a 60% chance that those tariffs will ultimately be deemed unlawful, you know, further to what they've been found in the trade court and the appeals court. So if President Trump loses that tariff argument, well, then what happens? You know, and this is something where I think the Fed is trying to figure it out themselves. Does that mean President Trump launches a 301 or a Section 232 investigation? Does it mean that he tries to reinstitute the tariff some other way in a more speedier manner? Does it mean the Republicans try to use reconciliation in the next reconciliation bill to re-grant those authorities, as it's been rumored around Capitol Hill? So again, I think the Fed is, like in the rest of us, are just trying to figure out what is the clarity for the road on these tariffs. And as a result, that's probably the biggest thing that they're looking at right now.
And Nathan, Trump has called himself both the tariff president and the jobs president. As Joe mentioned there, one of the Powell statements is about hiring being below break even, though other indicators are stable. I mean, what do you make so far of this kind of tricky holding period that we're seeing right now, where where employers aren't doing a lot of firing or layoffs, but aren't doing a lot of hiring either? What do you think about that part of the component, that part of the equation?
Yeah, you know, that argument is like my son's carnival toy, the one where you squeeze and it gets bigger on one side and slower on the others, but you can never get it even. I mean, it's one of those things where, you know, if you want high tariffs, but you also want high employment, you know, it's really difficult to say we're going to bring jobs back. And this is something that we hear from clients all the time. President Trump says he wants to bring jobs back to the United States. Well, I have clients that in Europe are saying, look, I want to buy a plant in the United States. I want to be able to do this. But the global supply chain nature is not something that I can respond to within 3 to 6 months. It takes years. One of my clients is looking at buying a plant somewhere in the United States. They gave a 5-year window before they'd be able to shift their supply chain from a multinational strategy to a United States focused strategy. And so that's very difficult when you also have to take into account what is the Fed going to do and so forth like that. So where I'm going with this is that, you know, President Trump is playing this game where tariffs are good policy for him. This is something that he thinks will, you know, make America great again. But the investors and obviously the market participants are trying to figure out, how can I work with this in the short term, the medium term, and the long term? And what is great for the short term is not great for the long term, or at least it doesn't gel up within the same strategy.
That was a good client call. I told you, Mario. We do this every week with Nathan Dean. He's the best. Bloomberg Intelligence. Look for Nathan's podcast right on our podcast feed at Balance of Power. I think we set you up pretty well for this speech. Jay Powell speaking live now at the Greater Providence Chamber of Commerce. It's live on Bloomberg Radio. Let's listen.
Decade-long recovery from the global financial crisis. And these two back-to-back world historical crises have left behind scars that will be with us for a long time. In democracies around the world, public trust in economic and political institutions has been challenged. Those of us who are in public service at this time need to focus tightly on carrying out our critical missions to the best of our ability in the midst of stormy seas and powerful crosswinds. Throughout this turbulent period, central banks like the Fed have had to develop innovative new policies that were designed to deliver on our statutory goals during times of crisis, rather than for everyday use. Despite these two unique, extremely large shocks, the U.S. economy has performed as well or better than other large advanced economies around the world. And as always, it's essential that we continue to look back and learn the right lessons from these difficult years, and that process has been ongoing now for more than a decade. So, turning to the present day, the U.S. economy is showing resilience in the midst of substantial changes in trade and immigration policies, as well as in fiscal, regulatory, and geopolitical arenas. These policies are still emerging, and their longer-term implications will take some time to be seen. Recent data show that the pace of economic growth has moderated. The unemployment rate is low but has edged up. Job gains have slowed, and the downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In recent months, it has become clear that the balance of risks has shifted, prompting us to move our policy stance closer to neutral at our FOMC meeting last week. GDP rose at a pace of about 1.5% in the first half of this year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. Activity in the housing sector remains weak, but business investment in equipment and intangibles has picked up from last year's pace, largely reflecting the AI build-out. As noted in the September Beige Book, which I bet you wonder what it is, the September Beige Book, that's a report that gathers qualitative information from across the Federal Reserve System. We'll talk about later. Businesses continue to say that uncertainty is weighing on their outlook. Measures of consumer and business sentiment declined sharply in the spring. They have since moved up, but remain low relative to the start of the year. In the labor market, there has been a marked slowdown in both the supply of and the demand for workers, an unusual and challenging development. In this less dynamic and somewhat softer labor market, the downside risks to employment have risen. The unemployment rate edged up to 4.3% in August, but has remained relatively stable at a low level over the past year. Payroll job gains slowed sharply over summer months as employers added an average of just 29,000 per month over the past 3 months. The recent pace of job creation appears to be running below what we call the break-even rate, that is the rate needed to hold the unemployment rate constant. But a number of other labor market indicators remain broadly stable. For example, the ratio of job openings to unemployment remains near 1, and multiple measures of job openings have been moving roughly sideways, not down, as have initial claims for unemployment insurance. Inflation, meanwhile, has eased significantly from its highs of 2022, but remains somewhat elevated relative to our 2% longer-run goal. The latest available data indicate that total PCE prices rose, that's personal consumption expenditure prices, that's the inflation measure that we follow most closely, rose 2.7% over the 12 months ending in August, up from 2.3% in August 2024. Excluding the volatile food and energy categories, core PCE prices rose 2.9% last month, also higher than a year ago. Goods prices, after falling last year, are driving the pickup inflation. Incoming data and surveys suggest that those price increases largely reflect higher tariffs rather than broader price pressures. Disinflation for services continues, including for housing services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs. Beyond the next year or so, however, most measures of longer-term inflation expectations remain consistent with our 2% inflation goal. The overall economic effects of the significant changes in trade, immigration, fiscal, and regulatory policy remain to be seen. A reasonable base case is that the tariff-related effects on inflation will be relatively short-lived, a one-time shift in the price level. Now, a one-time increase does not mean all at once. Tariff increases will likely take some time to work their way through supply chains. As a result, this one-time increase in the price level will likely be spread over several quarters and show up as somewhat higher inflation during that period. But uncertainty around the path of inflation remains high. We will carefully assess and manage the risk of higher and more persistent inflation. We'll make sure that this one-time increase in prices does not become an ongoing inflation problem. Turning to monetary policy, near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate. The increased downside risks to employment have shifted the balance of risks to achieving our goals. We therefore judged it appropriate at our last meeting to take another step toward a more neutral policy stance, lowering the target range for the federal funds rate by 25 basis points to 4 to 4.25%. This policy stance, which I personally see as still modestly restrictive, leaves us well positioned to respond to potential economic developments. Our policy is not on a preset course. We will continue to determine the appropriate stance based on the incoming data, the evolving outlook, and the balance of risks. We remain committed to supporting maximum employment and bringing inflation sustainably to our 2% goal. Our success in delivering on these goals matters to all Americans, and we understand that our actions affect communities, families, and businesses across the country. So thank you again for having me here, and I very much look forward to our discussion. Thanks.
Some opening remarks there from Jay Powell. The Fed chair is going to sit now. If you're with us on YouTube, you can see that for a bit of a Q&A. A fireside chat with the head of the Greater Providence Chamber of Commerce, Lori White. This should be a wide-ranging conversation, which is why he kept his prepared remarks brief, making headlines all the while, reiterating there is no risk-free path for the Fed amid dual threats. Says the outlooks for the labor market and inflation both face risks, describing it as a challenging situation. And noting that near-term risks to inflation are tilted to the upside, these were his words, and risks to employment to the downside. A challenging situation, he said. There is no risk-free path. We're going to wait for the Q&A to begin here as Jay Powell speaks to the Greater Providence Chamber. Let's listen live.
We've had the opportunity many times to discuss with you the conditions in this Fed region, of which Rhode Island is part of the Boston region. So, Mr. Chairman, I would ask you to think about your comments reflecting on the importance, what you have said, the importance of deeply understanding local labor markets. And I'm wondering if in your deliberations leading up to the most recent FOMC meeting, whether there was anything particularly distinctive in what you saw coming out of the Boston Beige Book.
So let me say a word about the Beige Book. So there are 12 reserve banks, as you know, around the country, and each of them has deep ties into not just the business community, but medical community, educational community, nonprofits. And each FOMC cycle, which is sort of 8 of those a year, they do a deep dive and they collect lots and lots of information about the economy. And so, and that information gets collated and put into what we call the Beige Book because it's beige, and we're not that original. And so we get that a couple weeks before each FOMC meeting. And I have to say, I don't know of any source of sort of qualitative information about the economy that even approaches this. It's just a lot of conversations with a lot of people, and I personally find it very useful. Sometimes you look at that book and you see significant regional differences, and this is not one of those times. So, for example, the Boston Fed piece in the last Beige Book talked about lots of spending on AI. Well, guess what? That was pretty common across 8 or 9 of the districts. So I would say nothing really jumped out from the Boston piece. What you saw was all around the country. You saw pretty modest growth, wage and price inflation at modest to moderate levels, the economy growing but not fast, and uncertainty, significant uncertainty about federal public policy is kind of weighing on investments and the decisions about investment and hiring, except in the area of the AI build-out, which is just going really strong pretty much many parts of the country.
So nothing distinctive from the Boston region that would inform your future decision-making, looking at the setting of monetary policy?
What I saw from Boston was quite similar and overlapping with a number of other districts. Again, sometimes that's the case where things are pretty much of a piece. Sometimes different regions, particularly if there's a commodity price thing, you would see maybe things in the commodity-oriented regions doing differently from other regions of the country. Right now, it's sort of, it's much more the same around the country, I would say.
So let's talk about and build on what you described a few moments ago about the dual mandate of the Fed. And if you could talk about these conditions that wax and wane over time, what signals will you be looking for in the run-up to the next FOMC meeting, which is in roughly 30 days?
We have two goals, as you mentioned, maximum employment and price stability, and they're equal goals under the law. So almost all the time, they work together. They complement one another. So, for example, when the economy is weak, the unemployment rate might be high and the inflation rate would be low, and that it calls for stimulus from us. And when the economy is really strong and the labor market is tight, that's when inflation will be moving up, and so policy might be a little bit tighter. That's almost always the case. Right now is the quite unusual case where risks to, as I mentioned in my remarks, risks to employment are to the downside and to inflation to the upside. Now, we only have one tool, which is monetary policy, really interest rates, and really it's calling for different answers. So for a long time, we have a document called the Statement on Longer Run Goals and Monetary Policy Strategy. We call it the consensus statement to save time. That says, for a long time, it's said that when the two goals are in tension, we'll look at how far each one is from its goal and the time that it's expected to take to get back to that goal. And so we balance the two goals. So what we've done all year this year is we've had our policy rate has been tight because inflation has been above our target, but the labor market was very solid. Now, over the last really 4 months, really over the summer, the labor market has softened. Payroll jobs have dropped a lot, so we can't really say that anymore. And I think what that told us is that stance of really having a tight focus on inflation really needs to moderate toward a more balanced approach. And so that's why we took the action we took at our last meeting. And as we go to our next meeting, to your question, we'll be asking ourselves, we'll be looking at the data very carefully, labor market data, growth data, inflation data, all of the vast quantities of data that we get, and asking ourselves, is our policy in the right place? And if not, we move it there.
Some may wonder about the frothiness of the markets, the markets reaching record heights and also record valuations. How does the Fed think about that in the equation?
Financial markets? So we monitor financial markets very carefully. Our policy works through financial conditions, so that's credit spreads and interest rate levels and equity prices in the aggregate that can affect spending, for example. We look at all of that, but really our focus is on our two goals, and that is maximum employment and price stability. And when we see one of them weakening, we're going to respond appropriately with our tools. And in this case, that meant reducing the federal funds rate by 25 basis points. And, we'll see what the future brings. But that's what we do. We look carefully at financial conditions, more from a perspective, though, of financial stability. So we see that the banks are well capitalized. Actually, in the aggregate, households are in good shape financially. I know people at the bottom end of the income spectrum are under pressure. No question about that, but it's not a time of elevated financial stability risks.
Mm-hmm. So the federal funds rate really governs consumer credit, but not so as it pertains to mortgage rates, correct?
That's right.
And let's talk about how the average consumer is going to see any difference in the intervening months relative to in easing of interest rates and the ability and maybe even more confidence to spend?
So we don't set mortgage rates, but when we change the federal funds rate, it will affect the mortgage rates and also all other consumer borrowing rates. Really, all interest rates that are on a floating basis will move a little bit or even a lot if they're short term based on our moves. So the people will feel that over time. Also, it's not just these days. The market is pricing in the next 6 months what's going to happen to rates. So this is something that wasn't really the case, 50 years ago. Now markets listen to us and follow, and they make an estimation of where they think rates are going, and so they'll price things in, and so longer term rates will move because of what the market expects, market participants expect us to do. So you'll begin to see, and you're already seeing, changes in rates long before we make the decision. It can often be already, priced in.
Is it fair to say that the Fed and the markets really have a higher tolerance for risk today, more so than perhaps before the pandemic?
I think if you look at some prices, then they're elevated relative to historical levels. There were times before the pandemic when it happens periodically. Equity prices will move up and down, and we do monitor that. But we're not targeting any level of prices for particular financial assets. We don't have a view that we know what the right price of any particular financial asset is. We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. It by many measures, for example, equity prices are fairly highly valued.
Let's segue to the topic of AI, and largely AI stocks and periphery stocks really driving the markets in many ways. Let's talk a little bit about the great unknown of AI, and if we think about various ages, our industrial ages, whether it be steam to electricity to the information age and now to the age of AI, would you consider this to be the most disruptive force ever in modern American history?
I think it's way too early to say that. I wouldn't go that far. I would say clearly generative AI has all the earmarks of an emerging technology that could be very important in our economy and in our society. But it's very early to be making that kind of bold statement. So, what we're seeing is companies and institutions like the Fed, for that matter, are starting to experiment with how this new set of tools can be used in our operations. And it's very early days on that. And, I think that we have to wait and see. That's a good thing. I know many of the large financial institutions and other central banks, and we are asking ourselves, how can this help us do our jobs better? And I think it's going to be a period of experimentation over a period of years. And, the history is always that there's a lot of fear that technological innovation will eliminate jobs. What has tended to happen in history over time is that it just raises productivity and creates new jobs to replace the old jobs. And that happens. And sometimes it can take a long time, but ultimately that has been the pattern for the last couple of 100 years. Is this time going to be different? I just don't think we know yet. I don't think anybody knows.
You are a labor market futurist, also a historian. And the concept of AI and humans in the loop, very profound impact on the labor force. What are your thoughts about specifically agentic AI as a differentiator from generative AI? And how will the Fed be looking at the impacts of the workforce, the labor participation rate, given the unknown of what could happen with displacement around AI tools at all ends of the spectrum?
Our tools work on demand, basically. Lower interest rates, higher interest rates, they work on demand. When there are structural changes in the economy, there's not a lot that an interest rate change can do for that. And so if you're talking about distributional issues or labor force participation or retraining or any of the things that come to mind in connection with those questions, that's really going to be something for legislators and the private sector. We of course, we have many labor economists, and a good portion of them are studying what the potential effects of AI on the labor force, and many great economists around the country and around the world are publishing on that now. And you know, it really is too early to say. I think you can say that some jobs are going to be phased out, some jobs are going to evolve, and people are going to be further trained and that sort of thing, and be able to keep a job like that. And there'll be new jobs that come. And how will that balance work out, and what will be the timing of it? I think it's just quite hard to say.
But how does that factor into the deliberations on a near-term basis? Things are moving so quickly, and the observation and the argument that artificial intelligence isn't just impacting those entry-level jobs and those, quasi-unskilled jobs, but really tentacles reaching into highly skilled professions, whether it be finance, whether it be communications and media, whether it be healthcare, whether it be law, finance. So all ends of the spectrum, highly educated individuals down to more easily automated tasks. Sort of a really interesting problem for those of you that are studying labor market economics. How do you approach that?
Well, a lot of what we're doing with our time is trying to understand the current position of the economy, what's actually going on in the economy today. Pardon me. So part of that is hiring rate has really dropped. Job creation has dropped very sharply. So what are the factors there? So I mentioned earlier, I think, part of it just is there's a lot of uncertainty about the direction of public policy, and so companies are holding off. They're not hiring, and when you don't hire through attrition, your labor force shrinks, and you save money that way. That may be a way of passing on tariff costs. It may be something like that. So that's happening. Lots of questions around whether AI is a major factor associated with the relatively low hiring rate for people just graduating from school and just entering the labor market. And, people are doing studies on that, and I looked at one from Stanford, another from the New York Fed in the last week, and the sense of it was, we think we can find some evidence that AI, generative AI, is having some, it's one of the reasons here, but we can't really say it's the main reason. And we have our Jackson Hole conference every year in Jackson Hole, Wyoming, and we had some great labor economists, and one of the big debates was what's going on with AI, and there was a professor from, I want to say, Columbia, who just basically said there's no evidence that this is acting any differently than other. Her view was not acting any differently from other technological movements, waves, and so I think she would be more at the end of an optimist, a techno-optimist. Mm-hmm. We've all, there are books out there that will tell you the world is ending, and but I don't think we know. Again, I think we're going to see how this evolves, and again, if it does turn out to be something where labor force participation really declines in a way that creates social difficulties, that's going to be something that legislators and the private sector will have to address. We just don't know that yet, though.
Over the weekend, I read where you had been discussing, just picking up on what you said about Gen Z and college graduates and any possible disruptions in trying to find jobs. So Gen Z would be those born between 1997 and 2012, roughly ages 13 to 28. What are your thoughts on college enrollment? We'll talk a little bit about labor disruption in just a minute, and Jackson Hole, because I know that's a favorite of yours, but a lot of the individuals in this room today may have family members that fall squarely in that 13 to 28 category. What would you say about that?
I mean, again, we all see the data that it's just gotten tough for people just entering the labor force to be hired. But remember, the overall national aggregate hiring rate is at very, very low level. The layoff rate is also at a very, very low level. You're in a low fire, low hire economy. And it feels like companies are they've kind of stopped hiring or slowed down their hiring because they want to see how this all shakes out. We're having very important changes to economic policy in the United States, and companies and people are wondering, how's that going to work out? So I think that's part of it. The other thing I would add, though, is, there's a lot of good scholarship around technological innovation and inequality, if you will. And the sense of it is really that if schools and society give students graduating the skills and aptitudes they need to benefit from evolving technology, you can have declining inequality over time. And that's what the United States had for many, many years, up until about 1970, when U.S. educational attainment kind of plateaued and inequality takes off. So it's really down to having the skills. So kids who come out of school today with technological skills and can work with this new technology, they're probably going to be fine. They're going to be great. If you don't have those skills, though, you're increasingly left with less attractive employment options. So in a way, it's an educational issue.
Our society is our education system, and you spoke about inequality, particularly the digital divide, and thinking about where the United States really has paced among countries throughout the world. Particularly, that was a subject that you initiated at Jackson Hole back in August. What are your thoughts on how that is likely to really change the way we look at technology as a force for productivity and advancement?
I mean, technology has been raising incomes and productivity for really a couple hundred years since the Industrial Revolution. It's been an amazing thing for the quality of human life, and there's no reason why that has to change. In the United States was the first country to have gender-blind secondary education, and if you go back, you'll see that there's a great book on this, but just basically the U.S. had fast technological innovation for a century, and also declining inequality because people were coming out and their educational the capabilities they took out of the educational system gave them the ability to benefit from evolving technology. So, and that's really the key, because technology, what it does is it makes us more productive. One summer I worked on a project that was building houses, and I basically had a shovel and I just dug most of the summer. And now that would be a Bobcat, which can do 100 times the work, no blisters, no water breaks. It's just much more productive. And you see housing production's gotten, at least it did get for a while, much more productive, not so much lately. But that I think is the story. And while U.S. educational attainment, college graduation rates and things like that leveled out, they're still going up. The rest of the world caught on and has really caught up in terms of educational attainment. And that really is the key. To your point, your educational system, your country is your educational system ultimately. It's the people that come out and what can they do, and a variety of other factors too, obviously. But I think that's a key element. I'm struck by this because this was a major factor at our recent conference, and we had a great conversation about it.
Well, tell us about the book. He gave me a homework assignment the other day, so I did download it, but I think everyone should follow that lead. All right.
It's a book's called The Race Between Education and Technology. It's by Claudia Golden and Larry Katz, two Harvard economists, and it basically talks about the race between education and technology. So I recommend that to anybody. It was written in, I want to say, 2005, and they basically presented at Jackson Hole, they presented an update to the current day. The findings basically hold. It's very, I'm not a PhD economist. I read it 20 years ago.
But you said it still holds very much true today.
It does. And I think it's a good explanation for why the U.S. has had, rising inequality. This is their thesis, and I think it's they call it also skill-biased technical change. So you need skills to benefit, but if you have those skills, then technology makes you more productive, and that's what we need. Incomes can only rise if productivity is increasing. We're sort of working as many hours as we can work now, so it really is down to how much output can you have in an hour, and that's productivity. So I would recommend that. I'm not getting any royalties for that. But by the way, Claudia Golden won the Nobel Prize for her work about 2 years ago. So I'm not the only one who thinks it was good work.
Chair Powell, let's move on to tariffs. This is an issue that confronts the business people here with us today. You addressed it very briefly in your opening remarks. You indicated that you believe that the costs of the tariff movement is in fact more transitory than embedded in supply chain. So I think we would appreciate hearing more about how the Fed thinks about evolving tariff policy.
So we're now collecting a good bit of revenue. The federal government collecting a good chunk of revenue, $300 or $400 billion a year pace. And the question is, who's paying that? And the candidates for paying those tariffs would be the exporter, the foreign exporter, or someone on our shores. It could be a company or a retailer, or someone who's using the imported product to manufacture something, or the end consumer. And so so far, in its incredibly early days, it doesn't look like the overseas exporters are carrying the bulk of it. It looks like it's that middle group. It's retailers and it's importers, and they're not passing along to consumers that much of the cost. So the actual effects on inflation have been quite modest so far. It's really not. It's a small amount, but I mean, for example, I mentioned that core PCE inflation is 2.9%. Maybe 0.3 or 0.4 of that is tariffs. So it's not the big factor. It's not a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning. Half our mandate is inflation, and I would say that the pass through to consumers has been later and less than we expected. How much of that will continue, I don't know. But the responsible thing from our standpoint was to watch and wait, because it's our job to make sure we don't make a mistake on inflation.
Well, that was my question. Do you imagine that is going to change, where the cost of tariffs will be more deeply embedded and passed on to the consumer? What do you foresee as? So
our forecast, and I think almost all the forecasts are for there to be a one-time pass-through, which will go through the end of this year, well into next year, and that by the end of next year, the one-time increase from the tariffs will be done, and you'll be back to the non-tariff related inflation, which should be much closer to our 2% goal. That's almost everyone's base case. It's actually our job to make sure that that's the outcome, though. So we can't be in a situation where we're just going to assume that. We can't leave that part of the goal unguarded. And so that's why we've been careful about cutting. We didn't want to cut too early. I mentioned in my remarks, if we cut too early, we may find out in a year that inflation actually wasn't under control and it's back up to 3.5% or 4%. No one thinks this is the base case, but that's the risk of cutting too early or too much. Of course, the risk of cutting too late, as I mentioned, is that we unnecessarily, the labor market weakens unnecessarily. There's no risk-free path, and it's a very difficult policy environment when your two goals are telling you two different things. You've got to make a compromise, and we really, again, haven't been in that situation for many, many years. It does happen, but it's happened now, and we'll manage our way through it. But we sort of have to look at both of them as equal. We can't just say we're going to do this one and not that one, unless this one is clearly a greater risk. And now they're coming into closer balance, I would say. We do see meaningful weakness in the labor market now, very low job creation. The unemployment rate's still low, though, and the quits rate is low, and a lot of things suggest that the labor market has reached a kind of unusual stability of much lower demand and much lower supply for workers. It's a really unusual kind of a balance, if you want to call it that, but nonetheless, we think it's downside risk.
Well, if you could elaborate, what are some of the factors that are leading to depressed demand for labor?
So depressed demand for labor, based on surveys and talking to people who are doing hiring, a big chunk of it is that they're just unsure what to do. Businesses, and I'd love to talk to people after this. Businesses don't want to do a lot of hiring. They may be postponing major CapEx, major initiatives, major acquisitions, and maybe they'll replace workers who retire, but they're not looking to grow. This isn't every company and every part of every company in the world. It's just an effect kind of at the margin. That's got to be part of it. I think that's the demand side. The supply side, of course, has a lot to do with immigration policy. So immigration was at a very high level for 2 or 3 years before this year, and now immigration has really gone close to zero, and immigration is not really contributing to the labor force growth now, whereas it's been most of what the labor force growth was, and now so at the same time you've got declining demand and also declining supply of workers, of new workers.
One of your passions is demystifying the Fed. You enjoy speaking about it, and those that are Fed watchers are wondering, will there in fact be 2 additional rate cuts before the end of the year? Of course, we're uncertain about that, if I understood your comments correctly. What does it mean to demystify the Fed, and what can each of us in this room do to be better Fed watchers for the benefit of our own businesses, if you will?
So not so many years ago, maybe 40 years ago, and for a long time before that, the main theory of central banking was to be mysterious and obscure. In fact, Montague Norman, who's a very famous former head of the Bank of England, but ending in the middle of World War II, famously said, never apologize, never explain. And he thought that monetary policy worked back, and everyone thought, it works best when no one understands. It's kind of mysterious. So starting maybe 40 years ago, a bunch of economists, including Alan Blinder and a number of others, said, you know what, that's wrong, because if markets and the public understand the way you'll react to incoming data, then they'll kind of do your job for you. And so they argued for greater transparency. And people said, you know what, that makes sense. So central banks started being transparent. The Fed didn't even issue a post-Federal Open Market Committee announcement until 1994, and then did so as an experiment just to see what would happen. Now, so if you fast forward through, the 30 years since then, now we have a post-meeting statement, we have minutes, we have press conferences, every FOMC participant is on Squawk Box, we have a press release. So, and maybe some people say it's too much, it's excessive, but so that's the way it's evolved. So we try really hard to communicate with the interested public in a way that is useful and comprehensible and jargon-free. That's what we focus on, and that's all we're trying to do. So we don't use their, every profession has their jargon, and you kind of need it for internal conversations, but we try not to do that. So that's all we're trying to do. A couple of thoughts about what I wouldn't say I can't make anyone a better Fed watcher, I don't think, but things I would want to tell people about the Fed. One is just this, that we're making decisions. Our decisions are made under elevated levels of uncertainty, even in normal times. The economy is fundamentally, no one has been able to predict the economy more than for the next few months. It's an unpredictable, it's this enormous entity, and it's just not that predictable. So we have to we take very much a risk management approach, and one of the risks we're managing is that we don't exactly understand what the current state of the economy is and where it's going to go. So we try to have policy that can cover the range of plausible outcomes, not just one outcome. So that's one thing. So we're never saying that we know the economy is going to do this or we know it's going to do that, because honestly, it just, famous statement is, financial forecasters are a humble lot with much to be humble about. So that's one thing I would say. Another is that you should, I just have to say this, whenever we make decisions, we're never, ever thinking about political things. And so we're based in Washington, D.C., and many people, in Congress, and often things are seen through a lens of, is it good for this party or bad for this party or this politician? We're just not looking at things that way. We're looking at what's the best thing for the people that we serve in the medium term. What's the best policy? And many people don't believe us because they think, come on, you're really political. But the truth is, mostly people who are calling us political, it's just a cheap shot. And also, we don't engage. We don't, our argument is doing our jobs. We don't get into back and forth with external people. We just do our jobs. We keep our head down and do our jobs. That's what we do. So those are two things I would offer about the Fed.
We have run out of time. We have come to the end of our program, and I'm wondering if there's anything additional that you'd like to share with the members here today, and again to help us be more prepared as we begin to look to 2026 and strategic plans for business and things on the horizon that would help to, of course, create more jobs and more prosperity.
So I'll say one more thing that struck me just now about the Fed, and that is, remember, we have a really important job: maximum employment, price stability. We regulate and supervise the banks. We operate parts of the payment system, but those things are really about cyclical demand management and financial stability. The policies that really matter for the U.S. economy in the long run, things like investment, particularly investment in people, that's not something we can do. I think we get a disproportionate amount of attention compared to the things that really matter for the country, which are the things that Congress can do and the private sector can do, which are the things that will really matter for future generations, are not interest rate policy and the things that we do as important as we are. Mm-hmm. Beyond that, I'll just say this has been great, as always. I've enjoyed talking to so many people here today, and I love to get out and talk to people who are working in the real world in the economy. There's nothing better than that. Most of my career was in the financial sector, and I constantly was out talking to people rather than sitting in my office looking at aggregate data on the economy. So this is a much more comfortable place to be. So,
you're headed back to D.C. later this afternoon.
Yes.
What does the rest of your day look like?
Get home. I won't get home until after dinner, so it looks like me working on the plane on the way back. So anyway, thank you so much.
Right.
It's been
Thank
great.
You.
Thank you.
Chair Jerome Powell, Chair of the Federal Reserve.
Right, there you have it. A nice round of applause for the chair of the Federal Reserve, Jay Powell, speaking live before the Greater Providence Chamber of Commerce, located there in Warwick, Rhode Island, the home of T.F. Green Airport, and covering a lot of ground here. They finally did get to tariffs, and we've seen a lot of headlines on the terminal to that effect, with Jay Powell suggesting that it is a one-time pass-through, that tariffs will drive a one-time change in prices, not unlike the White House has been saying, though still warning about the effects of cutting too early. I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg TV and radio. We're going to bring you to World Headquarters in New York to talk with Bloomberg's Michael McKee, who is also watching and listening to Jay Powell. It's a bit newsier than I expected, Mike, coming off the news conference that you were just in about a week ago. The Fed chair speaking at length about the impact of tariffs and what he seems to see as a weakening job market.
Basically, though, Joe, he was reiterating what he had said, that tariffs are going to be a one-time impact on inflation. Now, he did say in his remarks that when he says one time, he doesn't mean 1 month, that they will be spread out because of the nature of the tariffs that the president is putting on. But it will be a sort of one time in each sector, and then we're through it sometime next year, and inflation should start coming down again. It's a gamble, of course, that inflation doesn't start rocketing up and that they don't get the inflation expectations of the American people out of line. But the idea that the labor market is in some trouble is a little shaky, was the justification for the rate cut last week. Right. So there wasn't a lot new there. If we were looking for something new, what I would say is there was a little bit of politics in there. In the beginning of his speech, he talked about how the Fed had to take extraordinary measures because of COVID and because of the great financial crisis to keep the economy from exploding. And he came back and said, we're under a lot of political pressure now for doing what we had to do to keep the economy going, and that we need to stick to what we do, sort of brush back to those who have criticized the Fed for going too far. And at the very end, you notice he was asked about whether they are political, and he gave kind of the standard answer about, no, we just do what's best for the country. Then he added that people who are calling us political, it's just a cheap shot.
Pass through less than expected when it comes to tariffs. Kind of interesting to hear him mention that. Mike, is that because companies are eating it or countries, exporters are eating it?
He said basically companies are eating it. That of the three three people who could have to pay most of it, that it doesn't look like exporters are taking on any, if all, much, if any, of the cost, and that the
Isn't
companies
that bad
who are
news for
importing,
shareholders?
It is,
for investors listening to us,
because margins compress. And so the feeling is at some point they're going to have to start passing it along. And they haven't really done that yet, but that's what the Fed is keeping an eye on, is when does that start to happen?
Fascinating. A lot of Fed speak right now, Michael. This is the environment that we're in. Is Wall Street listening? Because you wouldn't tell by looking.
Well, it would depend on who we're talking about. They were listening on Monday when Stephen Myron spoke, and they didn't find anything compelling in what he had to say. And they're listening to Jay Powell today, of course, because he's Jay Powell. He didn't really add anything new. So you're not getting a reaction in the trading markets because of this. But it does kind of put them on the record, and I think that's what everybody else on the Fed is rushing to do, is sort of get on the record about this. We have so many speeches this week, probably a world's record for Fed speeches in 1 week, that we aren't going to probably leave the week with any additional views on how things are going to happen, but at least we'll know what each individual thinks.
All right, Michael, keeping us honest as always from World Headquarters in New York with his view on the Fed. Michael McKee, Bloomberg International Economics and Policy Correspondent. Let's see how the markets are faring right now. Charlie Pellet has that for us as well from New York. Charlie, how are we looking?
Right now, lows of the day, recapping, resetting. You heard the remarks on Bloomberg. Fed Chair Jay Powell offering no hints on whether he might support a rate cut at the central bank's October meeting. Action fairly muted, somewhat muted, as Powell said the outlooks for the labor market and inflation face risks. Here's where we stand again. Low of the day with the S&P now down 28, drop there of 0.4%. Dow Industrials lower by 56. That is a drop of 0.1%. Nasdaq down 0.6%. The only green right now, Russell 2000 index of small cap shares. It is advancing by 0.3%. The 10-year on this Jay Powell Tuesday, 4.12%. The 2-year, 3.59%. Spot gold trading at a record up 1%. 37.83 the ounce. West Texas Intermediate crude up 1.6%, 63.30 per barrel of WTI. Kenvue shares, they are higher right now by 3.3%, making up some of yesterday's 7.5% drop as President Trump's call for pregnant women to avoid Tylenol drew sharp criticism from researchers who say the advice ignores decades of evidence and could endanger mothers and babies. Again, Kenvue up now by 3.2%. Again, stocks lower, S&P down 0.4%. Balance of power continues right now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to have Charlie Pellet along for the ride every day here on Balance of Power. We're live in Washington on Bloomberg TV and radio, live as well on YouTube and Bloomberg Originals and satellite radio channel 121. Thank you for being part of our conversation today. As we try to unpack the words of President Trump, that's how we started the broadcast a bit earlier today with President Trump at the United Nations. We're going to assemble our panel next to get their take on a speech that many, I guess, saw coming. It is President Trump, after all, but a thumbing of the nose, for lack of a better phrase, at the globalists he referred to in the room. Here's a taste of the president earlier today in New York.
We have reasserted that America belongs to the American people, and I encourage all countries to take their own stand in defense of their citizens as well. You have to do that because I see it. I'm not mentioning names. I see it, and I could call every single one of them out. You're destroying your countries. They're being destroyed. It's time to end the failed experiment of open borders. You have to end it now. See, I can tell you. I'm really good at this stuff. Your countries are going to hell.
Going to hell was the message for those in the room. More than 100 world leaders gathered in New York And we play it to the panel now. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, what was that? Did the president plan to give the room a middle finger today?
Well, for sure, right? I mean, he actually pretty much read the speech that he planned to give, even though there was some veering off script from time to time. And it was clearly a doctrinal speech about America First. The themes he struck on immigration and security and climate all come right out of the America First playbook. And I would say, if you believe in American exceptionalism, if you believe in the fact that America is the greatest country for good in the world, and that much of the prosperity and safety that we've experienced since World War II has been because of our leadership around the world, you would have been aghast by the speech today. Big step backwards with the people who believe in that kind of concept for America.
Yeah, we're going to be, by the way, speaking in just a couple of moments with the president of Latvia, and we'll be curious to get his reaction. He's at the UN right now. Jeannie, the president spoke directly to the organization itself, not only the members who were in the room, asking what is the purpose of the United Nations? All they seem to do is write a really strongly worded letter. Is there some truth to that?
Yeah, it's the 80th anniversary of the UN. I would have liked to hear what the plan for the U.S. is in terms of seeing the UN into the future. The president is right. Reforms are necessary. But unfortunately, he spent, what, Joe, 5 minutes talking about how aggrieved he was that over the last 20 years, the UN has failed to take him up on his offer to redecorate and renovate the UN. I mean, for those of us who watch Trump on a daily basis, none of this was new. But once you got past the teleprompter, the escalator, and the renovations of the UN, what we're left with is a world that 7-8 months into his administration is less safe. And the United States' place in it is less safe than we were when he started. And that's why what was stunning is not only nothing on the 80th anniversary, but what about China? He barely mentioned our major competitor in China, almost nothing on Russia, but a lot of vitriolic language on our closest allies who he says are going to hell.
Talked about climate change at length, Rick, calling it the greatest con job ever perpetrated on the world. He said that the Biden administration had lost more than 300,000 children to human trafficking, and that many countries were on the brink of destruction due to their reliance on green energy. You mentioned a couple of years ago this speech would have played very differently. For those in the room, does he not need to back up any of those statements?
Well, he won't. I mean, I think we have enough of a track record with Donald Trump to know that he's going to let the fur fly, right? And it doesn't have to be accurate. He's making a point. He would even say, I'm just, hyperbole is my friend. Sometimes I exaggerate. But, look, I mean, this was a speech full of factual inconsistencies. The case on climate today was exceptionally strong from his point of view. I mean, it took up a lot more of the time at the UN speech than it would have, I thought, been granted by him. But full of inconsistencies. He loves to rail about China, not having any wind power. Why would we have any? And of course, they're the leader in the world on wind power. So, I mean, unless you put a filter on this, you would look at the world much differently by the kind he described.
As the president now heads for his meeting with Muslim leaders and a reception of world leaders this evening before heading back to Washington, D.C., it's a great pleasure to be joined by the president of Latvia. President Edgars Rinkovic is with us live from the United Nations in New York on this important day. And Mr. President, we welcome you to Bloomberg TV and radio. The president, in a news conference just a moment ago, as you were sitting down to talk with us on Bloomberg, said that NATO countries should shoot down aircraft entering their airspace, of course referring to the Russian incursions on Polish airspace as well as Estonian airspace. Is your country prepared if that happens?
Well, actually, Latvia, as well as other Baltic states, are under the NATO air patrolling missions. So that kind of decision should be taken by NATO command. But I think that President Trump and other leaders who have expressed their views on this issue are right. If Russian aircrafts keep flying, keep violating our airspace, NATO's airspace, then the only way how to stop them is to show force. And from that perspective, I would say that we are going to push for more stringent NATO policy in this regard.
Interesting. I'd love if you have more details on those changes and a potential for increasing air defenses along the Russian border. Is there a way to deter Russia from flying these missions?
Yes, there is. Actually, we have two issues here. Number one, it's drones that have been flying into the Polish, Romanian, also Latvian territory. Mostly, we have seen those kind of incursions as tests. And here, more anti-drone defense is needed. Actually, that's a bit also the kind of race when it comes to technologies. Number two, it's what happened with Estonia. MiGs flying into the Estonian territory, and here, as I said, to some extent the Baltic states are in a very peculiar position because we do not have our fighters. Since we joined NATO back in 2004, there is so-called Baltic air policing mission. What has been decided that policing mission will become a full-fledged air defense mission. And then I think that rules of engagement need also to be upgraded in a way that if Russians continue, then yes, indeed, the opening of fire would be an alternative. Can we stop Russians? Yes, we have seen what happened with the Baltic Sea. A couple of months ago, we had many incidents with underwater infrastructure. When so-called Baltic Sentry mission started, more ships, NATO ships patrolling the Baltic Sea, all of a sudden the pattern changed. The problem with Russians is that they are going to stop incursions in the Baltic or in the NATO airspace if they see show of force, but at the same time they are going to find other ways how actually to test and to challenge the alliance.
So are you essentially, President Rinkovich, describing a no-fly zone for Eastern Europe, for border nations that NATO would work together on? Is that how you defend the skies?
Not exactly no-fly zone. No-fly zone would mean that actually we stop flying all aircraft, civilian, friendly NATO aircraft.
Understood.
I'm advocating for much stringent defense policy of the alliance, as we just discussed.
I want to ask you about the idea of a drone wall. Baltic countries are apparently having this conversation, a system that would take down any drones that cross the border. Are you involved in those discussions? Could that be made reality?
Yes, indeed, we are talking about that. Indeed, we are learning a lot from Ukrainian experience, but of course we also see that development of technology at this time is so quick that actually it's quite challenging to find the right approach. But indeed, the Baltic nations or eastern flank nations are discussing also the drone wall, as well as actually counter mobility measures against any possible Russian incursion, if that may happen.
I'm sure you heard the president's speech earlier, President Trump's speech before the United Nations. Mr. President, he spoke about the potential for secondary sanctions against Russia, but said he would only put them in place if European nations stopped buying Russian oil. What is your reaction to that?
I'm absolutely supporting that proposal by President Trump. Actually, Latvia, along other countries that are bordering Russia, have been advocating for stopping buying Russian oil and gas since 2022. We actually made that decision when Russians started their full-scale aggression back in February 2022. So from that point of view, I do believe that President Trump is right. I do believe that all European nations must stop buying Russian oil and gas, and they must stop financing Russian war machines. So from that point of view, there is a point in what President Trump said in his address to the United Nations General Assembly.
Well, what are you hearing, President, from your NATO allies who are in fact purchasing Russian oil? Will they make that commitment?
Well, I think that if there is a clear position from the United States, if other EU nations or NATO European allies do stop buying Russian oil and gas, and there is no alternative, it's US LNG. By the way, Latvia is buying currently around 75% of the United States liquefied natural gas. Then I think that those countries may change their mind, and I think that the position of the United States in this matter is very relevant. So I do hope that all capitals in Europe are hearing the statement from the United States at this point.
Well, there's a story coming out of the Pentagon here in Washington. The Department of Defense is pulling back on funding for programs on NATO's eastern flank, including the Baltic Security Initiative, which would impact your country. Are you hearing directly from the Pentagon on this? And can countries like yours make up the difference?
Well, we are in discussions with our colleagues in the United States Department of War. And at this point, I would say that we are very grateful to the United States for all the assistance the country has provided to Latvia since the establishment of our independence. But we are also working with the Congress, and I do hope that we are going to find the solution where we are going to continue this cooperation. Let me say that actually, when it comes to the U.S. aid in this regard, then we are mostly buying the U.S. equipment, and also we are then financing that purchase also not only from U.S. funds, but also Latvian or the Baltic funds. So this is where we are in the process, so I can't confirm that the kind of final decision has been made. And I do understand the push from the United States when it comes to more financing, but let me remind the viewers of Bloomberg also that countries like Latvia currently spend almost 5% on defense of GDP because we understand what capabilities we need, and I do hope that also this message is going to be heard in U.S. government as well.
Spoken like the president of a frontline nation sharing a border with Russia, certainly. I'm curious, Mr. President, what your thought was on the message today from President Trump. He spoke to the room. He said your countries are going to hell. Was that the message that you needed to hear today?
I think that the United Nations is a great place where different opinions, different views are being expressed. And I think that sometimes, frankly, I'm attending those UNGA meetings in different capacities as the foreign minister before I became president since 2009. And sometimes you will probably need to get kind of very strong language to wake up. But definitely I hope that we are going to find common language with everyone in the room when it comes to the critical issues of the global development, be it climate change or be it other issues. However, I think also that one thing that is currently an issue here with the United States is that this organization needs reform, be it UN Security Council. We see that when it comes to the war in Ukraine, or it used to be Syria a couple of years ago, this organization was not capable to deal with challenges that actually it was created for.
That's a very diplomatic answer, Mr. President. President Trump referred to many countries on the brink of destruction. Well, that's true. Due to their use of green energy. Does he have the wrong or the right idea there?
I think that this discussion about climate change and what should we do is now developing. And, you know, from time to time, we get into extremes. Sometimes we get into extreme that we are all going to die immediately, and then we do some policies that, in hindsight, seem to be not so clever, and then we probably change the tone. In my own country, we have now that debate as well. What should we do, and are we exaggerating? So from that point of view, I think that the climate change is real. The issue is how you deal with that, whether those policies we are agreeing are the right ones, whether windmills are the right answer. Back home, we have the same debate. I would actually be happy to continue that discussion, and probably in this kind of clash of opinions, we can probably find the right policy as well.
Yeah, interesting. Before you leave us, Mr. President, and get back to your meetings at the UN, I want to get back to where we started, and that is the looming threat from Russia and specifically from Vladimir Putin. What is the message from your country, from you, to Vladimir Putin as he considers pushing the line, as we've been referring to it, in countries like Latvia? If he decides to fly into your airspace, if he sends drones or aircraft, what would be your warning ahead of that decision?
My warning would be learn from history, because pushing the envelope, crossing the line, at one point means that you are losing everything. And I think that the message that we are hearing from NATO allies, from President Trump, from President Erdogan, from other leaders of the alliance, are very, very clear messages. So don't even try.
President Edgar Zrinkovic, the president of Latvia, with us live from the United Nations. The General Assembly underway now in New York. Mr. President, thank you for the insights and for spending time with us today on Bloomberg. I'm Joe Matthew in Washington as we digest some of the remarks we just heard from the Latvian president. We want to update the markets. We'll talk with our panel on the other side. Charlie Pellet is watching stocks and bonds in New York at World Headquarters. Charlie, how are we doing?
All right, now, lows of the day. We have got the Dow, the S&P, NASDAQ. They are all retreating, Joe Matthew. Tech stocks especially are swooning right now. Let's get right to the numbers, because we got NASDAQ down 213 points now, down 0.9%. Traders driving stocks from records. Fed Chair Jay Powell offering no hints on whether he might support a rate cut at the central bank's October meeting. Russell 2000 index of small cap shares, last update told you it was higher. Right now down 0.2%, keeping it all in context. S&P 500 index trading lower by 40, down 0.6%. The Dow now down 129, drop there of 0.3. NASDAQ down 0.9%, but again, Russell 2000 index giving up earlier gains, down now by 0.2%. Our Mag 7 index being hit especially hard, down 1.4%. Again, the S&P down 0.6%. 10-year 4.11%. The 2-year 3.58%. Gold up 0.9%. 37.80 the ounce. And West Texas Intermediate crude up 1.6%. 63.27 a barrel. Again, recapping, stocks now lower. S&P down 0.6%. Balance of power continues now. Back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, many thanks. Live from New York, Charlie Pellet on the markets, and he'll be back coming up at the top of the hour with more where that came from, 2 p.m. Eastern time here on Bloomberg TV and radio. The delegation from Iran that is on the ground in New York to attend the United Nations General Assembly that we've been talking about today will not be able to enjoy the $1.50 hot dog at Costco. Indeed, guidance restrictions from the administration have gone out here. The State Department requiring Iranians traveling to the UN's big event here to obtain the government's permission before they shop at wholesale club stores like Costco or Walmart's Sam's Club. This is real. If they want to purchase luxury goods, according to a document on the Federal Register website, we will not allow the Iranian regime to allow its clerical elites to have a shopping spree in New York, while the Iranian people endure poverty, crumbling infrastructure, and dire shortages of water and electricity, according to a State Department spokesman. This is normal. They're typically held to a radius around Columbus Circle, but apparently Costco in any neighborhood will be off limits. They have the small Costco's, James, I guess, in Manhattan. I didn't think that was a thing in New York. We bring Jeannie Shanzano back into the conversation, Bloomberg Politics contributor, our Democratic analyst, following our conversation with the Latvian president. Jeannie, a lot of folks who were in that room, you just heard a very diplomatic conversation, are still recovering from some of the language that they heard from President Trump. Your countries are going to hell, the message today from the president, as we touched on briefly with yourself and Rick Davis earlier. What did you make of the reaction from the president of Latvia?
By the way, Joe, I am a proud member of Costco and BJ's.
Good
So
job.
we have some of those, although not directly in the city, to your point. I just didn't realize that that was a #1 shopping destination for Iranian diplomats visiting. So this is all new to me. I thought it was a really interesting conversation with the president, certainly diplomatic. I loved when he said that's what he gets paid for, and it's true. And I also, as an aside, like that he too uses the word unga, because that's always a debate this week. Is it UNGA? What, you know? But I think #1, what was so important was that he said very explicitly that he does support the president when the president says that NATO members have got to stop buying oil, that this is critical. And of course, he said his country has cut back since the incursion by Russia. I think what I didn't hear from him is what kind of pressure can Donald Trump put on those NATO members that are spending the most? Because, of course, those are some of Donald Trump's closest alliances in NATO, including Viktor Orban in Hungary, Slovakia, Turkey. So I also, and certainly the president didn't say this, but was stunned to hear President Trump say during his speech that he only learned about these purchases 2 weeks ago. I'm assuming that that is not the case, but if it is, that is stunning to me because, of course, it's long been discussed.
I'm glad that you mentioned that. I couldn't believe that statement because it's something that we've been talking about since the beginning of the Russian invasion of Ukraine. Not only did he say he just heard about it, he said that the European leaders couldn't believe that he found out. Jeannie, by the way, remarkable to hear the Latvian president, the first time I've heard another world leader refer to the Department of War here in the United States. I just mention it for what it's worth because I was surprised when he said it. The president of the United States, that is, got into what was happening in London as well when he was talking about the impact of immigration on Europe, which is what generated the line, "Your countries are going to hell," that we played for you. He talked about the European continent invaded by a force of illegal aliens like no one has seen before, and suggested that London is moving towards Sharia law. There are people in the room who know that's not true, right?
Certainly, I hope that most, if not all of them, know that is not true. He had some really difficult words for the mayor, who there's no love lost between the two of them. But this is pure Donald Trump. And those of us who have long watched him, I was thinking during his speech, Joe, that if this had been 10 years ago and it was his first or second speech to the UN, I may have been stunned. But I think we have become so used to the way that Donald Trump talks. And this seemed a lot more like a MAGA speech than it did a speech at the UN, the kind that we are used to. And of course, this is what Donald Trump supporters love about him. He will go out and pretty much say anything. But of course, so much of what he says has to be fact-checked. Certainly the issue of Sharia law. Rick mentioned before the issue of the wind turbines in China. I mean, the fact that he says he's settled 7 wars. I mean, the list of fact-checking that had to go on for that speech is very, very long. And when the camera panned to the faces in the audience, they were pretty much stone-faced. And there was a lot less nervous giggling, I think, than we saw when Donald Trump first came to the UN.
I want to ask you about that. Remember, it was 2018 when he got a round of laughter as he was kind of boasting about his accomplishments. The president stopped and said, "Wow, I didn't expect that reaction." Everyone was being pretty honest, I think, on both sides of the speaker's rostrum that day. There was no laughing today outside of some of the jokes that he was making about Brazil and a few other things. What did you make of the reaction to the speech? You mentioned the dour looks on world leaders' faces. It was a very different room. We only have about a minute left, Jeannie. Speak to it.
Yeah, very different room. And the only applause I heard, and correct me if I'm wrong, Joe, was when he said release all the hostages, because obviously so many people in that room and elsewhere agree with that. But I think world leaders, like so many of us in the United States, are more used to Trump. They have figured out a way to deal with him. And I think they were prepared for this.
Absolutely. We're going to have a lot more on this of course, meeting of the United Nations General Assembly in our late edition. Jeannie, thank you so much. Jeannie Shanzano, Bloomberg Politics contributor and democracy visiting fellow at Harvard Kennedy School's Ash Center. Thanks as well to Rick Davis from Stone Court Capital. I'm Joe Matthew in Washington. This is Bloomberg.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. Carol Masser along with Tim Stenivek. And we've got stocks pretty much holding on to losses following comments by Jay Powell, his first public comment since that Fed decision last week. We're going to talk about the trade. We're going to talk about Jay Powell, what he said. We're going to get to that in just a moment.
And everything we're doing this hour and everything we're doing for the next 3 hours on Bloomberg Businessweek Daily, really against a backdrop of what is happening here in New York City, because that is where the world leaders are. President Trump making comments early today. We're going all in on everything happening with the UN General Assembly and Climate Week, New York City.
We are indeed. On that, we've got the founder and CEO of a firm that really deals with the intersection of climate science and capital markets. We'll get into that. We're also going to get into what we are hearing when it comes to the war between Israel and Hamas. What is the future for a Palestinian state? A lot of that to come. That, indeed, in the next 60 minutes.
First up, though, a check of the day's trade and top business stories. Charlie Pellet is closely watching the markets, as we all do. Hey, Charlie.
Thank you very much. That's what we do here at Bloomberg. Tim, we have got the Dow, the S&P, NASDAQ, slight bounce off the bottom. We got you covered on U.S. markets and in the global markets with the S&P right now down 37, 66.56 where we stand now. That is a drop of 0.6%. Your Dow Industrials down 122, trading lower by 0.3%. NASDAQ down almost 200 points, down 196 now, down 0.9%. Traders driving stocks lower, with Fed Chair Jay Powell offering no hints on whether he might support a rate cut at the central bank's October meeting. Our Michael McKee will have a whole lot more on Powell's remarks coming up in just a moment. Right now, we've got the 10-year on this Jay Powell Tuesday yielding 4.11% of the 2-year, 3.58%. Spot gold up $32 the ounce. Precious metal up 0.9%. We're looking at a record there, 37.78, while West Texas Intermediate crude up 1.6%, 63.29 a barrel. Disney raising the price of Disney Plus starting October 21st. That, according to The Verge, Disney shares down 0.4%. Not the only story involving Disney. Jimmy Kimmel Live will return to the air tonight, ending a suspension that Disney imposed following controversial remarks that the ABC late-night host made about the assassination of Republican activist Charlie Kirk. Now, not all ABC stations will be carrying his show. Nexstar Media Group says it will join Sinclair in not airing Jimmy Kimmel Live tonight. Shares of Sinclair, they're up 6.2%. Nexstar up by 1.2%. UBS sweetening payouts for U.S. wealth advisors to stem defections. And this headline right now on the Bloomberg Professional Service: Major League Baseball is going to be using robot umpires to call balls and strikes next season. That, according to the AP. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it is less than 1 week since the most recent Fed decision just last Wednesday. Today, we heard from Fed Chairman Jay Powell in his first public comments since that meeting. He spoke on the economic outlook at the Greater Providence Chamber of Commerce in Rhode Island, and he shared how the Fed is kind of between a rock and a hard place.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate.
All right, that, of course, is Fed Chair Jay Powell just about 90 minutes ago. With more on the comments, Fed policy, the U.S. economic backdrop, we bring back Bloomberg TV and radio international economic and policy correspondent Michael McKee here in studio. So, Mike, Fed Chair Jay Powell today. We had Stephen Meyer on yesterday. He's the newest member of the Fed. Dumb question, but hey, I'm just going to go there because why not? How different are the views that we got from Fed Governor Myron versus Fed Chair Jay Powell?
It's hard to compare the two of them because of the position that Powell's in, and he didn't really say anything different than he did last week. I can't account for what the stock market is doing, but the bond market and the futures markets in terms of Fed rate cuts haven't changed. He basically just said status quo. We're looking at the data. Steve Myron obviously made the case that we should be cutting significantly. There's much more of a contrast between him and what we heard from Raphael Bostic and Alberto Musalem yesterday than there is between him and Powell. And I don't think you can really take anything away from what Powell said today, because if you look at, he spoke last Wednesday, and since then we've had one jobless claims report and a couple of PMIs, and that's the only economic data. So there hasn't been anything that would change your view one way or another, and he didn't change his view.
You said you can't comment on the equity market, but I'm still going to ask you about it, Mike, because at 12:58, this headline crossed. Jay Powell saying at 12:58, some asset prices elevated versus historical levels. By many measures, equity prices are fairly highly valued. And since then, we've actually seen the S&P 500 move lower and sort of stay lower. Is it rare for him to comment on equity price valuation, equity valuations?
And maybe that's the one thing that people took seriously out of this. It's not that the Fed is going to do anything about it, but it's sort of a jawboning warning. This is, it's not the same level as Alan Greenspan and irrational exuberance, but it is.
Is it the Powell version of that?
Maybe a little bit of a warning. But he also goes on to say, and others on the Fed have, that we don't really have any major financial system dangers out there. And so I suspect the equity markets will get over this and come back as soon as NVIDIA sneezes or something like that. They'll start buying again.
I mean, is a lot of it to do that? I think so many investors, and we've heard from various market watchers, that they expect a bunch of rate cuts. Is it that Jay Powell's not committing to more rate cuts? We've got a couple more meetings this year. He's not.
Well, people are always wanting the Fed to promise them what's going to happen. It's much easier to invest if you know exactly what's going to happen in the future.
Funny how that works.
But we walked out of the press conference, the Fed decision last Wednesday, with the markets expecting 2 more cuts, basically because that was what was in the dot plot. The SEP was a little more iffy on it, but that's what the market's set up for. And Powell did not disabuse that. If the Fed doesn't like where the markets are, they find ways to sort of point that out and to steer them in the right direction. And he didn't do any steering today. So one can assume that their view is we are leaning towards rate cuts unless something happens to talk us out of it. And that's what we have to wait and see.
Rate cuts as a result of a job market that he said is not solid anymore, and also saying we're in a low fire, low hire economy. Job creation has dropped very sharply. Rate cuts because of that?
Yeah. We don't know. Yes, that's what they look at the labor market and especially unemployment as a signal for what the economy overall is doing, because obviously if companies are seeing margins compress and they've got to keep them up, they might let people go, and then people don't have money to spend and the economy slows down and you get into this the whole recession scenario. Nobody's talking about recession anymore at this point, but that's what the Fed worries about. And so they're thinking that they're better off propping up the labor market right now because they think inflation is going to gradually dissipate. It'll go up some more because of tariffs, but they're not thinking it's going to be a huge impact. The out there leaving is we could be wrong. So if that's the case, we don't want to commit right now to say we're absolutely cutting rates, but we're leaning that direction.
So this rock in this hard place. So if inflation persists, Mike, and we do see continued weakness in the labor market, or things steepen in terms of the labor market coming undone, what does the Fed do? What do they fight? What do they try to improve? Which mandate do they pay attention to?
That's the conundrum. What they have said in the past is what you do in that situation is you look at the one that is going to be the hardest to fix, and you deal with that. But in this case, they don't know. we haven't had a situation like this with tariffs since, Smoot-Hawley. And so they're kind of making it up as they go along. And they're going to have to be flexible is kind of what they're trying to tell everybody. Don't get too comfortable one way or another, and let's see how this goes. And we can we can act on either one.
We're going to talk about President Trump at the UN in just a moment. I was listening to you on Bloomberg TV just, I think, in the last hour or so. You noted that there was some politics in his comments today, meaning Fed Chair Jay Powell, something about a cheap shot, but what do we need to know here?
Well, there were a couple of remarks. We've had people, especially Governor Myron and the president in recent weeks, talking about the Fed getting way out of its lane and doing a lot of things that it shouldn't be doing, and they should get out of all this stuff. And Powell put a paragraph in his speech today saying we had to do these things because in 2008 and then with the pandemic, the world was going to blow up. The financial world was going to blow up, and we couldn't let that happen. It's not that we wanted to grab all this. It's that we had to do this. And then later on, he was asked about whether they're political, kind of the standard question they get, and he gave the standard answer of no, we just do what's best for the country. And then he added, the people who are saying that are taking cheap shots, which is the first time you really see the guy get a little annoyed at what's going on out there. He is always under control, but he just let that one slip.
All right, good stuff, and certainly an important speech today. Mike, thank you so much. Bloomberg TV and Radio, international economics and policy correspondent Michael McKee. All right, we should keep in mind that we really saw a lot of unity at the most recent Fed meeting, some dissenters in the meeting beforehand. Meantime, if you were at the UN this morning, there were no calls for unity. Instead, President Trump assailed the United Nations and other countries in a grievance-laden speech that accused the world body of offering nothing but empty words, labeled climate change a con job, and warned open borders risk destroying nations. He also criticized the organization that housed his morning address.
I ended 7 wars, dealt with the leaders of each and every one of these countries, and never even received a phone call from the United Nations offering to help in finalizing the deal. What is the purpose of the United Nations? The UN has such tremendous potential. I've always said it. It has such tremendous, tremendous potential, but it's not even coming close to living up to that potential. For the most part, at least for now, all they seem to do is write a really strongly worded letter and then never follow that letter up. It's empty words, and empty words don't solve war.
All right, that, of course, was President Trump, addressing the UN General Assembly this morning. Do want to mention a headline crossing President Trump to meet with the head of France, Mr. Macron, and also the head of Uzbekistan while in New York City. So these headlines are going to continue to come. With more on the president's speech, you want to go right to it. Josh Wingrove is in the House, not in D.C. He's Bloomberg News senior White House correspondent. Josh, you covered the president, all his twists and turns. This was an interesting speech.
It was. It's great to be here.
Great to have
person.
you here.
This is a rare treat for us here. Look, the Trump show hits the road every once in a while, and the aperture opens. And welcome to the second term. He hit a lot of themes that he'd hit previously in this, although probably more strongly than in the past. Basically, he sort of assailed the UN over, as he mentioned, climate and immigration as 2 big topics, going so far as to basically completely dismiss the notion of climate change as a hoax, but also on immigration, saying that it's the single biggest political issue of our era. So trying to draw a line in the sand. But Trump, being Trump, he talked about the teleprompter not working. This was sort of a bit of his in the campaign. Let's just say it's open to interpretation whether that was actually the case or not. The UN said the teleprompter was working fine. And of course, but then was griping about the escalator.
That was not working fine.
That was not. I can confirm the escalator
was not
working, and then later was working. It seemed to get under his skin, and that's when he went off about the renovation that he wished he'd done, and told them, you could be walking on marble, you're walking on terrazzo flooring, you know that, right? So, it's it was a journey, a weave, as President Trump likes to say, but I think it just underscores not only his longstanding disdain for the UN. Remember, the U.S. is delinquent right now in its funds to support the UN. Trump has given no indication that he plans to change that, but also that kind of new grievances are adding on. In particular, he thinks he's obviously kind of gently, somewhat campaigning for a Nobel Prize. He talks about ending 7 wars, and he's wondering, where the UN has been. He sort of wanted credit for it, said they didn't get a phone call. But Trump being Trump, he got off stage, sat down with Guterres, and then was all smiles and nice. So pick your lens, I suppose.
Yeah, even mentioning other leaders who he had said things about, but then had run into personally, essentially saying, I ran into this person, I can't believe I'm going to be talking about this. And it's kind of, for you who covers Trump, covers the president, it's not surprising because that's the way he is. But for world leaders who are sitting there who are not necessarily accustomed to following every comment that he makes, especially at the UN, this was unconventional.
I think that's I think that's fair to say. Yeah, I mean, if you're being sort of re-onboarded into a Trump speech after maybe 6 years, it had been since his last one, for sure, this is going to take you by storm. I do think that there are things to watch that will make news today, for sure, beyond the speech, including the bilateral with President Zelensky, which should be wrapping up just as we speak, right, or just has wrapped up. Trump has really shifted on Zelensky a lot. He said today that it's remarkably brave what the Ukrainians are doing. That is a big shift in tone from January. And so that one we're watching, he sort of tacitly endorsed the notion of NATO nations shooting down Russian planes if they violate
Does that have to do with the recent violations of airspace that we've seen?
I think I personally would read that more as a Trump sort of hand-wavy type of comment. I would not read that as like an emphatic shift in U.S. policy. He sort of danced around the drone issue. He danced around it again in a separate answer today. But he did say flatly, yes, he thinks that NATO should have the right to shoot down Russian planes, not drones, if they incur on NATO airspace. So we'll see. As you know, this is speaking of longtime grievances. It wasn't just the UN. NATO, of course, he has had sort of a bumpy ride with, but he's been more pro-NATO as of late, in particular touting the increased defense spending pledges from Europe and Canada and other allies generally. So I think that one we got a lot of eyes on. This Macron meeting could be interesting. He made a little bit of news last night, wandering the streets of New York, upset about the president's motorcade. We can all relate to that.
Well, everybody knows a city bike is the way to go during the UN General Assembly. If only he had had a helmet, maybe we would have seen the French leader on a city bike.
We can hope.
That would have been lovely.
Yes, yeah, we can hope. But that'll be a good one. Trump is hosting a reception tonight. We don't actually know who's going. So we don't know if this is sort of a friends-only thing, like, Milei and the other whatevers, or if it's a broader thing. So we'll see. We don't know right now whether they'll let the press in, but I'll be there waiting, hoping, praying. So
Josh,
I'll keep you
outside.
posted.
Hey, I'll be here outside waiting for you guys to invite me in.
On your city bike?
Yeah.
On your city bike?
Yeah.
I mean, against everything else that's going, we're still doing stories about the H-1B visas. I mean, there's just so much. Josh, when you look at the president, I don't know how you guys do it because there's so much coming at you. Top of the White House agenda right now, because sometimes I feel like, watch here, guys, but don't look at here, which is maybe something impactful. I don't know. How are you sussing out kind of what matters right now when it comes to the White House?
I mean, Trump always likes to flood the zone. That's been a consistent theme throughout his presidencies. I think on the H-1B thing, this is a big change, and it's a little unclear to me whether they're shifting it on the fly. Remember, they had their big announcement Friday. Everyone's brains exploded. On Saturday, they started to, let's say, detail. Critics might say walk back some of the things. For instance, Secretary Lutnick said things on Friday that have not ultimately been the policy. And then today, the new development is sort of getting rid of the lottery system. We knew that was happening. Trump had signaled before the whole $100,000 fee thing that was happening. But this is a huge change. And so whether its impact on the tech sector, on healthcare, all this is really up in the air right now. And it's part and parcel, obviously, with a complete overhaul of the American immigration system as he sees it. So people that have H-1Bs now are breathing a sigh of relief because there was a moment there where they were like, oh shoot, we got to get back on U.S. soil. In hours, but it doesn't look like that's the case. So for now, that's the shiny thing we're looking at.
So while you're here in town, come back.
Yes.
Josh Wingrove, he is Bloomberg News Senior White House Correspondent. Josh, thank you as always. Coming up next, more when it comes to geopolitics, what's top of mind for global leaders in town this week. In a moment, we're going to talk about the outlook for the war in Gaza.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are very close once again to session lows. The Dow, the S&P, NASDAQ all retreating. S&P down 44, looking at a loss now of just about 0.7%. The S&P is 66.49, retreating from a record. The Dow down 158, down 0.3%. NASDAQ Composite Index down 1%. NASDAQ 100 Index down 0.8%. And the Russell 2000 Index of small cap shares, which have been higher for much of the morning, down now by 0.3%. The Mag 7 Index tumbling 1.5%. The 10-year 4.11%, but the 2-year 3.58%. Gold up $32 the ounce, up 0.9%. And West Texas Intermediate crude up now by 1.8%, 63.37 a barrel. So stocks driving, traders driving stocks from records, with Fed Chair Jay Powell offering no hints in his speech as to whether he might support a rate cut at the central bank's October meeting. A U.S. judge has ruled that construction can resume on Ørsted's nearly completed wind farm off the coast of Rhode Island after the Trump administration tried to halt the project. Shares of Ørsted, the ADRs in the U.S., up now by 14.4%. Recapping stocks lower, S&P down 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, France recognized Palestine as an independent state, and along with Saudi Arabia at a UN conference led by the two countries, called on Israel to end the war in Gaza immediately. Now, several countries, including the UK, Canada, Australia, and Portugal, formally recognized Palestine, Tim, joining almost 150 nations that had already made the move.
Not among them, the United States. President Trump addressing the reasons why when he spoke this morning to the UN General Assembly here in New York.
Some of this body is seeking to unilaterally recognize a Palestinian state. The rewards would be too great for Hamas terrorists for their atrocities. This would be a reward for these horrible atrocities, including October 7th, even while they refuse to release the hostages or accept a ceasefire. Those who want peace should be united with one message: release the hostages now. Just release the hostages now.
By President Trump at the UN General Assembly earlier today, the Israeli ambassador to the UN pictured in that video as well. Hey, joining us with what may be next in the war between Israel and Hamas, Mona Yakubian. She's Director and Senior Advisor, Middle East Program at the Center for Strategic and International Studies. She joins us from D.C. She has more than 30 years of experience working on the Middle East and North Africa, and she has spent time at USAID, also the State Department, a lot more. So she's got a great perspective on this. Mona, great to have you here with us. In terms of the meetings this week, what you're hearing so far, do you think anything will come out in terms of progress toward ending the war between Israel and Hamas?
You know, unfortunately, I don't see any near-term prospect for a ceasefire. We're sort of watching this weird paradox where there's growing momentum for the declaration of a Palestinian state, and yet nothing could be further from reality on the ground, certainly in Gaza and beyond.
So then is the recognition symbolic? And if it is symbolic, does it do more than just make Israel feel isolated?
Well, it's certainly symbolic. It's hard, as I said, it doesn't translate to anything concrete on the ground. It certainly has had, I think, the effect of isolating Israel, and in a way, though, I think, therefore, having Israel also entrench its position further. Prime Minister Netanyahu has been very clear that he is in no way, shape, or form interested in seeing a Palestinian state come to fruition. And so that's why without the buy-in of Israel or the United States, it's very hard to see how these declarations really go any further than simply the statements that are being made.
What about financial pressure and economic pressure on Israel in particular? I mean, the EU, Israel's biggest trading partner, is discussing suspending Israel's preferential commerce benefits, although some key German politicians have expressed their disapproval. We've also talked about, the money that Israel is spending on this war and the impact it's having on its economy. how much of a financial and economic cost, how much more can Israel endure? Let's start there. Or is that putting pressure for them to also bring an end to this? Putting aside the impact on human life.
Which is significant. But I think, as you rightly point out, first, we're still a ways from, I think, concerted EU action against Israel because of, the kind of the opposition of countries like Germany. My own view is, barring significant leverage from the United States as the primary ally and supporter of Israel, it's really hard to see how any of these measures are going to have a real impact on Israeli decision-making.
What kind of leverage? Is that in the form of funds? Is it in the form of weapons? What's the leverage?
Well, I mean, I think arms sales are often raised as a key leverage measure that the U.S. could take, restricting arms sales, maybe only selling defensive weapons, or perhaps a full embargo on arms sales. These are certainly measures that have been discussed by Democrats in Congress. But again, we haven't seen those take on any momentum. And in fact, if anything, the Trump administration is actually proposing increased arms sales to Israel.
What would you say to folks out there? And we heard from the president who said those who want peace should be united with one message: release the hostages now, just release the hostages. Those critics out there who say the ball right now is in Hamas's court. They can end this by releasing the hostages.
Well, there's reporting that Hamas is proposing a limited 60-day ceasefire in exchange for a partial release of the hostages, and then perhaps additional releases as the ceasefire goes on. At the end of the day, yes, of course, Hamas on the ground is a critical element in this, but Israel is as well. And there really needs to be perhaps movement on the part of Israel as well towards some kind of a ceasefire negotiation, positive movement in the direction of a ceasefire.
Yeah, I think, on the flip side to what Tim said, I mean, why wouldn't Israel say, yeah, ceasefire, let's bring those folks home?
Well, let's be clear. We're saying Israel as though it's a unitary actor, which of course is not the case. So there have been massive demonstrations in Israel by across the political spectrum, and certainly by hostage families, really demanding that the Israeli government do more to reach a ceasefire. And it's really, Prime Minister Netanyahu and those directly around him who have really, put the brakes on any effort to actually move those negotiations along.
On that, we're going to be joined a little later in our program, just at the 4 o'clock hour, by Ethan Bronner. Typically, he joins us from Tel Aviv, but he's bringing the Tel Aviv view to New York. He's going to be in our studio a little later, so we'll get an update from him on what's happening on the ground in Tel Aviv right now, too.
Yeah, looking forward to that. Hey, one thing I wanted to ask you, Mona, I mean, I don't want to sound naive, but why has this really gone on for so long? Before this war, we were talking about Netanyahu, the Prime Minister of Israel, maybe losing his job. There was so much pushback against him. I'm just trying to understand what's really at the heart of this. You have studied the region for a long time. You understand conflict. And I just wonder, why it's going on for so long, and really what do we get on the other side of this beyond a lot of loss?
Enormous loss and devastation. I mean, unfortunately, conflicts take on dynamics of their own. And I think we've seen that in Gaza, where, there's efforts that have been made to move toward a ceasefire. Of course, let's not forget, just a couple of weeks ago, Qatar was in the midst of mediating between Israel and Hamas when Israel unleashed strikes on Doha. That immediately suspended that mediation. And so it's very hard to actually bring adversaries to the table and move toward compromise when one side or the other believes that it can continue to make gains on the ground. And I think certainly in the case of both Hamas and Israel, we're not seeing either side ready to sort of give up, surrender, come to the table and reach some sort of conclusion to this conflict.
As Carol mentioned in the introduction, you've spent decades working on the Middle East and North Africa. You focused on conflict analysis, governance and stabilization, conflict prevention, USAID, U.S. State Department, and much more. If you were advising U.S. leaders right now and Israeli leaders right now to end this conflict, how would you advise them?
I would say that the most significant military gains have already been made. And this isn't me, this is the opinion of senior leadership in the Israeli military, that net, the costs of continuing this conflict are greater than any benefit. This is the moment to move toward a conclusion. It will be now 2 years this October. Since October 7, there are still some 20 Israeli hostages alive, still in Gaza. It's time to bring this conflict to an end so that they can come home and the region can move toward stabilization.
You know, we talked about the cost to Israel, financial, economic, and other. The war has decimated also the Palestinian economy. The World Bank saying it was experiencing, quote, its deepest contraction in over a generation. More than 65,000 Palestinians have died since the start of the conflict. And that's, again, according to the Hamas-run health ministry. I mean, there's costs on all sides.
Yeah, and Carol raised a good question when we were talking about this ahead of time, which is essentially, okay, what's left or of a, you know, quote unquote Palestinian state at the end of this conflict? What happens in Gaza?
Well, the devastation cannot be overstated. I mean, some 90% of infrastructure has been destroyed. We are seeing, you know, the Israelis are currently undertaking an incursion into Gaza City. There are continuing displacements of Palestinian civilians, massive hunger and even famine in parts of Gaza. So first, I think the first step is for the fighting to come to a conclusion. And then, unfortunately, it's going to be a long time and is going to take enormous resources for Gaza to rebuild. And of course, none of that will happen in the absence of some sort of political settlement.
Well, and I just want to go back to, you know, we talked about Israel being increasingly isolated when it comes to other world leaders. The U.S., too, kind of isolated in its stance on this. Is the U.S. still a key voice in this war and helping to bring an end to it?
I think the U.S. is indispensable to bringing an end to this war. It is really only the United States that exercises the kind of leverage and influence over Israel, and of course, has the deep ties with Arab governments that support the Palestinians. The U.S. is really in a unique position. And I really hope that the Trump administration seizes on this unique position that it has to do, as President Trump promised in his inauguration speech. He wants to be a peacemaker. This is a conflict that's really crying out for resolution.
All right. Well, good to get your view on all of this. There's so much going on and continuing to come at us, certainly this week. Mona Yacoubian, thank you. Director and Senior Advisor, Middle East Program at the Center for Strategic and International Studies. We're going to kind of stay on this, Tim, when we come back.
Yeah, we're going to talk about the intersection of climate science, capital markets, product innovation, and everything happening this week, not just at the UN General Assembly, but also Climate Week NYC. That's next. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Traders driving stocks down from records. Fed Chair Jay Powell offering no hints on whether he might support a rate cut at the central bank's October meeting. You heard the chair's remarks on Bloomberg. Right now, we have got stocks very close to session lows. The Dow, the S&P, NASDAQ, all in the red. S&P down 40 at 66.53, a drop now of 0.6%. Dow Industrials down 0.2%, lower by 102 points, while NASDAQ, the composite index, down 227. For NASDAQ, a drop of 1%. The 10-year, 4.11%, with the 2-year that's yielding 3.58%. Gold is up $31 the ounce, up 0.8%, and West Texas Intermediate crude up 2%, 63.51 a barrel. Boeing shares are up 1.7%. The plane maker secured an order from Uzbekistan Airways, while the U.S. ambassador to China is indicating a major order from the world's second largest economy is close to being finalized. And we're keeping an eye on Firefly Aerospace shares. They are plunging after second quarter revenue came in short of Wall Street's expectations. The small rocket launcher is working to ramp up the frequency of its flights. Right now, we've got shares of Firefly down 15.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we are staying on the UN General Assembly because along with it, it is also Climate Week NYC. Both came together really this morning during President Trump's address at the UN, where he talked about a lot, including what he called the green scam.
Another UN official stated in 1989 that within a decade, entire nations could be wiped off the map by global warming. Not happening. You know, it used to be global cooling. Now they could just call it climate change because that way they can't miss. It's the greatest con job ever perpetrated on the world, in my opinion. If you don't get away from this green scam, your country is going to fail.
Right, that again was President Trump earlier today at the UN General Assembly. There's a lot going on when it comes to climate this week, Tim, and we've got a good view on the intersection of climate science, capital markets, and product innovation.
Olivia Albrecht is with us. She's with Artemeter. She's CEO and founder. She previously served as CEO at Aspiration, a climate finance and Oak Tree portfolio company offering sustainability solutions for consumers, businesses, and investors. Before that, she spent a decade at PIMCO. Most recently, as head of ESG business strategy. Olivia, good to see you back with us. A carbon investment manager, your firm. I'm wondering how the role changes during an administration such as this versus a previous administration that doesn't necessarily call climate change a scam.
Yeah, major differences, I suppose, from a U.S. perspective. I guess I always like to start in the context of carbon, which is a $1 trillion asset, where most of the assets are actually in the compliance markets, which are local, regional networks of ETS-traded schemes. And that is not changing based off of who's in the White House in the United States. A lot of work and a lot of attention is focused on the voluntary markets, where these are voluntary actions by corporations, which again are not swayed by who's in the White House. And we see that there's still a lot of conviction in the carbon markets more broadly. And again, when you think about it in the context of a $1 trillion market, with the bulk of it being in these regional ETS schemes or these carbon tax schemes across these regions, there's not much change as it relates to this space.
So major companies are buying carbon credits. It's all continuing as it has that we've seen over the last few years.
Again, when you bifurcate out the $1 trillion marketplace with 90+% of the market being the compliance markets, those are regulated assets. Those
So
are
they
regulated
have to do
entities.
it.
They have to do it. What we spend a lot of time talking about in the carbon markets, where there's a lot of attention, is going to be in the smaller portion, which is a couple $1 billion marketplace on the voluntary side. And what you're seeing, and as we discussed before, is there's a pullback in terms of the communication of the work that a lot of major corporations are doing, but nonetheless, they continue to buy carbon. What we're seeing is that they're actually making longer-term investments, signing long-term 5-year offtake, really leaning into this space, but they're doing it more quietly than they were perhaps a few months ago.
Is more quietly the only change, or is the actual rate of what they're buying and how they're buying changed?
No, I think what you're seeing is that the quantum of what is being purchased and signed up for long-term offtake is actually increasing. The quality is increasing. The longevity of the contracts are actually increasing.
Nobody's talking about it, though.
But it's very quiet.
Why is it quiet?
Just as you can imagine, I think everyone is looking to ensure that they're out of the spotlight, out of the crosshairs, and quietly doing the work that they know that they should be doing. One other area beyond carbon, I think that you're seeing here at Climate Week is this convergence of traditional energy and renewable energy or alternative energy, where really they're coming under one tent. We heard yesterday from the chair of the Energy Dominance Council from the Trump administration talking about the 3 priorities of the administration. One is to have abundant domestic energy, where there's traditional and renewable energy coming together to power AI, which we don't even know how big that requirement is going to be. 2, supplying our allies with all the residual energy that we produce here in the U.S. and ensuring that there are deals being struck with our allies. And then 3rd, which is a little bit of a wild card, is nuclear energy dominance, and that is a big focal area for the administration as well. So energy dominance.
What's the reality when it comes to traditional forms of energy, carbon-infused energy versus renewable, whether it's green, whether it's wind, whether it's solar? I know nuclear kind of plays within it, although some would say you got to worry a little bit about the waste and so on and so forth. But I mean, folks are not turning their back on renewables.
No.
And has there been any shift? Because, you know, Tim, you often bring up the president is very vocal about how he feels about wind. I know there was a ruling today, though, that is allowing a project to go through, I think, the one in Rhode Island.
Yeah, and so Ørsted shares are higher as a result.
Right. So it's just, you know, trying to understand, as we say, the narrative that sometimes we're hearing in public versus what's going on behind the scenes. It's still moving ahead in terms of the renewable and green space.
The reality is that the renewable space has turned to be economically comparable to a lot of traditional energy sources at this point. So without subsidies from the U.S. government or from governments around the world, these projects are viable. They're economically viable. They compete. They have to have, they compete in areas where there is heavy wind flow and there is sun, abundant sun, and there is abundant kind of energy sources from these renewable spaces. But nonetheless, they're economically viable. So they'll persist despite rhetoric.
But are they economically viable without government support, without government tax incentives?
Yes, I think in a lot of instances, you see that these are economically viable. You see less and less subsidies being flown into major solar renewable energy projects at this point.
I'll ask the question another way. Are they viable with tariffs?
I suppose you could say, you know, again, when you think about it from the all of the above solution set, there's going to be parts of the United States that are going to have economically viable renewable energy projects that have no oil and gas. And there's going to be parts of the United States that have oil and gas but don't have consistent sunshine or consistent wind flow. So it really just depends upon where you are in the United States. And absolutely, when you think about, you know, the role of tariffs coming in, any import is going to be impacted. And so therefore, you come to the same conclusion, which is energy dominance from a domestic supply chain.
The cost of power, and the president talked about it being more expensive here. Is it because of AI that power is more expensive? Is he right in terms of the big picture?
I think it's very regional, right? The cost of energy, I'm from California, and the cost of energy is high. Then there's parts of Texas. We were recently in a part of Texas where folks who are taking power from the grid at certain times of day are actually getting paid to take the energy off of the grid because there's an oversupply, largely from renewable energy projects, plus all of the fossil fuel industry across Texas. So it's so localized and it's so regionally dependent based off of a lot of state and local regulations and taxes, less so than at a federal level. And then I think you can say the same across Europe and across other parts of the world as well. It's very localized.
I know we want more time. What would be your advice to investors? I mean, based on what you are seeing, just got about 30 seconds here.
Look, I think we're really focused on doing more with less, looking at your supply chain, trying to find ways to clean the supply chain, but also utilize more assets in your supply chain. There's a lot of waste when economic boom is in place. And now if you see a little bit of a contraction, now you have to do more with less. So find ways to clean up your operations and create more efficiency.
Interesting. All right. She is the CEO and founder of Artimeter, Olivia Albrecht, joining us here in studio. I'm so glad. Thank you for coming back, because I know we couldn't get to you yesterday, and we're really glad. Hey, when we come back and check on trading and some stocks on the move, you are listening and watching Bloomberg Business Week Daily. This is Bloomberg.